News when you want it with Bloomberg News Now. I'm Doug Krisner, and we begin in Minneapolis, where a senior Border Patrol commander and some agents are reportedly expected to leave the city as early as Tuesday. The departure of Commander Greg Bovino comes as President Trump dispatched border czar Tom Homan to Minnesota to take charge of ICE operations. Now, Homan will be meeting with Minneapolis Mayor Jacob Frey tomorrow as the unrest continues following the shooting death of Alex Preddy. The mayor of St. Paul, Cowley Herr, spoke to Bloomberg's Balance of Power.
Alex was not at a protest. It was a morning in which he just happened to be in a space in which he saw activity and he wanted to go and document. I think that it is dangerous when we say that just because people are gathering or they exist is that they are protesting. They are not. They know that their neighbors have been taken off of the streets, that people are being ripped out of their homes forcibly, that people are having children and families ripped apart. And so when our neighbors see each other hurting and impacted, we show up.
That is Cowley Herr, the mayor of St. Paul, Minnesota. Now, the situation in Minneapolis is impacting the passage of an appropriations bill. Democrats are moving toward a potential government shutdown over the bill's inclusion of funding for the Department of Homeland Security. Here is Bloomberg's Eric Wasson.
So Schumer right now is saying split 5 of this 6-part package apart. This would fund everything from the State Department, Treasury, Small Business Administration, and pass that and then deal with DHS separately. But Republicans are resisting that, saying there's really no time and consent. You really need unanimous consent in the Senate to do any of this. So we're predicting a likely government shutdown.
That is Bloomberg's Eric Wasson. President Trump said tonight in a post on Truth Social he is increasing a tariff on some South Korean goods from 15% to 25%. This new rate will apply to autos, lumber, and pharmaceutical products. Here is Bloomberg's Josh Wingrove.
He's essentially ripping up, or at least for now, the deal and saying that's because the Koreans are slow walking it. I should note that there were a lot of question marks, including from what the American position was about this deal. We still, for instance, don't know what the shipbuilding cooperation will look like. And so this is another case for countries that are looking at this, including the EU and the UK that had their deals and that then saw the Greenland tariff threat come in. The Trump's deals aren't necessarily locked in.
That is Bloomberg's Josh Wingrove. Now, the government in Seoul says it did not receive an official notice on the tariff from the Trump administration. We go to business news next. NVIDIA has announced an additional $2 billion investment in CoreWeave. Now, the funding is aimed at speeding up an effort to add more than 5 gigawatts of AI computing capacity by 2030. However, the investment has sparked concern about circular financing. NVIDIA CEO Jensen Huang pushed back and said the investments represent confidence in the growth and business models of the companies. Here is Bloomberg's Ed Ludlow.
So to NVIDIA's mind, $2 billion is not a lot of money in the grand scheme of what CoreWeave is going to have to go to the capital markets to raise. NVIDIA makes lots and lots of investments, $2 billion equivalent, and they do it through buying common stock. His evidence is that that's completely normal for them, and so widespread across the AI stack is their investments that it's not circular, particularly when those don't include quid pro quos.
That is Bloomberg's Ed Ludlow. The heaviest winter storm in years dropped mounds of snow on New York City. Here is Bloomberg's Miles Miller on the economic cost.
We know that more than 3,000 flights were canceled Monday, following roughly 11,600 canceled on Sunday, the most since the COVID-19 pandemic. Natural gas futures surged above $6.30 per BTU, the highest since December 2022. Insurance claims average $15,400 normally around storms like this for water damage and freezing, with some exceeding $30,000.
That is Bloomberg's Miles Miller. Now, power grids are also under pressure as a deep freeze now sets in following the storm. The grid operator PJM Interconnection issued an emergency for Tuesday and warned demand will exceed 147 gigawatts. That's an all-time high for winter. 6 people are presumed dead after a private jet crashed during takeoff at Bangor International Airport in Maine Sunday evening. The cause of this crash is under investigation. It occurred as the winter storm was affecting the area, and federal investigators were initially unable to reach the crash site due to the weather. India and the European Union are set to announce a trade deal. These two jurisdictions are forcing closer economic ties as a way of defending against President Trump's tariffs. Now, an agreement would lower tariffs on most consumer and industrial goods traded between India and the European Union. It would also benefit the EU's car exports. British Prime Minister Keir Starmer said today the UK would not have to choose between the US and China as he spoke about significant opportunities for British businesses ahead of Starmer's trip to Beijing this week. Starmer insisted the UK could meet President Xi Jinping without angering President Trump. He also said the UK could enjoy close relations with the US and business opportunities in China. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
क्रूड ऑयल का यहाँ पर एक ट्रेड बनेगा बाइंग का। ठीक है, क्रूड ऑयल में एक बाइंग का प्लान करेंगे, थोड़ा नीचे आने देना। अभी ये फॉरेक्स का चार्ट है, यूएस क्रूड ऑयल एमसीएक्स नहीं लगा रखा है मैंने, ध्यान रखना। कल एक सेलिंग का ट्रेड लगाया था, काफ़ी देर तक मार्केट वहीं पर रहा, फाइनली अर्ली मॉर्निंग आ गया। फाइनली 1:3 का टारगेट था, अच्छा मूव किया, लगभग ऑलमोस्ट $1 का मोमेंटम है। नीचे आता है, थोड़ा सा एक्सपेक्टेड है बाइंग, थोड़ा नीचे आए पहले, देन वी कैन गो फॉर द बाइंग, नॉट डायरेक्टली। कि अभी 1:30 न्यूयॉर्क लंदन सेशन ओपन होगा, शाम को 6:30 न्यूयॉर्क सेशन, 8 बजे यूएस मार्केट ओपन, और 8:30 पे कंज्यूमर कॉन्फिडेंस और रिचमंड मैन्युफैक्चरिंग इंडेक्स का डेटा है। गोल्ड और सिल्वर को थोड़ा बहुत इंपैक्ट करता है बस, और कोई मेजर डेटा नहीं है आज। इंडियन मार्केट भी ओपन होने वाला है इन फ्यू मिनट्स। निफ्टी लगभग फ्लैट ही है, बैंक निफ्टी हल्का सा गैप डाउन लग रहा है ओपनिंग। दूसरा नेचुरल गैस का चार्ट ही लगा देते हैं, लेट्स सी द नेचुरल गैस चार्ट। एमसीएक्स में चले हैं या फॉरेक्स सही है? प्राइस को थोड़ा ऊपर आने देना अभी बिटकॉइन में, डायरेक्टली मत सेल करना। ऊपर 89,500 के ऊपर कहीं क्लोजिंग दे और फिर नीचे आए, तब एक सेलिंग बनेगी इसमें ठीक ठाक। कल एक ऑलरेडी लोअर एंड से सेलिंग आ गई है, लोअर जोन से आप कह सकते हो, तो अब हो सकता है थोड़ा सा अपर जोन पे जाए और फिर सेलिंग दे, है रेजिस्टेंस पर ही। एमसीएक्स हल्का सा गैप अप, नेचुरल गैस और क्रूड ऑयल गैप डाउन। रीजन बिहाइंड दैट गैप डाउन बिकॉज फॉरेक्स में सेलिंग आई है, इसलिए गैप डाउन दिख रहा है, बड़ी सी कैंडल। इंडियन मार्केट की बात करें, निफ्टी बैंक निफ्टी ओपन हो गया है। बैंक निफ्टी फ्यूचर देखोगे फ्लैट है, स्पॉट का चार्ट नहीं है, फ्यूचर चार्ट है, तो ऑलमोस्ट फ्लैट ओपनिंग है फ्यूचर में। बैंक निफ्टी फ्यूचर 15 मिनट फ्लैट ओपनिंग, निफ्टी फ्यूचर हल्का सा गैप अप। नॉर्मली मुझे लग रहा है ये गैप अप हुआ है बिकॉज ऑफ द इंडिया यू ट्रेड डील की वजह से। देखते हैं कितना मोमेंटम करता है अब साइड पे। यहाँ पे कोई ट्रेड नहीं है, मैंने परसों ही बताया था, रेजिस्टेंस ऊपर है, सपोर्ट भी थोड़ा सा भी आया नहीं है एग्जैक्टली 15 मिनट टाइम फ्रेम के अकॉर्डिंग, तो इसमें भी कोई ट्रेड नहीं बनने वाला। निफ्टी में रेजिस्टेंस तो काफ़ी दूर है, सपोर्ट पे भी नहीं आया है 15 मिनट। नेचुरल गैस की ऑप्शन ऑलरेडी एक्सपायर हो चुकी थी, फरवरी मंथ की ऑप्शन अभी ट्रेड हो रही है नेचुरल गैस में। देखोगे जनवरी मंथ का अभी भी कॉन्ट्रैक्ट की एक्सपायरी आज है, तो फरवरी मंथ का ही चार्ट यूज़ करना, ये करंट मंथ का चार्ट यूज़ मत करिए। फिर से अपर सर्किट लग गया, यस, फिर से अपर सर्किट इन नेचुरल गैस। ये आपका फरवरी मंथ का चार्ट है। परसों याद होगा एक सेलिंग का ट्रेड बनाया था, फिर मार्केट नीचे से इस रेंज के अंदर काफ़ी देर था, ब्रेकआउट किया, रीटेस्ट पे एक बाइंग करी थी, फिर इसी लेवल पे मैंने कहा था एक सेकंड टारगेट रहेगा 352 के आसपास। वो सेकंड टारगेट ऑलमोस्ट हिट होने वाला है आज फरवरी मंथ के फ्यूचर चार्ट में। अभी फिलहाल के लिए अपर सर्किट पे है ये, फर्स्ट अपर सर्किट इन करंट मंथ, सेकंड अपर सर्किट इन जनवरी मंथ फ्यूचर। तो एक्सपेक्टेड है इस जोन तक तो जरूर जाएगा। ठीक है, ये परसों वाला ही ट्रेड है, ध्यान रखना, इसमें कुछ अलग नहीं चल रहा है। अपर सर्किट ओपन हुआ है वापस से नेचुरल गैस में। क्रूड ऑयल को ध्यान में रखना, सपोर्ट जोन के अराउंड आएगा तो बाइंग बनेगी क्रूड ऑयल में। हाँ, वापस से नेचुरल गैस फरवरी मंथ का चार्ट है, करंट मंथ का चार्ट एक्सपायरी है तो नहीं लगाया हुआ है। वैसे करंट मंथ में भी देखोगे तो अपर सर्किट पर ही है नेचुरल गैस जनवरी मंथ का चार्ट, बट बिकॉज आज एक्सपायरी है ऑप्शन में ऑलरेडी नेक्स्ट मंथ का चार्ट ट्रेड कर रहे हैं, इसलिए मैंने ये फरवरी मंथ का ही चार्ट लगा रखा है। परसों वाला ही ट्रेड है, याद होगा आप लोगों को, एक बाइंग बनी थी रीटेस्ट के बाद। एक फर्स्ट टारगेट हो गया था, सेकंड टारगेट पेंडिंग था, सेकंड टारगेट भी आ गया, यहाँ पर अपर सर्किट ओपन हो चुका है ऑलरेडी। बट करंट मंथ जनवरी मंथ के चार्ट में अपर सर्किट अभी भी इंटैक्ट है। इंडियन मार्केट में तो कोई ट्रेड नहीं है, वहाँ पर ऑलरेडी मैंने पहले ही उस दिन ही बता दिया था। ओके, या सेलिंग वापस ही आ गई है दोनों जगह, निफ्टी और बैंक निफ्टी में। फ्लैट ओपन हुए थे बट या रुकता नहीं है नीचे। देखो सपोर्ट पे आता है तो बढ़िया है, एग्जैक्ट सपोर्ट पे तो आया नहीं है। अडानी शेयर्स को अगर चेकआउट करोगे, अडानी इंटरप्राइजेस, थोड़ी देर पहले न्यूज आई थी, वो शायद आई थिंक पहली बार यूएस कोर्ट में अपील फायर करने वाले हैं। तो हल्का सा एक गैप अप हुआ था बट अगेन वापस ऊपर से डे हाई से वापस सेलिंग ही आना स्टार्ट हो गई है। ठीक है, एक हल्का सा गैप अप जरूर हुआ था बट अगेन सेलिंग कंटिन्यू इन अडानी इंटरप्राइजेस। नीचे आता है निफ्टी फ्यूचर 24,800 के आसपास, वहाँ एक सपोर्ट है। लेट्स सी वहाँ पर एक एक्सपेक्टेड रहेगी बाइंग, अगर प्राइस आ जाए, आज ही आ जाए 15 मिनट टाइम फ्रेम पे, दैट इज अ गुड सपोर्ट जोन एक्चुअली। 24,830 to 24,800 to 24,800 to 830 के बीच के आसपास, दैट इज अ लेवल फॉर बाइंग, अगर प्राइस निफ्टी फ्यूचर में आता है उस एरिया पे, वहीं देखेंगे बाइंग के लिए अच्छा जोन है। मैं एक्सपेक्ट कर रहा हूँ 24,800 को हिट करे और उसके बाद फिर बाइंग करें तो बेस्ट रहेगा। तो मुझे लग रहा है वहां तक प्राइस आना चाहिए एक बार, 24,800 के अप्रोक्सीमेटली निफ्टी फ्यूचर में, दैट इज अ गुड सपोर्ट। वहां आता है तो वहां एक बाइंग प्लान करेंगे, अदरवाइज अभी कोई बाइंग नहीं है, सेलिंग में आ जाने दो, बेटर ही है। थोड़ा नीचे और आता है तो बाइंग जरूर बनेगी। MCX में क्रूड ऑयल में कुछ खास नहीं है, वहाँ पर गैप डाउन ओपन हुआ है बिकॉज फॉरेक्स में गैप डाउन हुआ है, दैट इज द रीजन ओनली। वॉलेटाइल काफ़ी बड़ी बन गई थी, ऑलमोस्ट 2-3% डाउन, बट रिकवर फ्रॉम लोअर एंड। जनवरी मंथ में मार्केट अभी भी अपर सर्किट पर है। इन नेचुरल गैस फरवरी मंथ में ओपन जरूर हुआ है, बट जनवरी मंथ में स्टिल ऑन अपर सर्किट। इसमें परसों जो बाइंग का ट्रेड था उसमें से निकल सकते हैं, ठीक है, बाइंग वाले टारगेट का टारगेट हो चुका है, एक सेलिंग का प्लान है यहाँ से वापस नेचुरल गैस में। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। एक बार फिर से अपडेट कर देते हैं नेचुरल गैस में थोड़ा सा। लेवल वही है, सेम ही है, कुछ ज़्यादा डिफरेंस नहीं है, लेवल आर द सेम। टारगेट था वो हिट हो चुका है बाइंग का। याद रखना ये जो लेवल है यहाँ पर नेचुरल गैस का, ये ऐसा नहीं है पहली बार आ रहा है यहाँ पर, ऑलरेडी 2 बार यहाँ पर प्राइस आ चुका है। एक बार लो बना था, दूसरी बार मार्केट ने लोअर लो बनाया है। दिस इज द थर्ड टाइम प्राइस इन दिस रेजिस्टेंस एरिया। क्रूड ऑयल फॉरेक्स का चार्ट है, ध्यान रखना एमसीएक्स का नहीं लगाया हुआ है। फॉरेक्स चार्ट इन क्रूड। आता है तो याद रखना, जो परसों का एक छोटा सा रीटेस्ट जोन था जो मल्टीपल टाइम टेस्ट हो गया था, दैट एक्ट लाइक एज सपोर्ट, वो सपोर्ट की तरह काम करेगा नेचुरल गैस में। नेचुरल गैस लुक्स थोड़ा सा बुलिश ही लग रहा है. ओवरऑल देखोगे नेचुरल गैस को लुक्स बुलिश, बट वी नीड टू वेट. एक कैंडल और आज डे हाई के ऊपर क्लोज हो जाए ना, फिर पुल बैक आए, बाइंग में थोड़ा अच्छा लगेगा. अदरवाइज हो सकता है 338 का लेवल होल्ड ही ना करे. अभी भी देखोगे $5,000 के ऊपर ही सस्टेन कर रहा है कंटिन्यूअसली. सा नेचुरल गैस का ध्यान रखना, जो भी ट्रेड बनेंगे ना अब नेचुरल गैस में, वॉलेटिलिटी एक्सपेक्टेड है थोड़ी हाई ही रहेगी। ऑन दैट रिगार्ड्स एसएल थोड़ा सा डायनामिक होगा, नॉट अ प्रोस्पेक्टिव बेसिस पे कि इतना रखा हुआ है तो यही फिक्स है। नॉर्मली कैंडल क्लोजिंग बेसिस पर ही रखेंगे, एक के नीचे एक अगर कैंडल क्लोज होती है तो एसएल गया, चाहे वो सपोर्ट हो रेजिस्टेंस हो। India is still a structural overweight. BlackRock, Samra Cohen on markets. सारा नेचुरल गैस जिस तरह से कंसोलिडेशन कर रहा है दैट इज नॉट गुड फॉर सेल ऑफ। इसी तरह से कंसोलिडेशन किया तो फिर थोड़ा ऊपर ही चला जाएगा। ऊपर ही बंदो और भी रेजिस्टेंस है, बट यहाँ से गिरना है तो थोड़ा सा सेलिंग आनी चाहिए। अगर देखो इस एक दो कैंडल और वेट करते हैं, ये कैंडल का और वेट करते हैं, ये कैंडल और इसकी नेक्स्ट कैंडल। अगर दोनों कैंडल पे रेजिस्टेंस पे ये आ गया एग्जैक्टली तो वेल एंड गुड, नहीं आया तो फिर ऊपर वाला जो रेजिस्टेंस है वो शिफ्ट करना पड़ेगा हमें ऑप्शन अदरवाइज, बिकॉज परसों भी लोअर एंड पे बहुत पास में कंसोलिडेशन हुआ है विच इज नॉट गुड। इसमें ना ये अपर एंड पे हिट करने जा सकता है ओवर हेयर, बिल्कुल 355 के अप्रॉक्सीमेटली। बस अपर शिफ्ट करना पड़ेगा उसके, इसमें ध्यान रखना बेस्ट है। तो मैंने पहली मॉर्निंग पे बताया था ऊपर का रेजिस्टेंस भी ये मल्टीपल टाइम टेस्ट हो चुका है ऑलरेडी। ये कोई अभी का न्यू रेजिस्टेंस नहीं है, इस चीज का ध्यान रखना। ऑलरेडी ये 2 से 3 बार टेस्ट हो चुका है पास्ट में। ठीक है, अगर ये नहीं आता है तो फिर थोड़ा सा अपर लेवल पे रखेंगे। है रेजिस्टेंस वही, बस उसका अपर एंड आ जाएगा एज अ रेजिस्टेंस जोन के तौर पे। एक बार सेलिंग ठीक ठाक आ गई थी, दूसरी बार भी सेलिंग ठीक ही आई है ऑलमोस्ट। अभी भी है वैसे 2 3, हाँ 2 से 3 बार टेस्ट हुआ है कह सकते हैं, तो अभी भी एक लोअर लो बना है तो दैट इज स्टिल इंटैक्ट रेजिस्टेंस के तौर पे। पे देखोगे तो ये 310 के आसपास, 12 के आसपास सपोर्ट जोन अच्छा है। 20 वाला सपोर्ट भी स्ट्रॉन्ग ही है। दैट लेवल नीड टू बी सीन ये किस तरह से एक्ट करता है, बिकॉज दिस लेवल ऑल्सो सपोर्ट नाउ। फाइनल टारगेट जो हिट हुआ था उसके बाद ये लेवल के ऊपर क्लोज हुआ है, तो दैट मीन्स इट इज अ रेजिस्टेंस टर्न इनटू सपोर्ट। ठीक है भाई, क्रूड ऑयल को देखो, ये क्रूड ऑयल भी काफ़ी अच्छा था कल। कल वैसे इंडियन मार्केट क्लोज था, फॉरेक्स में लगाया था क्रूड ऑयल में, मुझे एक्सपेक्टेड ही था सेलिंग आएगी। काफ़ी देर तक मार्केट ऐसे ही घूमता रहा रेजिस्टेंस जोन पे। नाउ फाइनली अर्ली मॉर्निंग देखोगे फॉरेक्स मार्केट में, जब फॉरेक्स मार्केट ओपन हुआ उसके बाद एक ठीक ठाक सेलिंग आ गई थी मार्केट में भी। सो एक्सपेक्टेड है अब यहाँ से वापस पुल बैक बाइंग मार्केट में इनिशिएट होनी चाहिए। अच्छा सपोर्ट जोन दिख रहा है फिलहाल के लिए तो। देखते हैं बाकी क्या होता है इसमें. सॉइल में टेस्ट सपोर्ट एट $60. हाँ, ये अभी लिख रहा है 2 घंटे पहले. मैंने लेवल कल ही बना दिया था $60 का. ये भी कह रहा है अब तो रूटर्स यूएस ऑयल में टेस्ट सपोर्ट एट $60. It is on $60. This is US crude oil, WTI US crude oil. Texas intermediary crude oil. प्राइस अगर ओके यहाँ पर भी एक रेजिस्टेंस है 362 वाले पर भी है. दो रेजिस्टेंस साथ ही बने हुए हैं. इसमें ध्यान रखना इस लेवल के ऊपर एक और रेजिस्टेंस है, एक साथ ही हैं दोनों के दोनों ऑलमोस्ट। 365 के अराउंड भी एक रेजिस्टेंस दिख रहा है। पड़ेगा, ये बड़ा इंपॉर्टेंट लेवल है, ये दोनों लेवल को कैसे टेस्ट करता है, बिकॉज नेचुरल गैस में अगर ये ऊपर का लेवल है जो 350 वाला 55 वाला, इसके ऊपर क्लोजिंग दे दी तो ये तो ब्रेकआउट हो जाएगा, ऊपर रेजिस्टेंस है, फिर वहां से सेलिंग आई तो ये सपोर्ट की तरह काम करने लग जाएगा, तो ये बड़ा इंटरेस्टिंग लेवल रहेगा ऊपर वाला। एक्सपेक्टिंग बेस्ट नेचुरल गैस में ये डे हाई के ऊपर एक कैंडल और क्लोजिंग करने जाए, फिर ये यहाँ से रेजिस्टेंस ले, फिर नीचे आए, फिर सपोर्ट ले, और फिर इस तरह से अगर मूव करे तो बेस्ट है। ये भी मुझे नेचुरल गैस में 310 टू 12 वाला लेवल ज़्यादा स्ट्रॉन्ग लग रहा है फिलहाल के लिए। 310 से 312 के आसपास वो स्ट्रॉन्ग लग रहा है, दैट इज स्टिल स्ट्रॉन्ग एज पर माई व्यू। ऊपर भी नेचुरल गैस में जो ऊपर वाला रेजिस्टेंस है 365 वाला, 60-65, वो मुझे ज़्यादा स्ट्रॉन्ग लग रहा है तो दोनों पास में ही, बट अपर वाला थोड़ा ज़्यादा स्ट्रॉन्ग लग रहा है कंपेयर टू दिस वन।
week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another, significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business. So we expect a strong M&A year globally. We expect a strong capital markets year globally, and we think the firm's very, very well positioned to capitalize on that.
Two Fed cuts you're expecting, and what about Fed independence?
Well, you heard Jan's position on that. I think a lot of that will depend, on the trajectory of the economy. I think we could see upside to both nominal and real growth this year. That would have an impact on whether or not the trajectory of monetary policy cuts continued.
20% chance of recession, he said, down from 30%. Do you see any risk of?
I'll let Jan be the speculator, but at 20%, the base case for a recession is 1 out of 7, okay, which is a little bit lower than 20%. I think the chance of a recession this year is low in the U.S., and I don't think you'd see one unless there was some exogenous event that materially changed the current sentiment. And I don't think that's a likely outcome. So it's a pretty constructive environment.
Are you seeing a necessary broadening out of the markets beyond Mag 7? And there's also the risk, of course, of a potential bubble.
Well, you've seen a big move in markets away from Mag 7. I think there's been broader participation. I think companies are investing. I think there's a big view that AI productivity is going to move into the enterprise, and that creates flexibility for a broader array of companies to invest. And so I think there's a broader level of participation, and things are set up quite constructively for the next few years. This AI productivity gain in enterprise is a real thing. It's going to take a while for that to be implemented, but we're quite constructive on that and the tailwinds that creates for economic growth and for investment.
Well, that's a good pivot to Hong Kong, because the stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course.
And that is it for Insight. Horizons Middle East and Africa are up next. This is Bloomberg.
At any point in your tennis career, did you say, I've had enough, and I'm just going to retire at the top. You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly, and so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Trump threatens to slap 25% tariffs on South Korean goods, accusing Seoul of dragging its feet on last year's trade deal. Markets shrug off the noise, with Asian stocks hovering near record highs and currencies steadying. And precious metals continue their extraordinary rally, with gold powering higher, fueled by the debasement trade. Well, it's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. Before we get to markets, as we usually do, I'm going to bring you some of the headlines from December new car registrations in the EU. So just to give you the overall numbers, the total December new car registrations have risen 5.8% to 963,319 to be precise. Over the period from January to December, i.e. for the full year, new car registrations were up 1.8%, so positive signal. We're getting individual country breakdown. Very interesting to note that BYD, Chinese manufacturer, up 167% in December. That's really quite remarkable. Compare that to Tesla, which saw its own new car registrations fall by 32% in the same month. So you are seeing the Chinese EV makers quickly catch up with the likes of Tesla. Tesla continues to lose ground in Europe. And then you can see some of the other European automakers as well, Volkswagen, Mercedes, healthy growth too. So the numbers broadly positive coming out of these EU car sales. As for broader markets, well, let's switch on and take a look at some of these key indices and how they're faring. S&P futures above 7,000 again, so about 0.3% firmer this morning. So risk-on attitude is coming back again, and perhaps moving away from some of the events over the weekend. But of course, we still got the Fed to watch out for this week. A possible Fed announcement, though it looks like it will probably happen in the next couple of weeks, about who the Fed chair's successor is going to be. And then Friday, possible shutdown. So don't forget about any of those things, in addition to some of the big AI names and tech names reporting this week. Asia Pacific also up 0.6%. So again, they're also shrugging off news of the extra tariffs applied on South Korea. We'll talk about that in just a moment. The USD seeing some stabilization, but of course down about 1.4% over the past week. It has been a week of declines, not a positive start to the year for the greenback, as we were talking about yesterday on the show. Today, some stabilization, however. And then silver, very much in focus. Today, up 4%. What a whirlwind it has been over the last 24 hours. At one point yesterday, I believe we were up 14%, and then we dropped all the way down again. But the point is, silver, gold, money keeps going into that space. Yesterday, we were talking about gold breaking through $5,000 for the first time. Silver up at $108 this morning. And switching over, I also just want to flag, I'm sure you've seen all of those images of the very cold snap of weather that's passing through the United States right now. Take a look at what's happened to natural gas. We have rallied 70% in price over the course of the last few days. So a massive spike upwards. It was not that long ago that we were trading close to around $3 per $3 million per bank. I forgot the term. Anyway, the equivalent of $3. And right now we're trading closer up to 6.6. So we've rallied almost 100% in nat gas space. And you can see that vertical spike. That is the impact of the weather on natural gas in the U.S. Now let's go back to our other top story. President Trump has threatened to hike tariffs on South Korea to 25%, accusing Seoul of dragging its feet on implementing last year's trade deal. Posting on Truth Social, the president says the levies will increase on autos, lumber, farm, and all other reciprocal tariffs. But South Korean assets are largely shrugging off the tariff threat. Winnie Su is in Hong Kong with more. So walk us through the price action today in some of these South Korean indices and the fact that actually there's green on the board, surprisingly.
Yeah, morning, Jomana. It was quite interesting how we saw this really showed in the Asia session today, because Kospi basically took a big U-turn and up about 2% right now after having actually lost about 1%. And you're seeing that investors are pretty much brushing off these tariff threats. They still see this as part of that negotiation technique from Trump, and that they see this also as a good dip buying opportunity. However, a Korean won here is still under a bit of pressure here, weakening about 0.5%, as investors told us that they're expecting a bit more pressure on the currency space versus equities because of Trump's agenda of a weakening dollar and also expecting strengthening of the Asian currencies. When it comes to stocks driving those gains in the Kospi, actually it is the chip makers in South Korea, including SK Hynix here, up about 7%. And that is actually taking it to its heading for its highest close level later today. And that is driven by a local report saying that actually SK Hynix is that solo supplier of HBM3E chips for Microsoft's new Maya chips. Back to you, Jomana.
Winnie, thank you so much. Well, let's get the political angle of what's going on and get out to our Deputy Managing Editor, Balazs Pans, for the latest. So what happened? Why did President Trump decide to once again raise tariffs on South Korea?
It's a bit of a surprise, Jumana. So overnight, Koreans woke up to this message from President Trump saying that he will enact another 25% tariff on Korea because he thinks that they are not acting fast enough in terms of enacting some of the parts of the trade deal that they struck last summer. Specifically, this has to do with this bill that would allow the Korean government to authorize some of the spending, some of these investments that were part of this deal. They earmarked about $20 billion of Korean investment into the U.S. for this year, and looks like there hasn't been enough movement on that, at least to President Trump's taste. Now, of course, the Korean side was quick to say that they still want to honor the agreement. They're in the process of selecting investment targets. They called a meeting of top-level officials in Seoul today, and they are seeking a meeting with Commerce Secretary Lutnick in the next few days to try to smooth things over. But doesn't seem like, much like the markets, as we heard from Winnie, it doesn't seem like the Korean leadership is panicking over this. They still see a chance to kind of smooth things over and move forward with that trade agreement.
Yeah, Balazs, thank you so much. It reminds me of an article I read this morning from Bloomberg Economics. They looked at all of the various tariff announcements that's come through from the Trump administration. Only 20% of them actually get implemented and followed through. So maybe that's one of the reasons why the Kospi market is just looking through the threat this time. Thank you. Well, Asian stocks are hovering near record highs, and currencies have steadied today as markets regained some stability following speculation over possible yen intervention or yen intervention. For more market insights, Ryan Lamond, CEO and co-founder at Neovision Wealth Management, joins us from Abu Dhabi. Ryan, always good to chat to you. I believe it's the first time we've spoken this year, so Happy New Year to you. There's a lot to unpack here, but maybe let's just start with the fact that there's been a lot of geopolitical headlines at the start of this year. Once again, tariffs coming in focus this morning, but it really feels as though markets have the ability to look past a lot of those headlines and really focus on key drivers, including monetary policy and earnings. Why do you think that is the case?
Good morning, Romana. Great to be back. Thank you for having me. Well, markets have become a bit resilient because they've gone through Trump 1.0 and now Trump 2.0. Obviously, Trump 2.0 dwarfs Trump 1.0 with everything that is happening, the announcements, Greenland, tariffs, etc. But as you said, when we used to open our Bloomberg terminals, Trump 1.0, the first thing we used to look at are Trump's tweets. Today we do the same thing, but today we take it a bit less seriously because, as you rightly mentioned, less than 20% of the things he announced actually goes into effect. However, we remain extremely cautious and nervous because we're really afraid that something goes into effect that could seriously hinder markets or international geopolitics. The weaponization of trade, banking, finance, and the US dollar have had a detrimental effect on the US, and we're always afraid of an action that could be, again, detrimental.
Yeah, Ryan, in our conversations last year, you were a bit skeptical about the extent of the AI rally. And you again look at the playbook this year, and even David Solomon was just speaking to our colleague there, talking about a possible broadening out of the rally. And yet you look at the biggest drivers of the S&P this year, it's still the tech names. And actually, this year, what you're seeing is memory chips as well are having a great run, a great start to the year. Do you expect that to change?
Well, Romana, in our conversations, early 25, mid 2025, I've been negative on two things: US dollar and US stocks. S&P 500 in 2025 has gone up by 18-19%, while the US dollar has dropped by 9%. The US S&P 500 has been one of the worst performers among developed markets. If you look at NVIDIA and a few tech stocks, they've been relatively going sideways the past 6 months. So it's unimpressive. Now, what is positive is the Russell 2000. So the rally in the Russell 2000, in our opinion, signals broadening of that rally, and it's something more positive because we as institutional investors were not very concentrated in our portfolios. We diversify, and we cannot just focus on tech. We have to focus on everything else, and that's why we've been negative on US stocks. Today, with the broadening, with the Russell 2000 starting to move a bit, this is quite positive for US stocks, so we're cautiously observing it. As for tech, well, NVIDIA is 186, going sideways.
Yeah. Okay, clear on that point. One other question for you. We're eagerly anticipating the announcement of who the next Fed chair is going to be. Rick Rieder has massively moved up in betting odds over the last couple of days, and he was not the front runner a couple of months ago. Do you think that will be well received by the market, and if so, why?
It's very hard to say. We were sure about previous candidates, and now we're not sure anymore. So I prefer to be very cautious there. What I'm sure about is that President Trump will select the candidate that will implement the monetary policy that he wishes to support his administration plans, strategic plans. And this is a very relaxed monetary policy, reducing interest rates, etc. And that's obviously very positive for markets. Will it be positive for the macroeconomic backdrop of the US? I'm not so sure. So again, regardless of the name, what I think President Trump will choose is relaxed monetary policy.
Okay, Ryan, to round things up, I also want to ask you about the big story of the week. That is the price action in dollar-yen and the fact that there is really high anticipation that some form of job owning or intervention is going to take place. How do you see the outlook there? We've seen a massive repricing of Japanese assets, be it in JGBs and in currency space over the last couple of weeks. Are these intervention attempts going to be successful?
So this is one of the rarest times where we see that the Japanese yen pricing Japan rather than pricing international, pricing US dollar. So today the Japanese yen, I think, is reflective of what's happening within Japan, where the Bank of Japan is very reluctant to intervene because all of the assets that are held by the Japanese Bank of Japan and by Japanese investors abroad, and particularly in the US. And second, you have the carry trade. So if the Bank of Japan actually raises rates because inflation is going up, and rightfully so, they have to intervene, this will affect all of these capital exporting activities of Japan. And that is why today, I think holders of the Japanese bonds are quite cautious, are afraid that actually the Bank of Japan will not intervene. And this is why they're selling it. So we've seen a Bloomberg news story about the US buying Japanese yen a la 1985. And I think this could be quite dangerous for all of these capital flows happening between Japan and the United States.
Ryan, always good to chat to you. Thank you so much for joining us today. Ryan Lamont, CEO and co-founder at New Vision Wealth Management. Okay, we're getting some earnings coming through from some of the key Saudi banks. So let's start with SNB, Saudi National Bank. Full year profit has come in at around just over 25 billion riyals. The estimate was 23.69 billion riyals. Full year impairments 1.03 billion riyals. Operating income coming in at 39.2. But so far what we're getting for the profit is that it is a beat versus the estimates. So that is the picture for Saudi National Bank, and you can see over the course of the past year it is up 25%. As for Al Rajhi as well, also reporting this morning, third quarter profit is full year profit, I should say, coming through at 24.79 billion riyals versus estimates of 24.51 billion riyals. So a little bit of a miss versus expectations. In terms of full year EPS, we're getting 5.85 riyals. The estimate was 5.85, so in line with market estimates there. Operating income, 39 billion, just slightly above versus estimates of 38.5. So on the top line, we are seeing a bit of a beat. Full year impairments also in line with estimates, coming in at around 2.32 billion versus estimates of 2.31 billion. So what we got is a beat on the top line and then a small miss on the bottom line. That full year profit coming in at 24.79 billion riyals versus estimates of 24.51. And coming up, the European Union and India have concluded negotiations on a free trade agreement. More details on the trade pact next. This is Bloomberg.
来た来た。ああ、どうも。データの整理に手こずっちゃって。サスバイヤ使ったら？サスバイヤね。あ、うわー！ほらね。膨大なデータからキーポイントを導き出す最速の方法、サスバイヤ。
Invest in Kuwait is about coming together as an ecosystem of partners and collaborators. Partnering with giants and hyperscalers is really enabling the country to diversify its economy.
With a robust infrastructure and a skilled workforce, Kuwait is prepared to lead the region with AI and cybersecurity.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. The European Union and India have concluded negotiations on a free trade agreement. European Commission President Ursula von der Leyen is currently in India to meet with Prime Minister Modi as investors await more details on the deal, capping almost 2 decades of negotiations. It's taken a little bit of time. For more, we're now joined by India government reporter Sudhi Ranjan Sen. So we finally have a deal. What are the details of this deal and why is it so significant?
Well, I mean, as you said, I mean, this has been long in the works, and it's finally, it's across the line. What we are likely to see is an announcement of conclusion of the deal. Signing is still some way away because it needs legal scrubbing. What it would do is that 90% of trade between India and EU, tariffs are going to, drop drastically, and that is going to, bring in a new buoyancy, a new momentum in the trade between the two countries. Of course, the backdrop of this trade deal is why it makes it very important, and the backdrop is the world order in completely upended because of US policies, and that is one of the biggest triggers for both of these to come together and get this deal done and push it across the line. So that's the importance of the deal. And very tricky issues now seem to have been, resolved amicably, such as steel, such as carbon tax. Sorry, and all these issues are now, now all sorted and sealed, so to say.
Yeah. So it's not just economics and exports. There was also an angle around a proposed security and defense agreement. What do we know about that as well?
There is, a security and defense agreement that's also in the works, likely to be announced. And from the background briefings that we have had, the reporting that we have done, it's going to be announced today. That's the understanding. That's the expectation. Now, what it does is it sets up a framework between the two, entities, so to say, and therefore it will help companies. It will help, to jointly produce, jointly develop, although much of those decisions still will be up to individual states in the European Union and also to individual companies. But this sets up a framework, this sets up a template, and that is going to ease in a lot of this. And again, there is a background to it. India is widening its defense sourcing away from Russia, which while is the still biggest supplier, India is moving away. And recently we have reported that India wants to build submarines with Germany. That's a multi-billion-dollar deal likely to be announced soon. Similarly, India is looking to make fighter jets with France, again a multi-billion-dollar deal. So all these things which are in the works just will get facilitated by this agreement.
Sudhi, thank you so much. And as you say, it has been a long time coming, so it's good to see some developments in the space and more details on exactly what that trade deal looks like. Sudhi Ranjan Sen, Bloomberg reporter in India. Now, coming up, PwC is said to resume work on pitches to the Saudi PIF after the ban ends. We'll have all the details next. This is Bloomberg.
Invest in Kuwait is about coming together as an ecosystem of partners and collaborators. Partnering with giants and hyperscalers is really enabling the country to diversify its economy.
With a robust infrastructure and a skilled workforce, Kuwait is prepared to lead the region with AI and cybersecurity.
we're not thinking about hiring right now. That will change. This is a great time to be alive, I think.
Don't miss Open Interest live weekdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Bloomberg has learned PwC executives have asked teams to resume pitching for work with Saudi Arabia's wealth fund as a one-year ban comes to an end. The ban temporarily prohibited the consulting firm from advisory and consulting services contracts with the Saudis' PIF. Let's get more now with Bloomberg's Omar El-Shmouri. First of all, I can't believe it's been a year. I don't know where this year has gone. What sort of an impact has this ban had on PwC?
Good morning. So to put this in context, the PIF has been the entity anchoring Saudi Arabia's economic transformation drive, and that has resulted in a boom for consulting services across the region. So PwC, for instance, made about £2 billion in the fiscal year ending June 2024. That was a 26% increase from the year before. They were projecting similar results, but then the ban put a dent into these, trajectories of growth, and it also came at the backdrop of a broader slowdown in Saudi that has affected the industry. So as a result, they've laid off about 1,500 members of their staff, including 60 partners. So that was quite a blow.
Wow, okay, that is a substantial figure, so it's clearly had an impact on PwC. Do we have a better understanding of what exactly happened in order to understand how the issue was resolved?
Right, so they haven't officially disclosed, both parties, the PIF and PwC. We know that PwC's global chairman, Mohammed Kandeh, flew to Riyadh for meetings with the PIF to resolve the issue, but nonetheless, they still had to complete the year. So as of last week, we learned that they've resumed pitching to the PIF, and they've been investing quite heavily in the kingdom in terms of localization drives and talent training programs, as well as moving their regional headquarters to Riyadh, recently opening a very big office in the capital city.
Okay, and what does it more broadly mean for the consulting sector as a whole? And as you say, there's the specific to PwC, and then there's the broader macro going on right now with consulting, where I believe activity has declined quite a lot.
Right, so the ban was definitely a shock to the industry. I think it was a chance for them to review their practices. We know that some bids have become more competitive amid the slowdown, and there are broader layoffs. So I think they need to adapt to a changing environment, which is driven towards more implementation, execution, rather than just strategy consulting.
Yeah. Omar, thank you so much for bringing us that story. Bloomberg's Omar El-Shmouri. Well, coming up, we speak to David Hale. This is the Natural Resources Portfolio Manager at 91 on his outlook for precious metals as the gold and silver rally continues. And that's also driving up the fortunes of some African nations. We're going to be talking about which ones in particular are really benefiting off the rise in the prices of these precious metals. That's all coming up next. This is Bloomberg.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
Stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today.
On President Trump to pull the immigration officers out of his state.
President Trump, you can end this today. Pull these folks back. Do humane, focused, effective immigration control. You've got the support of all of us to do that. Let our law enforcement continue to do what they do, making Minnesota one of the safest states in the country, one of the best places to live.
Well, with us now, Ursula Marchioni, EMEA Head of Investment and Portfolio Solutions at BlackRock, and Stephanie Baker, Bloomberg Senior Writer and author of Punishing Putin. So thank you both for joining us. Stephanie, the images coming out of Minnesota are really pretty astonishing. We hear that a lot of congressional Republicans are now also showing signs of wavering on the immigration crackdown after this U.S. citizen was shot and killed.
Yeah, there are a handful of MAGA Republicans that are coming out against this because of a number of reasons. For one, the fact that some of the Trump administration officials are saying he was brandishing a gun, and for many conservative Republicans, they view the Second Amendment right to bear arms as central. He was carrying the gun legally, and according to the footage, which we all saw, he was not posing a threat. It does not appear in any way that he brandished that gun. He was restrained and had taken the gun from him when the agent shot him multiple times on the ground. I mean, I think it was so shocking to everyone who saw it that I think it is a real turning point in this immigration crackdown by Trump. And you had that New York Times poll last week, which showed 61% of Americans think that ICE tactics have gone too far. So whether or not that funding bill will go through, whether or not they can strip out DHS funding from a number of other bills, that remains to be seen. That would prevent a wider government shutdown and prevent other agencies from being denied funding.
Stephanie, I mean, what happens next? State and city officials keep on repeating their calls for federal officers to leave and also demanded that Minnesota's authorities take over this investigation. What happens next?
Well, Trump gave an interview to the Wall Street Journal last night, briefly, saying that there would be an investigation. I think that is going to be the central theme, that there's going to be calls for a full investigation. The question is whether or not state officials will be allowed to take part in that, because I don't think there's any trust in the Trump administration to carry out a fair, thorough investigation of what happened. If DHS carries out the investigation, I don't think anyone will trust the findings of it, and whether or not the courts will intervene to try to make sure that state and local officials are allowed to participate. I think that will be a key factor to watch.
I mean, crossing to the markets, Ursula, there's, we talk about a possible shutdown, trying to strip some of the funding, but it's not really playing out on the markets.
No, not yet, Francine. And I think also, I'm just back from a big trip to see clients. I think it still adds to that duality that our European investors are grappling with. On one side, since COVID, the big exposure towards the US, which is now 72% of the MSCI World, 64% of the MSCI ACWI, from investors with historical own bias towards Europe, that has to be rectified. But then on the flip side, from a more tactical perspective, there is this desire to diversify and remain exposed to the AI trade and to the US, but with some form of protection. And so we've seen last year the great repatriation trade with nearly 92 billion of flows going back into European equities ETPs. If you compare it to the period 2014 to 2024, that was 94. So it's basically a decade in a year.
But I mean, it just feels like there's a lot of money out there. So prices or risk isn't really being priced because we're awash with cash. Is there anything that you're looking at? I know there's a big big story with like yen extending gains. There's, pointing to some intervention risks. But apart from specific flashpoints, what is the market pricing in?
I think it's a very good question, and there is the element of what markets are pricing in and how investors are reacting. I think that, with all the headlines around AI and where is the way forward, obviously we're entering a big week this week, we remain... we have conviction into very strong earnings, and again, this week will be important, resilient profit margins, solid balance sheets. But to your point, I do see investors wanting to take part in that, but at the same time, take into account other diversification elements, which could be, trading around AI or beyond AI, thinking about European defence or US healthcare, thinking about diversifiers in portfolios. We've just seen gold crossing the historical level of 5,000. There's still a lot of appetite there. It's kind of solidifying itself as the hedge for everything. Hedge funds, buffer strategies, long, short investment solutions. I think that's where we continue to see appetite for, in this desire to balance out, remaining exposed to markets, but with care.
With care. What did we learn last week in Davos? I mean, it was pretty incredible looking at this new world order taking shape. It's unclear what happens in second, third, and fourth quarter.
Well, I think the Trump backtracking on Greenland was very significant. There's been a lot of discussion about that as to why he did that. I mean, it does seem to me the tariff threat to European countries over Greenland caused the markets to react, and that's what pulled Trump back. Now, we still don't know what the exact agreement is, whether or not, for instance, they will allow U.S. bases to have ownership over that territory, much like British forces have in Cyprus. That is totally unclear. What about mineral rights? It's very hazy what was actually agreed, and I don't think Trump is done. He may come back with further threats, but it does seem like this was not a serious, I said on this show a few weeks ago that he'll come up with some sort of fudge, an agreement to back down on it, but we don't know what's been agreed.
Stephanie, how much of it was also pressure from Republicans? I mean, you heard it quite a lot on the ground in Davos, that maybe there was a wishful thinking in saying, well, look, there's a Congress, they got this, they don't want him to invade Greenland.
Well, I would have expected more Republicans to speak out, considering the situation. So I do think it was really the markets that pulled him back. And, the markets are the most powerful thing here and seem to be the only real check on Trump. It's not Republicans in Congress, unfortunately. Now, and you see that even with, Minnesota, that, there are few Republicans. But given the situation and what everyone can see in that video, you would think there would be more Republicans that would call this out as, at the very least, a law enforcement operation that has gone terribly wrong, and that there should be a full investigation. So, I'm kind of surprised.
View on natural gas and crude oil, ऐसा कोई view नहीं है सिर्फ फिलहाल के लिए. Support resistance है, वहीं पर buying selling है. मैं इंट्राडे में व्यू लेके नहीं चलता हूँ, कि आज मार्केट बुलिश है, बेरिश है. बेरिश है, सपोर्ट दिखेगा तब भी बाइंग होगी. बुलिश है, सपोर्ट दिखेगा तब भी बाइंग होगी. And vice versa.
With the geopolitics and the AI last week, are you worried about job losses? We had also a survey today saying that the UK actually will probably suffer more job losses in the smaller term comparative to the workers than other countries, or do you have valuation concerns?
So, good question, and I think as we get into FOMC this week and we'll hear more, you mentioned in terms of labour market, I'm thinking about a lot of the headlines.
क्रूड बेरिस मैंने बताया ना, मेरे को मैं ऐसा कुछ नहीं बताता हूँ कि बुलिस है या बेरिस है. मैं ऐसा व्यू लेके नहीं चलता हूँ. मेरे को दिखता है सपोर्ट है तो बाइंग करता हूँ, नहीं दिखता है सपोर्ट नहीं है तो नहीं करता हूँ, फिर भले ही मार्केट किसी भी ट्रेंड में हो. इंट्राडे में ट्रेंड का कोई वैल्यू नहीं होता मेरे अकॉर्डिंग. तो आप सपोर्ट रेजिस्टेंस देखो, वहाँ पर ट्रेड करो, दैट्स इट. हाँ, अगर आप स्विंग ट्रेड ले रहे हो, पोजिशनल ट्रेड ले रहे हो, लॉन्ग टर्म थोड़ा सा इन्वेस्टमेंट जैसा कुछ कर रहे हो, तब ट्रेंड देखना पड़ता है. दैट इज़ फाइन. इंट्राडे में 15 मिनट, 5 मिनट, 1 मिनट में ट्रेंड का कोई लॉजिक ही नहीं हुआ. हो सकता है मार्केट कंटिन्यूसली बुलिश अप ट्रेंड में हायर हाई बनाता हुआ देखिए, रेजिस्टेंस पे आएगा तो वहाँ पर सेल ही करना पड़ेगा ऑब्वियसली. सो ऐसा कोई पर्टिकुलर व्यू नहीं है फिलहाल के लिए. नेचुरल गैस क्रूड ऑयल पे नीचे सपोर्ट जरूर है, तो जब तक प्रॉपर्ली ब्रेकडाउन नहीं होता $60 के नीचे, तो एक्सपेक्टेड है ये सपोर्ट जोन.
in adding diversifiers to portfolios, which persists.
क्रूड ऑयल में मैंने यहाँ पर ये फॉरेक्स का चार्ट लगाया, M6 नहीं लगाया, तो थोड़ा सा ध्यान रखना। कल एक ट्रेड लगाया था सेलिंग का, उसका टारगेट हो गया था, अभी नीचे सपोर्ट है तो एक्सपेक्टेड है वहां से एक बाइंग। ठीक है, क्रूड ऑयल में फ्यूचर का चार्ट, M6 का फ्यूचर चार्ट नहीं लगा रखा, फॉरेक्स चार्ट है यूएस क्रूड ऑयल। एंड नेचुरल गैस में ऑलरेडी एक्सपायरी हो गई थी ऑप्शन की कुछ दिन ही, तो नेक्स्ट मंथ का ही कॉन्ट्रैक्ट है नेचुरल गैस का, फरवरी मंथ का। फरवरी मंथ में ही ट्रेड कर रहे होगे अगर ऑप्शन ट्रेड कर रहे हो तो। फ्यूचर में वैसे आज एक्सपायरी है करंट मंथ की, जनवरी मंथ की, तो चाहो तो वहाँ भी ट्रेड कर सकते हो, बट बेटर रहेगा नेक्स्ट मंथ में ट्रेड करो फ्यूचर में।
This guy Kirill Budanov, who's a very serious guy. I've interviewed him in Kiev, and he is now negotiating with his counterpart in Russia ahead of military intelligence. So it's a far more serious set of talks. They seem to have made some agreement. I'm quite skeptical still.
नेचुरल गैस थोड़ा सा बुलिश ही है, लगता नहीं है कि इन्होंने नीचे परसों का जो लो था 310 वो ब्रेक करेगा। नीचे सपोर्ट अच्छे बने थे परसों, वहां से ऑलरेडी बाइंग आ गई थी। याद होगा एक रीटेस्ट था और रीटेस्ट से बाइंग किया था, एक फर्स्ट टारगेट हो गया था, मैंने कहा था ऊपर तक और जा सकता है 353 तक, तो गैप अप हुआ, वहां तक ऑलरेडी चला गया है। फिलहाल तो थोड़ा सा साइडवेज ही है अभी इंट्राडे में।
Of a new embassy in London. We'll discuss all of that with Ms. Rahman, European Managing Director for Eurasia Group. He joins us next, and this is Bloomberg.
Wednesday. The Fed decides.
It really feels like the door is closing for another interest rate cut.
The economy is actually still in decent shape.
The market is betting the Federal Reserve retains its independence.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How does Fed Chair Jay Powell position himself as being politically independent?
You don't plan on Donald Trump's economic vision.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the Chinese President Xi Jinping has moved to probe his top general and one-time ally. Now, the investigation comes after the Wall Street Journal reported the general was accused of passing secret information about the country's nuclear weapons program to the U.S. We're now joined by Alan Wong, Bloomberg's China economy and government editor. Alan, thank you for joining us. So what do we actually know so far about Xi Jinping's move against his top general?
Yeah, the Chinese government hasn't said very much about the investigation itself, but what we know is that one of the most senior general in the Chinese military was investigated, and along with another member of another general on China's top military decision-making body. So that means that there's only 2 people left on that normally 7-member panel of decision makers, including President Xi Jinping himself. What is so stunning about this development is that Zhang Youxia was considered a close ally of Xi Jinping. Their fathers both fought in the Civil War, and Zhang was seen as one of the few people in the Chinese military who actually had combat experience. So his downfall meant, at the very least, that there's no one safe in Xi Jinping's perch of people believed to have violated its corruption rules and also party laws. But to the extent that we know from official releases, we know that he's being investigated for violation of party discipline, but then a PLA Daily writing piece detailed some of those allegations, saying that he's accused of violating party discipline, but also trampled on the integrity of various party rules. So that is a very coded way to say that he betrayed and tested the authority of Chinese President Xi Jinping.
Alan, thanks so much. And this, of course, has implications for the rest of the world in geopolitics. Bloomberg's China economy and government editor Alan Wong. Now, the British Prime Minister Keir Starmer looks to reinvigorate strained business ties with China when he travels to Beijing this week. The UK government recently approved a new Chinese embassy in London, ending a years-long saga that had strained bilateral relations. With us now is Mish Raman. He's European Managing Director for Eurasia Group. Mish, thanks so much for joining us. Look, it's unclear, and we heard this also with, in Davos last week. It was definitely Mark Carney that kind of broke away a little bit that alliance with the U.S. They're looking to China. But is China de facto the counterpart for allies that no longer want to be dependent on the U.S.?
So you are seeing lots of countries now look to diversify their relationships away from the United States. I think we've seen that reflected with the EU attempting to get that Mercosur deal over the line last week. You're seeing Ursula von der Leyen, she's in India, looking to conclude a free trade agreement. The problem with China is many countries have problems with the regime, the nature of the regime and things the regime has been doing in the European theatre that run counter to European interests. That's aid and non-lethal aid into the Ukraine theatre, it's overcapacity, it's the trade distorting subsidies. And so as they try to find a way through with the US administration, I think there is a question now as to whether the de-risking approach that many countries have articulated now shifts. I think for Starmer in particular, it will reinforce this sense of never hear Keir. I think the Tories and Reform will absolutely go after him for kowtowing to Beijing, but he'll try and make this trip about the domestic agenda, jobs, investment, etc.
But, I mean, if you get too close to China, does President Trump retaliate? I mean, is everything, are we questioning everything that policymakers are doing in case Trump retaliates?
I think that's one motivating factor, but as I say, I think there are other concerns many countries will have about getting off that de-risking agenda, certainly for the Europeans and indeed for the Brits. And so they're going to try to find a balance here, a way through where they both remain, close and constructive with the Americans, while at the same time cognizant of the risks that come from getting closer with the Chinese.
Also, what's happening in the UK Labour Party? So, Keir Starmer allies barred the Greater Manchester mayor from standing as Labour's candidate. I mean, this is a widely popular person, so does he feel threatened?
I mean, Francine, you know my view. I don't think Starmer will see the year to conclusion. I think he is going to face a leadership contest, the midterm regional elections, 7th of May. That's going to be a massive problem for Starmer and for Labour, given their likely performance in Scotland, in Wales, in the English councils. And so I think a leadership challenge is coming. Andy Burnham would have been a favourite and a darling of the soft left. The unions like him. He's very popular, obviously, with the base. And so that would have reflected, I think, a big threat for Starmer, and that's what they're trying to manage in the very short term. But that doesn't prevent these structural challenges that have prevented Labour from performing well. They don't have a plan for power. Starmer hasn't managed the parliamentary party well. The polling is abysmal. They don't have a clear narrative or a message for the country. And so I think a leadership challenge will come. I think Angela Rayner is my base case to replace him. If not, then I think West Streeting is highly likely to succeed if Angela Rayner does not.
Mitch, what does it mean for the economy? Because what they offer at the moment, they say, is stability.
I mean, I think if it's a leader to the left of Starmer, and it will be, they're going to want to pick apart the fundamental, let's say, governing philosophy of this government, which is going to be a change to the fiscal rules. I don't think they're going to throw the fiscal framework in the bin. Angela Rayner, these guys on the soft left, that's not the same constituency as Corbyn and his allies. So whether it's a West Streeting, whether it's an Angela Rayner, I think we're looking at a tweak to the fiscal rule, but their instincts will be to borrow and spend more. I don't think they'll want to sign up to the fiscal straitjacket that Reeves and Starmer have alighted on, that is dictating so much of what the government is and is not able to do on their domestic agenda.
Mitch, what happened over Greenland? So I love your piece, actually, that it says Trump's ruling out of military action does not diffuse the crisis. That's what I felt.
Right.
I mean, there was like a sigh of relief in Davos saying, oh, he's not sending the military, crisis averted, let's move on.
Right.
But it's deeply disturbing, actually, when that's even, a base case.
So I wrote that piece after Trump had excluded a military intervention, so military adventure, but then we had the further climb down later in the day where he talked about working through the NATO framework. So now I do think the most extreme tail risks have been controlled for, the tariff threat and any unilateral intervention, whether militarily or through economic coercion. So he's going to do a deal in the NATO framework and bilaterally with Copenhagen and Greenland. I think the remarkable thing is this is a deal that's been on the table for over a year.
Right.
The Danes, the Americans and the Greenlanders have been talking about reinforcing security on the island for the Arctic. But Trump was opposed to working with NATO and felt that he needed sovereign control over the island in order to deliver on these security goals. I think a combination of European resolve, congressional and public opinion in America, and of course market pressure resulted in that big taco that we all saw in Davos last week.
I mean, does the president go back after Greenland? Because he doesn't, I mean, a lot of the times what I'm told by people close to him is that he just doesn't let go.
I mean, I think on Greenland, I think we're in a more boring negotiating corridor now. I think the risks have largely been controlled for, and I suspect there will now be an agreement that sees the Americans reinforce their security on the island, but they do it in a context through NATO with Rutte and bilaterally with the Danes. Maybe they upgrade the 1951 treaty that will give the US more of what they're looking for. Sovereign bases on the island is something that's been talked about. As long as that's done in conjunction with Denmark and Greenland, that may be a possibility. It doesn't mean other risks in the transatlantic alliance don't remain real. I mean, Europe has signed up to a 5% spending target by 2035 on security and defence. Many countries, Francine, just don't have the fiscal pathway to get there, the UK and France being two very obvious examples. And so at the moment of this midterm review, there may be a question when the Trump administration looks at the numbers and says allies aren't following through on their commitments. There remain very real risks in the Ukraine theatre. The administration...
Which by and large is forgotten about.
Which has been completely forgotten about. But again, where the administration is really pressuring Zelensky to concede to territorial concessions in the Donbass, in particular in Donetsk, in areas of territory that the Russians have not been able to win on the battlefield. So that remains an existential and very real risk for Europe. And of course, implementation of the trade deal is now stuck because the European Parliament said they're not going to ratify it. So that creates the risk of more bilateral tensions. There's, of course, things around free speech and the Digital Services Act and the Digital Markets Act. And so there are many irritants and many potential sources of friction in the transatlantic relationship that may blow things up again.
Do you have a better understanding now what this new world order could look like?
I mean, I think the Europeans are getting to grips with a new world order that isn't governed on the basis of rules and norms and institutions that they're so comfortable with. And I think we are beginning to see the Europeans flex a little bit more. But again, Francine, it's about that Draghi agenda on economic competitiveness. It's about capital markets union, about the tech ecosystem, about doing more to ensure the Europeans, as Macron has always said, can be more strategically autonomous. And I think there is still some ways to go.
Is there a timeline problem that you can be more autonomous, but it takes time to build up your supply chains, to have access to rare earths?
I mean, I think it's a crisis and non-crisis context problem for the Europeans. I think there's always this question about will Europe perform well in a crisis? And my general expectation is it tends to perform better than consensus suggests. The problem with Europe is it doesn't have a playbook for governing in normal times. So as soon as the existential threat has removed itself, as soon as the environment is a bit less menacing, everybody again begins to rest on their laurels and some of these important reforms don't move forward.
So interesting. Mish, thank you so much. Mish Rahman there, Europe Managing Director for Eurasia Group. Coming up, what does Europe need to do to boost business and deal making? We'll discuss all of that with Hugh Van Steenis from Oliver Wyman. That's next, and this is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. A partial U.S. shutdown looms as Democrats threaten to block a funding package after Border Patrol agents killed a man in Minnesota on Saturday. Traders on high alert for intervention on the yen as Japanese authorities say they'll work closely with the U.S. to defend the currency. Plus, the biggest winter storm to hit the U.S. in years brings travel chaos, the threat of blackouts, and the highest natural gas prices in more than 3 years. So traders on a heightened alert for Japanese authorities intervening in the FX market following the yen's recent slide. Potential U.S. involvement could also worsen sentiment towards the world's reserve currency. Let's bring in Ven Ram, Bloomberg MLive cross-asset strategist. Ven, it's so good to speak to you. So this is the strongest gain for the yen since mid-November. Is it likely to continue its advance?
Morning, Francine. I think definitely there's a case for the yen to be rallying in the short term. It's going to be a very tactical rally, particularly through the first quarter, I think, because what is clear from what has happened since Friday in the currency complexes, the Fed New York is also in the act of weakening the dollar. So I think that, when the Fed goes all out to want a weaker dollar, I think investors are paying heed. And what we have seen is an unwinding and a flushing out of long positions, long dollar yen positions. So I think that's got further to run. And I think that with the U.S. administration actively seeking a weaker U.S. dollar, I think that the yen gains have got further to go in the first quarter.
So gold marching higher, what could, if anything, bring it down?
Well, I think that it's become a bit of a self-fulfilling prophecy, this rally in gold. Markets wanted 5,000 for a long time. They've got it now. But even the most optimistic outlook out there is from Goldman Sachs, which are calling a level of 5,400. But I don't think, the risk-reward equation on gold doesn't look too good from here. So I think that the markets, unlike the October flash crash when it crashed about 10%, Francine, I think the markets are now better prepared for a correction in gold. If you look at the wall expressions on gold and silver, they are pretty high. And they are thinking that, gold could tumble to as much as $4,700 an ounce in the short term. And for silver, they're expecting a pullback to $86 an ounce. So I think that this is a market that is acutely aware that these gains are getting overextended at current levels.
The Swiss franc, Ven, also making some of the strongest levels ever seen. What's driving it, and how problematic is this for the SNB?
Well, I mean, the haven bid knows no let-up in the franc, but I think it's going to become increasingly a headache for the SNB for two reasons. If you look at the real effective exchange rate on the Swiss franc, it is creeping up to levels where the SNB has previously had to intervene in the currency to pull back some strength. But also what it means is that tighter financial conditions in Switzerland, which of course will bring down inflation. But to the extent that it brings down inflation, it may not be good because the SNB already expects inflation to trend only 0.3% this year. So if inflation goes even lower than that, then they may have to impose a negative policy rate, which of course they don't want to do. So I think that this poses a headache for the SNB. There's no question about it. The question is when do they intervene from here?
Thank you so much, Ven. Bloomberg's MLive cross-asset strategist on Yen Watch and on Frank Watch, our very own Ven Ram. Now, we're fresh off the slopes of Davos. I'm not sure about the slopes, but the Congress Central rooftop, more like, where leaders across the world declare that the old order is gone. But what does this mean for global business and deal-making? Now, many global leaders we spoke to last week mentioned the importance of strong supply chains, established industries, and sovereign AI to national security. My next guest argues that if Europe really wants to realize its AI energy and industrial ambitions, it needs to up its risk appetite and deepen its capital markets to enable these long-term investments. Well, joining us now is Hugh Van Steen, as partner and vice chair, and Oliver Wyman. Hugh, as always, thank you so much for joining us. Look, we know, I mean, everything that I heard in Davos was CEOs from Europe saying we need a capital markets union, we need it, why is it taking so long? And yet we still don't have one.
No, very much, Francine. Well, thanks for having me on again. Look, I think there was the real positive from last week was the penny was dropping in Europe that you needed to have broader and deeper capital markets to fund the extraordinary trillions of investments that folk want. I mean, the statistic we had was that in the last 7 years, there's been $68 billion raised for data centres in the US capital markets via securitization, less than $1 billion in Europe. And I think that's a key bottleneck that we need to address. What's fascinating, though, is how many US investors are actually financing Europe's data centres. So it's one of the bizarre things. I came away actually thinking, one always thinks that what's the consensus trade at Davos? It was the end of globalisation. I just don't, I think that's too strong. I think it's de-risking rather than decoupling. And I see many reasons why there's still going to be plenty of capital flowing back and forth.
But can the Europeans organise themselves and actually move away in terms of dependence to the US, which doesn't mean that capital doesn't flow. It just means that you're reducing your vulnerabilities.
Well, look, so I think there's two aspects to that. One is could they, and the second is will they. I think what's fascinating is how even many large asset pools, asset owners that I met there, still were very bullish about US because of the tech dominance and the AI prospect and also other projects. And so even when you sell an asset, you need to find something else to buy. One of our good friends, Katie Koch from TCW, had a nice line about there's a quiet quitting from the US. There's a small slithers where strategic asset allocators are slicing and reconsidering, adding a little bit more to Europe, adding a little bit more to Asia. And that's my sense from having met many investors last week.
What is the biggest fault for Europe? I mean, as you say, it's not the lack of savings. Is it a lack of risk appetite? Or is it a lack of capital?
So I think it's a mixture of regulation and then the way the money's held. What we really need is risk capital. So it's venture capital, it's private equity and sort of private credit. And it's the richness of those private markets where we're just a lot thinner. Now, the good news is there's many global pots of money which are coming to Europe to raise. I mean, I was also struck that last year there was a 40% increase in private credit raised in Europe, actually mostly from international investors rather than domestic ones, but we just don't have that depth and breadth of pension funds and long-dated. And so what I put in that piece was we really need to allow insurers to be able to put that patient capital to work. And it's that risk capital where we lack.
Infrastructure is actually quite strong in Europe.
Infrastructure is quite strong, but of course, what's really bizarre, Francine, that over the many years we've known each other, banks now are in the best health for 17 years. In fact, in some cases, probably better health than they were even before the financial crisis. And yet, the way regulations straitjacket them, they're not meant to do these 10, 15, 20-year projects. So they can do the development, but then they have to pass the baton to an investor. And actually, it's the sovereign wealth funds, actually, who are funding a lot of Europe's infrastructure.
Is there any regulation that actually you think is beneficial to Europe? I know there's always a joke, and I heard it many times in Davos, that actually Europe always regulates, that's why everything's constrained and they can't boom as much as the US. But when something goes wrong, maybe pockets of consumers will be more protected than the US. How do you weigh that?
Oh, well, of course. Look, there's many aspects of regulation which are positive. I mean, we'll go back to it. If you look at it, Eurozone banks are in the best health they've been since 2009. In fact, their earnings share of Eurostocks is higher than it was since March 2009. So there's many aspects that we've cleaned up the system with good regulation. But also, it's highly unlikely that 17 years ago we got all the rules right. And so there's a level of recalibration we need. And I think sometimes the frustration is a little bit of bureaucracy not to look afresh about where there might be blockages. And particularly in a world where there are choke points, we do need to invest in infrastructure. We do need to have credit flow that a little bit more smoothly.
Do you see European companies, European investors, European pension funds moving away from, if not dollar-denominated, just US assets in general?
I think to a small extent. I mean, obviously, the scale of our markets is so much smaller than the US, even if someone sold 0.5%.
We have quite a lot of treasuries, though.
Well, exactly. No, that's true. No. So on the bond side, I don't see as much. I see a small slither of reallocation. I mean, we saw it particularly Q2 last year. Then there was an increased investment in the States. Actually, what I came away from Davos was every conversation went back to gold, as you were just discussing. Gold, silver, platinum, copper. That's markets where there's a lot of reallocation. But of course, there's a lot of interest that the fiscal impulse in Europe is improving. There's some level of diversification, and there's plenty of projects which need to be financed.
But is gold a pure play away from U.S. assets? Or is it also, the fear of inflation and other things? What's the function of gold today?
Well, like many narratives, there's a number of reasons. No, but the key one is a little bit of nervousness about inflation. So actually, one of the most interesting conversations I was in last week was between asset owners. There's a greater disparity between GDP growth because of AI and employment. And the more that gap expands, the more the Fed, with its dual mandate, probably does worry about inflation and could let the economy run hot. And then inflation expectations, which are, 2.5% for the next 2 years, could tick up. So that's one of the worries for gold. But the other is, of course, is just in a world which is a bit more mercantile, a bit more gunboat diplomacy, actually gold just feels that little bit of safety. And if you go back to the 70s, most individuals were encouraged to hold 15% in gold. We're a long way from there.
Yeah, but now also silver. Do you see actually one of the big conversations that we had is when you look at AI, when you look at infrastructure, it does go back to these commodities.
Yeah,
right?
So I think there's two aspects. So one is obviously the US and the rest of the world trying to de-risk to the supply chains of all the critical and rare minerals that China has got sewn up. But also, with AI, there's a huge shift towards electrification. In fact, not independent of all the EVs, actually data centers are shifting way more to electrification, which then there's going to be real bottlenecks around copper, platinum, and so forth. So actually, a lot of the thesis is actually an acceleration in electrification.
What was the best conversation you had, or the most surprising conversation you had in Davos?
Aside from with you, that. I think, well, it was the bullishness. So, in fact, many of the asset owners who want to put money to work are frustrated with private equity not giving their money back quick enough. Yeah. And so there was some real friction. And obviously the good news from some of the banks there was there's going to be a big pickup in IPOs and M&A this year. But I think those asset owners are going to keep the Bunsen burners on the private equity houses.
Hugh, thanks so much. As always, Hugh Van Steen is their partner and vice chair at Oliver Wyman. Coming up, gas prices rocket. Thousands of flights are canceled after a brutal storm pummels the U.S. We're live in New York next, and this is Bloomberg.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, a massive winter storm hit the U.S. Atlantic coast on Sunday, bringing heavy snow and ice and leaving brutal cold. More than 1 million homes and businesses across the U.S. lost electricity, with more than 17,000 flight cancellations so far. Meanwhile, the cleanup is already underway in New York City.
This immense snow fighting operation, the largest in the entire country, is working across our city every single minute. We are speaking of more than 700 salt spreaders and 2,200 plow vehicles, which are being monitored in real time by DSNY's Blade Runner system.
Well, let's go to Lionel Moise, ABC News reporter in New York. Lionel, give us a sense of scale of the storm, of how emergency services in New York are being forced to react.
Yeah, the emergency services are reacting to the scale of this storm. And, they always say that the media or the news is hyping things up, but they did warn that there was going to be a lot of snow, and that is exactly what we've got. Overnight, I have seen snowplows, even at my own house, coming through the block more than I've seen in the past. It seemed that they were very prepared. Not so many issues with the trains as well, but flights are going to be a major issue, and that is something that is going to last for days.
Lionel, the storm is disrupting energy and aviation across the country. Where are the pressure points, and how long is this set to last?
Yes, so the National Weather Service is warning that we should expect this for several days. D.C.'s airport, Reagan Airport there, canceled all flights yesterday. Philly dealt with a number of cancellations. There are about 4,000 flights to and from inside of the U.S. already canceled today. We do expect that number to continue to go up, and that big issue is it is still very cold, so there's not an opportunity for this snow to melt, and ice will be a major concern, not only for the morning commute, but for any traveling today as well.
I mean, I know, Lionel, looking at, some of the size and scope, this winter storm has triggered most flight cancellations since COVID. Give us an idea of how big is this storm compared to other storms that you've seen?
This is big. I mean, you mentioned this before, but here in New York City, where we deal with snow all the time, this is the largest snowstorm that we've had here in 5 years. Some areas are digging out of 16 inches of snow. And you think of rural areas where it may take a little bit longer for the snowplows to get there, or people who do not have assistance with, let's say, digging out the snow in front of their house. So these are going to be major concerns that we're going to see. But it is atypical to see this much snow in this many states. From Texas to New York to Maine to New Mexico. This was a very widespread storm system, not just set to one area or one coast like we're used to.
Lionel, thank you so much. Lionel Moise, their ABC News reporter in New York. Now, the freezing weather pushed U.S. natural gas prices above $6 for the first time since 2022. That follows a 70% rally last week, the biggest weekly advance in records going back to 1990. Well, let's bring in Joe Wirtz, our weather and climate reporter, and Priscilla Azevedo Rocha, who covers European gas and power. So thank you both. An interesting panel that I'm looking forward to. Joe, can U.S. power grids grapple with the threat of blackouts?
Boy, they're pulling out all stops to make sure they have enough power. We've seen, the federal and state authorities issue, broad mandates to suspend environmental rules in order to run plants at their max. That includes, coal and oil plants in some cases. But the regions where this is hitting in the U.S., a lot of these places, first off, have above ground power lines in a lot of areas and not a big history of dealing with this. So really a triple threat here. We've got snow, we've got ice, and we've got deep cold. So in some of these places, in the south, we could see this ice accumulate and the rain freeze on these power lines, freeze on these trees, and snap and fall into power lines and cut off power. So expecting widespread power disruptions for days.
And Priscilla, U.S. natural gas benchmark went to a level not seen since 2022. Does it stay at these similar levels?
It will depend on the impact that the storm will have on the U.S. export facilities and how much this will curb production of natural gas in states like Louisiana, Texas. It's really important for us to have in mind here that the U.S. has become the #1 exporter of natural gas to Europe after we lost most of the Russian supplies to the continent following the war in Ukraine. So the impact of natural gas prices rises in the U.S. is also being seen in Europe. Prices are up more than 50% since the start of the year, which is absolutely crazy, and it shows how dependent we still are on global supplies.
Joe, more than 800,000, I think, households and businesses are basically without electricity because of distribution lines. So how long does this last?
Well, so they're expecting this to last for days. Like I said, snow, ice, and then deep cold. So we're expecting, the brunt of the storm to move through, but then we're going to get the sustained deep cold, that ice accumulation. I mean, some places in the U.S. are essentially a skating rink. We've got an inch of ice in some places that rarely see this kind of thing. And a lot of these power outages right now concentrated in like Tennessee, Mississippi, Louisiana. These are places with a lot of infrastructure and a lot of above ground power lines and things that are very vulnerable. And you can imagine that if roads are snarled and that could hamper the recovery effort and getting that power back online if those blackouts hit.
Yeah, and Priscilla, I mean, I imagine they're trying to redistribute, right? So they're asking manufacturers to hold off for the moment so that they curb their power use and give it to people that need it most. I imagine it's the same for AI data centers, that you can shut it off or actually use less power there so that it goes elsewhere. How much does this help?
This is right. This helps to a certain extent because the number one driver of natural gas prices usage, both in Europe and the US, is industrial demand. So whenever you have periods of extreme cold weather, demand increases in households and elsewhere. Therefore, one way you could look at this, you could ask business to curb. So it helps, but the economy needs to continue, right? And industries need to power through.
And this could last for how long? We don't really know when this ends, right? So it could be cold for a long time, and this continues snapping, or at least status quo.
That's right. The National Weather Service is warning people to prepare for this to last for days. Some signs that we could see another round of cold in the week or so ahead. So this could be a feature of life in the U.S. for quite some days. And to Priscilla's point, we've already seen a power generator, that serves from Chicago to DC, already telling its major customers that they'll pay them not to use as much power, which is pretty unprecedented.
Okay, wonderful. Thank you so much for a great panel, Joe Wirtz and Priscilla Azevedo Rocha. Now, Ryanair has lifted its outlook for passenger growth and fares after releasing third-quarter earnings. Europe's biggest budget airline touted improved Boeing aircraft deliveries and strengthened travel demand. The company's CFO batted away a question about a recent public spat between the Ryanair chief executive and Elon Musk.
It's been good for bookings. I think it was something that kind of fell in our lap, and that we were able to, I suppose, have a bit of fun out of. But it's pretty much behind us. Good marketing out of it. It's two big idiots having a bit of fun with each other.
Are they planning to meet and talk?
Look, no.
Well, let's get more with Benedict Kamel, Bloomberg's managing editor for space and aviation. Benny, so good to speak to you. So what impact has this online spat with Elon Musk actually had on the business?
Well, we heard it here just from the CFO. He said it actually helped them because it gave them some marketing edge, and that the bookings were up slightly. I mean, it'll probably not have a market effect, but what it did do, it sort of reminded people of the Ryanair brand. It reminded people of brand Michael O'Leary, who always sees an opportunity when he can. This was ultimately a small spat that lasted for a couple of days. The kind that anyone with small children will recognize as just sort of two people misbehaving, and they walk away at the end of it. But for Ryanair, it was sort of good news. Whether they will actually install this Starlink product at some point, that remains to be seen. Again, the CFO this morning saying it's not really a product that's core to our offering. Most of our flights are maybe 2 hours long at most. It's not really something that people are demanding. They come on the planes with their own devices and downloaded films. So, as I said, a bit of a storm in a teacup, but a good marketing gag for Ryanair.
Yeah, I always try and remember to actually download films before a flight. Never happens. What are some of the key takeaways, Benny, from Ryanair's third-quarter results?
I mean, the numbers were fairly solid, but again, people are sort of hoping that they can deliver more than they ultimately did in terms of the outlook, which is why you're seeing the stock slightly down, not dramatically so, but the overall tone, and this is something we have heard from US airlines like United, like Delta, like Alaska. They've all had fairly good numbers, but they're all going into this year with a slight sense of caution. There is obviously the geopolitics hanging over this. I mean, you got a fair dose of that last week in Davos when you were there. So that is something that is sort of on corporate leaders' minds. How much will that impact consumers' behavior? And flying is ultimately also about how you feel about the economy, how you feel about spending. So Ryanair going into this year with a slight sense of caution, saying, yes, we are somewhat optimistic, but maybe not as much as some investors would have hoped for. And that's why, as I said, you see the stock down slightly.
Yeah, Benny, you know what, when I was thinking, I mean, I did get a fair dose of geopolitics in Davos last week. And if you see this, fight that could be brought to chief executives or business level between the U.S. and Europe, it's really, there's nothing as big as Boeing versus Airbus. I mean, what does it mean for air travel?
Well, that is a big question that we'll probably see in the next couple of weeks. We already heard from the likes of IAG and British Airways in the last quarter that indeed transatlantic travel has had a bit of an impact. A lot of people in Europe are having second thoughts about going to the US. So far, the effect has been somewhat mild, but that could get worse. I mean, we've all seen the horrific pictures over the weekend out of the US and with a shooting, the latest one in Minnesota. And some people over here are positively spooked by this, and they're wondering, is this the place I want to visit right now? So that's something we'll keep a very close eye on. We did hear, for an instance, from the Airbus CEO over the weekend. He wrote an internal memo to employees saying, look, the year looks tough. You know, geopolitics are front and center, and we need to be very focused, but make no mistake, this will be a difficult year for us. So the tone is sort of set in terms of caution, being careful, and really keeping a close eye on operations, and that will feed through to the travelers.
Benny, is Airbus at higher risk than Boeing? And actually, Ryanair, I know, relies quite a lot on the Boeing deliveries. Will they buy more European, or is the timeline, it just doesn't make sense?
I mean, for the time being, Ryanair has no plans to go to Airbus simply because Airbus can't really provide the planes that Ryanair would need. But you raise an interesting point, sort of how will that duopoly between Boeing and Airbus play out over time? Airbus has acknowledged that Boeing has an advantage, and that advantage is called President Trump, who's obviously used Boeing as a tool for sort of his economic statecraft. So wherever he goes abroad, in his slipstream, there will be some Boeing orders that he can use either for tariffs or, for some diplomatic deal. That has helped Boeing, and Airbus doesn't have that advantage.
Benny, thank you so much. Benny Camelder, Bloomberg's managing editor for space and aviation. Up next, it's Bloomberg Briefed. I have a full roundup of what's going on with dollar yen, gold and silver as well. This is Bloomberg.
Republicans are now calling for a full investigation after this incident, the second killing of a protester by ICE officers in less than 3 weeks. White House Press Secretary Caroline Leavitt responding to the shooting incident and the backlash against the administration earlier today. Listen.
Nobody in the White House, including President Trump, wants to see people getting hurt or killed in America's streets. This includes Renee Good, Alex Preddy, the brave men and women of federal law enforcement, and the many Americans who have been victimized at the hands of illegal alien criminals.
Looming in the background of all of this, a new threat by Senate Democrats to force a partial government shutdown by the end of the week over DHS funding, as border czar Tom Homan heads for Minneapolis as the administration's main point of contact on the ground. Joining us now with the latest on all of this is Bloomberg Josh Wingrove reporting live from the White House. Josh, it's great to see you. I have to start with what appears to be an evolving tone from the administration. While the press secretary may have been blaming Democrats today, the president was talking about being essentially on the same wavelength, I think is the language he used, as Governor Walz. Which is it?
Yeah, it depends on who you ask and what time of day it is, Joe, really, because we started with what looked like as close as you ever get to a sort of retreat or partial retreat from the Trump administration, which, of course, rhetorically doesn't like doing that. But then they also sort of doubled down. You played that clip from Caroline Leavitt. It was not really clear from that entire briefing, who they really blamed for the death. They certainly did not raise question about the conduct of the officers, but they did allude to investigation. So I think this is shifting. And you talk about the shutdown. The big question now is, what will be enough for Democrats, right? I mean, if they put in Homan, which they have, it seems like Secretary Noem is being pulled back at the very least. Bavino looks like he won't be there going forward, at least according to a CNN report. Leavitt alluded to that as well. That is a change in approach from the feds. And so the question is, will that be enough for Democrats to sort of back down a little bit on their threat on the shutdown as well? But I think what is clear is the criticism that came after Preddy's death on Saturday was wider than we've seen with Renee Good and with others, including from sort of key conservative figures that the administration listens to, or at least, wants to keep on their side. So there is a reaction here, but they do seem like they're sort of going through it, in real time, trying to figure out where they're going to land on this. Trump does not want to admit, a failure of the administration or anything that could be reported as that, but clearly is also shifting tack at the same time.
Yeah. It's interesting, Josh, to your point, we heard from a number of Republicans yesterday, different than we did following the death of Renee Good. Bill Cassidy of Louisiana, James Comer got a lot of attention. Andrew Garbarino, who chairs Homeland Security, all calling for an investigation, testimony, hearings. Was it these members of Congress, or was it, in fact, the corporate executives, 60 of them from that state, who signed the letter distributed by the Chamber of Commerce, thinking of United Health, Target, and the rest, who actually got the president's attention?
I mean, Senator Paul, Senator Murkowski as well, the National Governors Association. I mean, the blowback to this was very widespread. So I suppose it can be all of it. And so where this goes from now, I think, remains unclear. And, we have other breaking news here, Joe, as you know, on Trump, on South Korea. So he and sort of pledging to raise the tariffs there. But I mentioned that just by way of saying he is sort of always trying to shift the agenda, shift the topic. And so, as we sit here in the, as you can tell, glamorous White House basement, we just don't know whether he'll be successful in that. And of course, what this looks like going forward in Minnesota, including questions about the investigation, right? The White House did dig in today saying that there are investigations ongoing, but of course, there have been complaints from the state that the federal government is not letting them investigate the shooting itself. And so there are a lot of questions concerning the death of Mr. Preddy, but specifically, but more widely, the operations there. And, this sort of step back from the federal government, we just don't know to what scale that is going to be. And I think, that'll become clear in the next couple of days.
You heard Josh mention it in the headline on the screen as well. The president on Truth Social, because of the Korean legislature not enacting our historic trade agreement, he just wrote, which is their prerogative, I am hereby increasing South Korean tariffs on autos, lumber, pharma, and all other reciprocal tariffs from 15% to 25%. Josh, we've got this matter. We've got a speech tomorrow in Des Moines. That is the next leg in the affordability tour that the president is trying to get a message across to voters here. To what extent will Minneapolis be a distraction, or is the whole point to keep moving from one headline to the next?
It's a great question. Let's take it bit by bit here. On the Korea thing, he's essentially ripping up, or at least for now, the deal and saying that's because the Koreans are slow walking it. I should note that there were a lot of question marks, including from what the American position was about this deal. We still, for instance, don't know what the shipbuilding cooperation will look like. And so this is another case for countries that are looking at this, including the EU and the UK that had their deals and that then saw the Greenland tariff threat come in. The Trump's deals aren't necessarily locked in. Certainly the Canadians and Mexicans with USMCA know that as well. So, there's that. On the affordability piece, real big questions swirling about where the administration will come down on that. What, if anything, they will do on trying to use executive authority somehow on credit card rates, for instance. Trump has already poured cold water on the notion of using 401ks or allowing them to be used more widely for house down payments. That felt like a few days sort of round trip from them raising the idea to dousing the notion of it. And so, we'll see. And of course, Scott Besson said we could hear about the Fed as soon as this week, possibly. And so all these things are swirling right now. And we'll see where it lands. But the Korean thing is a big one. I mean, we don't know yet whether this will actually materialize. He hasn't specified when that tariff hike will take effect. And I should note 3 times already this month, he's threatened tariffs that have not come into effect. Greenland, the Iran secondary tariffs, and of course, over the weekend, the 100% tariff on Canada. So it's possible, certainly possible, that this Korean tariff hike won't go into effect either.
Well, remarkable and breaking as we're speaking here. Josh, thank you so much. Live from the White House, Bloomberg's Josh Wingrove with the new salvo towards South Korea. We get back to news out of Minneapolis today, which is where, of course, we began. Earlier this afternoon, White House Press Secretary Caroline Leavitt, again holding forth in the briefing room, says it was Minnesota Democrats who were to blame for the escalating situation on the ground. Listen.
This tragedy occurred as a result of a deliberate and hostile resistance by Democrat leaders in Minnesota. For weeks, Governor Walz and the Mayor Jacob Fry and other elected Democrats were spreading lies about federal law enforcement officers who are risking their lives daily to remove the worst criminal illegal aliens from our streets.
Those comments came just before Leavitt outlined a potential plan to ease tensions in Minnesota following a phone call between President Trump and Minnesota's Governor Tim Walz. One that, in fact, President Trump said generated a good call, and he says they were on a similar wavelength. So joining us now with her reaction live from the ground in Minnesota is the mayor of St. Paul, Collie Herr, who is herself under subpoena by the Department of Justice for potentially obstructing or impeding ICE operations. Madam Mayor, it's great to have you with us today on Bloomberg TV and radio. I wonder if you are taking heart in what the president describes as a good phone call, a very good phone call with Governor Walz. He said, we seem to be on a similar wavelength, or do you worry more about the rhetoric we heard from the press secretary today?
What I know about this president is that whatever needs to be said in order to make him feel like he's got to win here, right? I mean, I'm so disappointed when I hear the rhetoric that is still coming out of Washington, D.C., that they can stand here and say that it is local electeds here, it's Democrats here that have caused the heightened, tension within our city here. But when you have a federal government and its agents who are clearly telling people, recounting the incidents that they have caused on the ground, and it does not match the video evidence, I do not know how it is that they can turn around and blame that onto local electeds here, Democrats here, and especially the rhetoric comment when you group whole groups of people as murderers and rapists, when we know in Minnesota here that our immigrant and refugee communities have made our state stronger. This is a self-inflicted, self-created situation by the federal government. But you know what? Whatever it is that they need to say in order to give them the ability to leave our space here, I support it.
Do you take heart in the actions you saw today by the administration? It seems that Gregory Bovino is on his way home. Tom Holman is being dispatched to Minneapolis. Is that encouraging, or does that make you worry?
All I can do is have hope, and that is what we do here in Minnesota well, is that we are optimists in light of the challenges in front of us. All I can do is be hopeful, just like the rest of Minnesota, that this is a turning point for all of us here.
Let me ask you about some of the training that your office has been providing to protesters in your city, working with advocacy groups to teach constitutional observer courses, to train people on how to videotape law enforcement without interfering in ICE operations. I ask you about this, Mayor, because much of the rhetoric we've heard from the administration is these two people who were killed in the Twin Cities were interfering with federal ICE operations and therefore putting themselves in danger. What are you telling people to do?
We are telling people to not interfere into any of the federal agents' operations. In the Constitutional Observer Training, we are very clear about what it means to be there and to document. And so I will say that I can't guarantee that everybody who shows up to an event is trained as a constitutional observer, but we know that we've trained thousands of people in order to be supportive and to be there to help document. You know, and I want to just have one point of clarification that Alex was not at a protest. It was a morning in which he just happened to be in a space in which he saw activity and he wanted to go and document. I think that it is dangerous when we say that just because people are gathering or they exist is that they are protesting. They are not. They know that their neighbors have been taken off of the streets, that people are being ripped out of their homes forcibly, that people are having children and families ripped apart. And so when our neighbors see each other hurting and impacted, we show up. And showing up doesn't mean that we are protesting. It means we are there to document because we know that that legal documentation is the only thing that that family may have in legal proceedings to try to keep family members who are here legally here with their families.
One of the faces of this operation in your city is a friend's brother-in-law of yours, who now most people know as the man who was taken outside of his home wearing nothing but shorts, Crocs, and a blanket. Chong Lee Scott Tao, his photograph being taken out of his home in freezing temperatures after being arrested without a warrant. His ID apparently was not checked until he got back home. Homeland did bring him back home after he was pulled out of his house. They said they were looking for 2 sex offenders. The family says it was a case of mistaken identity. Mayor, has the federal government told you what that operation was all about?
So I don't have a direct connection with the federal government. They do not coordinate and they do not communicate with us proactively. What I can say, because this is an active investigation, is that identification was offered. And in the operations, that was not something that they considered or cared to take into consideration when they took Chong Lee out of his house. You know, I think that not only was this an unfortunate incident, and I think it has been very gracious of the family to say it is a case of mistaken identity. It is the fact that he looks nothing like the people that they are looking for, and that to add insult to injury after the event. Instead of being truthful that they had the wrong person, they lied about it. They said that those individuals they were looking for lived in the home with this family, which they do not. And this family has been in the home for the last 2 years, and the individuals they were looking for were already, one of them was already incarcerated. So in just basic public searches, they could have found that information. So I think that what is making the situation worse on the ground is that we cannot trust our federal government in being truthful about the work that they are doing and how they are executing on this work.
Well, I ask you about his case in particular because you were a Hmong refugee, and I know that you came to this country at age 3 as a Vietnam War era resettler. You were part of a resettlement program. And so individuals, I'm assuming, like Chong Lee, have played a long role in the diverse culture in your state, having fought side by side with Americans in the Vietnam War. To what extent have you seen authorities operating in communities of color versus European migrant communities in your city?
We have not seen one account of Europeans who, we know that there are Europeans who are here undocumented, and yet we have not heard of one account of them being profiled. What I will say just on your point about Chong Lee's family is that his mother, who just passed away a few weeks ago, I'm flying to California in a couple of weeks to attend his mother's funeral. His mother was one of the first Hmong nurses in Laos at the Samtong Hospital. She was a nurse with my mother-in-law, and they took care of wounded soldiers, American and Hmong soldiers, who were fighting for democracy and fighting for America before they ever set foot in this country. And that is the family that this administration went after. A woman who raised her children to be law-abiding citizens, who fought and took care of soldiers and veterans, who came to this country and was a contributing member of society, and who has always been deeply committed to this country. That is the person that was ripped away. And in weeks of her death, that her family would be targeting this way is such a disgrace to the legacy of Hmong people and the fight that they had with the Americans and our American soldiers.
Well, I appreciate you telling their story. Mayor Herr, you've been in office, I believe, for 3 weeks, so this is your only reality as the mayor of St. Paul. Will anything short of ICE withdrawing from the city settle this standoff?
I think that ICE has to have a complete withdrawal from here. And to be honest, we have always worked with our federal agents on cases that do not violate our separation ordinance, that we have always been willing to get to work with them on detaining hardened criminals, people who have records who should not be here, and that we can continue to go back to working in a way that keeps our country safe, because we know how to do that. Our law enforcement knows how to apprehend people and to keep our community safe, and that we would like to be able to go back to that environment in which we can do our jobs well.
Well, that's pretty important, Mayor, and I think it's worth underscoring that. You're pledging now before our listeners and viewers to work with federal authorities to arrest, detain, and prosecute those who are in this country illegally and have broken the law. Is that right?
That's absolutely right. And we've always had that kind of relationship long before the Trump administration and previous presidential administrations. And so we continue to be committed to keeping law and order in our city.
Mayor, it's great to have you. St. Paul Mayor Callie Herr, we thank you for being with us on a very busy day. Coming up, shares of health insurers plummeting after hours on a new report. We've got the details ahead on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us. Over the weekend, the heaviest winter storm in years dropped off almost a foot of snow on New York and many others across the country. New York City took the brunt. Bloomberg's Miles Miller filed this report from Central Park earlier this afternoon to break it down.
Nearly a foot of snow fell here in Central Park, 11.4 inches as of Monday morning. The economic toll is also mounting. We know that more than 3,000 flights were canceled Monday, following roughly 11,600 canceled on Sunday, the most since the COVID-19 pandemic. Natural gas futures surged above $6.30 per BTU, the highest since December 2022. Insurance claims average $15,400 normally around storms like this for water damage and freezing, with some exceeding $30,000. As it relates to transit, we know New Jersey Transit remains partially suspended with no timeline for full restoration, a critical artery to get people in and out of New York City and commuting to the financial center. Thousands of commuters couldn't reach work on Monday. That's lost productivity compounding through the week. And the cold isn't letting up. 12 degrees today, dropping to 5 by Thursday, and this stays locked in through February. Politically, this is the first major test for two brand new leaders. New York Mayor Zohran Mamdani and New Jersey Governor Mikey Sherrill, both less than a month into office, and so far they've avoided the mistakes that have ended or badly damaged the careers of their predecessors. Every street plowed, subways running, schools closed outright in parts of New York and New Jersey, and with the New Jersey Transit suspensions meant to keep people safe. But the real test starts now. How do you manage weeks of cold and ice and making sure that this doesn't have an economic dent on cities and states? In Central Park, I'm Miles Miller, Bloomberg News.
Miles shivering for us in Central Park. We thank you, Miles. Breaking news this evening, shares of health insurers are falling in extended trades after the Wall Street Journal reported the Trump administration is proposing roughly flat rates for Medicare insurers next year. To break this down and all of today's market action, we turn to power moves now with Bloomberg's Romaine Bostick, who's live at World Headquarters in New York. I guess traders didn't see this coming, Romaine.
Yeah, chill over these stocks right now. And we should point out Bloomberg has now confirmed that this is indeed the proposal. It would still have to go through the regulatory process. But effectively, what it would mean is that these health insurers would see an increase of 0.09% for the calendar year 2027. That compares to what they got this year for 2026. Of 5%. So effectively, the Trump administration is saying there'll be no material increase next year. And I want to put this into context as to why you're seeing the shares of these stocks fall so much. We're talking about more than 30 million Americans are a part of these plans. The U.S. government pays out to these companies, on average, almost $500 billion over the course of the year. The increase that they will get in 2027, $700 million with an M. You do some back of the envelope math, Joe, and you compare that to what they got in 2026, $39 billion. So imagine getting a $39 billion raise one year and then the government saying next year you're just going to get $700 million. That's why you're seeing the big drop in your shares. Humana, they have the most exposure to Medicare Advantage, about 70% of their business directly tied to that. Those shares down 14% in the after hours trade, Joe. And if that holds into tomorrow's cash session, that would be the worst one-day drop for that stock going back to at least 2022.
Harsh. We're going to be hearing from United Healthcare because it's the earnings parade here, right? We've got United Health, Boeing, UPS, GM. I haven't even touched the Mag 7. What's got your attention this week?
Well, now, there's certainly United Health. Obviously, they've had a lot of other issues, but this is something that, of course, is going to dominate that call tomorrow. But really, investors right now, Joe, are looking at two things right now. One is on the tech side, this big AI boom that, quite frankly, has been a big boon for the economy. It has driven a huge amount of the growth we've had here. Is that still intact? We're going to hear from Meta, Microsoft, just to name a few, as to whether they are going to continue this massive CapEx spending that has fueled the market and the economy. On the other side, watch those industrial stocks. You mentioned UPS and some of those names here, very much tied to the economy and, frankly, Joe, tied to a lot of the tariffs and other geopolitical issues going on out there. It's going to be less about the numbers they report and really about the commentary and whether they can give guidance to this market, Joe, that is actually going to satisfy them.
Why worried about any of this? Just buy gold, buy silver.
Hey, that's on fire, Joe. Gold at another record high, silver at a record high. Unfortunately, Joe, as you know, the reason why they continue to move is, well, a lot of investors, particularly those overseas, they've had it with America. They're dumping the dollar, they're dumping U.S. treasuries and moving into hard assets like gold, like silver, even non-precious metals like copper. I would keep an eye on that, Joe. We've talked a lot about that on the show today here, the idea of the debasement trade, whether it's back in full force or not. Pay attention. Stay tuned.
Fascinating, Romaine. Thank you so much. Bloomberg's Romaine Bostick. He's dug out. Coming up, Democratic lawmakers are threatening a partial government shutdown this week. Yeah, here we go again. It's over DHS funding. We'll have details for you. It's all ahead on Balance of Power, only on Bloomberg. This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington with breaking news on Minnesota and what appears to be an ongoing shift in messaging from the administration, at least in terms of President Trump, who posted on Truth Social just moments ago, quote, "I just had a very good telephone conversation with Mayor Jacob Fry of Minneapolis. Lots of progress is being made. Tom Homan," he writes, "will be meeting with him tomorrow in order to continue the discussion," unquote. That comes after a similar post earlier today touting a positive conversation with the governor, Tim Walz. Joining us now with the latest on all of this, Bloomberg's Eric Wasson with the echo chamber here in Washington. Eric, this has hit home on Capitol Hill. I know that senators are trying to get their way back into town after the snowstorm. The House is gone, and it is very likely the government, at least partially, will shut down at the end of the day on Friday. This, of course, has to do with funding for Homeland Security. And you can tell us how this is going to work, because it's not looking too good right now. Eric, what's next?
Well, certainly the calls between Trump and the Minnesota officials could ease some of the atmospheric tension and optics around this. But what Democrats are demanding are concrete changes to this package that the House pass. Could be warrant requirements, body camera mandates, other restraints on ICE. Some Democrats want to see a defunding of it, but I think the main strategy from Democratic leaders is to get some kind of restraints on the organizations of ICE and Border Patrol. But any changes would require the House to come back, and they really have only until Friday to come up with this. So Schumer right now is saying split 5 of this 6-part package apart. This would fund everything from the State Department, Treasury, Small Business Administration, and pass that, and then deal with DHS separately. But Republicans are resisting that, saying there's really no time and consent. You really need unanimous consent in the Senate to do any of this. And of course, the House would have to come back, and all Republicans would have to pass a rule with Republicans for these changes. So it's a really heavy lift. So we're predicting a likely government shutdown at this point. We're not seeing an off-ramp. And there's real consequences for businesses. The BLS unemployment report next week would likely not come out. Small business loans, Pentagon contracts all tied up. And the IRS is starting tax season now. So they could probably force people to review tax returns without pay. But that could also lead to delays as disgruntled workers slow down their efforts.
Well, it's interesting. We're talking about a collection of bills here, right? Just to be clear, Eric, DHS is one thing, but that's tied up with, I think, the point you're making, several other agencies. We've got DOD, Health and Human Services, Transportation and Labor. Would they all close in this world while the rest of the government stays open?
Well, non-essential workers would be furloughed. Essential workers would work without pay. But interestingly, ICE and Border Patrol got a big plus up in the Trump tax bill, $75 billion. Yeah. They would not only work, but they would likely work with pay. So it doesn't really stop. It would stop FEMA and TSA from being paid, however. So there was a deal on the table between Patty Murray, the Senate Democratic Appropriations leader, and a handful of other Democrats to really say, okay, we're going to go along with this. We'll just wait till we get back in power to really rein in ICE. But we got so many other wins here. The package overall reverses many of Trump's proposed cuts. They go $37 billion more for housing, $19 billion more for state and foreign aid. So it's just a lot of wins for Democrats, and they're going to see those sacrificed. So it was a hard call, but this new horrific shooting in Minnesota really galvanized the party to at least try to use this moment to get some reforms. We're hearing some noises from people like Susan Collins saying the reforms could be on the table, but the problem is just amending this would be very difficult, especially for the Republican House to come back, take up, and pass before the deadline.
With a very real look at what's happening, Eric Wasson, we thank you, Eric, for joining us as we add the perspective now of Democratic Congressman Glenn Ivey of Maryland, who serves on both the House Appropriations Committee and House Ethics Committee, so he knows a little bit about funding the government. Congressman, it's great to see you. Welcome back. I'd like to talk to you as a member of Congress, a Democratic member of Congress, but also as a lawman. And I'll remind our audience that you were not only professor of law at Harvard, but you were a state's attorney for Prince George's County, Maryland, and were assistant U.S. attorney for the federal district under Eric Holder. Let's start with the politics here. Democrats have made it pretty clear that they cannot stomach signing off on this DHS bill. Will we have a partial shutdown on Friday?
I mean, as you suggested, we are running out of time, but I don't think the asks that were made are over the top. For example, don't deport U.S. citizens, don't detain U.S. citizens. Those seems like things that we could, figure out a way to work out. ICE is doing that regularly, unfortunately, certainly detaining U.S. citizens. That should stop. Another one is where the body cameras. They've got the money to pay for them. Put them on, because it's clear. We've seen this in law enforcement agencies across the country. It's helpful not only from an evidence standpoint when these cases go to trial, but it's also from a managerial standpoint. Helps them figure out who's doing a good job and who's not.
Interesting. So, of course, you've already had a chance to vote on these funding bills. The House is out. Now it's in the Senate's hands. Do you expect that when the House comes back next week, you'd be able to codify whatever changes are made, or could this be a weeks-long shutdown?
I mean, I think we'll have to see. But, the only bill that we splintered off was DHS, and all of them passed. So we've got all the appropriations bills over to the Senate, so the DHS holdup Thune's trying not to splinter that off from the other ones for obvious reasons. But, I think if you can get all the other bills done, and they certainly could, as I said, the things we're talking about with respect to reforming DHS, we know that this would just be an intermediate step. I think it needs a complete overhaul at this point, at a minimum. But I think that's the kind of step we need to make. And I'm starting to hear Republican voices, like Tom Cole, for example, say, yeah, I've got some reservations about that shooting, but, we don't want to shut the government down. But I think there is a sentiment there that, you killed 2 civilians. Renee Good was unarmed. Mr. Preddy was disarmed and then shot, looks like in the back, and then 6 times after that. And had also been pepper sprayed before he was shot. It's a lot. And, I think even Republicans who don't necessarily want to get in the middle of all of this recognize that, from a legal perspective, this stuff's questionable and needs to be stopped en masse. But the individual cases should be reviewed and I think probably go to a grand jury.
Well, it's interesting, Congressman. I don't know if this is proven in the way you just described it, should take the fall for this, but there are impeachment articles that have been brought forth with Kristi Noem in mind, the Secretary of Homeland Security. We saw House Democrats introduce that legislation not that long ago, as a matter of fact, citing any number of issues here. About 120 Democrats have signed on to those articles, Congressman. Would you consider joining them?
Well, I think what they're going to do with those is they've got to update them because they don't have these 2 shootings and, what's taken place with respect to the last 3 weeks, as I recall, involved in the articles of impeachment. So I think they would need to be reviewed. But I think at this point, Noem needs to be removed. I don't know that Trump will do that, but she's clearly in over her head. The agency is, running amok. The chain of command is broken over there. And the statements she's made, especially after these really, horrific shootings, I think are clearly false and suggest that she didn't even look at the evidence before she made the statement. So they need somebody over there with some gravitas who has experience running on agencies like the ones in Homeland Security and can get the ship back, upright.
How do you read this move by the administration, and are you encouraged by this to have Greg Bovino leave the city and the state and have Tom Homan go in? He's meeting with the mayor tomorrow, as we just heard. Is this a sign of progress?
I don't know that it is. Some of the statements he's made have not been much better than the predecessor. But, at the end of the day, I think what it really comes down to is the mentality about, we're going to flood cities like Minneapolis with thousands of, there's 5 times more, ICE agents there than police officers right now, which makes absolutely no sense. And they're not trained to do these street types of enforcements. You can't do that on the fly. And it's a different type of training. Street policing is different than border patrol or, immigration patrol. And they're not recognizing that. But we're seeing it the hard way. And the decisions they're making on these shootings, I think, represent the fact that they haven't been trained how to handle these kinds of situations. So, I think getting them out of Minneapolis and like a clear change in what that strategy is, if you want to go after the worst and the worst, get the warrants to get the homicide, perpetrators and the rapists and the like. Everybody wants those guys off the street. But, these street patrols where they're just grabbing people, breaking out the windows, dragging them out of their cars or, shooting them in the street after they pepper spray them. Nobody wants that. Let's stop that.
Well, Congressman, I spoke earlier today with a constitutional attorney named Robert McWhirter. Here's what he said about these operations that you just described.
ICE agents are enforcing immigration law. For the majority, immigration law is a civil violation. You know what else is a civil violation? A traffic ticket. So now you have people in full military regalia enforcing civil violations. It's performative, it's a big show, and it's dangerous. And frankly, they're not even deporting as many people as the Biden administration and the Obama administration did.
When you put your former state's attorney hat on, Congressman, how do you react to that?
I think he's absolutely right. It looks like what the Trump administration did was they made big promises about how many people they were going to deport. Then they realized that it's, there's only so many murderers and rapists that are out there. And then they just started grabbing people to meet the numbers. And they've gone way over the top with respect to, like Alligator Alcatraz and places like that. They're spending billions of dollars on enforcement efforts that really aren't making these communities safer. And you're having people who are, as we saw, getting detained in violation of their constitutional rights. People are dying in custody and people are being shot on the street. It's not working. It's not helping. Stop it. Let's just move on and get back to regular policing and law enforcement in these cities.
Well, it's good to have you join us, Congressman. Democrat Glenn Ivey of Maryland, we thank you for the insights, as always. Overseas now, where China's President Xi's move to probe his top general marks the most stunning development yet in the country's biggest military purge in roughly half a century. The corruption investigation against that general, who was once described as a sworn brother to Xi, leaves the highest decision-making body of the People Liberation Army decimated, with only one uniformed officer left to serve under Xi on the Central Military Commission. This announcement also has implications for Taiwan, succession, and further turmoil in the Communist Party ranks. Joining us now with her insights into all of this, Bloomberg Economics Chief Geoeconomics Analyst Jennifer Welch. Jenny, it's great to see you. A lot of people missed this story in the throes of the massive storm over the weekend, everything that took place in Minneapolis, everything that's happening in geopolitics. How significant is this, and do we believe what we're actually hearing reported from China in terms of the cause of this purge?
This is one of Xi's most significant purges, and that's quite a statement considering how many people he has purged over his tenure. But Zhang Youxia was not only a really powerful figure, as you mentioned, he was the highest ranking military officer on essentially China's Joint Chiefs of Staff, the Central Military Commission, the last surviving member after his former co-chair was purged last year. And he was also a close friend of Xi, who has ties to him dating back to the relationship between their fathers, who were close friends, fought together in China's civil war. In terms of the rumors that this was for the result of Zhang potentially leaking secrets to the United States or engaging in some sort of coup plotting against Xi Jinping, I tend to put a hefty grain of salt to those rumors. I think the more likely cause is the simpler cause, which is that Xi has taken an adamant stance against corruption in the PLA, which remains pretty endemic, and including under Zhang's leadership. And so this was in some ways a response to that, potentially also a response to the idea that Zhang, having been in this really powerful position for so long, has potentially become a threat in Xi's mind, developing an alternative power center, even if that just grew organically and not through any intentional effort to challenge Xi.
Mm-hmm. So what does this mean for China's military in the near term, and how should Taiwan be viewing this, Jenny?
I think in the near term, it means a couple of things. First, additional purges are likely to come, including of officers who are seen as close to Zhang, as well as another major general who was purged at the same time, and the generals who were purged last year. So we're likely to see continued waves. All of that means more of a shakeup of the PLA that, for example, it's going to be paralyzing the system. People are going to be nervous about their jobs. They're going to be concerned about taking any risks or stepping out of line. The people who were pushing decisions and reforms and guiding major decisions aren't going to be there anymore, and it's going to take time to rebuild. The immediate impact suggests, therefore, that if I was Xi Jinping, I'd probably be thinking twice about using the military if I felt I had the choice to make a decision on that. But we shouldn't discount the PLA. It is still a very powerful and effective force. There are still plenty of soldiers and commanders who will continue to lead it and who will act if ordered to by Beijing.
Jenny, it's great to have you. Thank you so much for joining us. Jennifer Welch from Bloomberg Economics with us live on Balance of Power. Coming up, more on the breaking news of President Trump touting what he calls a very good conversation now with the mayor of Minneapolis as he pulls Border Patrol Commander Greg Bovino out of the state. Our political panel weighs in next on Balance of Power on Bloomberg TV and radio.
Behind the
bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. Thanks for joining us as we bring you breaking news and a notable shift, even since we've taken air less than an hour ago, involving President Trump's posture when it comes to Minnesota. The president touting positive conversations today with the state's governor earlier and now the mayor of Minneapolis. Writing on Truth Social, I just had a very good telephone conversation with Mayor Jacob Frey. Lots of progress is being made, exclamation point. Tom Homan will be meeting with him tomorrow in order to continue the discussion. Indeed, Tom Homan is being dispatched to Minneapolis as the president yanks his controversial Border Patrol commander, Greg Bovino, from the state. Joining us now with their reaction to everything that is unfolding before our eyes. This evening's political panel, Bloomberg Politics contributors Rick Davis, Republican strategist, a partner at Stone Court Capital, and Democratic analyst Jeannie Shanzano, democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, how are you reading these developments, and are you encouraged?
Mildly encouraged. I mean, this is the minimal that the White House needs to do, but I haven't talked to anybody who thinks that this is enough. Let's not forget, while Tom Homan has been at this a lot longer than either Kristi Noem or even Bovino, he is also the border czar. He is the face of Donald Trump's immigration policy. He is the one responsible for those deportations to CCOT. So, we have to, I think, just wait and see if this is a first step in a revamp of ICE that includes training, mandatory body cams, and the rest, or if this is just a way to sort of assuage people that things are going to get better and sort of try to move beyond this. So I think a wait and see attitude.
We're getting some mixed messaging from the administration, aren't we, Rick? The press secretary spent a lot of time at the podium in the briefing room today blaming Democrats for the violence that's unfolded in Minneapolis, even as the president talked about being on a similar wavelength. Those are the words he used with Governor Walz, who he's been criticizing day after day. Who is delivering the official line of the administration?
Well, ultimately, it's always Donald Trump. And as we know, he delivers a lot of lines in the course of a day. And it's not unusual for him to completely flip-flop on a stated position. So he's been attacking the governor and the mayor pretty vociferously over the course of the last few months in a lead up to the kind of episodes we've seen, giving a lot of aid and comfort to the ICE officers who were really going after the community there. And then today, you would have thought it was a completely different state, completely different governor, completely different president. Yeah. So, look, I mean, there's a lot at stake for this administration. They're trying to get a budget through Congress. Their polling data is plummeting on the public support for these immigration raids. And there's no question that the administration, through their various cabinet officers and officers on the ground, have overplayed their hand significantly, killing any chance they have in Minnesota of contesting a governor's race. I mean, let's just keep piling up the carnage of public policy and personal failures on this one state, one policy. So, yes, I think Donald Trump's trying to reverse course as quick as he can. And as Jeannie says, we'll see how far they go to try and make it right.
Well, if there is a real reversal here, Jeannie, does this do anything to potentially avoid a government shutdown, or that's as good as done?
I think it is getting very difficult just from the perspective of the calendar to see how we avoid a partial or full shutdown. Is it possible? Sure, anything's possible, but the calendar is working against it. We've got a House that's out. We've got a Senate that's struggling to get back. Many people coming from areas with bad weather. You guys have had bad weather in D.C. And of course, that's just the start of it. They've also got to figure out how they're going to address what is a Democratic juggernaut now in the Senate of people, including the two independents who caucus with Democrats, who are saying we will not fund a DHS if it remains like this. So I think we're looking more at a shutdown. And of course, I think we all have to take a step back and say, would any of this be happening today in the last few minutes, this breaking news about the president talking to Fry, talking to the Minnesota governor, going on Truth Social, if it hadn't been for those video cameras, and now we understand police body cameras that show us what is going on out there, because everything the administration said after the incident was diametrically opposed to what we saw with our own eyes on those cameras. And that's what's really changed things here.
Yeah, multiple angles reportedly from different body cameras are being reviewed right now as the federal government investigates this. Rick Davis, what do you make of the conversation on Capitol Hill? The House is gone right now. They couldn't get back to pass a bill unless called, and following this storm would be a lot more difficult said than done. So it looks like we're going to get a short-term partial shutdown of at least some duration. What does John Thune do, knowing the House already got its work done, and Chuck Schumer wants him to break up and rewrite these bills?
Yeah, it's not totally clear how far Chuck Schumer wants to go. And as you point out, the process of getting a bill passed now, if any amendments are made in the Senate, is what would cause the shutdown. Look, the Capitol Hill sage, Eric Wasson, had a conversation with you just a little while ago. Democrats are conflicted. Part of the problem is that they got a lot in these bills that they fought hard to win, which is why you saw a bipartisan, overwhelming bipartisan vote in the House, which we have not seen much of this year. And so this thing was on a clear trajectory to get done in the Senate, all 6 appropriations bills as they're supposed to be done. And then this incident in Minneapolis really set off a lot of concerns that Democrats had and some Republicans all along. So if they can find accommodation in language or in building confidence by the administration's actions to get this back on track, shouldn't be much of a lift. There is a lot of favorable motion toward getting these deals done. And I have no doubt that Thune is going to work overtime to make sure Democrats get what they want to be able to sign on.
Only got about 30 seconds, Jeannie. You know what we haven't been talking about? Affordability. And the president's headed for Des Moines tomorrow to deliver another speech on that issue. Will it get any attention?
It absolutely will, I believe, because it's on top of mind. You know, just the cold alone, Joe, we have seen people terribly concerned about energy prices, not to mention groceries and the rest. So the president should be talking about affordability, but of course, he's got a lot else on his plate. And the media is really focused right now on what's going on in Minneapolis. So, but if anybody can break through, Joe Matthew, it is Donald Trump. So we'll see what he has to say tomorrow.
And we'll be listening tomorrow with the help of Jeannie Shanzano and Rick Davis. Great to have you both here, and I'm glad you made it through the snowstorm. Others are still trying. A live shot outside the Bloomberg Bureau in D.C., that minivan, those tires are spinning. Tim, let's get some sand. We'll meet you back here tomorrow on Balance of Power. This is Bloomberg.
The countdown is on.
We're going to get Microsoft, Tesla, and Meta. And may I also point out that Wednesday is Fed Day. It's going to be interesting to see what actually drives the market narrative. And Wednesday, that's not the only story here. Then you take a look on Thursday, we get Apple as well, and then we get into some of the other names. But remember what we saw last week with Intel reporting on Thursday, I believe it was. And then on Friday, we had that 17% plunge. And the big worry, taking a look at the reaction, was all about Intel's spending. So that CapEx spend, have to imagine, Romaine, that is going to be one of the questions that investors are asking as we get deeper into this calendar.
Absolutely. Well, let's ask those questions to Dan Niles, founder and portfolio manager at Niles Investment Management, kicking us off to the close. And Dan, I'd be remiss in not pointing out, when we talk about a lot of these big tech names, a lot of them are way far away from record highs. Apple hasn't hit a record high since early December, I believe. Microsoft since October. And I think you have to go all the way back to August of last year, the last time Meta was at a record high. Yet heading into this earnings season, expectations still seem high for what they're going to post in terms of earnings growth and revenue.
Yeah, I mean, I think it's going to be interesting to see how the market investors react to it, because there's pluses and minuses for all the names that are reporting this week, and it's one of the most difficult earnings seasons in my mind that we've seen over the last few years, because there's no clear direction in my mind of how the stocks are going to respond. So let's take them, one at a time. If you look at Tesla, you can say, well, we all know the numbers have got to come down because the EV tax credits expired at the end of September in the U.S., but you know that Elon Musk is going to talk about robo-taxis and autonomous robots and energy storage and full self-driving. I picked up my new Tesla this Sunday. I love it. But the numbers are too high. So what does the market focus on, especially at these valuation levels? And, Microsoft, similar situation where, the numbers are going to be good because OpenAI is growing so fast, but the losses associated with OpenAI are also going to go up a lot.
Yeah.
And with Meta, similar situation. Numbers are going to be fantastic, but the CapEx numbers, with Meta Compute announced earlier this year, are going to go up a lot. We've seen Oracle stock get destroyed and be down 45% from its highs based on that.
Well, let me stop you there on Meta, too, because, that's probably really emblematic. We saw this the last earnings three months ago when they reported. Again, blockbuster numbers on the revenue side, even to a certain extent on profitability. We saw the shares plunge more than 10% because everyone was so hyper-focused on those costs. And I'm wondering if that is the real story over these next couple of weeks when these companies report. It doesn't matter what the growth rate is of everything else. People are going to be more focused on the growth rate of those costs.
Exactly. And also, how do you monetize that? Because if you look at names like a Google or an Amazon or Microsoft, they already have big cloud businesses and that they can sell that capacity to other customers. Meta doesn't have that. They're going to have to build that. And then they're going to have to go, up against those guys who already have big established businesses. And then you throw Oracle in on top of that. So you look at Meta and you go, well, it's really, they're in a tough spot because of it, but how much of that's discounted in the stock? And the numbers are going to be really good, or I think the numbers are going to be really good based on the strength of the ad market and how well they're doing in that. And so it'll be, well, is this like the day Oracle reported when the stock was up a lot? Or is this like the next 3 months when the stock gets almost cut in half? Mm-hmm. And I'd rather stay away and just see where the dust settles. As the saying goes, the market has to keep pitching, but you don't have to swing.
Well, Dan, outside of just Meta, when you think about all of this CapEx that's planned, I want to talk about how it's being funded, because you are seeing a lot of these hyperscalers really tap the bond market and issue debt in order to fund some of these ambitions. That was a big story this time 3 months ago, pretty much. How are you thinking about that dynamic as we await some of these key numbers?
Well, I wrote about it this weekend, but I've got short positions and a basket of names associated with private credit because I think what we saw at Tricolor and First Brands and the defaults there and the pressures that caused, I don't think we're done yet. And I think you're going to see somebody before the end of the year have a big problem with one of these data center deals because for right now, all of these names are getting funding. I think by the time we get to the end of the year, you're going to find out that some of these names are not going to get the funding because not everybody that's associated with AI is going to win. You started to see that change at the end of October, obviously, with kind of the Google ecosystem of companies up about 20% since then, whereas the OpenAI ecosystem of companies such as Oracle or SoftBank, NVIDIA, et cetera, they're down about 20% since the end of October. So that's why I worry that as we get towards the end of this year and we figure out, well, these guys are winning in enterprise and those guys are not, and and the same thing in consumer, I think you're going to see a continued shakeout in the AI trade. And that's why we have a basket on that. And also Japan as well, where we've got some shorts around that because, we've seen what can happen when the bond market goes into conniptions and, up 41 basis points in 2 days with Japanese bond yields on the 40-year. That certainly qualifies. And, it's something you need to think about and to snap elections on, I think, February 8th.
Right. No, absolutely. We certainly saw the ripple effects coming from Japan for our bond market last week. But I want to go back to that basket that you have when it comes to public and private credit names and the short that you have on. It's interesting that you're, focusing on the credit names there, the credit providers, rather than the tech names themselves when it comes to those short positions. Talk us through the logic there.
Well, I think the thing is that the credit side of it is more likely to see pressure in my mind, where you've seen, for example, look at NVIDIA. It's trading at 25 times earnings, and the S&P is trading at 22 times. Yet you're looking at the companies, if you believe the estimates, revenues are going to be up 57%. So it has really been arguably beaten down in the sense that the revenues, earnings forecasts have gone up, but the stock hasn't done much in, since late October. And so I think you're seeing in some ways more of that discounted in those names, where the credit related ones, I think you could see a lot more damage being done. And so some of it's, we've got some longs in AI equities, we've got some shorts in AI equities, but the credit shorts and the Japan related shorts are what we're trying to use to hedge the portfolio. And quite honestly, we're just trying to take down risk into these earnings because, as I said earlier, you can make a case for them being up big on the other side of earnings or down big on the other side of earnings. And I'd rather see where the dust shakes out. And normally I have much stronger, views on how these things are going to trade. But, we saw with Oracle, if it was all about the numbers, the stock wouldn't have been almost cut in half since, September highs.
Yeah, absolutely, Dan. Always great to get you, too. And, of course, on that last point, too, of course, still a lot of concerns right now in the private capital space, not even just related to AI, particularly with that drop we're seeing today in BlackRock TCP. Dan, great to talk to you. Dan Niles, founder, portfolio manager over at Niles Investment Management, kicking us off to the close here on this Monday afternoon. We go from the tech market to the foreign exchange market. That was the talk of the town over the last few hours. We're going to follow that trajectory of the yen and what it means for the dollar with Carlos Fernandez-Aller over at Bank of America.
Then we'll keep a global perspective and dive into tariffs, trade, and all things political with Sarah Bianchi. She is Chief Strategist of International Political Affairs and Public Policy over at Evercore ISI.
And, of course, it is Fed week. The Fed says it's listening to the labor market, but what is the labor market actually telling us? A conversation up ahead with the founder of Revelio Labs, Ben Zweig. Stick with us. This is The Close on Bloomberg.
Well, the state of Texas is issuing disaster declarations for 134 counties ahead of a major winter storm. Forecasters are predicting ice, snow, and temperatures in the state to drop, making this one of the toughest tests of the electric grid since a deadly 2021 collapse. Here to discuss is Julie Fine. She is Bloomberg's Texas Bureau Chief. Julie, it's great to have you with us. So I mentioned a little bit there about the concerns about the grid, especially ahead of these freezing temperatures sticking around. Where would you say that the greatest pressure points are right now?
Well, I think the greatest concern is always about the grid. And I think a lot of that is because many people here lived through 2021. Many companies lived through 2021. The grid, though, has held. If you look on their dashboard, which many people do, and it lists where everything is, the reserves are in good shape. Right now in Dallas-Fort Worth, about 8,000 people are out of power, and the people served, it's more than 4 million. So right now, less than 1% are out of power. That is not a grid issue. Those, of course, are localized outages that can happen when there is ice on power lines. But overall, I think the grid is in good shape as of right now. People are somewhat taking a sigh of relief, but again, we are still under freezing temperatures in Dallas. We're just above freezing in Austin. So there's another day of this.
So how does this compare to maybe what we saw a few years back when we kind of saw a breakdown in the grid down there? I know there was a lot of, at least publicly, it seemed to be a lot more preparation this time around, including some of the demands to make sure that there was backup power available for some of the more essential services.
Yes, there was a lot of change in the legislature following 2021. They did take some action. For example, data centers, they have to offload in a situation like that so that there's plenty of power available. Some gas facilities, they have done more weatherizing. As you saw this past weekend, some of the refineries set up flares. That's actually a safety measure to show that something's going wrong. So things here have proceeded the way that they are supposed to. The question, though, is we are under freezing for another 48 hours. That is very unusual here.
What does that mean potentially for some of the oil producers and the oil refiners as well, Julie?
Well, as the oil futures traded lower as much as 0.9 on Monday. So obviously they look at things like the refineries. They look at things like flares. However, the freezing temperatures are supposed to be over by tomorrow in the next 24 hours or so. So that's a good sign for them as well.
All right. Julie, I am curious here, too. Once we get to the other side of this, do you anticipate that there could be additional changes? I mean, we talk about that previous storm that you had. So much has changed. You talk about, obviously, the explosion in data centers, the build out of oil and gas infrastructure down there, and just a lot more companies moving to the state of Texas. I am curious about some of the longer term preparations to make sure that the grid can not only withstand these extremes like we saw this weekend, but more importantly, just the ebbs and flows going forward.
Romaine, the Texas legislature meets every other year. It was a major part of the legislative session that does not meet this year. It will meet next year. Last year talked a lot about data centers and all of the new changes that come along with them. I do anticipate this to continue in Texas. These problems are not going away. We have these freezing storms every couple of years. More people are moving here. There's a bigger demand on the electric grid. So yes, I expect in the legislative session this to continue to be discussed.
All right, Julie Fine, our bureau chief down there in the state of Texas, keeping a close eye here on those freezing conditions in a state, of course, not used to those freezing conditions and how the infrastructure holds up. When we come back, we're going to turn back to the technology space with a slew of big tech earnings up this week. But we want to check in on Cisco. They don't report this week, but they did get an upgrade from Evercore that could have broader implications for the broader tech sector. That conversation coming up here next on The Close. This is Bloomberg. Time now for our top calls. Big movers on the back of analyst recommendations. And we start off with Meta. Rothschild Redburn seeing a disconnect between the current stock price and long-term value, upgrading to buy, raising the price target to 900, and recommending investors capitalize on any weakness that comes out of the company's earnings report on Wednesday. Those shares up for a fourth straight day. Next up, let's take a look at CoreWeave. D.A. Davidson upgrading the Neo Cloud company to buy, lifting the price target to 110 from 68. This is NVIDIA makes an additional $2 billion investment into CoreWeave to ramp up AI computing capacity by 2023. Those shares up for a second day. And finally, Cisco. Evercore ISI upgrading the maker of networking equipment to outperform, also taking the price target to 100 from 80. The analyst says the stock is an attractive asset and that there are plenty of tailwinds to ensure Cisco can sustain high single-digit sales. Those shares up a fourth straight day, actually having its best day since at least mid-November. And those are some of our top calls. We do want to stay on that last one and get a better read here on exactly what led to that upgrade. Amit Dariani joins us right now, Senior Managing Director covering the IT, hardware, and communications equipment sector over at Evercore ISI. All right, Amit, I mean, I know Cisco's kind of had a little bit more of a resurgence, or at least the perception of a resurgence amongst investors. What exactly is driving that?
Yeah, in our opinion, it's two things, and the combination of these two things are enabling them, I think, to show you high single-digit sales growth, but also low to mid-teens EPS and free cash flow growth, which I think continues to be somewhat underappreciated. Now, those two things that are helping them, I think, one is a campus refresh cycle, right? One of the big products, the core networking products that Cisco makes, is enabling internet access in campuses and commercial buildings. They just refreshed that entire portfolio. The last time they did this was about 8 years ago, and when they did it the last time, you had multiple years of outgrowth. I think you had the cusp of that happening again this time. So a good campus product along with a new product cycle will help you there. The second part really has been around the AI momentum that this business has built up. They're on track to do about $3 billion of AI revenues right now, sort of between AI Silicon One, which competes with Broadcom to provide silicon for AI customers, and then the optical solutions and pluggable switches that they provide on the optical side. But that AI business, which is $3 billion of revenues, about 6% of the portfolio, we think can sustain 30-35% growth over the next several years and can add another point or 2 points of revenue growth to the overall Cisco model.
One thing I've always been curious about this company, I mean, they've kind of been dinged in the past for this idea of being more of a cyclical company. They sell hardware, or at least, actual physical things that you don't necessarily need to re-up, every other week. I am curious as to whether they've done more to build out that services business to create some sort of reoccurring revenue to sort of fill in the gaps in that cyclical cycle.
Yeah, I mean, if you look over the last 5-6 years, they've absolutely done what you're saying, which is they have built a much more of a reoccurring subscription-based model, really to help dampen the cyclicality you see on the top line, right? And probably one of the better places that have done that is on the security side, on the software collaboration side, where they've built up quite an extensive portfolio that tends to be a bit more reoccurring, a bit more predictable nature. That's one part of it. The other part I would say that they've done is they've diversified the customer mix pretty well, right? 5 years ago, Cisco was really heavily a telco-centric business with some enterprise exposure, for example. Today, they actually have really good enterprise presence, really good telco presence, and a really good cloud presence. So they've actually diversified the verticals a fair amount on the product side, and then they've built a really good security subscription model, more on the security offerings as you go forward.
And Amit, I also want to get your thoughts on another big news item of the day, and that is NVIDIA investing an additional $2 billion in CoreWeave. So again, they have this existing relationship. This partnership means that basically CoreWeave is going to build and then operate data centers which will run future generations of NVIDIA's AI systems. The criticism here, or the concern that's been raised, is that this is basically vendor financing or circular financing, whatever you want to call it. I wonder what you made of that announcement.
Listen, I get the references to circular financing and the worries people have. What I would say is, if you think about it simplistically, CoreWeave has a bit of a duration mismatch right now. So they will go to certain places like a Core Scientific or one of these companies and say, give us space for a data center. And these data center operators typically sign 15 to 20 year duration leases, right? But at the same time, CoreWeave's customers, as good as they are, only sign 4 or 5 year leases. And so if you're a data center operator like, again, Core Scientific or any of the other ones, you sort of look at this and say, do I really want to extend more money, more credit to CoreWeave when there's this duration mismatch that's there? I think having a backstop, having NVIDIA as a guarantor, certainly can smooth that transaction out for CoreWeave, right? And I think that's really what they're trying to do. I would say from a CoreWeave perspective, this enables them to lower the cost of financing. It shuts down the duration mismatch that they have in a very nice way. And from NVIDIA's perspective, it actually gives them a really good diversity angle. So NVIDIA is less driven by the big hyperscalers, and CoreWeave can actually give them an vantage point and angle to perhaps have a more diversified customer base and get these AI tools in the hands of enterprises over time. So I think there's a little bit for both of them to do, but it certainly makes sense for CoreWeave to have a lower cost of financing post this announcement.
All right, Amit, great to get some time with you. Really appreciate it. That is Amit Daryanani. He is Senior Managing Director over at Evercore ISI. Really interesting, this news. Obviously, CoreWeave shares higher on the day. They did soar overall in 2025, but we know that there was some rough sledding there.
Yeah, he seemed to be kind of pushing back on the whole Ouroboros concerns here. The idea that, I mean, we know it's circular, but the idea is what's the structure. I hadn't really thought about that duration gap. I have to go and kind of double check that, what he said, but that would maybe explain some of these investments in a light that's maybe a little more favorable to investors.
Yeah, well, rest assured, we're going to be talking about snakes in the tech earnings to come. But coming up next, we're going to talk about currencies, specifically what's going on with the yen. Don't go anywhere. This is Bloomberg.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
.30 p.m. New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Katie Greifeld. We're keeping an eye on these equity markets, also keeping an eye on what's going on in the currency market, particularly when it comes to dollar yen, which at least for right now is has the yen strengthening by about 1% versus the dollar.
Yeah, there's been a lot of activity over the last 72 hours. We kind of saw it on Friday. We saw a little bit again overnight coming out of Japan's hours into the U.S. Clearly, a lot's going on under the hood. This isn't just traders sitting at their desk moving it. There's obviously a much bigger hand at play, and it's raising a lot of questions as to what the implications, the longer term implications, are going to be.
Yeah, especially it's interesting to see Japan and the U.S. seemingly working together here. Longer term, though, it's going to be interesting to ask questions about effectiveness. With currency intervention, it doesn't necessarily have a great sustainable track record here. But, looking at dollar yen, the price action that we've seen in the past couple of days, definitely currency traders are responding.
Yeah, and if you are a currency trader, you certainly know what's going on. But for the rest of us, let's try to make a little bit more sense here of exactly what has transpired over the last few days. Joining us right now is the co-head of Global FIC Macro over at Bank of America, Carlos Fernandez-Alaro. Great to have you here.
Thank you very much.
All right, let's go back to Friday, because that seemed to be, I think, the more meaningful move, at least based on what some of the reporting is. This was intervention to some degree or another. Explain what happened. The U.S. and Japan, to some degree or another, decided that they were going to help prop up Japanese assets to a certain extent at the expense of the U.S. dollar.
That's correct. And there is a word that you mentioned before that is very important, effectiveness. I think this was the most effective intervention I remember. And let me give you a little bit of background. When a central bank intervenes, what they try to do is to move the currency as much as they can with as little reserves as possible. They picked a very good time for that. They picked New York on a Friday at midday when London is gone and we were already getting ready for the snow. But something very peculiar happened, something that has not happened, in my opinion, in 20 years. It was not them. It was not the Bank of Japan doing it. The Fed sounds like they called several dealers asking for a price for dollar yen. That is a complete change on how dynamics in the market happen. And obviously, at that point, several $1 billion traded in a few minutes. The currency moved 2%. That's a very big move. And this is important, again, the very effective intervention, but it may be signaling a change in policy from the Fed. These coordinated interventions, again, we don't remember since, I think, 2002.
Yeah, but it raises a question as to, at least from the U.S.'s perspective, what the benefit is. Are they advocating for a softer U.S. dollar?
Yes, the question is how. I think the first thing that they're doing here is they're sending a very clear signal of several currencies that are too weak, that they are not going to allow this weakening. And generally, they are signaling as well, although this is interpretation, that they may want or they may be okay with a weaker dollar. At the end of the day, a weaker dollar achieves similar results than tariffs, but in a completely different kind of, with a completely different dynamic. So that's why today the market, the dollar was trading very poorly. After, you think about that, the last 5 months, the dollar has not been moving.
I'm curious, though, when those calls were going around, because we heard from someone on our show on Friday who said that there were those calls going around. I mean, what was your reaction? Was the reaction by traders concern, panic? Were they welcoming of it? What?
I think the first reaction is this real? Is this a mistake? Because, again, we have not had these calls in a long time. And I think the second reaction is, well, this may be a change in policy.
I am curious, though, as I mentioned, about the long-term effectiveness. Because if you zoom out when it comes to dollar-yen, I mean, that 160 level, we've gotten close a few times. We got through it when it comes to 2024, at the end then of 2024, the start of 2025, even though we are seeing this big dramatic reaction right now and currency traders apparently, following orders here. I mean, how long can this last?
But that's the thing about it can last quite a long because of the way this is done. As you mentioned, in 2024, when it was reaching 160, they had to intervene, I think 6 or 7 times. Each one of them, they were using $5 to $10 billion. They have $1.3 trillion of reserves, so they can keep on going for a while. But more importantly, I don't think they even spent any reserves in this intervention. If you have the support from the Fed, technically it has infinite dollars, they can put the line in whatever level they want. Now, there's a question as well, there's a point in which your fundamentals are misaligned with your currency, so that's another topic. But again, I will not bet against a cross of the 160.
Okay, so I do want to extend this conversation outside of just dollar-yen, because you think about the dollar as a whole, trading against other EM currencies as well. Not that Japan isn't EM, but how do you see it stacking up when you think about some of the fundamentals in the U.S. right now and the Fed's plans? Yeah,
we generally are negative the dollar. We think the dollar still has to correct. I don't think it will correct at the same speed as it happened at the beginning of last year. And when we pick off favorites on what to choose, we think this may be the year for EM. And we are particularly very positive on things like Brazil, like Turkey, countries with very high rates, with improving fundamentals. At the same time, when it comes to, we love several currencies in Asia, Korea being one of our favorites. And as a result of what happened in Japan, I think the pressure from China to appreciate the currency is going to become bigger. So we still think the renminbi will strengthen from here.
I understand, particularly given your job, this is all technically good. It gives you an opportunity to make some good investments. From the perspective of other folks, particularly in the U.S. market, and I don't mean just in the FX market, but folks in equities and even to a certain extent bonds, is there a risk that they should be paying a little bit more attention to?
Well, a weaker dollar, technically at this point, should help the equity market in the U.S. So if you think, what are the reactions from the FX into equities, that should be a positive. I would be more worried the other way around. If for whatever reason there is a risk of, if equities in the U.S. go down, that may be accelerating the speed of the depreciation of the dollar. Because generally, and that's a trend that has happened for many years, the world is very long dollar assets. If there is a need to sell these dollar assets, the impact in the currency, again, this is what we saw in April last year.
And so are traders going along with this? Because the last few times that we saw the yen spike, I mean, there seemed to be some big pushback by traders as far as against that defense, against that supposed intervention or whatever it was. Have they just kind of accepted what happened over this weekend and said this is now the new world order to an extent?
I think traders at this point, we have all realized that you never fight the BOJ. And at that point, again, this is they have $1.3 trillion of reserves. They can keep on intervening way before you lose your patience.
Yeah, and it's like, no, fight the Fed, don't fight the BOJ. Carlos, great insights, as always. Carlos Fernandez-Aller is now the co-head of Global FIC Macro over at Bank of America. When we come back, we turn back to the equity markets and take a look at one of the biggest movers, USA Rare Earth. It actually had been up about 20%, now up about 6%, forging a big deal for the U.S. government to take a big stake in that company. That's our stock of the hour, and it's up next. This is Bloomberg.
Well, time now for our stock of the hour. USA Rare Earth shares soaring on news that it signed a non-binding agreement with the Commerce Department for $1.6 billion in funding to boost production of rare earth elements on domestic soil. Now, this news comes on a day where silver and gold are also soaring, and traditional metal miners are rallying along with it. Bloomberg News' Joe Doe is here to unpack it all. And let's start, of course, with USA Rare Earth. It has USA in the name. Now you have the government making this investment. What does the U.S. government see here that they're willing to pony up $1.6 billion?
Bottom line is they see what we're calling a mine-to-magnet supply chain. USA Rare Earth has been around for a long time, but they've made a recent acquisition of a UK company, LCM, that really kind of bolstered this idea. Essentially, what the deal says is that USA Rare Earth will be able to mine heavy rare earths out of the ground at a deposit they have in Texas. They'll be able to take those rare earth oxides and turn them into metals, which is what LCM does. And then they'll pull that over to their magnet making facility in Oklahoma and create permanent magnets. And obviously that's the ballgame, right? That's the thing that we're talking about all the time, whether it comes to defense applications or data centers.
So, I mean, how far away are we, Joe, from actual production and, more importantly, revenue? I mean, this is a company that's still relatively young, 6 or 7 years old, and at least based on the data we have on the Bloomberg terminal, not really generating any revenue at all.
That's right. I think when you go through the press release and then the call that they had today with investors, you know, there are numbers of 2028, 2030. I think the idea is the entire mine-to-magnet process would be fully functioning at commercial scale by 2030. But listen, Romain, it's like you said. I mean, these are going to be the questions. This is the risk in the game, and this is what the government understands the risk it's taking, and what investors understand as well, which is not everything goes to plan. And listen, I'm not saying that not everything will go to plan. I am saying that this is the risk inherent in any of these deals that we're seeing from the federal government in the critical minerals space. And the question that we'll need to get through is how quickly can the company build out the mine itself, Round Top in Texas? I mean, it's still just a mound of dirt. And then, of course, how are they going to scale up the recent purchase, the LCM purchase that they did back in the fall? And ultimately, what is the permanent magnet production going to look like at their Oklahoma facility? These are questions that I know the CEO is already trying to answer. And clearly, there are enough investors, as we saw with the $1.5 billion that they got from private funding, as well as the government, who believe that this thing can work.
Well, it should be pointed out that, of course, the government has also made an investment in MP Materials, which is currently the country's only rare earths miner that's currently producing. The hope here, as you've outlined, is that USA Rare Earths will get there in short order. But I am curious, Joe, I mean, just put this into context, why the government is so focused on these heavy rare earths in a national security context.
The heavy rare earths are really the most important for the permanent magnets used in defense applications. We spent years talking about light rare earths. Those were the permanent magnets used for things like electric vehicles and the EV transition. But these heavy rare earths is something the United States is short on, right? The MP deal, I mean, MP Materials was really focused on the light rare earths. One of the big things they agreed to in their deal back in the summer was that they would begin to procure more heavy rare earths. This is something the Pentagon understands that the U.S. is short on. This is something the administration understands very well that it's short on. And that is one of the big bets here in USA Rare Earth, that the Round Top Texas deposit does actually get you heavy rare earths. And if you can get those out of the ground and turn them into the permanent magnets that go into defense applications, that begins to wean you off what is your single source supply chain right now, which is mostly China.
All right, Joe, really appreciate your reporting. That is Bloomberg's Joe Doe breaking down this latest investment from the U.S. government, but certainly this is a playbook that the administration has developed with MP Materials, Lithium Americas. The list goes on. Coming up, we'll take you to the closing bell with Jason Pride. He is Chief of Investment Strategy and Research over at Glenmead. This is The Close on Bloomberg.
What role do public-private partnerships play in the economic development and growth of Kuwait?
The Kuwait Authority for Partnership Projects was established in 2014. As of today, we have 6 projects that are under tender. We have another 6 that are in the pipeline, together with tens of opportunities across ministries. This is an exciting time. There are more interest from international firms and corporations wanting to work in Kuwait.
It's one of the most difficult earnings seasons in my mind that we've seen over the last few years, because there's no clear direction in my mind of how the stocks are going to respond. So let's take them, one at a time.
Dan Niles kicking us off to the close just about 50 minutes ago. A mixed day on Wall Street with a strong bid coming into some of the big cap tech names, but not a whole lot else.
Yeah, and this, again, it really feels like a waiting period. We have to get through today, we have to get through tomorrow, and then we pack so much in on Wednesday. When you think about the big tech names taking the stage, also the Fed decision.
Taking the stage, that's what I was going to say. What do you think is going to be more important, the Fed at 2 p.m. or those earnings after the bell?
I have to imagine it's going to be the big tech names.
Yeah.
I mean, you just think about, as you made the great point to Dan Niles, that a lot of these names, they've been sort of treading water since they hit their highs at the end of last year, and we've been looking for direction there. When you think about the Fed, though, I mean, it's all about who is going to be the next Fed chair versus what they're actually going to do on Wednesday.
Are we going to get an announcement this week? I think I asked you that last week.
I didn't have an answer, and I still don't, but I hope so. It seems like, again, that short list is pretty short at this point.
All right. Well, we'll see. A lot for investors to digest this week. A very busy week for earnings with more than 100 S&P 500 companies reporting. Also, of course, that big Fed meeting on Wednesday. Jason Pry joins us right now, Chief of Investment Strategy and Research over at Glenmead, counting us down to the closing bell. And I do want to start off, Jason, with the Fed meeting, which is kind of being relegated to kind of a second-tier status because of all the earnings. But we're not expecting, at least based on the pricing in the markets, a move on interest rates. But there could potentially be a lot of drama, not just around Powell, but you have kind of a new slate of voting members. I'm curious as to what you expect to hear on Wednesday, and more importantly, what the longer-term ramifications might be for the markets.
Right. It's not uncertain or not unusual to see a Fed meeting take a backseat, particularly after the pace of Fed rate cuts that they've put in place heading into the beginning of this year. But it is an interesting meeting nonetheless, because the Fed had two dissenters, one on each side at the last meeting in different directions, right? And those dissenters kind of lay out that argument where we see this slight imbalance here in the way the economy is setting up, where you have kind of I say a weakish, not like a really weak, but a weakish job market, but inflation that is actually still running at numbers are a little bit higher than what people would generally like to see, right? And when you pair those two things together, it sets up for an interesting debate. Now, this meeting will probably produce zero in the way of rate cuts. For this meeting. In fact, the next rate cut based on markets isn't expected to come about until June timeframe. But it also coincides with a couple other things. Number one is that change in committee that you're talking about. Mm-hmm. And number two, we have a pending new Fed chair that will be coming in as well. So between that composition and changing of members and the change in Fed chair, there's actually a lot of change within the Fed. And people will be trying to read the tea leaves in terms of where that means interest rates are headed.
Well, speaking of reading the tea leaves, there's been a lot of hay made over what exactly is the state of the economy. We've seen the official data. Based on that, it does look relatively stable, though clearly there are some pockets of concern. The other issue, though, too, is also the potential of market instability. And a little bit earlier, we were talking about the state of private credit. There's a story on the Bloomberg terminal today about a BlackRock TCP fund that's just plunging today because of concerns about 100% loss, or excuse me, not a 100% loss, but a potential loss that they took on some of those assets. And it gets to this idea as to whether we have a clean read as to what's actually going on out there.
Yeah, look, I think when we see the data, quite often we're in these circumstances where there's a lot of, kind of data on different sides of the potential outcomes. And that causes confusion when people are trying to interpret it. But at the end of the day, I think the Federal Reserve and the typical economists are actually trying to aggregate these data pieces together. When they look at it in whole, we're looking at an economy that we think is actually in pretty good shape. It's lifting up at the beginning of this year because of the magnitude of fiscal stimulus. And the balance of risks between kind of inflation shooting up and employment moving a little bit lower are, while they point in opposite directions, they're relatively balanced, leaving the Fed in a position where they really kind of just need to kind of step back and wait for the data to develop and make their stance at a later point in time when the data supports those moves on a more consistent basis.
And Jason, I'd love to get your thoughts on what could happen, should we get a Fed chair announcement this week? As I mentioned to Romaine, I mean, you take a look at the short list. It seems like there's two serious candidates at this point. You have Rick Rieder of BlackRock, and then you also have Kevin Warsh. I mean, how do you think the market would react to either of those two names, assuming that President Trump doesn't come out with, a dark horse sort of pick?
Yeah. Look, just until maybe a week ago, Rick Rieder was considered a dark horse sort of pick at that point in time, at least by betting markets. I think if you turn to how the Fed's going to, or how the market's going to perceive this, of the remaining candidates, the top 3-4 candidates, they were actually very, very credentialed candidates. If you pick through the last two that are sitting there, Kevin Warsh and Rick Rieder, Kevin Warsh is very well known in the marketplace, in the economic spheres, has been there for a while at the Federal Reserve. Rick Rieder is while he may have been a dark horse before, he is the hardest working, one of the smartest fixed income players on Wall Street. Both of those are very bona fide to lead the Fed, and I think the market will look at that and see a lot of credentials coming to the fore, with both of them being very strong candidates. I think markets will probably favor the one that is closer to them, which is Rick Rieder, but probably not be disappointed with either.
Yeah, no, it's a good point, too, that you think about Rick Rieder's, his candidacy here. It was really a late surge, just in the last few weeks, that it feels like it got more serious. So either candidate, in your view, would be welcomed by markets here. Do you think it's that either pick would go far enough, just the pick alone, to put to bed some of the questions and concerns about Fed independence, or do you think that will linger?
One of the shifts recently, I think, in shifting towards Rick and to Kevin Warsh was actually a shift a little bit more towards Fed independence. The move down in probabilities or likelihood of a Kevin Hassett was likely in a reaction to the administration shifting in direction where they didn't obviously put somebody into seat that was as aligned with the administration at that point. I mean, it's not to say that Warsh or Rieder would not be able to align themselves with the administration, but they are considered, at least generally speaking, to be a little bit more distant and therefore fit that role of being a little bit more independent in thought process.
All right, Jason, always great. Jason Pride, Chief of Investment Strategy and Research over at Glenmead, counting us down to these closing bells. Here on a Monday afternoon, a mixed market here with the S&P up about 0.5 percentage point on the day. The Russell 2000 down by 4 percentage points, 0.4 of a percentage point on the day. A full breakdown of all of today's market action, it starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here alongside Katie Greifeld, taking you through to that closing bell with the global simulcast. It starts right now. Carol Massar and Tim Senovic join us right now as we welcome our audiences across all of our Bloomberg platforms, including television, radio, our partnership with YouTube. The calm after the storm, Carol Massar, literally and figuratively, when it comes to financial markets right now as we await a very busy week.
Yeah, and that's where I want to go. I was looking at the Mag 7. They are up only about 0.2% so far here in 2026. It is a big week. We've got 4 reporting: Meta, Microsoft, Apple, and also Tesla. And today we're just seeing them higher by about 0.7%. But I do feel like what we get from them will certainly be important to market momentum and also the market narrative.
What about what we hear on Wednesday from Fed Chair Jay Powell?
Oh, yeah, there is that.
The questions at his press conference, you could probably take a wager. Sorry, not a wager. You could probably predict something on one of the websites.
You could probably take a wager, right?
On, is the first question going to be about a DOJ investigation or about the path of interest rates?
Yeah.
I don't know.
I have to imagine that Fed Chair Jerome Powell will try not to say too much about anything, really, but it is interesting when you think about, the trajectory of markets from here, the sentiment of the week, whether or not it's the Fed meeting or whether it's the big tech names that are going to be more important to determining that. And I don't know, Romaine and I were just having that conversation. It feels like it's big tech that this is their week to shine.
It was interesting looking at some of the notes out by analysts this morning and really expecting a bit of a broadening of the earnings picture. The idea that it's not just going to be those big tech names to watch, but some of the others that might actually post more meaningful and, more importantly, more significant earnings and revenue growth that might actually help to keep the rally going. We do have a modest rally on our hands on this Monday afternoon, concentrated in mostly some of those big cap names. The Dow Jones Industrial Average adding 300 points or 0.6%. The S&P up about 35 points or a half a percentage point on the day. The Nasdaq adding 0.4%, while the Russell 2000, that's going to finish in the red, down about 10 points or 0.4%.
All right, back to the S&P 500 I go, and we definitely did have some upward momentum among the large caps. 317 names in the S&P 500 higher on this snowy Monday. Katie, 185 to the downside, 1 unchanged.
Well, if you take a look at the sectors as measured by the circle, you certainly had more green than red. In terms of what led from a percentage perspective, communication services was at the top. Big moves when it comes to Alphabet, when it comes to Meta. Tech, you can see there taking up a big slice as well. Utilities, financials, etc. In terms of what didn't perform on this Monday, consumer discretionary down about 0.7%. You also had consumer staples and real estate just finishing just barely in the red, Carol.
All right, so let's go do something that we've been talking about. I'm assuming you guys too. Rare earth companies, they were definitely...
Magnets, Carol, magnets.
Magnets. They were definitely on the move today. This on news that USA Rare Earth signed a non-binding agreement with the Commerce Department for $1.6 billion in funding, the latest White House deal to boost production of rare earth elements on domestic soil. So you did see USA Rare Earths definitely moving to the upside, up about just shy of about 8%. I do want to point out, though, we did look at the whole space, and many of the names, whether it was MP Materials or Lithium Americas, they rallied but then dropped lower and actually sold off a bit. We talked with our own Jacob Lawrence here at Bloomberg, who covers this space, and he said, little company, they're in the very early stage, which you see with a lot of mining companies, yet to be known what kind of rare earths they have. It's a non-binding agreement, so it's basically the White House saying, we'll give you money depending on how this pans out. But nonetheless, it was definitely on the move in today's session. Also moving higher, CoreWeave. So we'll flip it on over to that. NVIDIA, as you know, dominant maker when it comes to AI chips, investing an additional $2 billion in the cloud computing firm. It's also a key customer of CoreWeave, which got us all talking once again about circular financing. So that is something that we kind of keep front and center. You can see that stock, though, CoreWeave up about 5.7%. It's up more than around 40% year to date. It is down more than 30%, though, since mid-August. So we know this one has been under some pressure, but still up pretty mightily here in 2026. GameStop. Thank you, Tim, for this
You're
one.
welcome.
He's like, Master, do you have your gainers? He's like, you got to do this one. GameStop up about 4.5%, rallying on heavy volume. Michael Burry saying he's buying shares. He said this on Substack. He goes, I own GameStop. I've been buying it recently. I expect I am buying at what may soon be a 1x tangible book value, 1x net asset value. And he says, getting a young Ryan Cohen investing and deploying the company's capital and cash flows, perhaps for the next 50 years. I am not counting on a short squeeze to realize long-term value. I believe in Ryan. There's more there. The stock went higher. That's my gainers.
All right, You got the gainers, Carol. I got the decliners. Let's start with shares of Booz Allen Hamilton, down more than 8% today. This after the U.S. Treasury Department said it canceled $21 million of contracts with the company after the consulting firm failed to protect taxpayer data, which it had access to, including President Trump's tax returns. The Treasury has 31 separate contracts with the company. It cited the case of Charles Littlejohn, a former Booz Allen employee who pleaded guilty in 2023 to felony charges for leaking records, including the president's tax returns. Also, the trade desk, among the worst performers in the S&P 500 today, down more than 7%. This after the company said the employment of CFO Alex Kale was terminated over the weekend. Kale's been CFO since August 21st. The company did name Tennille Davis, 55, as interim CFO, while the trade desk conducts a search for a permanent successor. And finally, some M&A news, or maybe a lack of M&A news for this final decliner. Revolution Medicines shares falling today by 16. Go ahead and round that up, 17%. It's an oncology company. Shares fell as much as 20%.
That's like a bad EKG line.
Yeah, it is. I mean, it's just been down all day. This after the Wall Street Journal reported that Merck ended talks to acquire the firm, citing people familiar with the matter. Bloomberg Intelligence's team wrote that the decision to end the deal talks refocuses attention on valuation discipline, with the target already up 48% so far this year. Once again, Revolution Medicines down 17% today.
All right, we'll take a quick look at yields. Volatility was incredibly light. So, too, was volume. Did see a slight tick down on the 10-year yield here, just down by about 1 basis point, if you will. Second straight day of declines here. But, again, a bit of a holding pattern, probably ahead of that 2-day Fed meeting that kicks off tomorrow morning.
All right, just got to say, Tim and I love our AirTags from Apple, and they are announcing a new AirTag. It's got longer range.
So
these are the
you
best.
put one on each other so you know what's happening?
Well, we don't go that far, but we put things on lots of other things.
Sometimes I do. Like, I wish everything had an AirTag. Like a pair
I
of
think there are
sunglasses.
laws against putting them on people. That, you know.
Okay. All right.
That was an issue a few years ago. But sorry, Carol, we digress. Go ahead.
All right. So it can now locate lost items from up to 50% farther away. Its speaker is 50% louder than before. And Tim, it's got a distinctive new chime.
Yeah, supposedly it makes it easier to find items that have gone missing. I probably use like the find feature for my wallet or my keys or whatever a couple times a week. This was such a sleeper product a few years ago, and I just think it's one of those things. I'm not, obviously I'm not endorsing things here, but it would do me well to have an AirTag in things that don't actually have AirTags on.
It's on everything in like my household.
Well, I told Carol didn't know this. You can put these on your
backpack.
pets. You can put these on your pets. And Carol was like, I need one for my pet. And I was like, just put one on your pet.
It's got a chip already.
Yeah.
Well, we have both.
Yeah, that's true.
Yeah.
I don't
You have an
wanna
AirTag on your dog,
I don't
Roman?
want to
We
lose
do,
that.
yeah, on the collar, yeah.
You
And we have a
AirTag
chip.
on the collar?
Yeah.
Can't you
In case
just
she gets
call
lost.
for the dog and she'll come to you?
Not my dog. She's obstinate.
I have to say, I wish that I had put one on my wallet, which has been lost for over a month, but I'm doing okay. Muddling
bummer.
through.
The new
It might still
The
show
new
up.
wallet,
Might
put
still
it on.
show up.
That's what I keep praying for.
I did think it's kind of interesting, though, that Apple kind of would announce this now. It's kind of like everyone's looking for, their developments on AI or Apple Car or whatever big thing. And they're like, hey, man, we're going to actually update this AirTags. It's a good product. I use them, too,
Apple
as
shares
well.
did rise
That's not an
today.
endorsement, but I do like them. So.
Yeah.
They did rise on this?
I mean, that's the
Is this
only
what they're going to
catalyst
talk
I
about
can
on the
find.
conference call?
Maybe. Shares are up 2.9%, so.
All right. Well, something else I'm keeping an eye on, too, is, I know you're all big skiers here. This kind of this ongoing issue now with the United States policies towards non-U.S. Residents. And the idea that you had all these Canadians, particularly up here in the Northeast, that would just kind of cross over into Maine and Vermont and some of the upstate, some of these states here to go skiing. They're not doing it. There was a great story on the Bloomberg terminal about one ski resort in Vermont that actually saw a 35% drop in bookings from its Canadian customers. A lot of these resorts, we should point out, up near the border are heavily dependent on the Canadians coming across the border. So huge financial impact right now.
I feel like, Tim, you have to say something. You're a skier.
Well, I think what surprised me most about this is a great Business Week story. Charles Gorovin writing this piece. I encourage everybody to check it out. But the person who runs the mountain, Steve Wright, he noticed that ticket sales were down. He called 100 of these customers who had not renewed their passes this year to actually hear from them as to why they didn't do it. And he said overwhelmingly he heard about it as a result of U.S.-Canada relations, and he was really concerned about that. Look, I think there is an economic impact to all this stuff. We see what the shakeout ends up being, but this is a nice sort of, microcosm of a real macro story, I think.
And it goes both ways, too. I mean, as somebody who grew up in the Midwest, you would cross over into Windsor to, do the tax-free shopping and all that, and a lot of Americans aren't going over onto the Canadian side. So, there's impacts on both sides of the border here, and, who knows if we'll manage to work this out or not, but real ramifications.
Hey, guys, what are you doing after the show?
I'm going skiing to Jay Peak.
Are you?
No, I'm going home.
I was wondering if you guys want to go build a snowman. Want to go buy it?
You can.
We
Miles
tried
Miller
to.
was out there in Central Park building.
I tried to build one yesterday. The snow that we were getting late in the day.
It's too late, yeah.
It was not good snow for snowmen.
It's fluffy snow, right?
Yeah, it was like a little
for
icy
skiing,
too,
probably.
but
Great for shredding, though, man. Did you see Sean White was in Central Park with the snowboard? Yeah.
That was pretty cool.
Yeah.
Pretty cool stuff. All right, guys, have a safe trip home. That's going to do it. Our
I'm
cross-platform.
staying here tonight.
Are you? Hey, nobody asked that from me. Or you. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Katie and Romaine, of course, continuing there on the close on Bloomberg TV. Tim and I continuing on Bloomberg Business Week Daily right here on radio. We'll see you again, same time, same place tomorrow.
And our coverage continues here on The Close. A big focus on the markets, a big focus on what investors have their eye on. The taco trade, well, now there's a new trade, the Big Mac trade. Ed Clissold over at Ned Davis Research. He joins us just after the break here to discuss why this year's midterm elections will drive markets more than else. This is coming up next here on The Close. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Katie Greifeld.
I'm just happy you made it in through this massive snowstorm we had here.
I wouldn't have missed it.
Absolutely. Well, you missed a little bit. I'm Romain Bostic, by the way, and there was a little bit to watch here in the markets here on this Monday afternoon. Modest gains for the S&P 500, modest gains for the Mag 7 in a week where we're going to start to hear from a lot of those big names, including Apple and Microsoft. But the real action that we saw was once again in the FX space and in the commodity space. The Bloomberg Dollar Spot Index down for a third straight day, its lowest levels since 2022. Meanwhile, silver up for a third straight day to, well, yet another record high, maybe evidence, Katie Greifeld, of that debasement trade.
Yeah, it's fascinating. We've been focused on gold, but silver has been absolutely parabolic. We'll continue to keep an eye on that. But let's talk about some of the biggest movers from an equity perspective. I put Apple up there. They report later this week. No clear catalyst that I could find for their 3% rally today, though they are introducing those new AirTags, so go figure. Intel, the fallout continues, down another 5.7% today. That's after this stock fell by 17% on Friday. And then GameStop, we were also talking about this in the simulcast. Michael Burry, he is no stranger to this stock. He's buying more, according to his Substack. Shares higher by 4.4%. But let's get to our top story this hour, and that is Wall Street's appetite. It's shifting from tacos to Big Macs. That is, big midterms are coming. Ed Clissold and the team over at Ned Davis Research believe that this will be the main theme of the year, shifting focus to policy plans that emerge around November's congressional vote. The team writing, quote, President Trump's focus on affordability heading into midterm elections has led to a series of actions targeting oil prices, mortgage rates, credit card rates, and the Fed funds rate, Romain. So a lot of focus heading into November.
All right, well, let's hear from the man himself. Ed Clissold joins us right now, the chief U.S. strategist over at Ned Davis Research. So, Ed, I mean, you have to sort of break this down for me because, like, historically, I'm always told that elections don't really have a direct impact on the markets. I know longer term there are policies that come out of those elections that can, but give us a reason why this year the complexion of this election is going to be a little bit different in terms of how markets should view it.
And usually going into midterms, the market tends to be weak out of the 4 years of the presidential cycle. The midterm year is the weakest, and usually it's Q2, Q3, right, heading into the election, mostly because the stimulus that politicians put into the economy going into the presidential election, comes out, and you really feel that during midterm years. And President Trump is definitely focused on the opposite this time. He knows there's a narrow majority in the House, and if they lose that, then it'll be very difficult for their agenda to get going in the second half of his second term. So he's really focused on juicing the economy, on improving affordability, and projecting national defense, which is something he's been keyed in on for his entire presidency.
Well, I am curious, though, too. I mean, we always know during election years, the politicians always try to sort of address some of the issues of voters, like affordability, if you will, sometimes with substance, sometimes without. I am curious, though. I mean, you have certain states that have primaries coming up, like in a couple of weeks or 3 or 4 weeks for the first one here. And it gets to this idea as to how much can actually be done to actually placate voters or win over voters, if you will, that haven't already made up their mind.
We're certainly a divided country. And so what we're really trying to do here, what the politicians are trying to do are, number one, motivate their base, and number two, fight over the very small group that is actually undecided. And it's going to be a challenge for Trump and the administration because, number one, these things take a while to take effect. It's not like you can wave your magic wand and suddenly an edict it becomes goes throughout the entire economy. Number two, some of the things they're trying to do actually counteract each other. If you're going to try to boost economic growth, what that could do is actually push interest rates higher. If you're trying to boost exports, you could weaken the dollar. But if you get better economic growth, the U.S. is a better place to invest, so the dollar could strengthen. So it's a real challenge here. It doesn't mean they're not gonna try. And that's the big message here, Romaine, is that the administration is really going to do everything it can, unlike some other midterms where they're a little bit more hands-off.
Well, let's talk about some of the proposals that we've seen so far. You think about credit card interest rate caps. That was floated. You saw a big hit to shares of financial companies. You think about the defense names certainly taking a hit when the president basically came out and said that they need to halt dividends and invest in production. And then, we've seen housing stocks also moving quite a bit when it comes to these different measures. Is it fair to say that heading into these midterms that there's more single stock risk or single sector risk than normal?
Yeah, I think that's a really good point, Katie, that rather than focus on the broad market, the administration is going to be keyed in on specific things. Now, again, the challenge is what the left hand might be doing, the right hand might be working against it. And in general, if the market does have a bit of a pullback in the middle of the year, that macro risk could offset, say, industrials are one of the sectors we've highlighted that if the economy does well, that sector should do well. But it's also a pro-cyclical sector. So if you get a pullback in the market, industrials probably won't do as well anyway. So you've got to counteract these things against each other. And so we created this index as a way to really measure whether or not we think the investors are pricing in a Trump victory, not necessarily saying we recommend buying the index, but it's a good thing to keep track of.
Yeah, and it's interesting. I'm taking a look at some of, the implications, some of the key positions that you recommend. This one catches my eye, that you favor mid caps over large caps. Is that more about large caps than mid caps, or what is the logic behind that size preference?
Yeah, there's a couple of things. Number one, mid caps have been underperforming for a while. Last year, they actually did worse than small caps and large caps, which is unusual. It's only happened 6 times, going back to 1979. And so there's some mean reversion there. They also have sector exposure that's a little bit more cyclical. That could help. But also, look, the large cap indices are dominated by the Mag 7 companies, where we're going to have to really prove themselves in a higher capex spend world that their multiple premiums have been trading at for several years are warranted. Even as of the end of last week, the Mag 7 traded a pretty healthy premium versus what it has over the last 5 years. And so as maybe you see some catch up from good earnings growth from mid-cap companies, you could see that multiple compress a little bit, which would favor mid-caps.
I am curious, Ed, though, too. I mean, when you look at sort of the data of past election cycles, is this going to be one of those situations where we're going to see the market kind of front run this into the November elections, meaning that I guess if it's, let's just assume it's to the upside, where a lot of the gains are going to kind of be either before the actual November election and in the immediate few days following it, and then the market kind of tapers off as we get into the actual, people taking office in the following January?
Yeah, and that's where we have to look at now versus history. What the history has said is actually the opposite of what you just described, Romaine, where there's a lot of consternation over the uncertainty of elections, and then after midterms, the markets rally. But because the administration has been so explicit about what it's trying to do here, it's quite possible we could get a little bit more strength than what you normally get in the middle of midterm years. But again, there's so many things that go into market action besides this. We still want to be careful not to trade just off of what the administration may try to implement here, given that it's going to be hard to get all of that in before November.
All right, Ed, really great to get some time with you. We really appreciate it. That is Ed Clissold. He is Chief U.S. Strategist over at Ned Davis Research. Now, coming up, crypto traders fleeing to prediction markets. We'll discuss the shift towards event betting next. This is The Close on Bloomberg.
Some breaking news. Shares of United Health, CVS Health, Humana, Centene all plunging in the after-hours trade. The Wall Street Journal reporting that Medicare Advantage, this is the private version of the federal health benefit for seniors, those reimbursements from the government will effectively not increase at all this year. According to what they're reporting, they're saying that it will rise by just 0.09% for the 2027 fiscal year. The expectation heading into this announcement that it would rise by roughly 5 to 6%, which is roughly in line with longer term averages. This is a big deal, a big source of profits for these companies. And now, citing a recent paper by the Trump administration regarding this Medicare Advantage plan, the Trump administration planning to hold those increases at basically, we'll just call it zero as we round down.
Yeah, and this is just the latest in an ongoing story for these insurers who rely on Medicare. Their profits have been squeezed by rising care expenses. At the same time, that funding from the government, they would certainly call that insufficient. So we'll continue to follow that. But again, the big moves in those big insurers from United Health, CVS, and Humana, you can see it after hours. It'll be interesting to see how that develops. We'll continue to keep an eye on that. But let's pivot now to the world of crypto, because crypto traders, they've actually been cooling on.
गाइस लंदन सेशन ऑलरेडी ओपन हो गया 1:30 पे. देखो थोड़ी देर पहले एक न्यूज आई थी दैट इज फ्रॉम यूएस. ऐसा लग रहा है कि यूएस में भी अटैक. दैट इज फ्रॉम द सोर्सेस. ऑब्वियसली वी डोंट हैव एनी कंफर्म रिपोर्ट, बट यूएस इज कंसिडरिंग टारगेटेड स्ट्राइक अगेंस्ट सीनियर इरानियन ऑफिशियल्स. लेट्स सी ये न्यूज़ रियल है या फिर जस्ट स्पेकुलेशन. नीड टू सी. ऐसा होता है तो क्रूड ऑयल के प्राइस हो सकता है और ऊपर चले जाए. द स्ट्राइक कुड कम एज अर्ली एज दिस वीक, बट द टाइमलाइन कुड शिफ्ट. New York Times. President Trump has been briefed on a series of US intelligence assessment suggesting that the Iranian government position is weakening. Good time to attack. According to a Marif, Israel is preparing for the possibility of a US strike on Iran this month under strict secrecy protocols. Israeli officials say that the public would receive no advance warning to prepare US operational surprise. The Israeli Defense Force is expected to get only hours of notice, allowing limited and discrete preparation, including quite coordination with airlines, energy infrastructure.
sections of society will benefit all sections of society.
आज भारत ने
today
अपने इतिहास का
has
अब तक
concluded
का
the
सबसे बड़ा
largest ever
फ्री
free
ट्रेड
trade
एग्रीमेंट
agreement
संपन्न
in
किया है।
its history.
आज
And
27 तारीख है।
today is the
ये सुखद
27th.
संयोग है
It is indeed a
कि
happy
आज ही के दिन
coincidence that
यूरोपियन
this
यूनियन के
FTA
27 देशों के
that
साथ
we have
भारत
all sections of society.
आज भारत
Friends,
ने
today
अपने
India
इतिहास का
has
अब तक
concluded
का
the
सबसे
largest
बड़ा
ever
फ्री
free
ट्रेड
trade
एग्रीमेंट
agreement
संपन्न
in
किया है।
its history.
आज
And
27 तारीख है।
today is the
ये सुखद
27th.
संयोग है
It is indeed a
कि
happy
आज ही के दिन
coincidence that
यूरोपियन
this
यूनियन के
FTA
27 देशों के
that
साथ
we have
भारत ये एफटीए कर रहा है।
an FTA
यह
which is
एक
with 27 countries of the
ऐतिहासिक
European
समझौता
Union
निर्णय
will
लिए।
benefit all sections of society.
आज भारत
Friends,
ने
today
अपने
India
इतिहास का
has
अब तक
concluded
का
the
सबसे
largest
बड़ा
ever
फ्री
free
ट्रेड
trade
एग्रीमेंट
agreement
संपन्न
in
किया है।
its history.
आज
And
27 तारीख है।
today is the
ये सुखद
27th.
संयोग है
It is indeed a
कि
happy
आज ही के दिन
coincidence that
यूरोपियन
this
यूनियन के
FTA
27 देशों के
that
साथ
we have
भारत ये एफटीए कर रहा है।
an FTA
यह
which is
एक
with 27 countries of the
ऐतिहासिक
European
समझौता
Union
निर्णय
will
लिए।
benefit all sections of society.
आज भारत
Friends,
ने
today
अपने
ईयू और इंडिया के बीच में ट्रेड डील और डिफेंस पैक्ट साइन तो हो गया है। इंडियन मार्केट में कुछ खास इम्पैक्ट दिख नहीं रहा इसका। निफ्टी अभी भी साइडवेज ही है ऑलमोस्ट।
to Delhi. And of course, this comes at a time where a lot of our traditional trading partners here in the U.S. are looking for alternatives. Be interesting to see what happens there.
Have to imagine the U.S. will be the elephant in a lot of those conversations, though.
Absolutely. Well, speaking of which, Balance of Power is up next at the top of the hour for all your political news right here on Bloomberg.
Just wonder if you could start by telling us the significance of what we've seen happen and this latest step of the purge of China's military.
Absolutely, Paul. This is a stunning development. It is the biggest development in Chinese politics since Xi Jinping came to power and had, as we know, 3 terms of government.
दिलीप है जी क्रूड ऑयल पे भी मैंने पहले बता दिया था मॉर्निंग पे आपको सपोर्ट पर ही है और कोई ट्रेड नहीं है उसमें क्रूड ऑयल स्टिल होल्डिंग द सपोर्ट जब तक प्रॉपर्ली ब्रेकडाउन नहीं होता तब तक सपोर्ट होल्ड करके बैठा हुआ है बाकी इंडिया ईयू ट्रेड डील का कुछ इम्पैक्ट दिखा नहीं मार्केट पे स्पेशली निफ्टी पे मॉर्निंग पे एक सेल ऑफ आया था फिर रिकवर किया पूरा दिन भर मार्केट एक रेंज के अंदर वॉलेटिलिटी में स्पेंड कर दिया पूरा बैंक निफ्टी फिर भी ठीक था मॉर्निंग पे सेल ऑफ आया था रिकवर किया है साइडवेज नाउ नीड टू सी क्लोजिंग कहाँ होती है मुझे लग नहीं रहा 25,200 के ऊपर आएगा क्लोजिंग बेसिस पे आज इंट्राडे में निफ्टी 50 लेट्स सी 24,800 के अप्रॉक्सीमेटली मिलता है तो मे बी दैट वाज अ गुड लेवल फॉर बाइंग अगेन बाकी बिटकॉइन में भी जो लेवल लगाया था कल वाला सेलिंग ठीक ठाक चली रही है अभी भी बड़ी सेलिंग नहीं आई अभी तक कल एक सेल ऑफ आया था 1400 पॉइंट का उसके बाद से अभी तक देखोगे मॉर्निंग पे वो रेजिस्टेंस 15 मिनट का जो कल रेजिस्टेंस लगाया था वहां से अभी भी वही 800 पॉइंट ही सेल में है नेचुरल गैस भी साइडवेज ही रहा है मॉर्निंग से गैप अप के बाद कंप्लीट साइडवेज है बाकी अगर आप नेक्स्ट मंथ का फ्यूचर देखोगे वो तो ऑलमोस्ट 600 चला गया था मॉर्निंग पे ये अप्रैल फरवरी मंथ का फ्यूचर है ध्यान रखना आप करंट मंथ का फ्यूचर देखोगे दैट ऑलमोस्ट हिट 630 टुडे मॉर्निंग पे ओपन होने के बाद कंटिन्यूसली अपर सर्किट में ही है अभी देखोगे तो 27% अप चल रहा है MCX में करंट मंथ का जो फ्यूचर है इसकी आज एक्सपायरी है बाय द वे ऐसा लग रहा है ऑलमोस्ट ऑल टाइम हाई वापस हिट कर देगा बट नेक्स्ट मंथ में ऐसा नहीं है प्रीवियस मंथ देखोगे तो उसका हाई ऑलमोस्ट 800 के अराउंड है और इसने ऑलमोस्ट 644 के अराउंड 630 के अराउंड एक हाई बनाया है इस महीने ऑलमोस्ट 80% का रिटर्न है इसमें लो से देखोगे तो वो ऑलमोस्ट 100% चला जाता है 127% इन दिस मंथ आज एक्सपायरी है ध्यान रखना करंट मंथ जनवरी मंथ की फ्यूचर की ऑप्शन ऑलरेडी फरवरी मंथ का ही ट्रेड हो रहा है नेचुरल गैस थोड़ा सा कॉन्ट्राडिक्ट है दोनों ही फ्यूचर चार्ट में करंट मंथ काफ़ी एडवांस चल रहा है बाकी फरवरी मंथ को देखोगे दैट इज काम नॉर्मल प्राइस एक्शन है उसका हाई काफ़ी दूर है अभी भी MCX में भी देखोगे फर्स्ट 15 मिनट के अंदर ही हो रहा है ट्रेड. वॉलेटाइल कैंडल थी, उसके अंदर ही प्राइस एक्शन बिल्डअप है. फॉरेक्स का चार्ट लगा रखा है कल से. कल एक सेलिंग का ट्रेड था, अभी बाइंग ही चल रही है करंटली. $60 के आसपास सपोर्ट अच्छा है ये. जब तक वापस प्राइस ऑफ $60 के नीचे प्रॉपरली ब्रेक डाउन नहीं करता, इट इज़ अ गुड सपोर्ट. बाकी हाँ, इसके नीचे ब्रेक हो गया तब फिर थोड़ा सा वापस $58.40 के आसपास प्राइस जा सकता है. और मैं एक्सपेक्ट नहीं कर रहा हूँ वहाँ तक जाएगा. दैट इज़ अ वेरी फार लेवल राइट नाउ. बट अगर $60 के नीचे प्रॉपरली ब्रेक डाउन हुआ 15 मिनट टाइम फ्रेम पे, देन when we can see a good sell off. Crude oil as well, but yeah, this is a good, very strong support is still holding, which is. बाकी ऊपर का तो ये पॉइंट ऑफ इंटरेस्ट ही है $61 के आसपास. इसको देखना पड़ेगा ये होल्ड करता है नहीं करता है. Korea file missile into sea. MI talks of limiting US military role. Canada is looking to boost energy trade with India, energy minister says.
It's a question of sustainability of the Xi Jinping regime, whether or not he really can serve for life. Zhang Youxia, the man he has purged now, is the top general in the PLA. He's a war hero from the Vietnam front in the early 1980s. He is the most respected PLA officer with a huge network within the military. He's also the son of one of the founders of China. He is a red princeling, as they are called, with equal stature, frankly, within the party in many ways to Xi Jinping. So it may be that as he accumulated power in the military, and he did get rid of one of his opponents in the military, the first vice chairman, He Weidong, recently, it may be that Xi Jinping thought he was part of a cabal who would try and keep Xi Jinping from a fourth term in 2027.
So do you think that that is what is at the core of his investigation and his removal? Or could it be that these charges have some credibility? Or which is it?
The charge of working for the CIA or leaking the secrets of China's intercontinental ballistic missile force is an old one. It came up in 2021 against the former defense minister. This is not credible. It may be used by Xi Jinping to bring down his opponent, but Xi Jinping has a paranoid personality. He thinks the CIA, Black Hand, is out to get China. He thinks the CIA is behind Hong Kong unrest, the Uyghur unrest, Tibetan unrest, the Tiananmen Square democracy movement. So it's not unusual for Xi Jinping to have these suspicions of the CIA.
But what would potentially be the key deliverables for President Trump as he goes to Beijing, having already secured at least a temporary trade truce?
Well, I think Busan was a very important event as well that led to the meeting that we're trying to have in April. President Xi graciously invited President Trump to come to Beijing in April, and President Trump invited President Xi to come to the U.S. in August or September. So what we're really trying to do in this entire episode is to buy some time and space to allow our negotiators, Scott Bessent, Hully Fung, Jameson Greer, to negotiate a trade deal. And they were making a lot of progress, honestly, but we needed some more time. You saw the countermeasures that were used during 25. And so both leaders felt like we could benefit from this time out. So the deliverable in April is really to solidify the objectives and criteria of success for the negotiations this year.
How do you see the compliance so far of that truce, whether it's on the export licensings for rare earth and rare earth magnets, whether purchases of soybeans and also fentanyl, a big hot button issue?
Well, both sides have actually already completed most of the agreements that we made in Busan. I'm very encouraged, frankly. Fentanyl we're making progress on. Soybeans, they are on track to buy everything they said they would buy. So I believe that both sides were very genuine in their agreement in Busan. I'm encouraged by that. Fentanyl is a major encouragement to me. The Chinese, that next Monday, scheduled the 13 precursor chemicals that we asked them to. They put an embargo on it for North America. And most importantly, Stephen, they've actually stepped forward and are cooperating with law enforcement from the United States. So for the first time, law enforcement in the United States, law enforcement in China are cooperating on fentanyl inside China.
What has been the progress on just back-channel communication since that Busan truce and that meeting? Has it increased? Or, you know, I've covered China for many years. I've interviewed a number of different ambassadors. Sometimes we're in the penalty box, the Americans. Sometimes we are having more open conversations. How would you describe it right now?
I would say it's improving multidimensionally. First of all, President Trump and President Xi have had 4 phone calls, various letters back and forth. And they, of course, met in Busan, and they demonstrated then a willingness to have more conversation, more interaction. And then President Trump and President Xi agreed to have more interdisciplinary conversation across the interagencies. And so we have mill-to-mill conversation underway. Our trade negotiators are doing that. Our law enforcement people are cooperating. So I'm fairly encouraged right now by more interaction. We're also trying to get more of our legislators in the United States to come out. We just had Adam Smith had a CODEL here in the fall of last year. It was very successful. And so I'm very encouraged by that.
How do you feel whether you've repaired some of the trust deficit that happened. I mean, the Chinese officials I've spoken to following April tariff barrage, they felt an affront. They felt like there was a trust deficit that had grown almost insurmountable. Of course, we have a truce now. It's not a lasting peace, but have you spent most of your time just trying to rebuild the trust, or where is that trust level right now?
Yeah, I've been very well received in China by the leadership. You've lived there. You know that goes and comes. But right now we have a level of respect and trust that's building. But the distrust didn't really start on April 2nd, the Liberation Day. I think it started back in around 2001 when China joined the WTO, became most favored nation status, and then realized developing country status. And so some of the imbalances that we're trying to correct today were born in the next 2 decades through state subsidies and so forth, transfer of intellectual property, all of that. And so right now we have a building and encouraging development in terms of trust between the two sides, manifested, I think, when you see Holly Fong and Scott Bessent having these phone calls regularly. They met on the side of Davos, and of course they met on the side at Busan as well.
What do you make of, when I'm talking about trust deficit, there seems to be one as well across Atlantic that was sort of amplified at Davos. And we've seen also in the last few months and in the coming weeks, including this week, a parade of global leaders, even very close allies of the United States, going to Beijing. You heard Mark Carney say a new world order, very deliberate. What do you make of this as these allies and other nations sort of, I wouldn't say cozy up to Beijing, but try and seek deals to sort of have a hedge against the United States?
Well, that's been ongoing for the last decade or so since President Xi Jinping came to power in 2012. My experience in Beijing is just the opposite, though. I've seen a galvanizing of our allies to the U.S. position based on what we did to negotiate for them in the magnet crisis. That proved our level of trust. The second thing we're doing is basically trying to negotiate our differences bilaterally with individuals. We had 12 trade deals done in 25 with some of our allies. And remember how they complained about President Trump's complaint about paying for NATO, right?
Yeah.
Well, they've increased to 5% now, thank God, because of the Ukraine. And so President Trump's getting results there, but those negotiations do not mean that we're losing confidence with them or that we're not galvanized in terms of negotiating in a single source supply world with China.
But then again, I've heard from other countries that there's behind the scenes some concern about some of the policies from the United States, and that maybe the Trump administration, in regard to Canada, maybe trying to coerce our allies not to do certain deals like Carney did with Beijing and impose and threaten 100% tariffs on all Canadian goods.
Well, we have a love-hate relationship sometimes with our neighbors, but Canada's been a long-time trading partner. That's not going to change. We respect the people there. We have a lot of commonality between the two peoples. So I think what's happening overall with our allies is a realization that they need to take care of their own self-interest. President Trump has said that. And what President Trump says, America first, he never says America alone. And we know that in dealing with China or even Europe, the collective agreement among our allies is very important in this relationship with China.
So obviously, out here, we've watched it, and we've seen some of the moves. We saw what happened in Venezuela. We saw what happened in Greenland. We've heard some of the other things. As they call it, the Don Road Doctrine, right? Sort of a controlling of the Western Hemisphere, and those are American interests. How have you heard? Is that resonating, or how is that reverberating through the halls of power in Beijing? Because they'd like to see their own sphere of influence as well in the Western Pacific, in the Eastern Hemisphere.
Well, I think what's happening in this year around Busan and then the meeting in April is really centered around that issue, and that is how do we take care of our self-interest as countries, as independent countries, and still deal with other countries in the world. China's no different than any European country. And so what we're finding is in Latin America, for example, and in South America, those are very key interests strategically to the United States, and so are the ones that China has around the world. So this is not going to bifurcate into east, west, north, south.
No.
What I believe is happening is that the rest of the world is realizing we have to find and rebalance not only trade relations, but geopolitical relationships around the world.
You've obviously heard the story about a continual purge in the PLA and the Central Military Commission, the top general now under investigation. What do you hear? I mean, the Wall Street Journal, for one, has been reporting that he potentially leaked nuclear secrets of China to the United States. Is there anything you can reveal on that?
I can't really address why he did it. Only thing is that we've been tracking his moves in that Central Military Commission for the last 3 years. And one person was removed a couple years ago, then a couple were removed last year, and then you see the move on these two now. So of the 7 people on that Central Military Commission, only Xi Jinping remains, and the other person who we think was in charge of the investigation. And so this is a major development. Vice Chairman Zhang was a lifelong family friend. So for this to happen is a major development in China.
A lifelong family friend of Xi Jinping.
Of Xi Jinping.
So what does it tell you on the bigger picture about the discipline he's trying to impose on what is essentially the largest military in the world by headcount?
Well, I think, number one, I take him at his word that there's a corruption effort underway, that he's trying to correct decades of corruption inside the military. And remember, the PLA used to have to raise their own money for their funding. When I was in China back in the 90s, they had to raise their own funds through commercial deals. Now, they outlawed that. So corruption is one thing he's trying to root out. I do believe President Xi is trying to do that. On the other hand, I think he's making sure that he has total control of his military.
Yeah, absolutely. You talked about, I think a few months ago, you talked about the potential for big commercial deals for America as the rapprochement gains some steam between Trump and Xi. I think you mentioned Boeing. There was a big aircraft deal in the works. We haven't heard anything about those deals. There's been no Boeing aircrafts purchased by China since 2016, I believe. Yeah. So we talked about deliverables earlier. What can be delivered? I mean, will that deal come to fruition? What's likely?
Well, we hope so. I mean, that's one of the things we do in the embassy in Beijing, and with my background in business, this is what we focus on to a large degree. We have things like Visa, Boeing, and others who are trying to get deals done. The deal we did in Busan around soybeans and lumber and sorghum and those types of things are critical to the relationship. We're hopeful the Boeing deal goes through, obviously. They haven't done a major deal in a few years. And it's a big deal, and I think it'd be very, very important for China as well.
Last question here in Hong Kong, and you used to live here as well. Yeah. Obviously, there's a very high-profile national security case with Jimmy Lai. We do know that Donald Trump has appealed to Xi Jinping to release him. He has been convicted on these national security charges and other charges. We're awaiting the sentencing. Is there any progress that Donald Trump has made with Xi Jinping to potentially lessen the penalty and the sentence for Jimmy Lai?
To President Trump's credit and President Xi Jinping, they had an open conversation about that in Busan, where President Trump brought it up and expressed his desire to, and even asked for Jimmy Lai to be released on humanitarian for reasons. And so I think that's an ongoing conversation. I haven't seen any development of that recently. I'm not sure that they're not waiting on the sentencing and whether or not there will be an appeal. But we know President Trump's desire is to have Jimmy Lai released on humanitarian grounds.
Seen, of course, signals that perhaps the U.S. and Japan are coordinating in order to support the Japanese currency. So do keep an eye on what's happening here in Japan, with Nikkei futures now pointing to slight downside. We're seeing the staggered open in Australia also coming up higher 0.7%. Do watch out for this market coming back on a holiday. And of course, we had precious metals surging and gold topping $5,000 an ounce, April. So plenty to digest this morning.
Yeah, on top of that, these lines trickling in from South Korea that they will be holding a meeting to discuss steps on this tariff threat, although they're also saying that they didn't receive an official notice on the tariffs from the U.S. government. But I guess this policy volatility from the Trump administration is adding to the sense of global angst that has fueled this rally we're seeing in precious metals. Gold topping 5K. We got silver on its best surge since 2008, although it saw an intraday collapse. And all this against the backdrop to your point earlier about the yen rally and how that has left the Bloomberg dollar index lowest level since 2022. You are seeing U.S. Treasury yields hovering quite steady as they have been since late Friday. And then when it comes to the U.S. stocks, there has been that mild gain. And of course, this week is also going to be about those tech earnings. But for now, the focus on Trump's threats. Sherry?
Yeah, let's actually delve into that with President Trump threatening those tariffs to 25% to South Korean goods. He says it's because the country's legislature has failed to codify the trade deal both nations reached last year. Let's bring in Troy Sangarone, non-resident fellow at the Carnegie Mellon Institute for Strategy and Technology. Great to have you with us, especially given that these news just broke a few minutes ago. Given that President Trump has only not threatened South Korea, but also European countries, also Canada. I mean, does it make you feel that a trade truce with the United States is not necessarily a long-term deal and that this could be a one-off that could also pass?
I do think this is something that could pass. We've seen with the case over Greenland and the tariffs on EU nations. We saw with Iran and the threat of any country that trade with Iran of a 25% tariff, that those ultimately go into effect. I think what we're seeing here is President Trump would like to see the agreement with Korea move more quickly than it has, though we're only about 3 months since it was finalized, so it's perhaps understandable that we haven't gone further than we have so far. But I think this is something that will likely pass. The Korean Prime Minister was in Washington recently. He spoke with Vice President Vance about where things were, so things should be on a solid footing. I think in terms of longer term, though, there is this question of what will hold. In the case with Greenland recently, we saw USTR Jameson Greer say that, in essence, that countries need to compartmentalize things, and there might be issues where the U.S. will put a tariff on a country while the deal is still in place. So I think this is the challenge going forward, is where will the U.S. expect countries to compartmentalize certain issues where it wants more and puts a tariff in place while the deal that they have already remains in place.
We're hearing that the South Korean government didn't necessarily receive any official notice on these tariffs from the Trump administration. When it comes to the relationship between Washington and Seoul, how detrimental could this be? Remember, even during the negotiations on the trade deal, we had seen that immigration raid in Georgia causing a lot of uproar in South Korea.
This is a relationship that I think we've seen some ups and downs with. You've had the downsides with the raid in Georgia. You have this potentially now. But there are upsides. The United States has referred to Korea as a model ally, one that it wants others to emulate. It's been happy with South Korean spending on defense. We've seen a significant development with the U.S. allowing South Korea to develop nuclear subs. So I think there has been some back and forth in this relationship. But this was something that would be a serious issue in South Korea. If these tariffs go back up to 25%, that then starts impacting businesses and puts Korea at a disadvantage to Japan and the European Union. So this is an important issue, but I do think this is one that we can resolve.
Troy, to your earlier point about how this could blow over and maybe this is all part of a negotiation tactic by the U.S. president, what can the Koreans do at this point to take things down a notch? Given Sherry's point earlier that, maybe they want to also delay these investments into the U.S. given the impact on the Korean won, the currency.
Yeah. The won has definitely been one of the factors. It's slightly above where Korea is comfortable starting to move the investment funds that are pledged for this year over. But I think the first step is reaching out to Vice President Vance. We now have a hotline between Korea and Vice President Vance. And so getting a hold of the vice president, seeing what is going on, what are the real issues here, and sort of taking and asking the vice president to perhaps reach out to the president and calm things down is going to be an important first step. Beyond that, I think it's also important for Korea to perhaps clarify where things are in terms of their own progress. And that then will take and help President Trump better understand how things are moving forward and what he can expect going forward. But I think communication is going to be the key here. And as you noted, there hasn't been a formal notification sent. So one, we should keep that in mind, that nothing here is formal yet. But two, that I think communication is going to be important going forward on this issue.
We have been seeing the U.S. president sort of sharpen his swords or refine the use of tariffs as a tactic, as a tool. How much of this all then is a bit of a moot point as it all rests on a Supreme Court decision?
This is an important point. We're not sure when the Supreme Court will make its ruling, but when it does, and that's expected to be sometime in the near future, it will take and lay out whether this tariff could even go into effect. And so I think that's another point to keep in mind. At the same time, even if the Supreme Court takes and rules that President Trump doesn't have authority under Emergency Powers Act, so IEPA, to take and do these types of tariffs, the administration has already made clear that they will take and try to put tariffs in place. It'll take them longer. They will have to go through a process to do that. But so it might simply delay, but not prevent a tariff from going into place. But that being said, that delay would also give both sides more time to talk through any differences and make sure that any concerns are smoothed over. So I think the Supreme Court is another factor here, especially if President Trump is serious about moving forward with this tariff.
And to your point of South Korea being a role model ally, we have seen Seoul also trying to increase defense spending to 3.5% of GDP, which is one of the highest, if not the highest, among Asian peers. Given the geopolitical context that we're in, of course, the issues with North Korea also trying to rein in China's influence, for example, how more critical do the developments around this trade deal become?
I think it's important. Right now, Undersecretary Colby is in Seoul. He's talking through the changes in the national defense security strategy. And so a lot of this sort of is pinned on the idea of the U.S. having more flexibility on the Korean Peninsula, Korea taking on more of a role in terms of defense against North Korea, especially on the conventional side. This is something that President Lee has specifically said that Korea is willing to take on. But all of these issues start to come together. And I think as we look at how we're going to approach China in terms of deterrence, as we look at the situation on the Korean Peninsula, as we look at changes to how that defense posture is going to be put in place, it's important to not take and complicate those issues by complicating the trade relationship, especially if this is something to where there has been no indication that Korea does not intend to move forward with its trade agreement with the United States. And so this is really a question of timing rather than intent.
To what extent do you think, though, if there was a bit of a shift towards China, that Korea can signal this, given this very delicate geopolitical balancing act, as we saw with Lee Jae-myung's visits also earlier in the year to Japan?
Well, I think when we look at Korea's foreign policy right now, the initial visit to Japan before coming to the United States, and the first time a Korean president had gone to Japan immediately after being elected, was the critical visit in all of this. We've seen a situation to where South Korea has had difficulties with China in recent years. The informal sanctions that China put in place in regards to the THAAD deployment back during the Park Geun-hye administration hadn't actually been lifted. A lot of the cultural things related to K-pop were still in place. You couldn't necessarily introduce new movies or series into China from South Korea. And so there had been a lot of desire on the part of the administration to kind of move back to a more normal relationship with China. But I think the real key here is the willingness to continue taking and improving relations with Japan. It's important for both U.S. and South Korean security in the region. It's also important for Japanese security. And given the tensions that we've seen over pretty much the last decade between Japan and South Korea, to see go from the Yoon administration, where there's criticism of this shift, into the new Lee Jae-myung administration, where President Lee had actually originally been a critic, that is the biggest shift that we've seen in foreign policy under the Lee Jae-myung administration.
Troy, it's been so good getting analysis from you. Thank you so much for this and for taking the time. Troy Stangerone is non-resident fellow at the Carnegie Mellon Institute for Strategy and Technology. Now, we've already been seeing some pre-market reaction to Trump's threats of tariffs on these auto stocks, pharma-related stocks as well. Those are the sectors that he's threatening 25%. Let's bring Bloomberg MLive strategist Mark Cranfield. Mark, what is your read, first of all, and the instant reaction to all this?
Well, traders are watching a tennis match here, and Trump has just whacked the ball across to the South Korean side, and they're now waiting to see what the response is from the Koreans. And it may well be that if they come up with some wording which it placates President Trump, that everything will calm down fairly quickly. So investors are waiting to see the response, because it is a threat so far that he will raise the tariffs. It's not actually happened yet. And of course, when you consider that it's not just simply about the threat of tariffs on the autos, what it seems to be in the background, what it's more about is these big investments into the United States. So President Trump last year spoke to Korea, Japan, Taiwan, all about these major investments he wants to see them undertake in the United States. And all of that seems to be moving a bit too slowly for him. So that's making everyone a little bit edgy about. So if the Koreans come forward and they suggest they can get on with that, markets will probably calm down. Initially, we're probably going to see quite a bit of volatility in the Korean markets and probably precious metals as well. because we're coming towards month end. January has already been a spectacular month for silver, for gold, and for the Korean equities. Kosdaq was up 7% yesterday. There's plenty of reason why people would want to take a step back, lock in some gains, and move on to the next month. So we're likely to see stocks come off a bit today, and it probably will filter across to metals as well.
I mean, Korean investments, for example, to your point, are supposed to come in slowly into the U.S., right? Capped at $20 billion because of the pressure on the Korean won if this trade deal is ratified by Parliament. We have seen that immense pressure already on the South Korean currency. What are the dynamics right now at play in Korean FX markets, not to mention as it relates to, say, the Japanese yen, which is a...
Okay, guys, crude oil का देखो टारगेट होने वाला है. क्रूड ऑयल में चाहे तो यहाँ पर प्रॉफिट बुक कर सकते हैं या फिर अगर होल्ड करना चाहें तो इस रनिंग ट्रेड को बाइंग साइड पे इसको होल्ड भी कर सकते हैं बिकॉज ऊपर जो है पॉइंट ऑफ इंटरेस्ट है वी नीड टू सी कि ये अब होल्ड करेगा नहीं करेगा. स्टिल इट इज़ अ रेजिस्टेंस की तरफ काम कर सकता है बट अगर ये ब्रेकआउट कर देता है $61 के ऊपर सक्सेसफुली तो फिर ये वापस $62 की ओर चला जाएगा ऑलमोस्ट इस लेवल के आसपास अगर ये सक्सेसफुली ब्रेकआउट होता है इस तरह से. तो नीड टू सी क्या ये होल्ड करता है या फिर निकल जाता है. नेचुरल गैस में कोई ट्रेड नहीं है मॉर्निंग से रेंज के अंदर ही घूमे जा रहा है. कैंडल का ध्यान रखना. देखते हैं कैंडल किस तरह से क्लोज होती है और कहाँ पर क्लोज होती है. दैट इज इम्पोर्टेंट.
From the Federal Reserve last week is useful, but it's not enough in itself. The Japanese authorities need to be a bit more forceful. They're probably waiting to see how this 40-year JGB auction goes tomorrow. It's a major event in Japanese markets. It was just a week ago we were talking about the massive dislocations being caused globally by the turmoil in the long end of the Japanese market. That has calmed down for a moment with help from the US and the yen getting a bit softer as well. But this auction still has to go ahead. 40-year auctions are notoriously difficult. The market is in a better condition. Doesn't mean to say it will move completely smoothly. The Japanese authorities will probably like to see how it plays out because if it performs badly in the secondary market, it will spill back into the currency. We've seen the link between JGBs and the currency many times over the past few weeks. So they probably want to see the effect of that if they need to come in afterwards.
And I mean, it won't help that we do have political campaigning, which starts today here in Japan. Bloomberg and Life strategist Mark Cranfield there with the latest on what to watch in the markets. And coming up, we're live from the Goldman Sachs Global Macro Conference in Hong Kong with the bank's chief economist, Pictet Asset Management, explaining why they don't see stock valuations in bubble territory. Plus, Blue Owl Capital also joins us about investing in Australia. This is Bloomberg. President Trump has indicated he will make changes to his administration's deportation crackdown in Minnesota. This follows nationwide uproar over the killing of 2 U.S. citizens during immigration raids. Let's bring in Bloomberg digital politics editor Romy Varghese. Romy, the political risks are growing for President Trump, especially ahead of the midterm elections.
Absolutely. You know, we are seeing poll after poll come out and show that Americans, even if they support deporting people who are in the United States illegally, they do not like these aggressive tactics by immigration and enforcement. They're not liking these aggressive tactics that we're seeing ICE officers do on the streets. And this is coming at a time when, Republicans are trying to hold on to their majority in the House. And with the November elections coming up, they don't want to, have anything interfere with their ability to hold on to the House. And, Democrats are even hoping they could flip the Senate. And with these videos coming out, showing these aggressive tactics, Trump is losing the opinions of, losing the ratings over here. I mean, we see his polls overall hovering near the lowest it's been.
Romy, we're also seeing the U.S. proposing holding payments to private Medicare plans flat. This is for next year. How much of a surprise is this?
This was a huge surprise to analysts. I mean, they were expecting an increase as much as 6%. And, this is bad news for these companies because, they feel like rising expenses are cutting into their profits. And actually, it's going to affect what seniors are going to be getting from their plans because they will have little incentive to increase the benefits they offer to their seniors.
Romy, thank you so much for bringing us the latest. Bloomberg digital politics editor Romy Varghese. Let's take a quick look at how futures are shaping up for the session. Nikkei futures pointing to those declines. Now, this is ASX 200 surging perhaps on what we're seeing, the rally in metals. Now, talking about tech as well, because Microsoft has unveiled its next generation AI chip. The Maya 200 is part of a push to power services more efficiently and reduce reliance on NVIDIA products. Our Asia tech correspondent Annabelle Drollis joins us now from Hong Kong. Belle, what else do we know?
Well, we know, of course, that the modus operandi essentially for any sort of cloud computing provider out there is to have better models, better performance, lower cost as well to try and increase that adoption of its products. So to that end, Microsoft has just unveiled or is rolling out now what's called the Maya 200, as you said. It's their latest generation AI chip. And they're saying that it's new AI silicon that's been designed specifically and optimized for inferencing very large models. So that includes both reasoning as well as chain of thought models. Now, just to get into some of the technical features of it, it has huge compute ability. It's been made with a large amount of HBM as well. It's using TSMC's, that's the fabricator, of course, TSMC's 3-nanometer process. So just suffice to say at a headline level, it's going to be faster, more powerful, the Maya 200 compared to the first generation of that chip. So Microsoft is also saying that this actually is going to be cheaper than what's been made previously, because they're saying the Maya 200 is 30% cheaper than any other AI silicon on the market today. So the goal here is to help Microsoft reduce its inferencing costs for its Copilot, its AI agent products, and then off the back of that, as I said, potentially boost more adoption over the next 12 to 24 months. That's the view of Bloomberg Intelligence. But certainly you did see at least some upside for Microsoft in the session today in what was otherwise a bit of tech under pressure.
In the meantime, Belle, NVIDIA itself has upped its investments in its key customer CoreWeave. What's behind the move?
Yeah, that's right. This is a really long-standing partnership. These companies have been, or NVIDIA has been actively investing in CoreWeave for a number of years now. But just yesterday in the session, we had this announcement that they're looking at a $2 billion additional investment into the company. So essentially buying up stock at $87.20 per share. You did see CoreWeave rising off the back. Again, NVIDIA a bit under pressure. But essentially, CoreWeave is a cloud computing firm. It's a key NVIDIA customer. And the idea of this investment is to to help build more than 5 gigawatts of AI computing capacity by the end of this decade. So we did see that share price reaction, as I said, CoreWeave actually rising pretty well throughout the day. And certainly it does have ramifications for NVIDIA as well, because it puts that spotlight on their new business avenue, which is the CPU, which is carrying the Vera brand. But it is the first time the company is going to be offering that chip on a standalone basis, and CoreWeave is going to be integrating that quite soon.
Annabelle Jewelers there with the biggest tech news today. We have more ahead on the Asia trade. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
Now, we have been seeing that rally in gold topping 5K. Today, after a long weekend, Australian markets are getting their first chance to react to that. So we are seeing the surge in these gold-related stocks, but also against the backdrop of metals doing well overall. And you are seeing some of the other miners, including the likes of BHP, Rio Tinto, also green on the screen. By the way, if you're looking at the Australia Materials Index, is at the highest level since late October. Sherry?
And take a look at how some of these stocks are trading pre-market in South Korea after President Trump threatened to hike tariffs on Korean goods to 25%. These companies are in sectors that will be affected by the new rate: autos, lumber, pharmaceutical products. South Korea says it didn't receive official notice on tariffs from the U.S. government. We'll be watching the open today after that immense rally that we've seen both in the Kospi and the Kosdaq lately. We have more ahead on the Asia trade. This is Bloomberg.
This is the state of play across currencies a day after that sharp rally in the yen amid the risks of intervention. We are also seeing, of course, the Bloomberg Dollar Index sliding to the lowest level since 2022. We'll be watching the Korean won reaction following Trump's fresh threats of tariffs on the South Korean nation towards 25%. For more, let's bring in Bloomberg FX and rate strategist David Finnerty. So, David, we've been watching keenly, as you have, the yen rally and how that has had release valves elsewhere. It seems like the key among them is the slide in the dollar. Does this have legs? Do you think the factors driving this have more to run?
Potentially, there's always that caveat, but I think there is some potential to this. You said at the moment, it's like the attitude towards the dollar isn't great. You have the US shutdown looming, which is going to be another temporary dollar negative. Attitude towards the dollar is certainly changing slightly. Obviously, trade war, politicization, everything that's going on. It's not the nicest asset you would say at the moment to invest. And at the moment, a lot of traders say, look, the trend is your friend. And if the dollar's getting weaker, you go, well, why would I try and fight that one at the moment, particularly if the Federal Reserve Bank of New York last week did a rate check. That doesn't happen that often. So when they get involved, you go, okay, now the game has changed slightly. You know, is there signs that maybe the US government doesn't want the dollar to weaken, to strengthen certainly, and maybe does it encourage it to weaken slightly? So when you add all these things together, I think there is room for it to go down near term. Having said that, there are, you have to look at the US data. You have to see how the Fed comes out this week. How hawkish does it sound? The market's looking for 2 rate cuts. If it says, well, maybe not 2, maybe more 1, then, you may see the dollar rebound slightly. But certainly at the moment, risks that you would say are skewed towards dollar weakness, in the near term at least.
David, dollar weakness doesn't necessarily mean strength for Asian currencies like the Japanese yen and the Korean won, do they? I mean, we saw some signals of coordinated action between Japan and the U.S., and we thought that the yen was going to potentially continue to strengthen, which would have boded well for the Korean won, which has tracked the yen very closely. But with these tariff news now, that seems to be thrown out the window.
Yeah, certainly on you take the one first. The news of tariffs obviously is not good. It would impact the Korean economy. And I think the other thing to spin forward is this also a warning to other countries? If you don't play game as well, we'll actually quickly raise tariffs as well. So I think this may be part of a bigger picture, while at the moment the won's in it. So that's certainly negative for the won. And he said, going back to the yen, yes, obviously the yen rallied from 159 down to the basic 153, just above 153. And now it's sort of halted. It's around 154 level, and because the catch is, okay, if you go back to last week, what happened between last week and now, what's really the big difference? On the Japan side of the equation, you go, well, not a lot's really changed. So the reason why I was buying dollar yen from the Japan side of the equation, well, they're still there. We're still worried about re-election. We're still worried about what Takaichi will do in terms of spending plans. We're still worried about the BOJ not in no hurry to hike. So that's not changed. What has changed, though, is the dollar part of the equation with the Federal Reserve Bank of New York saying, okay, we are prepared to have a coordinated effort and intervene. So it does sort of cap the upside to dollar yen, you would think. But then again, for the downside, you go, okay, you've had your move. If you're not going to intervene, how much lower can you go? Can dollar yen go now, given that I still have these Japan side of the occasion problems? So I think the market's trying to see, do I drift back up, which historically it does do in these circumstances after a warning. The only gambit is now, it's a bit unusual because now we go, this could be a coordinated policy. And the risk is if dollar yen starts drifting higher, does the Federal Reserve Bank say, you didn't listen to us, we will now intervene? And remember, Bank of Japan has X dollars to sell. The Federal Reserve Bank of New York has an infinite amount of dollars to sell. So really this double-sided thing does maybe put a cap on dollar yen, which maybe helps support the won a bit. But as you said, going back to the won quickly, with the news of the tariffs, you just go, look, that's not positive. If, though, President Lee comes out and says, look, we will pass stuff quite quickly, those tariffs could fade again. So you're seeing, most people see a knee-jerk reaction to it. How much legs this does have to it is very variable, given that, go back to the dollar side of the equation, we have the Fed looming, we have a government shutdown looming. So there's a lot of catalysts here, moving parts of the story that could affect how these pairs move in coming days.
And then you add to that the carry strategies that we've been seeing. I mean, as investors sell the dollar, they've been buying EMFX. That is also trending at those highs, right? What are you seeing in carry strategies now?
Carry's always been popular. In fact, when I was in London talking to traders towards the end of last year, all they were basically saying was carry, carry, carry. And, certainly the three carry trades that pretty much everyone had at one point was the Turkish lira, the Brazilian real, and the South African rand. And then there was other ones, well, Mexican peso. But certainly those three were coming up continually when I was in conversations. And I think carry now remains attractive. Certainly if you look at something like Brazilian real, you've got a central bank with rates at 15%, inflation down towards, say, 4%. So on a real rate basis, you go, that's very good. The Brazilian real's been appreciating versus the dollar, which adds to the return of the carry. So certainly some of these trades, you go, look, why change what's been a winning trade? So given the volatility or uncertainty, a lot of hedge funds like directional trades. And at the moment you go, well, which direction may they go in? Because I don't know where the dollar really is going. Yes, it's going weaker. Could it turn around quickly? Whereas the carry trades offer a bit more stability and offer some decent returns if you're looking at Brazilian real or Turkish lira as examples. And those currencies, as I said, certainly Brazilian real, it's actually been appreciating. So it really does increase the allure of investing in it from a carry perspective. So carry trade is not going anywhere. And the culprits, or the favourites, I should say, are still out there. Said real, Turkish lira, Czech koruna, Mexican peso to some degree. So certainly in Latin America, those trades are still very popular.
David Finnerty, always good to get your views. Bloomberg FX and rate strategist with what to expect in the market session today. And the top global headlines that we're following. India's Commerce Secretary says negotiations on a free trade agreement with the European Union have concluded. Rajesh Agrawal says the two sides will announce details on Tuesday. It's expected the pact will be formally signed after legal vetting, which typically takes around 6 months. Agrawal says the deal will foster better economic partnership with the EU. China has reminded its citizens to avoid traveling to Japan during the Lunar New Year holiday, which falls in mid-February. According to Xinhua, Chinese citizens are facing severe safety risks. Chinese airlines say they will continue waiving flight cancellation fees for Japan until mid-October. Tensions are high after Prime Minister Sanai Takaichi's comments last year on Taiwan. An Iranian news agency says Foreign Minister Abbas Araghchi is exchanging informal messages with U.S. Special Envoy Steve Witkoff. An Iranian ambassador says the two sides are in contact, but don't currently have a fixed channel of communication. It's the first official confirmation since Iran's deadly wave of protests that Washington and Tehran are actively in touch.
Sherry, also ahead, our exclusive interview with the U.S. ambassador to China, David Perdue, as President Trump prepares to visit Beijing in April. That interview coming up on Insight with Haslinda Amin at the Times on your screen. But first, we take you live to the Goldman Sachs Global Macro Conference in Hong Kong to speak with the bank's chief economist, Jan Hatzius. More ahead on the Asia trade. This is Bloomberg.
The annual Goldman Sachs Global Macro Conference begins in Hong Kong today, bringing together top finance and industry leaders to discuss the issues shaping the global economy and markets. Let's cross over to the event where our Chief North Asia correspondent Stephen Engel is with our first guest, Steve.
Yes, we're setting the table here of our coverage, exclusive coverage of the Global Macro Conference of Goldman Sachs here at the Four Seasons in Hong Kong. And we are welcomed by Jan Hatzius. He is the chief economist at Goldman Sachs and the head of the Global Investment Research Group. Thanks so much for joining us.
Yeah, it's great to be with you.
Well, let's start with the U.S. and we'll pivot into China. We'll talk about a lot of different things, including your outlook for gold. But in the U.S., you among the big banks seem to be one of the more optimistic towards the U.S. economy and on inflation, but a little bit more bearish on the labor market. Give us your top-line view of the U.S. economy this year as all eyes are on that economy.
Yeah, it's, I think, a combination of a good growth outlook where we are at almost 3%, 2.9% for annual average growth this year. The consensus is, Bloomberg consensus is only 2.1%. So it's a pretty big gap. It's really driven by tariffs receding into the rearview mirror as a drag on growth. That was the big story of 2025, with the big increase in the average tariff rate by about 10 percentage points. We think that's behind us, and from now on, we're looking at stability or maybe even some tariff declines, and we can get into that.
So the pass-through is pretty much peaked?
The pass-through, I think, is peaked, but there's still some more to come. We've seen about 60 basis points of impact on the price level. We think we might get another 20 or 30 basis points, depending on what happens to the tariff rate. But that was a drag on growth. It was a boost to inflation. It's going to become less dramatic as we go through this year. And in fact, from an inflation perspective, the impact is going to diminish in the second half of the year when we start to anniversary those tariff increases.
Isn't there a lag effect to the inflationary impact? Especially, there was a lot of front loading from China when Liberation Day came in April, and that perhaps we could see spikes in the beginning part of this year in inflation.
In the month-to-month numbers, certainly possible. There could be a start of the year effect. Sometimes price increases are sort of compressed into particular months. So I don't rule that out. But I'm pretty confident that the biggest effects on tariffs
on inflation from tariffs are probably behind us. And especially as we get into the second half of the year, the impact is going to diminish from an inflation perspective.
What is going to be the impact on sentiment as well and trade flows when we get headlines like today where Donald Trump is threatening an increase on South Korea on tariffs from 15 to 25%? What message does that send to other trading partners who think they've already had a deal in the bag?
We're still in an uncertain environment, no doubt. That's true geopolitically, and it's true in terms of tariff policy. And those kinds of spats and headlines could certainly occur again. But I think the bigger picture is that the big increases are probably behind us. We're moving towards the midterms. Affordability is a huge issue in the U.S. That creates an incentive not to sharply increase the average tariff rate further from here. There's also the question of the president's tariff authority. With the Supreme Court decision that probably will come at some point in the not-too-distant future. We thought it might already have come. At this point, we're thinking February. That could put some constraints on his ability to put on tariffs. So, again, the big picture, I think, is in the direction of this being less of a headwind.
On this vein, then, as well, we can talk about Fed independence and the silent splits, if you will, between the board members and non-executive members, essentially on where to go. Jay Powell essentially says the Fed, has the labor market to take into account, as well as obviously the inflationary specter, where many people are split on whether they need to cut further. You say 2 cuts, probably in the later half of the year rather than the first half of the year.
Yeah, and that's really driven by our view that, one, the strength in GDP growth isn't fully going to pass through into the stronger labor market because we've seen a big productivity acceleration. So we think the unemployment rate is still going to be in the 4.5% range in the second half of the year. And number 2, and even more importantly, we do expect inflation to come down to somewhere close to the 2% target by the end of the year. And that, again, relates to the tariff pass-through issues that we just spoke about. But it also relates to the fact that underneath the tariffs, we've seen continued disinflation. Wage growth has continued to come down. Rent inflation has continued to come down. I think that should get the majority on the FOMC comfortable with some additional cuts in the second half. I don't expect anything this week. I don't expect anything in the next few meetings. But the second half of the year is a different story.
What are the biggest risks to the U.S. economy right now? Is it the labor market? Is it the government shutdown that's possibly looming? Is it the geopolitical headwinds, obviously?
You've mentioned, I think, the 3 biggest ones, and they're obviously, operate at different time horizons. If there's a government shutdown, that is going to have a mechanical negative impact on the economy. It's also going to make our life as forecasters more difficult because we'll again get a shutdown of government data. The geopolitics continues to be very, very unsettled. Tariffs can play into that. There's some overlap between geopolitical spats and tariffs in some cases. And then the labor market from an economic perspective, I think, is probably still the biggest risk, although I've become incrementally a little less concerned about a sharper labor market downturn. I thought the biggest risk of that was really over the last several months. And when we didn't see it in the most recent employment report, we actually took down our estimate of the risk of recession over the next 12 months from 30% to 20%.
20% chance of recession in the United States. All right. As the hedge, a lot of investors going into gold. I want to get to China in just a minute. I hope the producers save a little bit more time for me. But gold, obviously, 5,000 spot price an ounce on gold. Is 6,000 the next target?
Our forecast is 5,400, but we have said, and our commodity strategists have said, that the risks to that are still significantly on the upside. Why is that? It's because the primary source of demand for gold, namely the buying from central banks that are trying to diversify their reserve portfolios, that's still underway. That we think that's going to continue. And now we're also seeing more investor demand. That's obviously a more fickle source of demand that could shift. shift, but we still think that the boost from central banks is going to continue.
A nice segue, because the PBOC is widely believed to be also buying quite a bit of gold. What's your outlook for the Chinese economy as they try to rebalance? They're still a heavily export-dependent economy.
We're also on the optimistic side as far as the headline growth numbers are concerned in China. Not quite to the same degree relative to the Bloomberg consensus, but we're at 4.8% versus 4.5%. It is a more split story because we have a very strong external sector, remarkable export growth numbers in 2025.
Did that surprise you?
It did, yeah, for sure, yes. It really underscored the resilience of the goods-producing sector, and we raised our numbers on the back of that because it was a real test case of how strong the Chinese manufacturing sector is.
How much longer can they rely on that pillar, though, and they need to boost domestic demand?
Well, that's the flip side of the story. And on domestic demand, the news has continued to be quite negative, and certainly as far as housing is concerned. But also retail sales have been sluggish. And then there's a question of the impact of China's export strength on the rest of the world, right, which is eating into the market shares of export-oriented economies, especially in Europe, Germany, where I grew up, and a number of other export-oriented economies are being affected by this.
You expect significant pushback, though, continual pushback? Or has there been...
I think there will be some pushback. It's difficult, though, because China has the ability to deter pushback, in part because of its control of rare earths and critical minerals.
Very quickly on Japan, obviously there's been a lot of bond volatility of late. The yen has been appreciating. Maybe that's because of increased coordination with the New York Fed at the behest of the Treasury, which is a new interesting tact by the BOJ, obviously, by the Japanese, to stem that depreciation of the yen to 160. It's now 154 and change. What's your outlook? Has the heavily fiscal policies of Takeichi-san, does that change your equation about how you look at the Japanese economy?
Well, I'd say the near term is, of course, very, very tactical in the run-up to the election in February, in a couple of weeks, in an environment where intervention may occur, where we have seen sort of the early signals of that. The big picture, I think, is one in which the Japanese economy is normalizing. Underlying inflation is getting closer to 2%. I still think it's below 2%, but it's getting closer. Yeah. And the economy is growing at a more steady 1% kind of pace. In that sort of environment, we still have relatively low interest rates. Policy rates are 75 basis points. Even the 10-year yield is 2.2%. That's not that high, right, relative to nominal GDP, maybe in the 3% range. And of course, the currency is very far out of balance if you just look at it from a purchasing power perspective.
So what should it be, 140?
I mean, from a purchasing power perspective, the IMF estimates that purchasing power parity is 94. So we're very, very far away from that. Now, there are good reasons for being away from it, but maybe we shouldn't be this far away from the longer-term equilibrium. So it's going to continue to be very interesting in Japan.
Jan Hatzius, thanks so much for setting the table for us. We went around the world in 10 minutes. Thanks so much.
Indeed. Thank you so much.
Avril, we're going to send it back to you as we kick off our coverage exclusively here at the Global Macro Conference of Goldman Sachs.
A really comprehensive conversation, Steve. Thanks so much. Stephen Angle in Hong Kong. Stay with us for more from the Goldman Macro Conference, including interviews with DreamWorks co-founder and former Disney chairman Jeffrey Katzenberg. Plus, we speak to the Goldman CEO, David Solomon. We also have some news crossing the terminal, and this is in relation to Anta Sports, the Chinese sportswear maker, of course. It's set to buy a 29% stake in Puma for €1.5 billion. And this pretty much confirms a scoop from Bloomberg from late last year. More ahead on the Asia trade. This is Bloomberg.
Bloomberg Invest, where intelligence meets capital, in the heart of the financial district. Powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
Let's take a look at how Asia markets are faring in the early goings. We might see a bit of that spillover effect from the Korea threatened tariffs, and amid the backdrop of whether this prompts a bit more focus on some other economies that have been seen as slow in implementing the investments into the U.S. So the likes of Japan and Taiwan, I should say, will be in focus. But of course, we'll be watching Japan stocks against the backdrop of what we've been seeing in the yen's rally, the strength there, Sherry.
Yeah, and I'll be really curious to see what happens to the Korean won, because the yen strength has led to some support for the Korean currency. But you can see right there some of those big movers in areas that can be affected by that 25% tariff threat coming from President Trump. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens and bracing for the fallout of President Trump's tariff threats of 25% on South Korean goods. So we'll be watching sectors like autos, pharmaceuticals, lumber as well. And of course, a broader risk-off sentiment that we could see potentially across Asia, April.
Absolutely, and already we've been seeing the factoring in of this volatile policy from the U.S. president, and perhaps that is driving global angst and the flows towards some of these safe havens. Think about how gold has been reacting. His comments on South Korea, just another reminder of this, Sherry.
Yeah, even the Japanese yen saw a little bit of a boost on that safe haven demand, right? Despite the fact that the yen has really not acted as a safe haven in recent years. But we have seen the boost, especially from signals of coordinated action between the U.S. and Japan in order to support the Japanese currency. You can see the Nikkei at the moment not doing much, but the TOPIX losing about 0.25% already. We have seen a day of losses in the previous session as well. And do keep an eye on the JGB space. Not necessarily anything happening today, but we do have a 40-year auction coming up later in the week, which is critical in that test of demand, given that also political campaigning, election campaigning starts today here in Japan. It's been the concerns about government spending that have really led to that JGB meltdown early last week. But take a look at how South Korea is coming online. That market, of course, has been on a tear, with the Kospi gaining more than 95% over the past year. And we had seen the Kosdaq even surging to the highest level since 2000. You can see the Kospi under a little bit of pressure, and there are some sectors that we'll be watching very closely. The auto sector, lumber, pharmaceuticals as well, that are now being threatened with 25% tariffs from President Trump. Also, those reciprocal tariffs that could be raised to 25% as well. President Trump not happy with the fact that South Korea's legislature has yet to pass that U.S. trade deal that was signed last year. But remember, it was also this trade deal that led to concerns about capital outflows, given that we're talking about a $350 billion investment into the United States, and that led to the pressure on the Korean won. And you can see right now, pressured more, 1450 is your level.
Yeah, despite that pressure, though, it's interesting how mild the market reaction has been. I mean, we were perhaps expecting a bit more of that coming through in the Korean won, but maybe capped because of the rally in the yen and how that has also prompted the weakness in the dollar. You're still seeing the Bloomberg Dollar Index hovering near those 2022 lows. We will be watching, of course, this week when it comes to stocks, the reaction to earnings, because it's a third third of the S&P 500's market cap that reports this week, don't forget. And given how things have been trending, it looks like, based on JP Morgan analysis, that they have been beating forward guidance. So that bodes well as we see perhaps also that bit of rotation to other sectors apart from tech. Gold continues climbing past the 5,000 handle, extending those gains there. Sherry?
Yeah, really precious metals on a tear on that geopolitical tension, safe haven demand. Let's get more perspective on the markets. Joining us now is Luca Paolini, Chief Strategist at Pictet Asset Management. Luca, really good to have you with us, especially on the day when we have new tariff threats, on top of course, what's happening between the U.S. and Canada, between the U.S. and European countries. How consequential could the latest threats on South Korea be for broader risk-off sentiment that could be more sustained in the days ahead?
Well, good morning. No, I don't think this threat is going to have a big impact. We have learned from the past that, Trump loves to threaten, but then he backs down. I think this seems also to be a more technical in nature, talking about the legislative process is not really fundamental. So I think, yeah, of course, market have been very strong recently, so some kind of a pause of profit taking is likely, but I don't think it will have long-lasting impact on markets.
At least when it comes to some of those sectors that are being targeted, autos, pharmaceuticals, for example, they've not just been targeted, but they've been just very vulnerable to these trade negotiations ongoing since last year. Should investors be a bit more careful approaching these sectors, not only in South Korea, but across Asia, here in Japan as well?
Well, again, there is obviously a risk, and I think, to me, though, the real kind of risk here is more like on the currencies, in the sense that I understand that Trump is trying to threaten, obviously, with tariffs, but I think the real kind of target from the President Trump is to have all the Asian currency to appreciate. I think this will have a more long-lasting impact. I think it's more realistic to expect, and we see that also in Japan, the Japanese authority is playing the same game. So I do think that the impact is more at a currency level, while in terms of earnings, in terms of impact of the overall market, I think, especially in the equity market, should be very contained in almost, I would say, every sector.
If that's the case, how much further do you see the dollar falling?
Well, we are very bearish on the dollar for a lot of fundamental reasons. The dollar is still expensive of almost any measure. The Fed is probably is likely to cut rates. The U.S. economy is strong, but not as strong as it used to be. And we see this kind of de-dollarization trend that goes on. So there are, let's say, fundamental reasons, more long-term and short-term reasons why we expect the dollar to continue to decline this year as well.
As investors rethink U.S. assets, their attractiveness, what do you make of what we're seeing in stocks? I mean, this week we're watching out for earnings from the big tech names. We might see U.S. stocks versus, say, Japan or Europe peers continue their underperformance. Is that also your read of the situation?
Well, we do think that, the earnings picture is very, very solid, not only in the U.S. We see inflation going down, interest rate going down. This is a very bullish backdrop for stocks. Having said that, we see more potential outside of the U.S. because this is where I think there are more upside risks, I do believe. And I do believe also that when we look at the tech sector, again, yes, the temptation is always to say, well, this is a bubble. But the reality is that all these companies that are still making a lot of money. We are just at the beginning of a significant long-term upcycle. So I do believe that the risk here is to sell too early, and we do believe that fundamental remains strong for the tech sectors, even if we prefer to be invested more in other sectors, because we do believe that the value sectors will continue to outperform.
And value sectors in which markets are we talking about? Because, of course, when we talk about tech, it's not only about U.S. tech that has seen that significant rise. We're also talking about Chinese tech, which has seen significant interest in recent months. Could we see some value sectors in that market, for example, when the broader economy still remains pretty lackluster?
Absolutely. We don't think that the best way to play this tech or AI cycle is just to invest in U.S. tech stocks. I think we want to invest in Asia. Not only, there are even some potential interest names in Europe and Japan. So we want to broaden out the team. And I do believe, though, that the general trend is up. And there is no question that in some parts of the market, the Chinese players are incredibly strong, innovative, and also cheaper than their U.S. peers.
Luca, are you seeing the events so far in January, whether it's Venezuela, Greenland, Iran to some extent, now these tariff threats, is that also driving more towards Chinese assets?
I think so. In a way, what we are experiencing here, well, we've seen this before in a way. The U.S. playing our ball here with tariff threat and all the other things. The reality is that China in this environment seems to be almost like a safe haven. And I think it's important to highlight that China seems to be an area of stability against, let's say, the West, especially the U.S., where there are these constant threats and all these kind of things. So I do believe that there is some truth in the idea that the Chinese market, in this very volatile environment, politically volatile environment, geopolitical volatile environment, the Chinese stock market seems to be relatively a safer option than other markets.
Luca Paolini, really good to have you with us, Chief Strategist at Pictet Asset Management. We continue to keep our eyes on the Korean markets, and we are seeing now the Kospi losing ground at the moment, but the Kosdaq actually gaining ground. Remember, we have seen that divergence in these two sectors, with the Kospi having rallied more than 90% and the tech-heavy and small-cap Kosdaq actually lagging. But in the previous session, it actually jumped to the highest since 2000. And today, you're seeing those stocks at the moment, automakers, pharmaceuticals, taking a hit because of President Trump's tariff threats. But that divergence right now continuing in the South Korean market, very interesting as investors are now trying to really look at other parts of the market to continue investing. Still, the looming cloud right now on South Korea is the ongoing trade issue with the U.S. The deal was signed last year, but President Trump doesn't like the fact that he hasn't passed South Korea's parliament as of yet. Let's get to Seoul Bureau Editor Danny Thomas for the latest on this. Danny, what did the president exactly say that he wasn't about, and why South Korea?
Yes, a good question, and everybody in Seoul is equally flummoxed by this sudden development. There was no notice given to South Korea, and presidential office is now scrambling to make sure that there is an adequate response. There's a meeting that the presidential chief of policy will hold today, and you will also hear from the president later during the cabinet meeting. But it broadly looks like a technical delay. This code was introduced in November, right after the two countries reached a deal, and it has to go through a parliament process which hasn't reached its conclusion. So that's a bit of a surprise, and how you negotiate that and how you convince that is going to be the next few challenges. And it comes right after just when everybody thought that the trade tensions have kind of subsided and we're getting on even keel. So yes, it's come as a surprise, but how South Korea responded to it previously and how it's going to deal with it is going to be a new challenge for the president and the team here.
Are we getting a sense of maybe what they can do to sort of placate the situation with the U.S. president? Might that involve speeding up the investments into the U.S.?
So I think there was some confusion whether the committed $350 billion that Korea has committed, will that, the first tranche of that will go through or not. But the finance ministry last week was very clear that there is no delay to that. So I don't think that is going to be an issue. I think it's a technical matter, and what the South Koreans will try to do is explain how the parliament works and how the various aspects of the bill would need to go through the parliament process, and that should hopefully convince Trump and the U.S. government that there's not a delay. It's just that it has to follow a procedure. So that would be the South Korean response to it, to make sure that they understand how the parliament process works here, and it's not any effort to delay what they agreed to. I think the message that is being sent around from the truth message is that, well, South Korea is not holding up to the trade agreement, which is not the case. And I think South Korea should get up to speed and say, look, this is a process which will take time.
How will this sit with the South Korean public, given that we had already seen them outraged that their strongest ally carried out that humiliating immigration raid in South Korean companies in Georgia last year?
Yeah, look, that's a good question, and there has been a lot of frustration here that despite being the closest ally, the historical nature of the relationship, Trump has treated South Korea not with the due respect. And this again raises the same question, whether you can South Korea continue to trust. I think there has been some resolution to that, but these kind of abrupt nature of the messaging that comes through will again raise these questions. But overall, I think the two countries are kind of aligned on what they want to do and how they want to take the relationship forward. I think the whole $350 billion commitment and South Korea's effort to revive the U.S. shipping industry, all those are pretty big commitments that the two countries have agreed to, and these would be seen as kind of minor, errands on the way, and not as a big flip of the whole policy decision between the two countries.
So they are aligned, the U.S. and Korea, perhaps more about convincing the U.S. president that they are. Denny, thank you so much for these insights. Bloomberg Seoul Bureau Editor Denny Thomas. We have more ahead on the Asia trade. This is Bloomberg. Quick look at U.S. cross assets as we pass the Trump administration's policies, not just because of tariffs, but also domestically. I mean, you're hearing him indicating he'll make changes to his administration's deportation crackdown in Minnesota. And this follows on from nationwide uproar, really, over the killing of 2 U.S. citizens during the immigration raid. So let's bring in Bloomberg Chief Asia Correspondent Rosalind Matheson.
ओके गाइस, क्रूड ऑयल का टारगेट हो गया डन, निकल जाना इसमें से प्रॉफिट बुक करके। जो लोग हैं निकल सकते हैं, ठीक है, उनका हो गया टारगेट डन। कोई अगर ट्रेल करना चाह रहा है तो कैंडल क्लोजिंग का वेट भी कर सकता है। यहाँ से भी और ऊपर जाएगा नहीं जाएगा, डिपेंड अपॉन द कैंडल पर डिपेंड करता है कैंडल कैसे क्लोज हो रही है लेवल के ऊपर, ठीक है। फॉरेक्स चार्ट में अगर ये कहीं 61 के ऊपर कहीं प्रॉपरली क्लोज होता है, थोड़ा कंसोलिडेशन करता है, तो फिर ये और ऊपर जाएगा। यहाँ से फिर एक और बाइंग कर सकते हैं, या फिर जो ट्रेल कर रहे हैं और बड़े टारगेट के लिए ट्रेल कर सकते हैं। बाकी अगर ये नहीं आती क्लोजिंग इस लेवल के ऊपर, तो फिर थोड़ा सा हो सकता है वापस से प्रॉफिट बुकिंग स्टार्ट हो जाए करंट लेवल पे। तो जो बाइंग में है, नॉर्मल कम लॉट में हो तो पूरा प्रॉफिट बुक करके निकल जाओ, बेस्ट है। ज़्यादा लॉट है तो ट्रेल कर सकते हो। कैंडल क्लोजिंग देखते हैं कहाँ पर आती है। ओवरऑल टारगेट इज डन इन क्रूड ऑयल ऑलमोस्ट 80 पॉइंट। इन एमसीएक्स में देखोगे ऑलमोस्ट 80 पॉइंट का मोमेंटम है ये। लेट्स सी, अगर ये ऊपर जाता है तो फिर सीधा हमें 160 पॉइंट का टारगेट मिलेगा, विच इज़ अराउंड 5700 एमसीएक्स में। बट या उसके लिए प्राइस को यहाँ पर ब्रेकआउट करना पड़ेगा, विच इज़ नॉट दैट मच ईजी, इतना ईजी भी नहीं है। एक ये कैंडल तो चलो क्लोज हो गई है, इसके ऊपर एक और कैंडल क्लोज हो जाए ना, बेस्ट के सिनेरियो बता रहा हूँ, प्राइस अच्छा खासा 80-90 पॉइंट और ऊपर चला जाएगा। अगर ये जो कैंडल है, प्रीवियस कैंडल तो हो गई क्लोज, ये करंट 15 मिनट की कैंडल लास्ट कैंडल के ऊपर सक्सेसफुली क्लोज हो जाती है, नीचे नहीं आती। अब बेस्ट के सिनेरियो है हमारे लिए। ठीक है, रुक गया है थोड़ा बहुत। हाँ, ब्रेकआउट चाहिए प्रॉपरली, ब्रेकआउट रीटेस्ट अगर मिलता है $61 के अराउंड तो और ऊपर जाएगा, नहीं तो अगेन एज आई सेड ये वापस से रिजेक्शन ले लेगा इसी लेवल से। यहाँ पर ऑलरेडी कल सेल कर दिया था मल्टीपल टाइम, फिर से सेल करने का यहाँ पर थोड़ा सा कॉन्फिडेंस नहीं आ रहा है। इवन दो इट इज अ रेजिस्टेंस, दिस पॉइंट ऑफ इंटरेस्ट स्टिल एक्ट लाइक अ रेजिस्टेंस, अभी भी ये रेजिस्टेंस ही है, रेजिस्टेंस की तरह ही काम कर रहा है। तो नेचुरल गैस में तब तक कोई ट्रेड नहीं प्लान कर सकते जब तक ये जो पहली 15 मिनट की कैंडल है इसके ऊपर या नीचे कोई कैंडल क्लोज नहीं हो जाती। या तो इसके ऊपर एक कैंडल क्लोज हो या फिर इसके नीचे एक कैंडल क्लोज हो, तभी कुछ प्लान कर पाएंगे, अदरवाइज इसके बीच में तो कुछ ट्रेड नहीं है मेरे अकॉर्डिंग, बनेगा ही नहीं ट्रेड, कंफर्मेशन नहीं मिली है अभी तक हमें। 15 मिनट की हाई के ऊपर एक 15 मिनट की कैंडल या फिर लो के नीचे एक 15 मिनट की कैंडल क्लोज हो जाती है तो डायरेक्शन मिल जाएगी मार्केट कहाँ जाने की कोशिश कर रहा है, अपसाइड या फिर वापस डाउन ट्रेंड में कंटिन्यू करता है। क्रूड ऑयल में थोड़ा सा ध्यान रखना, ऊपर के ऐसे कोई स्पेसिफिक लेवल नहीं है अभी फॉरेक्स में, ऐसा कोई लेवल बना ही नहीं है यहाँ पर एटलीस्ट 15 मिनट में जो एज अ रेजिस्टेंस की तरह काम करे, होगा प्रीवियसली बट उतना पीछे शो नहीं कर रहा है कुछ भी लेवल। 62 के आसपास ही होगा शायद, मोस्ट प्रोबेबली $62 के अराउंड, जिस तरह का शार्प सेलिंग वहां से हुआ है $62 के अराउंड अप्रोक्सीमेटली वही एक लेवल लगता है। 15 मिनट में उतना पीछे चार्ट जा नहीं रहा है तो थोड़ा सा हायर टाइम फ्रेम 30 मिनट का या तो यूज करेंगे। वही हो 62 के अराउंड ही है नेक्स्ट रेजिस्टेंस अगर यहाँ पर सक्सेसफुली ब्रेकआउट हुआ इन अप फॉरेक्स यूएस क्रूड ऑयल। क्रूड ऑयल स्टिल होल्डिंग, क्रूड ऑयल होल्ड करके रखा हुआ है, रेजिस्टेंस नहीं ब्रेक कर रहा है. ब्रेकआउट ही नहीं हो रहा, रिटेस्ट तो छोड़ो, ऊपर अभी भी होल्ड है, अभी भी इसने होल्ड किया हुआ है, स्ट्रांगली होल्ड किया हुआ है. देखो ऊपर जाना है, नेक्स्ट रेजिस्टेंस $62.50 ही बन रहा है approximately. For that, price should break successfully and retest successfully this resistance zone in crude oil, this point of interest. If price done that, we can expect a good move upside especially. और अगर ऐसा नहीं होता तो फिर ये रेंज है पॉइंट ऑफ इंटरेस्ट से नीचे वाला जो सपोर्ट है, नीचे सपोर्ट अभी भी इंटैक्ट ही है. Price want to continue this rally in crude oil, it must gives the breakout in intraday in 15 minutes especially. अदरवाइज और बड़ी रैली नहीं आएगी क्रूड में, ध्यान रखना. क्रूड ऑयल अभी भी ब्रेकआउट नहीं कर रहा है, होल्ड कर रहा है, विच इज़ गुड साइन। अगर थोड़ा कंसोलिडेशन करके ब्रेकआउट कर दे तो भी चलेगा। वी नीड अ ब्रेकआउट रीटेस्ट अबव $61। अभी 60.9295 के आसपास चल रहा है क्रूड ऑयल फॉरेक्स में। ऊपर 62.50 वाला लेवल भी एक दो बार टेस्ट हो गया है, इसके ऊपर एक और रेजिस्टेंस है, उसको भी मार्क कर लेते हैं। वो एक ही बार टेस्ट हुआ है, तो मेरे अकॉर्डिंग प्राइस इन दोनों लेवल को हिट करने जा सकता है। ये 3 बार टेस्ट हो गया, हायर लो बने हैं बार बार इसमें। $62.50 जो लेवल है यूएस क्रूड ऑयल का इन 15 मिनट टाइम फ्रेम। पूरा लेवल एक ही बार टेस्ट हुआ है, तो मेरे अकॉर्डिंग ये होल्ड करना चाहिए। नीचे वाला लेवल 2-3 बार टेस्ट हो गया, एक बार कंफर्म कर लेते हैं। टाइम टेस्ट, 2 टाइम टेस्ट, एक हाई लो बना था, दूसरे बार लोअर लो बना था, थर्ड टाइम एक और लोअर लो बना था, 4 टाइम हायर लो बना था। दिस इज द फिफ्थ टाइम आया है और लास्ट टाइम हायर लो बना है जब इस लेवल से सेलिंग आई है ओवर हियर। तो थोड़ा सा वीक तो है, बट है अभी भी ब्रेकआउट जब तक नहीं होता। क्रूड ऑयल ट्राई कर रहा है ब्रेकआउट का 1 मिनट बचा हुआ है कैंडल क्लोज होने में मुझे लग रहा है ब्रेकआउट तो हो जाएगा इसका रीटेस्ट मिल जाए और बढ़िया यहाँ पर एक बाइंग प्लान कर लेंगे डायरेक्टली मत करना भाई वेट फॉर द रीटेस्ट जरूरी है ऐसा ना हो फेक ब्रेकआउट हो मार्केट वापस रिवर्स कर जाए क्रूड ऑयल में इस सेम लेवल पे अगर ब्रेकआउट रीटेस्ट होता है सक्सेसफुली तो बढ़िया है टारगेट अच्छे हैं ऊपर बाकी नेचुरल गैस में कोई ट्रेड नहीं चल रहा है बार बार रिपीट कर रहा हूँ प्राइस जरूर ट्राई कर रहा है किसी एक डायरेक्शन पे जाने का डायरेक्शन कंफर्मेशन का वेट हमें करना ही पड़ेगा डायरेक्शन कंफर्मेशन मिल जाए तो बेस्ट है फिर तो मुझे लग रहा है जिस भी साइड जाएगा ये भी अच्छा ही मूव करेगा क्रूड अप होता है रीटेस्ट उसके बाद ही प्लान करेंगे बाकी नेचुरल गैस स्टिल वेट एंड वॉच
Ali Izadi there. Great to have you with us. We continue to watch the Korean markets after President Trump's threats of 25% tariffs on South Korean goods. Of course, some of those sectors that we're watching, automakers, also pharmaceuticals. You can see a little bit of a divergence right now between the Kospi and the Kosdaq. The Kospi was trading in the red at the beginning of the session, but is now gaining 0.7%. But the Kosdaq, which was gaining ground earlier, is now under pressure, perhaps because already it hit the highest since September of 2000. We have seen a little bit of more of a widening in the stock market rally, and also perhaps investors leaning into that tackle trade when it comes to President Trump's tariffs. We have heard from Bloomberg Intelligence that of 49 President Trump tariff threats or new tariff investigations launched since the 2024 election, President Trump actually only fully executed 27% of those threats. But do keep an eye on these sectors that are moving, given, of course, the tariff concerns at the moment. The China show is next. This is Bloomberg.
Amy Gowett, lead metals commodity strategist at Morgan Stanley, writing, "We don't think prices have peaked. With geopolitical risk, positive signals from central banks and ETF buying, we highlight our bull case 5,700 for the second half." Amy joins us now for more. Amy, good morning. Just to clarify, is that the second half of this week or the second half of this year?
It's the second half of this year.
Amy, let's get into that call. We have moved so quickly on the precious metal. Have we got a new driver here, given developments over the last week?
Yeah, look, I think there's multiple drivers working together. So, of course, we should mention geopolitical risk and all of the uncertainty that we have at the moment. I think that is driving investors towards precious metals in particular, and especially given prices are then performing so well, I think that is providing additional price momentum. We also got a bit of dollar weakness the last few days, and that is always a tailwind for commodities, making them cheaper for non-dollar holders. And then I think while we're still in this, when will the Fed cut rather than if the Fed will cut, that's also a broader tailwind. But the key thing I think also has changed that's worth flagging is around central bank behavior. So we've always thought of central banks thinking about gold as a percentage share of their reserves. And of course, that means as gold prices rise, you would think that they would slow the pace of buying because the price is kind of doing the work for them. But we had something really interesting from the Central Bank of Poland about a week ago, saying they're now targeting 700 tons of gold, so an absolute tonnage amount of gold, which would imply about 150 tons of buying. So for context, Poland was the largest buyer already last year. This would be about another 50% buying on top. So if central banks are just thinking about having gold regardless of the price, then that could also keep that kind of structural buy.
Deliveries, as we heard yesterday on this show from the Ryanair CFO. And then after markets close in Paris, we turn to LVMH. Sales expected to have taken a bit of a hit this year, but things likely to pick up in 2026 thanks to this raft of new designers. Well, we've got a lot on the agenda. Let's set you up for the day ahead.
My view on natural gas crude oil. Natural gas still sideways. Crude oil is still इन अ रेंज ब्रेकआउट होता है तो मोमेंटम अच्छा आ जाएगा अपसाइड पे और मॉर्निंग से एक ही ट्रेड लिया अभी तक क्रूड ऑयल वाला दैट इज गुड ब्रेकआउट सक्सेसफुल होता है ब्रेकआउट रीटेस्ट तो देन नेक्स्ट टारगेट वुड बी $62.50 इफ ब्रेकआउट इज फेल और रीटेस्ट इज नॉट डन वी कैन एक्सपेक्ट दिस रेंज नेचुरल गैस साइडवेज कोई इसमें क्लियर अभी डायरेक्शन नहीं है
Shrugging off those tariff risks, as you can see that the benchmark Kospi here actually dipped about 1% at the open, but very quickly taking that U-turn and now rising more than 2%. Investors are still seeing this just as a negotiation tactic from President Trump, but actually a very good dip buying opportunity. As you also flip the board and take a look at how the Korean won is actually under still a bit of a pressure because investors still see Trump's agenda as more focused on that weakening trend of the dollar. Hyundai Motor here fluctuating a little bit because auto is actually one of the key sectors that was directly targeted by Trump's tariffs, along with pharma and Lombard. When it comes to what's really driving that the gains in the Kospi index is actually SK Hynix here up about 8%, and that's coming after a local media saying that the SK Hynix is actually the sole provider of the advanced memory HBM3E chips for Microsoft's Maya chips, and that is really driving gains here and hyping up the earnings expectation ahead on Thursday. Now flip the board and take a look at the broader Asia market because yes, overall risk on sentiment ahead of earnings, but when it comes to the Japanese yen weakening just slightly after that recent advance, and investors are still quite cautious in terms of the intervention risks. But that weakness in the yen is slightly helping the Japanese stocks here up 0.8%. Chinese stocks up modestly, and that's being helped by those industrial profits number showing the first.
Don't send message on WhatsApp. I'm not checking the WhatsApp during the trade hours. मार्केट आवर्स में मैं व्हाट्सएप चेक नहीं करता हूँ या बहुत लेट चेक करता हूँ तो व्हाट्सएप पे मैसेज मत किया करो जो क्वेश्चन नहीं पूछ लिया करो How to join your trade call group, sir? I don't have any trade call group. I don't run any Telegram or WhatsApp group or any that kind of things. Not allowed as per the SEBI regulation. So I'm not taking any classes. I'm not providing any buy sell tips or calls. Not handling accounts. So don't ask for that.
Key companies, SK Hynix and Samsung. They are the drivers of the Korean market, have been for some time, and they are clearly two companies who are not really going to be affected. Even if President Trump does go ahead with more tariffs on Korea, the sectors which he's targeting will not affect AI themes. It won't affect the chip sector. And these two major companies have been the ones which have been really buoyant and bringing in all the investor attention and driving the Kospi to record high after record high. So as long as those kind of companies are unaffected, it's not going to matter too much to the overall sense of the market. In fact, by some measures, the kinds of companies, autos and pharmaceuticals, that could be affected by potential tariffs is less than 10% of the whole market anyway. And that's not really where major investors are too concerned about. Plus, you've got, in the precious metals space, there was a bit of a wobble in silver and gold. They've recovered very smartly. There seems to be some correlation in the sentiment between what's driving precious metals and what is also driving the Korean equities as well. So as long as those two are pretty much going hand in hand, there's nothing too much for investors to get worried about as far as the Korean stocks are concerned. At some point, it will be overdone. It'll get too overheated. But for now, people are reassured that the AI theme really has a long way to go. The deal today between Hynix and Microsoft is a pretty big deal. It adds a lot more value to the company, and people are buying into that. And for now, they're able to look past anything to do with the tariff threat.
And Marcus, when you mentioned the yen's also a touch weaker against the dollar today, what's the next trigger for a potential yen intervention?
It really comes down to this auction that we have tomorrow. So just a week ago, people were really getting concerned about chaos in the long end of the Japanese market, particularly because tomorrow there's a 40-year JGB auction. That's the longest part of the yield curve. They only do this one about 6 times a year. The auctions are not on a regular basis. They're notoriously difficult to be done. The pricing is very awkward on these. Demand is very low. So there is certainly a chance that the JGB auction tomorrow will not be very successful. We'll get a spillover in Japanese bond selling, which will go back into the yen. That's what we saw last week as well. When there was pressure on the yield curve, it translated into a weaker currency. So it could well be that the Japanese authorities are holding back slightly. They will probably know that the rate checks that were done by the Federal Reserve last week were very helpful, but in themselves, they're not going to be enough to turn the yen around. They'll need to do more. The Japanese authorities will need to step up with stronger language or direct intervention in the market. But they probably want to see what happens with the auction tomorrow. In case there's a really negative fallout, then they can step in and enter the market at a more reasonable level. If they do it today, they could be wasting their ammunition and it could all backfire. So let's see where the auction goes tomorrow. It's probably the biggest event in the Japanese market this week.
All right, we'll have to get you back to talk about it. That's Mark Cranfield, our MLive strategist. Thank you. Well, turning back to trade, just now the Indian Prime Minister Modi has said that his country and the EU have signed a, quote, significant pact today after nearly 2 decades of negotiations. The partnership aims to create closer economic ties to offset the impact of President Trump's global tariffs. Let's speak now to Bloomberg's chief Europe correspondent, Oliver Crook. Ollie, what are the terms likely to be?
Yeah, so Lizzie, I mean, this is the mother of all trade deals, of all deals, if you believe Ursula von der Leyen. That's not a quote from Donald Trump. That's sort of uncharacteristic characterizing of the deal by Ursula von der Leyen. And I think sort of the key figure for this is 20. It's about 20% of global GDP, almost more than 20% of the global population. It's been 20 years in the meeting, and that is what this trade deal that they're hoping to get sort of over the line today, end negotiations on between the EU and India. And the key thing here is going to grant market access to a lot of different products, most of the products that are traded between the two blocks. For the Europeans, they're very keen to get some of their cars into the Indian market. India has a tariff of about almost 110% at the highest level on cars. We understand from reporting that that might come down to about 40%. There would still be a cap. There are, of course, some debates also within the European side about giving market access to Indian steel. But again, for both of the sides, this comes at a very conspicuous time, just a couple of weeks after the EU has signed that key trade deal with Mercosur in Latin America, because both the Indians and the Europeans need to diversify. The Indians are still facing a 50% tariff from Donald Trump. The Europeans are now still have their sort of trade deal with the United States on ice after that sort of debacle with Greenland just last week. And so everybody is trying to sort of strengthen their trading relationships across the world. In terms of what the actual economic impact will be for the Europeans, Allianz has crunched the numbers here, and I'll go through some of them here. It could mean an additional $20 billion worth of exported goods from the European Union to India. It could boost the European GDP, not very significantly, by only about 10 basis points, about 0.1% annually. But I think key here, Lizzie, is that it could offset nearly a quarter of U.S.-related export losses from higher U.S. tariffs from the Europeans over to India. So again, front and center here is trying to diversify away from the United States, diversify away from China for the Europeans, and striking a much more pragmatic approach with both of these trade deals coming in quick succession after being more than 20 years in the making.
OK, so that's the trade side, Ollie. But what more do we know about the proposed security and defence agreement?
Yeah, so that'll be another sort of segment of this, and well, Ursula von der Leyen is there in India to try to have these sort of discussions. And really key for the Europeans is getting obviously market access for a lot of goods, but they'd also like to get some of their defense goods into India. India, for example, and this will serve the European interests geopolitically, they buy a lot of their military equipment from Russia. Of course, that is something that the Indians are also looking to diversify away from. We had some reporting out a couple of weeks ago of them potentially looking at buying some German submarines. So that will be one of the focuses. Longer term, this could pave the way for getting, for example, joint military exercises, potentially for India to join some of the European defense programs, which gives them favorable pricing on loans and things like that. But of course, this is not all sort of natural geopolitical alignment. For the Europeans, they're very concerned by the fact that, of course, India is one of the great funders of the war in Ukraine by buying all of those fossil fuels from the Europeans. And we understand in the language for this sort of pact and this agreement on military defense pact between the Europeans and India, they could not get to a consensus on how to refer to Ukraine and to the war in Ukraine. So while it is sort of imperfect geopolitically and their interests are not 100% aligned, I think it shows that the European Union and the Indians are both taking a much more pragmatic approach in the face of the difficulties that are being provoked by the United States and Donald Trump.
Ollie, thank you so much. That's Bloomberg's chief Europe correspondent, Oliver Crook, who'll be back with us later on this hour. Well, turning to the US now, President Trump has signalled that he'll make changes to his administration's deportation crackdown. Trump's border enforcer in Minnesota, Greg Bovino, is leaving following a public outcry over the killing of 2 US citizens by federal agents. Border Chief Tom Homan is being sent to Minneapolis to ease tensions. Let's bring in Bloomberg Deputy Managing Editor Balazs Pence for more now. Balazs, what led to this dramatic pivot from President Trump?
It is indeed a dramatic pivot, as you said, Lizzie, and taken together with the fact that the president had conversations with Governor Walz and Mayor Frey of Minneapolis, and he came out of those conversations talking about how positive they were. It's clearly an attempt by the administration to de-escalate and to kind of calm the nerves around Minneapolis. But what it really tells us is just how dramatically the landscape, the political landscape around immigration has shifted. Just remember, ever since Donald Trump came on the scene, immigration has been his calling card, maybe his strongest political tool. Every time he ran into challenges, he would turn to immigration as a topic that was very favorable to him. Now that calculation has changed and it has become a liability, we've seen a groundswell of opinion against what's happened, against the sort of disturbing scenes that we've seen coming out of Minnesota over the past few weeks. And now there's a risk that there's a growing opposition even within the Republican Party, even among Republican voters, against these ICE operations. So the president is trying to take back the initiative and de-escalate a little bit when it comes to immigration in Minneapolis.
Well, yes, where does it leave his immigration strategy in the year of the midterms and the risk of a government shutdown, Balazs?
Well, that's a really interesting question because the shutdown, of course, is the strongest political tool that the Democrats have right now as the party being out of power. And as of right now, there's no indication that even this de-escalatory move by the president would change the positions of either party there. They are both dug in right now. So as of now, it seems like we're still headed for a shutdown at the end of this week.
OK, Bloomberg Deputy Managing Editor Balazs Pence, we thank you so much. Well, still to come here on Daybreak Europe, the UK Prime Minister seeks to reinvigorate trade ties with China. So we'll discuss what that means for business with the chairman of the British Chamber of Commerce in China. That's at 6:30 a.m. London time. But first, a deep freeze and hot gas prices. We'll be discussing why freezing temperatures in the US have led to wild swings in the natural gas market. That's next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Daybreak Europe. Now, US natural gas prices have been dipping as traders take profits. Continued freezing weather conditions across much of the United States had sent natural gas up as much as 35% on Monday. There have been similar price reversals in European gas prices. And we can get more on this international market with Bloomberg's Dan Murtaugh now. So, Dan, wild swings, really, when it comes to US nat gas prices. Talk us through them.
We've seen this huge Arctic blast come down from the north in the U.S., and that's done two things to the natural gas industry. One thing it's done is you go out to like West Texas, Colorado, these places where there's lots of gas wells. It's freezing equipment at wells and pipelines and processing plants, and that's cutting off natural gas supply. And then at the same time, you're just seeing people all over the country need to add more heat. They're burning more gas to keep their house warm. They're running the electricity that's burning more gas at power plants. And so, you have a huge rise in demand pushed up against, cuts in supply. And you see these huge price increases. From January 16th to the 26th, the prices have almost doubled on the front month contract. And so, anytime you see something like that, you're going to start to have some real big market dislocations.
And just walk us through the international pricing dynamics here, because, of course, the war in Ukraine had been a massive factor for Europe.
Yeah, natural gas for ages had been a really sort of localized, decentralized markets. The U.S. natural gas market was one thing, Europe was its own thing, Asia was its own thing. But because of the rise of LNG trading, those have really kind of melded together. And as you mentioned, after Russia invaded Ukraine, Europe really relied on U.S. LNG imports to keep afloat. And so what that means now is, you have normally these LNG plants in the U.S., they buy their gas, they liquefy it, they ship it to Europe, they pack away a tidy little profit. But right now, these higher prices are signaling to them, hey, maybe we should instead supply our domestic buyers who are paying a little bit more, make sure that there's enough gas to go around. That, in theory, could eventually cut off supply to Europe. In reality, I think this is going to pass pretty quickly. You already look at the next month natural gas futures contract. It's significantly lower than the front month price. So this is probably a pretty quick event here. But over time, this is something that if you're in Europe, if you're in Asia, these American cold snaps are really going to be something that could affect your gas supply.
Okay. Dan, thank you so much. That's Bloomberg's Dan Murtaugh. Well, coming up, Goldman Sachs CEO David Solomon warns of a slower trajectory for talent growth in 2026. So we'll be hearing from him next. This is Bloomberg. The Goldman Sachs CEO says he sees a slower trajectory for talent growth this year, even as he made an upbeat call on global markets as a deregulatory tone boosts optimism. David Solomon spoke exclusively to us about what the market looks like this year, with a number of big-ticket IPOs like SpaceX on the way.
The environment's very constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever, for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business.
The stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course, if there was a big exogenous event, it could slow it down. But I don't think that's the base case. But that doesn't mean we won't have some speed bumps along the way this year.
I think Wall Street shed about 10,600 jobs in combined, the big banks, last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall and its headcount. I understand our headcount plan.
Yeah.
And all we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. I'd point to our wealth management business, which scales with people all over the world.
The Goldman Sachs CEO David Solomon speaking exclusively to Bloomberg. Now to some other top stories we're following for you this morning. The UK Prime Minister Keir Starmer says that the public has given him a personal mandate to lead Britain for 5 years. Speaking to Bloomberg, Starmer vowed to complete a full term, signalling to his Labour rivals that he won't bow to pressure on his leadership, adding, quote, "It's a considerable mandate. I intend to deliver on that." The comment suggests that Starmer would argue only he has the legitimacy to hold the post of Prime Minister if he's challenged. Meanwhile, an industry survey has found that inflation in British shops rose to the highest level in almost 2 years as retailers grapple with higher costs. The British consortium says that prices of commonly purchased products climbed 1.5% in January from a year earlier, the fastest pace since February 2024. The British Retail Consortium says that energy costs and the hike to national insurance contributions, a payroll levy, continue to impact prices. And meanwhile, the UK government will announce a support package for pubs this week in a bid to help cushion the sector from business rates. Chancellor Rachel Reeves has been under pressure from the hospitality sector since she announced business rate reforms in last year's budget. The package is expected to be limited to pubs, with the rest of the sector, including hotels, restaurants and nightclubs, set to be excluded. And the controversial former FIFA president, Sepp Blatter, has advised football fans to stay away from America and this year's World Cup. The United States is co-hosting the tournament with Canada and Mexico this summer. Calls to consider a boycott are getting louder amid President Trump's immigration crackdown and a fraying relationship with Europe. Well, those are some of our top stories this morning. Let's check in on these markets, shall we? We have stocks already powering ahead to near a record in the Asian session and futures pointing higher both here in Europe and stateside. So traders really looking through Donald Trump's latest tariff threats when it comes to South Korea. And in the next block, we'll be diving into that theme of trade. UK Prime Minister Keir Starmer heading to Beijing, heralding significant opportunities for British business ahead of that trip. And we're going to discuss what that might entail with the British Chamber of Commerce in China Chairman Chris Torrens. So that conversation coming up next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks extend their rally as traders brush off Donald Trump's latest trade threats against South Korea. Gold powers higher above $5,000 an ounce. Shifting alliances. The EU and India sign a long-awaited trade deal in the face of President Trump's trade policies. And ahead of his trip to Beijing, UK Prime Minister Keir Starmer tells Bloomberg he sees significant opportunities for British business in China. And ahead of that trip, we have had Prime Minister Keir Starmer telling Bloomberg that he sees those opportunities in China. We've also had an interview with the Goldman Sachs CEO, David Solomon, saying that he's optimistic about the outlook for global markets this year. So we'll bring you that exclusive conversation with David Solomon. Well, it is 6:31 a.m. here in London, checking in on these markets, and we've got futures pointing higher on both sides of the Atlantic. As I say, Asian stocks already nearing a record. So traders looking through President Trump's latest trade threats, tariff threats on South Korea. Gold, though, powering higher, even higher, towards $5,100 an ounce. It already smashed through that $5,000 level for the first time. But Brent here, looking through the US weather, we talked about the impact on the natural gas market. Brent seems to be more focused on the supply-demand outlook, that supply will outstrip demand in the coming months. So Brent here at $65 a barrel, extending its losses. On the front pages this morning, let's turn to the Financial Times. They have President Trump signalling a shift in his administration's immigration crackdown as he seeks to quell the outrage over the killing of a man in Minnesota by federal agents at the weekend. And the Wall Street Journal also has this story, but it tracks the 48 hours that convinced Trump to pivot afterwards as Republican lawmakers and other allies raised concerns that he was squandering public support for his signature immigration campaign. Then, if we turn over to the UK, the Telegraph is focusing on China as Britain braces for Prime Minister Keir Starmer to head to Beijing. The Telegraph reporting that China hacked the mobile phones of senior Downing Street officials close to Boris Johnson, Liz Truss and Rishi Sunak for years. But the paper says it isn't exactly clear whether the hack included the phones of the Prime Ministers themselves. But still, this paper framing UK-China relations as a balancing act between security and economic opportunity. You can get a roundup of all of these stories and everything you need to know to get your day going by looking at today's edition of Daybreak, which, as ever, Terminal subscribers can find by going to DAYB Go on the terminal. Well, let's dive back into trade. The EU's Ursula von der Leyen and Antonio Costa are in New Delhi to mark a historic free trade deal, which Prime Minister Modi has hailed as a significant agreement. Bloomberg Chief Europe correspondent Oliver Crook is back for more. Ollie, why did these negotiations take so long? And is the fact that they're seemingly now over the line likely to provoke the wrath of President Trump?
Well, yeah, let's connect those two ideas. I think the question may not be why it took so long, but why did it happen now? And why did it happen only a couple of weeks after that Mercosur trade deal between the European Union and Latin America? And the answer is that after 12 months of Donald Trump and 12 months of a sort of tariff roller coaster, a roller coaster that does not appear to be ending, whether you look at what's coming to South Korea overnight or you're looking at the sort of disagreements last week on Greenland and tariffs, basically the Europeans and India is still facing a 50% tariff from the United States. The Europeans have put their trade deal with the United States on ice after the sort of spat on Greenland last week. They need to find bigger markets. They need to find stability across the world. And that is the ambition of this trade deal that, as you say, Lizzie, has been 20 years in the making. It will include more than 20% of the world population, more than 20% of the world GDP. And the hope here is to try to get access to the Indian market by European companies, namely on things like machinery. Obviously, they'd like to sell cars there. India has had very, very high tariffs on cars and automobiles. The Indians would like to sell textiles, minerals, and other things into the European Union. This is not quite as expansive and as free a trade agreement as you see with Mercosur, but it's certainly a significant step forward and an important signal for the European Union, trying to diversify away, A, from the United States, but B, also from China. There's also a security and defense pact that the Europeans are signing with the Indians, which will also serve their geopolitical interests, because right now India buys a lot of its military kit from the Russians. They'd like to see some of that being bought from the Europeans. We had some reporting out a couple of weeks ago that the Indians were looking to buy, for example, German submarines. But when we think about the impact of this potential trade deal and what it could have on the European Union, we have the numbers here from Allianz giving a couple of a flavor of that. It could increase the sort of exports from the EU to India to the tune of about $20 billion. It could boost European GDP annually by about 10 basis points. But key here, Lizzie, is it could offset nearly a quarter of U.S.-related export losses from higher U.S. tariffs from the European Union to the United States. So this all part of that effort to try to diversify away from the United States in this moment here of what we can say is more European pragmatism and indeed more Indian pragmatism.
Okay, Really appreciate the overview. That's Chief Europe Correspondent Oliver Crook. Thank you. Well, staying with trade, Keir Starmer is seeking to reinvigorate strained business ties with China when he travels to Beijing this week, the first visit by a UK Prime Minister in 8 years. The British government recently approved a new Chinese embassy in London, ending a years-long saga that had strained bilateral relations. In an interview with Bloomberg, Starmer said that he would not be forced to choose between Washington and Beijing. We can get more now with the British Chamber of Commerce in China Chairman Chris Torrens. Chris, good morning. Thank you for making time for us. Keir Starmer, as I say, insisting that he doesn't need to choose between Trump and Xi. I wonder, do the businesses that you represent want Keir Starmer to lean more to China than the US?
I think thanks very much for having me on the show. I think any positive steps by the UK government to continue this momentum towards building a stronger relationship with China are welcomed by the British business community in China. We did a survey. We have an annual sentiment survey which was published last month. More than 300 British companies responded to that survey, all of them operating in China. And they're more optimistic than they have been for the last 6 years. So it's certainly an expression of confidence from the British business community in what the UK government's doing. And we're seeing momentum. We're seeing a coherent China strategy, which, to be honest, the previous UK administration did not have. So on the one hand, they're very confident about it, but also having senior government engagement means that some of the challenges facing British businesses operating in China, some of the market access issues that our members face, can be addressed when senior government leaders meet face to face. So I think, regardless of all the geopolitical uncertainty that's taking place, it's really positive news that Prime Minister Starmer is visiting this week.
OK, so would you just expand on that for us, Chris? What would success actually look like for Starmer on this trip?
I think there are a number of objectives that the Prime Minister would have. From a chamber point of view, we would welcome progress in areas where there are some long-standing challenges facing British businesses on the ground, typically in the more heavily regulated sectors which are regulated in other markets as well, but sometimes in China it's particularly complex. So healthcare is a strong sector for UK companies, and we're seeing progress there already. But in services, which are obviously crucial to the UK economy and where UK companies are world leaders in many areas, around legal services, financial services, wider business advisory, we're hoping for greater access as well. And I think that's something that the Prime Minister will push, not least because although it, on the one hand, it kind of pushes UK investment into China and helps companies succeed here, but UK services companies are beginning to support Chinese companies going global, including to the UK. So I think that the UK government will be looking to try to get a win in terms of Chinese investment into the UK, as well as supporting UK investment into China.
And how should the Prime Minister balance the security concerns around China, as we heard around the Chinese embassy in London, against these opportunities for economic engagement? Or are those security concerns overblown, perhaps?
So in the sentiment survey and with conversations with our members, we don't typically talk about national security back in the UK. I mean, there are various considerations in country, in Beijing, across the country, around cybersecurity, personal information, and China's legislation there is broadly in line with other countries. But I think, from a personal perspective, I think what the Prime Minister has expressed is that he's maintaining a dual focus on security and engagement. And so while pushing forward with stronger economic development and stronger trading relationships, he's also very mindful that there are high-risk sectors where China and other countries will not be invited to participate in the UK. So in your previous piece, you were talking about the balancing act that I think many countries have to make. We're in a world of increasing geopolitical uncertainty, and so I think it's important for the UK, like Europe, like the Canadian Prime Minister, Mark Carney, who was here just recently. We had the French President Emmanuel Macron last year getting lots of FaceTime with Chinese leadership. I think the German Chancellor Friedrich Merz will visit next month, and of course the US President Donald Trump himself is coming to China in April. So all of these countries will be looking to do some kind of deal. So I think it would be remiss of the UK to not engage, at least at an economic level, with China.
Well, on that triangulation, Chris, I do wonder how the trade tensions between Washington and Beijing are impacting the confidence of British companies doing business in China. Is there a sense that they can just look through President Trump's latest tariff threats because at some stage they think they'll be walked back?
Certainly last year was, I think, defined by US-China uncertainty. It was a bit of a roller coaster of a year, and it's strange to be sitting here at the beginning of 2026 feeling that the US-China relationship is probably I don't think it's putting it too strongly to say it's a beacon of stability, but there is a certain degree of predictability there. We know that the presidents of these countries will probably meet 3 or 4 times, with Trump coming to Beijing, President Xi making a return visit to Washington, and then we have the APEC forum in Shenzhen, and then the G20, which Trump will host in Miami, I think, in the middle of December. So these are 2 world leaders who will meet 4 times. One would hope that the personal rapport will grow, and so that does help to shape the mood for UK and other multinational business in China, because UK companies are members, other multinational clients of the company I work for, APCO, as well, not necessarily US companies. They've all been affected by US-China tensions. So we're hopeful that there will be a deal this year between the US and China. Whether it's going to last, given that we are now in an era of strategic competition, remains to be seen. But this year, and hopefully next year, is looking a little more stable.
Well, Chris, it's great to get the voice from business, the view from business. Chris Torrens there, Chairman of the British Chamber of Commerce in China. Thank you so much for your time. Well, speaking of that potential deal, the US ambassador to China says that Washington's making good progress in trade talks with Beijing. David Perdue also says that trade relations with NATO allies are positive, despite the recent row over Greenland. The US ambassador to China was speaking exclusively to Bloomberg. We'll hope to bring you that interview later on in the show. We've got plenty more coming up, so stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:45 a.m. here in London. Now to our top corporate news. Puma shares are seen surging on TradeGate. That's after Chinese sportswear giant Anta Sports announced that it's buying about 29% of the German sports brand, making it the biggest shareholder. Anta says the $1.8 billion purchase is a key step in the company's multi-brand and globalization strategy. Bloomberg News reported back in November that Anta was among companies exploring a potential takeover of Puma. Elsewhere, Bloomberg understands that oil majors operating in a large field in Kazakhstan have lost an international arbitration case, leaving them liable to pay as much as $4 billion in compensation to the government. The court has yet to determine the specific amount the field's partners, led by Eni and Shell, will have to pay, but sources say the external legal advice received by Kazakhstan suggests that the arbitration ruling means the partners, which include Chevron, will have to pay back an estimated $2 billion to $4 billion. And the French video game developer Ubisoft has entered discussions to cut as many as 200 jobs. The company says it's speaking to employee representatives about a voluntary termination of contracts for staff at its headquarters near Paris. Shares in the Assassin's Creed maker dropped by a record last Thursday after the company said that it would cancel game projects, shut down studios and cut its guidance. So we keep an eye on them at the open. Well, those are some of our top corporate stories this morning. Now to the latest data. European car sales growing for a 3rd year in a row in 2025. New vehicle registrations rose 2.4% after another bounce in December. But due to tariffs and rising competition, the European Automobile Manufacturers Association says sales are still around 15% below pre-pandemic levels. Let's get more context now with Bloomberg's transport reporter, Danny Lee. Danny, what's been driving the sales so far? Good morning.
Yeah, good morning, Lizzie. So the introduction of Chinese competition, coupled with the response from from the European automakers, bringing in their own affordable EVs that are sub 20,000 euros. That has been helping drive sales higher, and we have seen for the last 6 months 6 consecutive months of growth in new car sales across Europe. And so there is that momentum, and you've seen that in the EV sales, which jumped in 2025 30%. And same for hybrids and hybrid electrics, because of infrastructure not being as good. That's taken up 45% of all new car sales in Europe in 2025. So we see the lion's share going towards more cleaner electric and hybrid vehicles, and that does mean that the likes of petrol and diesel options continue to see their sharp decline in sales overall, and that really is showing that they're now in the minority.
And what are governments doing to help the industry, Danny? Will it actually help future sales?
Well, if the momentum over the last several months has shown, it could very well be a decent 2026. And the leg up we may well see from automakers is the subsidies. The likes of Germany had recently announced 3 billion euros worth of subsidies that the likes of the Chinese automakers are going to be eligible to tap into, and that could really help spur on yet more sales. And it's not just Germany, the likes of France and the UK, these major auto markets which have their own sets of subsidies and offerings to help put sales at a higher level. That would be really helpful for consumers as we see the likes of newer, cheaper electric cars, better technology, and a wider range of brands that could really heat up the competition. I think the one key thing we are kind of waiting to assess is what the European Commission had said in its announcement and agreement with Chinese EV makers recently of potentially putting in a pricing mechanism to lower the pricing or to remove the tariffs that have really dogged automakers, Chinese automakers, and their exports going into the European market, which is very much a key market for them.
Well, yeah, you're in Hong Kong. We've talked a lot about trade with China this hour, Danny. How much are Chinese brands likely to grow market share in Europe this year?
Well, the likes of BYD, the world's biggest electric vehicle maker, they racked up 1 million unit sales from the overseas markets in 2025. They've set a target this year of 1.3 million. So you could really well bet that a lion's share of that will come from the European market. And with some of the hurdles that have been in place over 2025 being removed and more subsidies in offer, you will see them really tap aggressively into that market, the likes of its rivals such as Geely as well. But overall, when you see the statistics for 2025, finally seeing a Chinese brand break into the top 10 sales of manufacturers. But that wasn't BYD, that was SAIC Motor. And you could see the likes of BYD really taking on a bigger presence in the European marketplace just as well in 2026.
Okay, Danny Lee.
Okay guys, crude oil को देखोगे वापस नीचे ही आ गया है, ठीक है. एक ब्रेकआउट जरूर किया था, रीटेस्ट तो छोड़ो, वापस नीचे आ गया, तो इट इज स्टिल ऑन रेजिस्टेंस पर ही है अभी भी. ऐसा लग रहा था ब्रेकआउट रीटेस्ट करेगा, नहीं किया है, ठीक है. ब्रेकआउट किया था, रीटेस्ट वगैरह कुछ नहीं किया, वापस नीचे आ गई कैंडल क्लोजिंग बेसिस पे, तो इट इज स्टिल ऑन रेजिस्टेंस. ये अभी भी ये पॉइंट ऑफ इंटरेस्ट के रेजिस्टेंस पर ही है, ठीक है. अब देखना पड़ेगा, या हो सकता है इसी रेंज में घूमता रहे. अब ये यहाँ पर ब्रेकआउट चाहिए हमें, ब्रेकआउट रीटेस्ट मिलेगा तभी जा पाएगा ऊपर, नहीं तो अगेन यहाँ से वापस सेलिंग आ जाएगी प्राइस में. नीचे सपोर्ट है ही. दिस आर रेंज एक्सपेक्टिंग नाउ इन क्रूड ऑयल राइट नाउ. कोई बड़ा मोमेंटम नहीं लग रहा है, इसी रेंज पर रहने के चांसेस है मोस्टली. सेलिंग वापस कंटिन्यू एक्सपेक्टेड ही है क्रूड में अब, जब तक ब्रेकआउट नहीं होता $61 के ऊपर. इट इज दिस पॉइंट ऑफ इंटरेस्ट इज रेजिस्टेंस, एक्ट लाइक अ रेजिस्टेंस.
Samsung. They are the drivers of the Korean market, have been for some time, and they are clearly two companies who are not really going to be affected. Even if President Trump does go ahead with more tariffs on Korea, the sectors which he's targeting will not affect AI themes. It won't affect the chip sector. And these two major companies have been the ones which have been really buoyant and bringing in all the investor attention and driving the Kospi to record high after record high. So as long as those kind of companies are unaffected, it's not going to matter too much to the overall sense of the market. In fact, by some measures, the kinds of companies, autos and pharmaceuticals, that could be affected by potential tariffs is less than 10% of the whole market anyway. And that's not really where major investors are too concerned about. Plus, you've got, in the precious metals space, there was a bit of a wobble in silver and gold. They've recovered very smartly. There seems to be some correlation in the sentiment between what's driving precious metals and what is also driving the Korean equities as well. So as long as those two are pretty much going hand in hand, there's nothing too much for investors to get worried about as far as the Korean stocks are concerned. At some point, it will be overdone. You'll get too overheated. But for now, people are reassured that the AI theme really has a long way to go. The deal today between Hynix and Microsoft is a pretty big deal. It adds a lot more value to the company, and people are buying into that. And for now, they're able to look past anything to do with the tariff threat.
And Marcus, when you mentioned the yen's also a touch weaker against the dollar today, what's the next trigger for a potential yen intervention?
It really comes down to this auction that we have tomorrow. So just a week ago, people were really getting concerned about chaos in the long end of the Japanese market, particularly because tomorrow there's a 40-year JGB auction. That's the longest part of the yield curve. They only do this one about 6 times a year. The auctions are not on a regular basis. They're notoriously difficult to be done. The pricing is very awkward on these. Demand is very low. So there is certainly a chance that the JGB auction tomorrow will not be very successful. We'll get a spillover in Japanese bond selling, which will go back into the yen. That's what we saw last week as well. When there was pressure on the yield curve, it translated into a weaker currency. So it could well be that the Japanese authorities are holding back slightly. They will probably know that the rate checks that were done by the Federal Reserve last week were very helpful, but in themselves, they're not going to be enough to turn the yen around. They'll need to do more. The Japanese authorities will need to step up with stronger language or direct intervention in the market. But they probably want to see what happens with the auction tomorrow. In case there's a really negative fallout, then they can step in and enter the market at a more reasonable level. If they do it today, they could be wasting their ammunition and it could all backfire. So let's see where the auction goes tomorrow. It's probably the biggest event in the Japanese market this week.
All right, we'll have to get you back to talk about it. That's Mark Cranfield, our MLive strategist. Thank you. Well, turning back to trade, just now the Indian Prime Minister Modi has said that his country and the EU have signed a, quote, significant pact today after nearly 2 decades of negotiations. The partnership aims to create closer economic ties to offset the impact of President Trump's global tariffs. Let's speak now to Bloomberg's chief Europe correspondent, Oliver Crook. Ollie, what are the terms likely to be?
Yeah, so Lizzie, I mean, this is the mother of all trade deals, of all deals, if you believe Ursula von der Leyen. That's not a quote for Donald Trump. That's sort of uncharacteristic characterizing of the deal by Ursula von der Leyen. And I think this sort of the key figure for this is 20. It's about 20% of global GDP, almost more than 20% of the global population. It's been 20 years in the meeting, and that is what this trade deal that they're hoping to get sort of over the line today, end negotiations on between the EU and India. And the key thing here is going to grant market access to a lot of different products, most of the products that are traded between the two blocks. For the Europeans, they're very keen to get some of their cars into the Indian market. India has a tariff of about almost 110% at the highest level on cars. We understand from reporting that that might come down to about 40%. There would still be a cap. There are, of course, some debates also within the European side about giving market access to Indian steel. But again, for both of the sides, this comes at a very conspicuous time, just a couple of weeks after the EU has signed that key trade deal with Mercosur in Latin America, because both the Indians and the Europeans need to diversify. The Indians are still facing a 50% tariff from Donald Trump. The Europeans are now still have their sort of trade deal with the United States on ice after that sort of debacle with Greenland just last week. And so everybody is trying to sort of strengthen their trading relationships across the world. In terms of what the actual economic impact will be for the Europeans, Allianz has crunched the numbers here, and I'll go through some of them here. It could mean an additional $20 billion worth of exported goods from the European Union to India. It could boost the European GDP, not very significantly, by only about 10 basis points, about 0.1% annually. But I think key here, Lizzie, is that it could offset nearly a quarter of U.S.-related export losses from higher U.S. tariffs from the Europeans over to India. So again, front and center here is trying to diversify away from the United States, diversify away from China for the Europeans, and striking a much more pragmatic approach with both of these trade deals coming in quick succession after being more than 20 years in the making.
OK, so that's the trade side, Ollie. But what more do we know about the proposed security and defence agreement?
Yeah, so that'll be another sort of segment of this, and well, Ursula von der Leyen is there in India to try to have these sort of discussions. And really key for the Europeans is getting obviously market access for a lot of goods, but they'd also like to get some of their defense goods into India. India, for example, and this will serve the European interests geopolitically, they buy a lot of their military equipment from Russia. Of course, that is something that the Indians are also looking to diversify away from. We had some reporting out a couple of weeks ago of them potentially looking at buying some German submarines, so that will be one of the focuses. Longer term, this could pave the way for getting, for example, joint military exercises, potentially for India to join some of the European defense programs, which gives them favorable pricing on loans and things like that. But of course, this is not all sort of a sort of natural geopolitical alignment. For the Europeans, they're very concerned by the fact that, of course, India is one of the great funders of the war in Ukraine by buying all of those fossil fuels from the Europeans. And we understand in the language for this sort of pact and this agreement on military defense pact between the Europeans Europeans and India, they could not get to a consensus on how to refer to Ukraine and to the war in Ukraine. So while it is sort of imperfect geopolitically and their interests are not 100% aligned, I think it shows that the European Union and the Indians are both taking a much more pragmatic approach in the face of the difficulties that are being provoked by the United States and Donald Trump.
Ollie, thank you so much. That's Bloomberg's Chief Europe Correspondent Oliver Crook, who'll be back with us later on this hour. Well, turning to the US now, President Trump has signaled that he...
Okay, देखो क्रूड ऑयल में वापस प्राइस नीचे आ गया, हल्का सा पुल बैक आता है तो वापस सेलिंग करेंगे इसमें, कुछ खास तो बाइंग लग नहीं रही है, स्टिल होल्डिंग द रेजिस्टेंस। बाकी नेचुरल गैस अगर पुल बैक देगा तो एक वापस अब बाइंग करेंगे, मोस्टली मुझे लग रहा है कैंडल क्लोज ही कर देगा ऊपर। क्रूड ऑयल वापस रेंज बाउंड हो गया, ये जब तक ब्रेकआउट नहीं करता प्रॉपरली नॉट वर्थ इट टू बाय। पुल बैक आएगा तो वापस सेल करेंगे, नीचे आता तो वापस बाय, रेंज है जब तक रेंज को ही प्ले करते हैं। लेट्स सी 6:30 के अराउंड न्यूयॉर्क सेशन ओपन होगा तो वापस थोड़ा वॉल्यूम एक्सपेक्ट करेंगे, वापस आना चाहिए। डे हाई ब्रेक कर रहा है नेचुरल गैस, गुड साइन। डे हाई के ऊपर क्लोज होती है, फर्स्ट 15 मिनट की कैंडल के आइदर साइड क्लोजिंग चाहिए थी, अपर साइड पे ही शायद क्लोज होगा। अपर साइड पे निकलता है तो नीचे ये सपोर्ट की तरह काम करने लग जाएगा, पॉइंट ऑफ इंटरेस्ट। ठीक है, पुल बैक आ रहा है क्रूड में, एक सेलिंग यहाँ से एक्सपेक्ट करेंगे, वापस से मिलनी चाहिए। रेंज है तो इसमें रेंज के अलावा कुछ प्लान नहीं कर सकते जब तक ब्रेकआउट नहीं होता। ब्रेकआउट अगर हुआ तो देखेंगे वापस से एक बाइंग या फिर नीचे सपोर्ट पे आ जाए वापस प्राइस। राइट नाउ रेंज है तो रेंज को ही प्ले करते हैं। सेम ही ट्रेड है जो कल वाला लगाया था पॉइंट ऑफ इंटरेस्ट से फॉरेक्स में, दैट इज द ओनली ट्रेड। अगेन रेंज है तो उसको अलावा छोड़ नहीं सकते रेंज को भी। तो कल जहाँ से सेल किया था सेम जोन है, लेवल के नीचे आ गया, पुल बैक में एक एंट्री बनेगी। घंटा और है 6:30 न्यूयॉर्क सेशन की ओपनिंग पे। लेट्स सी कुछ मूव न्यूयॉर्क सेशन के बाद और कंटिन्यू करता है क्रूड में। अभी तो रेंज है पूरी कंप्लीट। यहाँ से बाकी नेचुरल गैस में वापस सेलिंग एक्सपेक्टेड है। दो रेजिस्टेंस साथ साथ ही हैं। एक से पहले प्लान करना, फिर दूसरे से प्लान करना, एक साथ मत प्लान करना। दोनों पास में ही है रेजिस्टेंस जोन इन नेचुरल गैस। लोअर एंड से थोड़ा क्वांटिटी कम रख के ट्रेड करना, ठीक है। ऊपर वाला लेवल भी है टेस्ट करना पेंडिंग। नीचे वाला ऑलरेडी कई बार टेस्ट हो चुका है। दोनों ही रेजिस्टेंस है, ये भी रेजिस्टेंस है, ये भी रेजिस्टेंस है। या तो फिर अपर लेवल से सेल करो, लोअर एंड से ले रहे हो थोड़ा क्वांटिटी कम रखेंगे। बहुत पास पास में ये दोनों सपोर्ट, ऐसा ना हो दोनों की लिक्विडिटी एक साथ लेने चला जाए। उस केस में लोअर एंड पे जो एसएल रखे होंगे वो चले जाएंगे। वैसे मैं एक्सपेक्ट कर रहा हूँ ऊपर वाले पे ही जाए ये पहले। यहाँ यहाँ अभी डीप लेवल से टेस्ट हुआ नहीं है इसमें एक बार भी। 360-65 का जो जोन है फ्यूचर में एमसीएक्स फरवरी मंथ का फ्यूचर चार्ट, लोअर एंड से थोड़ा सा मुझे कम लग रही है एक्सपेक्टेड सेलिंग। एक ही चीज़ थोड़ा सा एश्योरेंस दे रही है, दैट इज़ अ कंटिन्यूएशन मोमेंटम। कोई पुल बैक नहीं आया यहाँ पर अभी तक। ये दोनों ही रेजिस्टेंस है नेचुरल गैस में। लोअर एंड पे लगा रखा है, यहाँ से क्वांटिटी कम रखना। ऊपर वाले से थोड़ा क्वांटिटी नॉर्मल ट्रेड करेंगे। हो सकता है वो ऊपर वाला जाए ना, हो सकता है जाए। पास में है नॉर्मली बहुत नियर बाई, अगर सपोर्ट या रेजिस्टेंस बनते हैं तो प्राइस फिर दोनों जगह से एक साथ लिक्विडिटी लेने की कोशिश करता है कई बार। तो नेचुरल गैस फॉरेक्स का चार्ट देखें तो वहाँ पर capital.com ब्रोकर के चार्ट पे वहाँ पर कोई रेजिस्टेंस नहीं दिख रहा है. MCX में है तो लगा रखा है, फॉरेक्स में शो नहीं हो रहा है कुछ भी. इसमें देखोगे ना वहाँ काफ़ी दूर है, $4.2527 के अराउंड एक रेजिस्टेंस है. देन 4.3681 के अराउंड रेजिस्टेंस है. नहीं वही है सेम. 4.25 4.2700 से 2500 के बीच में. MCX चार्ट ही बेटर है फॉरेक्स में तो. ऑप्शन की एक्सपायरी है सिल्वर में. नेसेसरी गैप अप गैप डाउन ना लेवल खराब कर देते हैं बिल्कुल. ऊपर ही जाना था नेचुरल गैस को, परसों ही चला जाता. गैप अप करने की जरूरत क्या थी. परसों रिटेस्ट के बाद एक ट्रेड लगाया था यहाँ पर, एक फर्स्ट टारगेट हिट हुआ था, उसके बाद मैंने कहा था ऊपर और जा सकता है ये. यहाँ पर ये पॉइंट ऑफ इंटरेस्ट काफ़ी बार टेस्ट हो गया था. फॉरेक्स में चला गया, MCX में गैप अप.
Федеративной Республики Германия. Больше ничего не надо. Вот сегодня решение, завтра вентиль мы поворачиваем, и все, и газ пошел. Но они же этого не делают. Потому что, как у нас говорят, Вашингтонский обком не разрешает. Сохраняется одна ветка Северного потока-2. Она не
eligible to tap into, and that could really help spur on yet more sales. And it's not just Germany, the likes of France and the UK, these major auto markets which have their own sets of subsidies and offerings to help put sales at a higher level. That would be really helpful for consumers as we see the likes of newer, cheaper electric cars, better technology, and a wider range of brands that could really heat up the competition. I think the one key thing we are kind of waiting to assess is what the European Commission had said in its announcement and agreement with Chinese EV makers recently of potentially putting in a pricing mechanism to lower the pricing or to remove the tariffs that have really dogged automakers, Chinese automakers, and their exports going into the European market, which is very much a key market for them.
Well, yeah, you're in Hong Kong. We've talked a lot about trade with China this hour, Danny. How much are Chinese brands likely to grow market share in Europe this year?
Well, the likes of BYD, the world's biggest electric vehicle maker, they racked up
money themselves, the market will basically sort this out. This
1 million units.
Not if you're seeing the search for
Live
safety
from
in
London,
gold.
this has been
We stick to our knitting here in
I'm
tech. What have you got,
top
Ed?
stories. Global stocks
We've got
extend
a deal,
their rally
and
as
it's
traders
for
brush
Nvidia
off
to
Donald
invest
Trump's
an additional
latest
$2
trade
billion.
threats with South Korea. Gold powers higher above $5,000 an ounce. Shifting alliances, the EU and India set to announce a long-awaited trade deal in the face of President Trump's Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks extend their rally as traders brush off Donald Trump's latest trade threats with South Korea. Gold powers higher above $5,000 an ounce. Shifting alliances, the EU and India set to announce a long-awaited trade deal in the face of President Trump's trade policies. And ahead of his trip to Beijing, the UK Prime Minister Keir Starmer tells Bloomberg he sees significant opportunities for British business in China. Plus, the Goldman Sachs CEO says he's optimistic about the outlook for global markets this year. We'll bring you our exclusive interview with David Solomon. Well, a very good morning. Welcome to Tuesday. The picture in markets looks like this. We have futures powering higher stateside and on this side of the Atlantic. And already we're seeing Asian stocks near a record. So really brushing away President Trump's tariff threats. We also have seen gold powering past that $5,000 an ounce level already. Now it's reaching for $5,100 an ounce. So the sense that the risk is out there remains. But look at oil, looking past the weather in the US and focusing instead on the forecast that supply will continue to outstrip demand. So Brent extending its drop to $65 a barrel. Turning to the risk events on the docket for today, we have that EU-India summit taking place after decades of negotiations. It looks like finally this deal that Ursula von der Leyen, the European Commission President, has said is the mother of all deals, as some have called it, could be getting over the line. So we'll bring you all of that. But then the focus turns back to earnings. Stateside, we have Boeing reporting what's expected to be profit boosted by better than expected deliveries, as we heard yesterday on this show from the Ryanair CFO. And then after markets close in Paris, we turn to LVMH. Sales expected to have taken a bit of a hit this year, but things likely to pick up in 2026 thanks to this raft of new designers. Well, we've got a lot on the agenda. Let's set you up for the day ahead. We begin with President Trump's latest tariff threats, 25% levies on goods imported from South Korea. Trump accusing Seoul of dragging its feet on implementing last year's trade deal. Let's get the Asia market reaction now with Winnie Xu. What's happening where you are, Winnie?
Yeah, morning, Lizzie. We are seeing that investors very quickly shrugging off those tariff risks. As you can see that the benchmark Kospi here actually dipped about 1% at the open, but very quickly taking that U-turn and now rising more than 2%. Investors are still seeing this just as a negotiation technique from President Trump, but actually a very good dip buying opportunity. As you also flip the board and take a look at how the Korean won is actually under still a bit of a pressure because investors still see Trump's agenda as more focused on that weakening trend of the dollar. Hyundai Motor here fluctuating a little bit because auto is actually one of the key sectors that was directly targeted by Trump's tariffs, along with pharma and Lombard. When it comes to what's really driving that the gains in the Kospi index, is actually SK Hynix here, up about 8%. And that's coming after a local media saying that the SK Hynix is actually the sole provider of the advanced memory HBM3E chips for Microsoft's Maya chips, and that is really driving gains here and hyping up the earnings expectation ahead on Thursday. Now flip the board and take a look at the broader Asia market because yes, overall risk on sentiment ahead of earnings, but when it comes to the Japanese yen weakening just slightly after that recent advance stance, and investors are still quite cautious in terms of the intervention risks. But that weakness in the yen is slightly helping the Japanese stocks here up 0.8%. Chinese stocks up moderately, and that's being helped by those industrial profits number showing the first yearly increase since 2021, thanks to the effort of anti-involution. Back to you, Lizzie.
Okay, Winnie, thank you so much. That's Winnie Su in Hong Kong. Well, let's dive into those markets now. Traders increasingly unfazed, as Winnie says, by Trump's tariff tactics, betting that he won't actually follow through on harsh penalties, often dangled as a means to win concessions. Let's bring in Bloomberg MLive strategist Mark Cranfield for more now. Mark, why don't Korean stocks seem to care about Trump's new tariff threats? Good morning.
Well, good morning. As Winnie was saying in the build-up there before, the two key companies, SK Hynix and Samsung, they are the drivers of the Korean market, have been for some time, and they are clearly two companies who are not really going to be affected. Even if President Trump does go ahead with more tariffs on Korea, the sectors which he's targeting will not affect AI themes. It won't affect the chip sector. And these two major companies have been the ones which have been really buoyant and bringing in all the investor attention and driving the Kospi to record high after record high. So as long as those kind of companies are unaffected, it's not going to matter too much to the overall sense of the market. In fact, by some measures, the kinds of companies, autos and pharmaceuticals, that could be affected by potential tariffs is less than 10% of the whole market anyway. And that's not really where major investors are too concerned about. Plus, you've got, in the precious metals space, there was a bit of a wobble in silver and gold. They've recovered very smartly. There seems to be some correlation in the sentiment between what's driving precious metals and what is also driving the Korean equities as well. So as long as those two are pretty much going hand in hand, there's nothing too much for investors to get worried about as far as the Korean stocks are concerned. At some point, it will be overdone. It'll get too overheated. But for now, people are reassured that the AI theme really has a long way to go. The deal today between Hynix and Microsoft is a pretty big deal. It adds a lot more value to the company, and people are buying into that. And for now, they're able to look past anything to do with the tariff threat.
And Mark, as Winnie mentioned, the yen's also a touch weaker against the dollar today. What's the next trigger for a potential yen intervention?
It really comes down to this auction that we have tomorrow. So just a week ago, people were really getting concerned about chaos in the long end of the Japanese market, particularly because tomorrow there's a 40-year JGB auction. That's the longest part of the yield curve. They only do this one about 6 times a year. The auctions are not on a regular basis. They're notoriously difficult to be done. The pricing is very awkward on these. Demand is very low. So there is certainly a chance that the JGB auction tomorrow will not be very successful. We'll get a spillover in Japanese bond selling, which will go back into the yen. That's what we saw last week as well. When there was pressure on the yield curve, it translated into a weaker currency. So it could well be that the Japanese authorities are holding back slightly. They will probably know that the rate checks that were done by the Federal Reserve last week were very helpful, but in themselves, they're not going to be enough to turn the yen around. They'll need to do more. The Japanese authorities will need to step up with stronger language or direct intervention in the market. But they probably want to see what happens with the auction tomorrow. In case there's a really negative fallout, then they can step in and enter the market at a more reasonable level. If they do it today, they could be wasting their ammunition and it could all backfire. So let's see where the auction goes tomorrow. It's probably the biggest event in the Japanese market this week.
All right, we'll have to get you back to talk about it. That's Mark Cranfield, our MLive strategist. Thank you. Well, turning back to trade, just now the Indian Prime Minister Modi has said that his country and the EU have signed a, quote, significant pact today after nearly 2 decades of negotiations. The partnership aims to create closer economic ties to offset the impact of President Trump's global tariffs. Let's speak now to Bloomberg's chief Europe correspondent, Oliver Crook. Ollie, what are the terms likely to be?
Yeah, so Lizzie, I mean, this is the mother of all trade deals, if you believe Ursula von der Leyen. That's not a quote from Donald Trump. That's sort of uncharacteristic characterizing of the deal by Ursula von der Leyen. And I think that sort of the key figure for this is 20. It's about 20% of global GDP, almost more than 20% of the global population. It's been 20 years in the meeting, and that is what this trade deal that they're hoping to get sort of over the line today, end negotiations on between the EU and India. And the key thing here is going to grant market access to a lot of different different products. Most of the products that are traded between the two blocks. For the Europeans, they're very keen to get some of their cars into the Indian market. India has a tariff of about almost 110% at the highest level on cars. We understand from reporting that that might come down to about 40%. There would still be a cap. There are, of course, some debates also within the European side about giving market access to Indian steel. But again, for both of the sides, this comes at a very conspicuous time, just a couple of weeks after the EU has signed that key trade deal with Mercosur in Latin America, because both the Indians and the Europeans need to diversify. The Indians are still facing a 50% tariff from Donald Trump. The Europeans are now still have their sort of trade deal with the United States on ice after that sort of debacle with Greenland just last week. And so everybody is trying to sort of strengthen their trading relationships across the world. In terms of what the actual economic impact will be for the Europeans, Allianz has crunched the numbers here, and I'll go through some of them here. It could mean an additional $20 billion worth of exported goods from the European Union to India. It could boost the European GDP, not very significantly, by only about 10 basis points, about 0.1% annually. But I think key here, Lizzie, is that it could offset nearly a quarter of U.S.-related export losses from higher U.S. tariffs from the Europeans over to India. So again, front and center here is trying to diversify away from the United States, diversify away from China for the Europeans, and striking a much more pragmatic approach with both of these trade deals coming in quick succession after being more than 20 years in the making.
OK, so that's the trade side, Ollie. But what more do we know about the proposed security and defence agreement?
Yeah, so that'll be another sort of segment of this, and well, Ursula von der Leyen is there in India to try to have these sort of discussions. And really key for the Europeans is getting obviously market access for a lot of goods, but they'd also like to get some of their defense goods into India. India, for example, and this will serve the European interests geopolitically, they buy a lot of their military equipment from Russia. Of course, that is something that the Indians are also looking to diversify away from. We had some reporting out a couple of weeks ago of them potentially looking at buying some German submarines. So that will be one of the focuses. Longer term, this could pave the way for getting, for example, joint military exercises, potentially for India to join some of the European defense programs, which gives them favorable pricing on loans and things like that. But of course, this is not all sort of natural geopolitical alignment. For the Europeans, they're very concerned by the fact that, of course, India is one of the great funders of the war in Ukraine by buying all of those fossil fuels from the Europeans. And we understand in the language for this sort of pact and this agreement on military defense pact between the Europeans and India, they could not get to a consensus on how to refer to Ukraine and to the war in Ukraine. So while it is sort of imperfect geopolitically and their interests are not 100% aligned, I think it shows that the European Union and the Indians are both taking a much more pragmatic approach in the face of the difficulties that are being provoked by the United States and Donald Trump.
Ollie, thank you so much. That's Bloomberg's chief Europe correspondent, Oliver Crook, who'll be back with us later on this hour. Well, turning to the US now, President Trump has signalled that he'll make changes to his administration's deportation crackdown. Trump's border enforcer in Minnesota, Greg Bovino, is leaving following a public outcry over the killing of 2 US citizens by federal agents. Border Chief Tom Homan is being sent to Minneapolis to ease tensions. Let's bring in Bloomberg Deputy Managing Editor Balazs Pence for more now. Balazs, what led to this dramatic pivot from President Trump?
It is indeed a dramatic pivot, as you said, Lizzie, and taken together with the fact that the president had conversations with Governor Walz and Mayor Frey of Minneapolis, and he came out of those conversations talking about how positive they were. It's clearly an attempt by the administration to de-escalate and to kind of calm the nerves around Minneapolis. But what it really tells us is just how dramatically the landscape, the political landscape around immigration has shifted. Just remember, ever since Donald Trump came on the scene, immigration has been his calling card, maybe his strongest political tool. Every time he ran into challenges, he would turn to immigration as a topic that was very favorable to him. Now that calculation has changed and it has become a liability, we've seen a groundswell of opinion against what's happened, against the sort of disturbing scenes that we've seen coming out of Minnesota over the past few weeks. And now there's a risk that there's a growing opposition even within the Republican Party, even among Republican voters, against these ICE operations. So the president is trying to take back the initiative and de-escalate a little bit when it comes to immigration in Minneapolis.
Well, yes, where does it leave his immigration strategy in the year of the midterms and the risk of a government shutdown, Balazs?
Well, that's a really interesting question because the shutdown, of course, is the strongest political tool that the Democrats have right now as the party being out of power. And as of right now, there's no indication that even this de-escalatory move by the president would change the positions of either party there. They are both dug in right now. So as of now, it seems like we're still headed for a shutdown at the end of this week.
Okay, Bloomberg Deputy Managing Editor Balazs Pansby, thank you so much. Well, still to come here on Daybreak Europe, the UK Prime Minister seeks to reinvigorate trade ties with China. So we'll discuss what that means for business with the chairman of the British Chamber of Commerce in China. That's at 6:30 a.m. London time. But first, a deep freeze and hot gas prices. We'll be discussing why freezing temperatures in the US have led to wild swings in the natural gas market. That's next. This is Bloomberg.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
Welcome back to Bloomberg Daybreak Europe. Now, US natural gas prices have been dipping as traders take profits. Continued freezing weather conditions across much of the United States had sent natural gas up as much as 35% on Monday. There have been similar price reversals in European gas prices. And we can get more on this international market with Bloomberg's Dan Murtaugh now. So, Dan, wild swings, really, when it comes to US nat gas prices. Talk us through them.
We've seen this huge Arctic blast come down from the north in the U.S., and that's done two things to the natural gas industry. One thing it's done is if you go out to like West Texas, Colorado, these places where there's lots of gas wells, it's freezing equipment at wells and pipelines and processing plants, and that's cutting off natural gas supply. And then at the same time, you're just seeing people all over the country need to add more heat. They're burning more gas to keep their house warm. They're running the electricity that's burning more gas at power plants. And so, you have a huge rise in demand pushed up against, cuts in supply. And you see these huge price increases. From January 16th to the 26th, the prices have almost doubled on the front month contract. And so, anytime you see something like that, you're going to start to have some real big market dislocations.
And just walk us through the international pricing dynamics here, because, of course, the war in Ukraine had been a massive factor for Europe.
Yeah, natural gas for ages had been a really sort of localized, decentralized markets. The U.S. natural gas market was one thing, Europe was its own thing, Asia was its own thing. But because of the rise of LNG trading, those have really kind of melded together. And as you mentioned, after Russia invaded Ukraine, Europe really relied on U.S. LNG imports to keep afloat. And so what that means now is, you have normally these LNG plants in the U.S., they buy their gas, they liquefy it, they ship it to Europe, they pack away a tidy little profit. But right now, these higher prices are signaling to them, hey, maybe we should instead supply our domestic buyers who are paying a little bit more, make sure that there's enough gas to go around. That, in theory, could eventually cut off supply to Europe. In reality, I think this is going to pass pretty quickly. You already look at the next month natural gas futures contract. It's significantly lower than the front month price. So this is probably a pretty quick event here. But over time, this is something that if you're in Europe, if you're in Asia, these American cold snaps are really going to be something that could affect your gas supply.
Okay. Dan, thank you so much. That's Bloomberg's Dan Murtaugh. Well, coming up, Goldman Sachs CEO David Solomon warns of a slower trajectory for talent growth in 2026. So we'll be hearing from him next. This is Bloomberg. Goldman Sachs CEO says he sees a slower trajectory for talent growth this year, even as he made an upbeat call on global markets as a deregulatory tone boosts optimism. David Solomon spoke exclusively to us about what the market looks like this year, with a number of big-ticket IPOs like SpaceX on the way.
The environment's very constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another, significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business.
The stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course, if there was a big exogenous event, it could slow it down. But I don't think that's the base case. But that doesn't mean we won't have some speed bumps along the way this year.
I think Wall Street shed about 10,600 jobs in combined, the big banks, last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall and its headcount. I understand our headcount plan.
Yeah.
And all we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. I point to our wealth management business, which scales with people all over the world.
The Goldman Sachs CEO David Solomon speaking exclusively to Bloomberg. Now to some other top stories we're following for you this morning. The UK Prime Minister Keir Starmer says that the public has given him a personal mandate to lead Britain for 5 years. Speaking to Bloomberg, Starmer vowed to complete a full term, signalling to his Labour rivals that he won't bow to pressure on his leadership, adding, quote, "It's a considerable mandate. I intend to deliver on that." The comments suggest that Starmer would argue only he has the legitimacy to hold the post of Prime Minister if he's challenged. Meanwhile, an industry survey has found that inflation in British shops rose to the highest level in almost 2 years as retailers grapple with higher costs. The British consortium says that prices of commonly purchased products climbed 1.5% in January from a year earlier, the fastest pace since February 2024. The British Retail Consortium says that energy costs and the hike to national insurance contributions, a payroll levy, continue to impact prices. And meanwhile, the UK government will announce a support package for pubs this week in a bid to help cushion the sector from business rates. Chancellor Rachel Reeves has been under pressure from the hospitality sector since she announced business rate reforms in last year's budget. The package is expected to be limited to pubs, with the rest of the sector, including hotels, restaurants and nightclubs, set to be excluded. And the controversial former FIFA president, Sepp Blatter, has advised football fans to stay away from America and this year's World Cup. The United States is co-hosting the tournament with Canada and Mexico this summer. Calls to consider a boycott are getting louder amid President Trump's immigration crackdown and a fraying relationship with Europe. Well, Well, those are some of our top stories this morning. Let's check in on these markets, shall we? We have stocks already powering ahead to near a record in the Asian session and futures pointing higher both here in Europe and stateside. So traders really looking through Donald Trump's latest tariff threats when it comes to South Korea. And in the next block, we'll be diving into that theme of trade. UK Prime Minister Keir Starmer heading to Beijing, heralding significant opportunities for British business ahead of that trip. And we're going to discuss what that might entail with the British Chamber of Commerce in China Chairman Chris Torrens. So that conversation coming up next. This is Bloomberg.
I truly believe we're in a once-in-a-generation build cycle in the energy industry. At Duke Energy, we're rebuilding that entire system, not over 80 years, but over a decade. We're investing $200 billion over the next decade to modernize the system and expand the capabilities for AI, advanced manufacturing, and to serve population growth. Our massive capital plan is estimated to have a $370 billion impact. Not only are we delivering power for our customers, we're also igniting the communities we serve.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks extend their rally as traders brush off Donald Trump's latest trade threats against South Korea. Gold powers higher above $5,000 an ounce. Shifting alliances. The EU and India sign a long-awaited trade deal in the face of President Trump's trade policies. And ahead of his trip to Beijing, UK Prime Minister Keir Starmer tells Bloomberg he sees significant opportunities for British business in China. And ahead of that trip, we have had Prime Minister Keir Starmer telling Bloomberg that he sees those opportunities in China. We've also had an interview with the Goldman Sachs CEO, David Solomon, saying that he's optimistic about the outlook for global markets this year. So we'll bring you that exclusive conversation with David Solomon. Well, it is 6:31 a.m. here in London, checking in on these markets, and we've got futures pointing higher on both sides of the Atlantic. As I say, Asian stocks already nearing a record. So traders looking through President Trump's latest trade threats, tariff threats on South Korea. Gold, though, powering higher, even higher, towards $5,100 an ounce. It already smashed through that $5,000 level for the first time. But Brent here, looking through the US weather, we talked about the impact on the natural gas market. Brent seems to be more focused on the supply-demand outlook, that supply will outstrip demand in the coming months. So Brent here at $65 a barrel, extending its losses. On the front pages this morning, let's turn to the Financial Times. They have President Trump signalling a shift in his administration's immigration crackdown as he seeks to quell the outrage over the killing of a man in Minnesota by federal agents at the weekend. And the Wall Street Journal also has this story, but it tracks the 48 hours that convinced Trump to pivot afterwards as Republican lawmakers and other allies raised concerns that he was squandering public support for his signature immigration campaign. Then, if we turn over to the UK, the Telegraph is focusing on China as Britain braces for Prime Minister Keir Starmer to head to Beijing. The Telegraph reporting that China hacked the mobile phones of senior Downing Street officials close to Boris Johnson, Liz Truss and Rishi Sunak for years. But the paper says it isn't exactly clear whether the hack included the phones of the Prime Ministers themselves. But still, this paper framing UK-China relations as a balancing act between security and economic opportunity. You can get a roundup of all of these stories and everything you need to know to get your day going by looking at today's edition of Daybreak, which, as ever, Terminal subscribers can find by going to DAYB Go on the terminal. Well, let's dive back into trade. The EU's Ursula von der Leyen and Antonio Costa are in New Delhi to mark a historic free trade deal, which Prime Minister Modi has hailed as a significant agreement. Bloomberg Chief Europe correspondent Oliver Crook is back for more. Ollie, why did these negotiations take so long? And is the fact that they're seemingly now over the line likely to provoke the wrath of President Trump?
Well, yeah, let's connect those two ideas. I think the question may not be why it took so long, but why did it happen now? And why did it happen only a couple of weeks after that Mercosur trade deal between the European Union and Latin America? And the answer is that after 12 months of Donald Trump and 12 months of a sort of tariff roller coaster, a roller coaster that does not appear to be ending, whether you look at what's coming to South Korea overnight, or you're looking at the sort of disagreements last week on Greenland and tariffs, basically the Europeans and India still facing a 50% tariff from the United States. The Europeans have put their trade deal with the United States on ice after the sort of spat on Greenland last week. They need to find the, bigger markets. They need to find stability across the world. And that is the ambition of this trade deal that, as you say, Lizzie, has been 20 years in the making. It will include more than 20% of the world population, more than 20% of the world GDP. And the hope here is to try to get access to the Indian market by European companies, namely on things like
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks extend their rally as traders brush off Donald Trump's latest trade threats with South Korea. Gold powers higher above $5,000 an ounce. Shifting alliances, the EU and India set to announce a long-awaited trade deal in the face of President Trump's trade policies. And ahead of his trip to Beijing, the UK Prime Minister Keir. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks extend their rally as traders brush off Donald Trump's latest trade threats with South Korea. Gold powers higher above $5,000 an ounce. Shifting alliances, the EU and India set to announce a long-awaited trade deal in the face of President Trump's trade policies. And ahead of his trip to Beijing, the UK Prime Minister Keir Starmer tells Bloomberg he sees significant opportunities for British business in China. Plus, the Goldman Sachs CEO says he's optimistic about the outlook for global markets this year. We'll bring you our exclusive interview with David Solomon. Well, a very good morning. Welcome to Tuesday. The picture in markets looks like this. We have futures powering higher stateside and on this side of the Atlantic. And already we're seeing Asian stocks near a record, so really brushing away President Trump's tariff threats. We also have seen gold powering past that $5,000 an ounce level already. Now it's reaching for $5,100 an ounce. So the sense that the risk is out there remains. But look at oil, looking past the weather in the US and focusing instead on the forecast that supply will continue to outstrip demand. So Brent extending its drop to $65 a barrel. Turning to the risk events on the docket for today, we have that EU-India summit taking place after decades of negotiations. It looks like finally this deal that Ursula von der Leyen, the European Commission President, has said is the mother of all deals, as some have called it, could be getting over the line. So we'll bring you all of that. But then the focus turns back to earnings. Stateside, we have Boeing reporting what's expected to be profit boosted by better than expected deliveries, as we heard yesterday on this show from the Ryanair CFO. And then after markets close in Paris, we turn to LVMH. Sales expected to have taken a bit of a hit this year, but things likely to pick up in 2026 thanks to this raft of new designers. Well, we've got a lot on the agenda. Let's set you up for the day ahead. We begin with President Trump's latest tariff threats, 25% levies on goods imported from South Korea. Trump accusing Seoul of dragging its feet on implementing last year's trade deal. Let's get the Asia market reaction now with Winnie Xu. What's happening where you are, Winnie?
Yeah, morning, Lizzie. We are seeing that investors very quickly shrugging off those tariff risks. As you can see that the benchmark Kospi here actually dipped about 1% at the open, but very quickly taking that U-turn and now rising more than 2%. Investors are still seeing this just as a negotiation technique from President Trump, but actually a very good dip buying opportunity. As you also flip the board and take a look at how the Korean won is actually under still a bit of a pressure because investors still see Trump's agenda as more focused on that weakening trend of the dollar. Hyundai Motor here fluctuating a little bit because auto is actually one of the key sectors that was directly targeted by Trump's tariffs, along with pharma and Lombard. When it comes to what's really driving that the gains in the Kospi index is actually SK Hynix here, up about 8%. And that's coming after a local media saying that the SK Hynix is actually the sole provider of the advanced memory HBM3E chips for Microsoft's Maya chips, and that is really driving gains here and hyping up the earnings expectation ahead on Thursday. Now flip the board and take a look at the broader Asia market because yes, overall risk on sentiment ahead of earnings, but when it comes to the Japanese yen weakening just slightly after that recent advance, and investors are still quite cautious in terms of the intervention risks. But that weakness in the yen is slightly helping the Japanese stocks here up 0.8%. Chinese stocks up modestly, and that's being helped by those industrial profits number showing the first yearly increase since 2021 thanks to the effort of anti-involution. Back to you, Lizzie.
Okay, Winnie, thank you so much. That's Winnie Su in Hong Kong. Well, let's dive into those markets now. Traders increasingly unfazed, as Winnie says, by Trump's tariff tactics, betting that he won't actually follow through on harsh penalties, often dangled as a means to win concessions. Let's bring in Bloomberg MLive strategist Mark Cranfield for more now. Mark, why don't Korean stocks seem to care about Trump's new tariff threats? Good morning.
Well, good morning. As Winnie was saying in the build-up there before, the two key companies, SK Hynix and Samsung, they are the drivers of the Korean market, have been for some time, and they are clearly two companies who are not really going to be affected. Even if President Trump does go ahead with more tariffs on Korea, the sectors which he's targeting will not affect AI themes. It won't affect the chip sector. And these two major companies have been the ones which have been really buoyant and bringing in all the investor attention and driving the Kospi to record high after record high. So as long as those kind of companies are unaffected, it's not going to matter too much to the overall sense of the market. In fact, by some measures, the kinds of companies, autos and pharmaceuticals, that could be affected by potential tariffs is less than 10% of the whole market anyway. And that's not really where major investors are too concerned about. Plus, you've got, in the precious metals space, there was a bit of a wobble in silver and gold. They've recovered very smartly. There seems to be some correlation in the sentiment between what's driving precious metals and what is also driving the Korean equities as well. So as long as those two are pretty much going hand in hand, there's nothing too much for investors to get worried about as far as the Korean stocks are concerned. At some point, it will be overdone. You'll get too overheated. But for now, people are reassured that the AI theme really has a long way to go. The deal today between Hynix and Microsoft is a pretty big deal. It adds a lot more value to the company, and people are buying into that. And for now, they're able to look past anything to do with the tariff threat.
And Mark, as Winnie mentioned, the yen's also a touch weaker against the dollar today. What's the next trigger for a potential yen intervention?
It really comes down to this auction that we have tomorrow. So just a week ago, people were really getting concerned about chaos in the long end of the Japanese market, particularly because tomorrow there's a 40-year JGB auction. That's the longest part of the yield curve. They only do this one about 6 times a year. The auctions are not on a regular basis. They're notoriously difficult to be done. The pricing is very awkward on these. Demand is very low. So there is certainly a chance that the JGB auction tomorrow will not be very successful. We'll get a spillover in Japanese bond selling, which will go back into the yen. That's what we saw last week as well. When there was pressure on the yield curve, it translated into a weaker currency. So it could well be that the Japanese authorities are holding back slightly. They will probably know that the rate checks that were done by the Federal Reserve last week were very helpful, but in themselves, they're not going to be enough to turn the yen around. They'll need to do more. The Japanese authorities will need to step up with stronger language or direct intervention in the market. But they probably want to see what happens with the auction tomorrow. In case there's a really negative fallout, then they can step in and enter the market at a more reasonable level. If they do it today, they could be wasting their ammunition and it could all backfire. So let's see where the auction goes tomorrow. It's probably the biggest event in the Japanese market this week.
All right, we'll have to get you back to talk about it. That's Mark Cranfield, our MLive strategist. Thank you. Well, turning back to trade, just now the Indian Prime Minister Modi has said that his country and the EU have signed a, quote, significant pact today after nearly 2 decades of negotiations. The partnership aims to create closer economic ties to offset the impact of President Trump's global tariffs. Let's speak now to Bloomberg's chief Europe correspondent, Oliver Crook. Ollie, what are the terms likely to be?
Yeah, so Lizzie, I mean, this is the mother of all trade deals, of all deals, if you believe Ursula von der Leyen. That's not a quote for Donald Trump. This sort of uncharacteristic characterizing of the deal by Ursula von der Leyen. And I think that sort of the key figure for this is 20. It's about 20% of global GDP, almost more than 20% of the global population. It's been 20 years in the meeting, and that is what this trade deal that they're hoping to get sort of over the line today, end negotiations on between the EU and India. And the key thing here is going to grant market access to a lot of different products, most of the products that are traded between the two blocs. For the Europeans, they're very keen to get some of their cars into the Indian market. India has a tariff of about almost 110% at the highest level on cars. We understand from reporting that that might come down to about 40%. There would still be a cap. There are, of course, some debates also within the European side about giving market access to Indian steel. But again, for both of the sides, this comes at a very conspicuous time, just a couple of weeks after the EU has signed that key trade deal with Mercosur in Latin America, because both the Indians and the Europeans need to diversify. The Indians are still facing a 50% tariff from Donald Trump. The Europeans are now still have their sort of trade deal with the United States on ice after that sort of debacle with Greenland just last week. And so everybody is trying to sort of strengthen their trading relationships across the world. In terms of what the actual economic impact will be for the Europeans, Allianz has crunched the numbers here, and I'll go through some of them here. It could mean an additional $20 billion worth of exported goods from the European Union to India. It could boost the European GDP, not very significantly, by only about 10 basis points, about 0.1% annually. But I think key here, Lizzie, is that it could offset nearly a quarter of U.S.-related export losses from higher U.S. tariffs from the Europeans over to India. So again, front and center here is trying to diversify away from the United States, diversify away from China for the Europeans, and striking a much more pragmatic approach with both of these trade deals coming in quick succession after being more than 20 years in the making.
OK, so that's the trade side, Ollie. But what more do we know about the proposed security and defence agreement?
Yeah, so that'll be another sort of segment of this, and well, Ursula von der Leyen is there in India to try to have these sort of discussions. And really key for the Europeans is getting obviously market access for a lot of goods, but they'd also like to get some of their defense goods into India. India, for example, and this will serve the European interests geopolitically, they buy a lot of their military equipment from Russia. Of course, that is something that the Indians are also looking to diversify away from. We had some reporting out a couple of weeks ago of them potentially looking at buying some German submarines. So that will be one of the focuses. Longer term, this could pave the way for getting, for example, joint military exercises, potentially for India to join some of the European defense programs, which gives them favorable pricing on loans and things like that. But of course, this is not all sort of a sort of natural geopolitical alignment. For the Europeans, they're very concerned by the fact that, of course, India is one of the great funders of the war in Ukraine by buying all of those fossil fuels from the Europeans. And we understand in the language for this sort of pact and this agreement on military defense pact between the Europeans and India, they could not get to a consensus on how to refer to Ukraine and to the war in Ukraine. So while it is sort of imperfect geopolitically and their interests are not 100% aligned, I think it shows that the European Union and the Indians are both taking a much more pragmatic approach in the face of the difficulties that are being provoked by the United States and Donald Trump.
Ollie, thank you so much. That's Bloomberg's chief Europe correspondent, Oliver Crook, who'll be back with us later on this hour. Well, turning to the US now, President Trump has signalled that he'll make changes to his administration's deportation crackdown. Trump's border enforcer in Minnesota, Greg Bovino, is leaving following a public outcry over the killing of 2 US citizens by federal agents. Border Chief Tom Homan is being sent to Minneapolis to ease tensions. Let's bring in Bloomberg Deputy Managing Editor Balash Pence for more now. Balash, what led to this dramatic pivot from President Trump?
It is indeed a dramatic pivot, as you said, Lizzie, and taken together with the fact that the president had conversations with Governor Walz and Mayor Frey of Minneapolis, and he came out of those conversations talking about how positive they were. It's clearly an attempt by the administration to de-escalate and to kind of calm the nerves around Minneapolis. But what it really tells us is just how dramatically the landscape, the political landscape around immigration has shifted. Just remember, ever since Donald Trump came on the scene, immigration has been his calling card, maybe his strongest political tool. Every time he ran into challenges, he would turn to immigration as a topic that was very favorable to him. Now that calculation has changed and it has become a liability, we've seen a groundswell of opinion against what's happened, against the sort of disturbing scenes that we've seen coming out of Minnesota over the past few weeks. And now there's a risk that there's a growing opposition even within the Republican Party, even among Republican voters, against these ICE operations. So the president is trying to take back the initiative and de-escalate a little bit when it comes to immigration in Minneapolis.
Well, yes, where does it leave his immigration strategy in the year of the midterms and the risk of a government shutdown, Balázs?
Well, that's a really interesting question because the shutdown, of course, is the strongest political tool that the Democrats have right now as the party being out of power. And as of right now, there's no indication that even this de-escalatory move by the president would change the positions of either party there. They are both dug in right now. So as of now, it seems like we're still headed for a shutdown at the end of this week.
OK, Bloomberg Deputy Managing Editor Balázs Pence, we thank you so much. Well, still to come here on Daybreak Europe, the UK Prime Minister seeks to reinvigorate trade ties with China. So we'll discuss what that means for business with the chairman of the British Chamber of Commerce in China. That's at 6:30 a.m. London time. But first, a deep freeze and hot gas prices. We'll be discussing why freezing temperatures in the US have led to wild swings in the natural gas market. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, US natural gas prices have been dipping as traders take profits. Continued freezing weather conditions across much of the United States had sent natural gas up as much as 35% on Monday. There have been similar price reversals in European gas prices. And we can get more on this international market with Bloomberg's Dan Murtaugh now. So, Dan, wild swings, really, when it comes to US nat gas prices. Talk us through them.
We've seen this huge Arctic blast come down from the north in the U.S., and that's done two things to the natural gas industry. One thing it's done is you go out to like West Texas, Colorado, these places where there's lots of gas wells. It's freezing equipment at wells and pipelines and processing plants, and that's cutting off natural gas supply. And then at the same time, you're just seeing people all over the country need to add more heat. They're burning more gas to keep their house warm. They're running the electricity that's burning more gas at power plants. And so, you have a huge rise in demand pushed up against, cuts in supply. And you see these huge price increases. From January 16th to the 26th, the prices have almost doubled on the front month contract. And so, anytime you see something like that, you're going to start to have some real big market dislocations.
And just walk us through the international pricing dynamics here, because, of course, the war in Ukraine had been a massive factor for Europe.
Yeah, natural gas for ages had been a really sort of localized, decentralized markets. The U.S. natural gas market was one thing, Europe was its own thing, Asia was its own thing. But because of the rise of LNG trading, those have really kind of melded together. And as you mentioned, after Russia invaded Ukraine, Europe really relied on U.S. LNG imports to keep afloat. And so what that means now is, you have normally these LNG plants in the US, they buy their gas, they liquefy it, they ship it to Europe, they pack away a tidy little profit. But right now, these higher prices are signaling to them, hey, maybe we should instead supply our domestic buyers who are paying a little bit more, make sure that there's enough gas to go around. That, in theory, could eventually cut off supply to Europe. In reality, I think we're probably this is going to pass pretty quickly. You already look at the next month natural gas futures contract. It's significantly lower than the front month price. So this is probably a pretty quick event here. But over time, I mean, this is something that if you're in Europe, if you're in Asia, these American cold snaps are really going to be something that could affect your gas supply.
Okay. Dan, thank you so much. That's Bloomberg's Dan Mortar. Well, coming up, Goldman Sachs CEO David Solomon warns of a slower trajectory for talent growth in 2026. So we'll be hearing from him next. This is Bloomberg. The Goldman Sachs CEO says he sees a slower trajectory for talent growth this year, even as he made an upbeat call on global markets as a deregulatory tone boosts optimism. David Solomon spoke exclusively to us about what the market looks like this year, with a number of big-ticket IPOs like SpaceX on the way.
The environment's very constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another, significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business.
The stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course, if there was a big exogenous event, it could slow it down. But I don't think that's the base case. But that doesn't mean we won't have some speed bumps along the way this year.
I think Wall Street shed about 10,600 jobs in combined, the big banks, last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall and its headcount. I understand our headcount plan.
Yeah.
And all we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. I point to our wealth management business, which scales with people all over the world.
The Goldman Sachs CEO David Solomon speaking exclusively to Bloomberg. Now to some other top stories we're following for you this morning. The UK Prime Minister Keir Starmer says that the public has given him a personal mandate to lead Britain for 5 years. Speaking to Bloomberg, Starmer vowed to complete a full term, signalling to his Labour rivals that he won't bow to pressure on his leadership, adding, quote, "It's a considerable mandate. I intend to deliver on that." The comments suggest that Starmer would argue only he has the legitimacy to hold the post of Prime Minister if he's challenged. Meanwhile, an industry survey has found that inflation in British shops rose to the highest level in almost 2 years as retailers grapple with higher costs. The British consortium says that prices of commonly purchased products climbed 1.5% in January from a year earlier, the fastest pace since February 2024. The British Retail Consortium says that energy costs and the hike to national insurance contributions, a payroll levy, continue to impact prices. And meanwhile, the UK government will announce a support package for pubs this week in a bid to help cushion the sector from business rates. Chancellor Rachel Reeves has been under pressure from the hospitality sector since she announced business rate reforms in last year's budget. The package is expected to be limited to pubs, with the rest of the sector, including hotels, restaurants and nightclubs, set to be excluded. And the controversial former FIFA president, Sepp Blatter, has advised football fans to stay away from America and this year's World Cup. The United States is co-hosting the tournament with Canada and Mexico this summer. Calls to consider a boycott are getting louder amid President Trump's immigration crackdown and a fraying relationship with Europe. Well, those are some of our top stories this morning. Let's check in on these markets, shall we? We have stocks already powering ahead to near a record in the Asian session and futures pointing higher both here in Europe and stateside. So traders really looking through Donald Trump's latest tariff threats when it comes to South Korea. And in the next block, we'll be diving into that theme of trade. UK Prime Minister Keir Starmer heading to Beijing, heralding significant opportunities for British business ahead of that trip. And we're going to discuss what that might entail with the British Chamber of Commerce in China Chairman Chris Torrens. So that conversation coming up next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks extend their rally as traders brush off Donald Trump's latest trade threats against South Korea. Gold powers higher above $5,000 an ounce. Shifting alliances. The EU and India sign a long-awaited trade deal in the face of President Trump's trade policies. And ahead of his trip to Beijing, UK Prime Minister Keir Starmer tells Bloomberg he sees significant opportunities for British business in China. And ahead of that trip, we have had Prime Minister Keir Starmer telling Bloomberg that he sees those opportunities in China. We've also had an interview with the Goldman Sachs CEO, David Solomon, saying that he's optimistic about the outlook for global markets this year. So we'll bring you that exclusive conversation with David Solomon. Well, it is 6:31 a.m. here in London, checking in on these markets, and we've got futures pointing higher on both sides of the Atlantic. As I say, Asian stocks already nearing a record. So traders looking through President Trump's latest trade threats, tariff threats on South Korea. Gold, though, powering higher, even higher, towards $5,100 an ounce. It already smashed through that $5,000 level for the first time. But Brent here, looking through the US weather, we talked about the impact on the natural gas market. Brent seems to be more focused on the supply-demand outlook, that supply will outstrip demand in the coming months. So Brent here at $65 a barrel, extending its losses. On the front pages this morning, let's turn to the Financial Times. They have President Trump signalling a shift in his administration's immigration crackdown as he seeks to quell the outrage over the killing of a man in Minnesota by federal agents at the weekend. And the Wall Street Journal also has this story, but it tracks the 48 hours that convinced Trump to pivot afterwards as Republican lawmakers and other allies raised concerns that he was squandering public support for his signature immigration campaign. Then, if we turn over to the UK, the Telegraph is focusing on China as Britain braces for Prime Minister Keir Starmer to head to Beijing. The Telegraph reporting that China hacked the mobile phones of senior Downing Street officials close to Boris Johnson, Liz Truss and Rishi Sunak for years. But the paper says it isn't exactly clear whether the hack included the phones of the Prime Ministers themselves. But still, this paper framing UK-China relations as a balancing act between security and economic opportunity. You can get a roundup of all of these stories and everything you need to know to get your day going by looking at today's edition of Daybreak, which, as ever, Terminal subscribers can find by going to DAYB Go on the terminal. Well, let's dive back into trade. The EU's Ursula von der Leyen and Antonio Costa are in New Delhi to mark a historic free trade deal, which Prime Minister Modi has hailed as a significant agreement. Bloomberg Chief Europe correspondent Oliver Crook is back for more. Ollie, why did these negotiations take so long? And is the fact that they're seemingly now over the line likely to provoke the wrath of President Trump?
Well, yeah, let's connect those two ideas. I think the question may not be why it took so long, but why did it happen now? And why did it happen only a couple of weeks after that Mercosur trade deal between the European Union and Latin America? And the answer is that after 12 months of Donald Trump and 12 months of a sort of tariff roller coaster, a roller coaster that does not appear to be ending, whether you look at what's coming to South Korea overnight or you're looking at the sort of disagreements last week on Greenland and tariffs, basically the Europeans and India is still facing a 50% tariff from the United States. The Europeans have put their trade deal with the United States on ice after the sort of spat on Greenland last week. They need to find bigger markets. They need to find stability across the world. And that is the ambition of this trade deal that, as you say, Lizzie, has been 20 years in the making. It will include more than 20% of the world population, more than 20% of the world GDP. And the hope here is to try to get access to the Indian market by European companies, namely on things like machinery. Obviously, they'd like to sell cars there. India has had very, very high tariffs on cars and automobiles. The Indians would like to sell textiles, minerals, and other things into the European Union. This is not quite as expansive and as free a trade agreement as you see with Mercosur, but it's certainly a significant step forward and an important signal for the European Union, trying to diversify away, A, from the United States, but B, also from China. There's also a security and defense pact that the Europeans are signing with the Indians, which will also serve their geopolitical interests, because right now India buys a lot of its military kit from the Russians. They'd like to see some of that being bought from the Europeans. We had some reporting out a couple of weeks ago that the Indians were looking to buy, for example, German submarines. But when we think about the impact of this particular...
ओए गाइस, ये क्रूड ऑयल ध्यान रखना ब्रेकआउट के करीब फिर से आ गया है. एक इन्वर्टेड हैमर कैंडल लग रहा है, इन्वर्टेड हैमर फॉर्मेशन लग रहा है. लेट्स सी क्या ये ब्रेकआउट करेगा इस बार या नहीं. अपने एसएल का ध्यान रखना, स्ट्रिक्ट एसएल रखना. जाएगा तो वेट नहीं करना है, निकल जाना है. ये ब्रेकआउट रीटेस्ट करता नहीं करता. पहले आया था यहाँ पर, ब्रेकआउट तो किया था, रीटेस्ट नहीं कर पाया. फिर से उसी ब्रेकआउट जोन पर है. कैंडल तो मुझे लग रहा है ब्रेकआउट कर ही देगी. रीटेस्ट इंपॉर्टेंट है, करता है या फिर नहीं. अगर रीटेस्ट किया तो याद रखना यहाँ से वापस बाइंग स्टार्ट हो जाएगी सेम जोन से. कल से इसी जोन पे था. कल तो सेलिंग आ गई थी, इंडियन मार्केट क्लोज था, फॉरेक्स में आ गई थी. एक बार सेलिंग आई, दूसरी बार सेलिंग आई, थर्ड टाइम फिर सेलिंग आ गई थी. फोर्थ टाइम थी. दिस इज अ फिफ्थ टाइम. एक इन्वर्टेड हेड एंड शोल्डर दिख रहा होगा ये, अगर ब्रेकआउट रीटेस्ट सक्सेसफुल हुआ तो. नेक्स्ट फिर सीधा 62.50 एंड 63.50 ये नेक्स्ट रेजिस्टेंस. सेल मत करना यहाँ पर, ठीक है. फिर से सेल मत कर देना. फर्स्ट टाइम एक सेलिंग आई थी, लो बना था. दूसरे बार एक लोअर लो बना था. तीसरे बार एक और लोअर लो बना था. तो कंटिन्यूसली लोअर लो बन रहे थे, तो एक और सेलिंग डेफिनेटली थी यहाँ पर एक्सपेक्टेड. बट दिस इज हायर लो. लास्ट लो के कंपैरिजन में ये हायर लो है. इसका मतलब सेलर काफ़ी वीक हो गए, तो फिर से सेल मत करियो. ब्रेकआउट होगा तो रीटेस्ट करेंगे. फेक ब्रेकआउट हुआ तो वापस सेल तभी करेंगे. अब वापस से यहाँ पर अब डायरेक्टली सेल नहीं कर सकते. ना 15 मिनट में ही होगा ब्रेकआउट रीटेस्ट अगर होता है तो, दोनों टाइम फ्रेम का.
Into CoreWeave, they're going to buy CoreWeave's common stock at 80.
Helping them out a little bit and showing faith in what they're trying to do. They're going to have to go and raise this money themselves. The market will basically sort this out. This isn't circular financing, was his argument.
And it felt like the CoreWeave CEO, Michael Intraday, came back and said, look, it's a drop in the ocean compared to the amount of infrastructure spend that we're having to do. But where do they strategically align? Why dig even deeper into their pockets to give money to CoreWeave at this time?
Yeah, I mean, Jensen said that this is really a technology partnership, that CoreWeave is a very early adopter of NVIDIA systems, tends to do them in the way that NVIDIA thinks they should be done. And this kind of serves as like a reference platform, so they like that. And also, he just thinks there's a lot of demand out there, so the faster we can go, the better things get.
There's also CPU. Put the GPUs to one side. What Jensen Huang really wanted to emphasize, as far as I can tell from reading the transcript of your conversation, is that Vera CPU is now going to be a standalone infrastructure product. CoreWeave's relevant here. Just explain what he told you on the phone.
Yeah, I mean, as you know, Jensen never says anything without having carefully thought it through. So he really wanted to deliver a message that this is a standalone product as well as being part of the infrastructure. You remember previous versions have been sort of integrated into NVIDIA's computers.
Right, one of 6 chips.
Right, now, hey, you can use it on your own if you want, and that makes it a direct rival to some, big products.
And real quick, Caro, AMD under pressure, Intel also under pressure. Ian, is that a surprise?
It shouldn't be, no.
Right.
Ian King, we thank you so much for breaking down a really important story for us. And look, there's another one in the world of AI semiconductors. Microsoft is rolling out the second generation of its own AI chip. So see, shares are up about a percentage point, not moving much on the news that is just dropping. And Bloomberg's Matt Day is the person who covers Microsoft for us, breaks that news. How important is it that yet another company is building their own AI chips?
Well, for Microsoft, it's really important. They got a bit later jump than their biggest rivals, Amazon and Google, in building their own silicon. They see this as an important way to reduce costs, to find another source of availability. So this is going to be a really big test for their chips unit and for their cloud business.
We write in our Bloomberg story that it could eventually provide an alternative, right, to NVIDIA's hardware. But the reality is, like all the other hyperscalers, Microsoft still depends on NVIDIA. Just explain its scale of its compute and what it does rely on NVIDIA for.
So NVIDIA is the workhorse that powers, the vast majority of the AI workloads in Microsoft's data centers. If you're using OpenAI as a ChatGPT consumer, chances are you're pinging an NVIDIA chip running in some Microsoft data center somewhere. Now, like everybody in the industry, Microsoft would love to have some other options. Hence this effort with Maya to try to build a better mousetrap, one more suited for their data centers and one that ideally could reduce some of their costs in the long term.
Tell us how it's rolling out, where it's rolling out first, and ultimately when customers are going to be using it.
So it's not clear when customers are going to get their hands on this. The first units are live today, Microsoft tells us, in data centers near Des Moines, Iowa. More are coming to the Phoenix area, but we don't have a date yet for what a wider rollout looks like, or sort of crucially what availability looks like. Is this going to be a global rollout? Is this more of a kind of R&D step, and future chips are going to sort of carry the mail for them? So kind of yet to be seen how broad they take this one.
Bloomberg's Matt Day out of Seattle with the latest on Microsoft's latest AI chip efforts. Let's talk through the market reaction to all of this with Kim Forrest, CIO and founder of Boca Capital Partners, and go back to the NVIDIA CoreWeave deal. It's a driver in markets this morning. The explanation from NVIDIA CEO Jensen Huang is that it is not circular financing because it is a small portion of CoreWeave's overall capital requirements. Are you concerned about that, and what do you make of his response?
Sure. Well, of course, it's circular financing. CoreWeave, as well as everybody else, even Microsoft, is a big customer of NVIDIA's. So if NVIDIA is investing in its customers, by definition, it's circular financing. It is a good point that, $2 billion is probably a rounding error for NVIDIA at this point, but it's also true that CoreWeave has to prove itself to the market and raise its own money.
Kim, we're saying circular financing, the term, as a bad word, a bad phrase. Is it?
Right. Yeah, kind of. Jensen points out that CoreWeave is going to be one of their reference accounts. What you ideally want is in a reference account is somebody that has worked with you, is kind of pure, and has no inside kind of relationship with what they're recommending, other than they use the product, they love the product. And, this kind of sullies the relationship that CoreWeave has so much investment from the company that they're giving a reference for.
Meanwhile, many would say it's just because we cannot build compute fast enough. And in many ways, NVIDIA, more than anyone, sees the opportunity and is just piling money behind this to be able to get the end demand that it needs for the products that it's currently building, Kim. Are we likely to see, through these sorts of technological partnerships as well as financial partnerships, actually us get the compute out at the time of speed that we need?
Sure. Well, we're going to see them until we don't. I'm not trying to rain on anybody's parade, but at this point, it's all kind of, up in the air. Right now, there is a huge demand for compute. But like everything else in the world, somebody's going to overbuild, and it's going to, be jarring and disappointing. I'm not saying that that's any time in the future. I'm just pointing out the obvious, that, yes, this is a very symbiotic world with customers and providers and competitors all kind of working in the same pool. It's messy and it's like real life, because it is. But, just be warned that this is not, trees don't grow, well, trees grow into the sky, but not forever. We'll put it that way.
Well, they're not growing into the sky today for Intel and AMD, because both of them are under pressure that maybe here's Jensen coming for their piece of the pie, the CPU part of the pie that everyone was very excited for them. Indeed, Intel of late in the run-up in their stock. Does Vera brand the CPU on its own prove that it's a key competitive to them too?
Well, I think at first it's going to, work in its own environment, and it may become a competitor. Sure. I mean, I think the takeaway from all these announcements over the last, 48 hours is that everybody's innovating. And that is excellent. I love competition. I'm a capitalist. Innovate, try to outcompete, do it, live that way. But the fact of the matter is, the CPUs that are the workhorses in just plain old cloud computing aren't necessarily going to be interesting or aren't necessarily going to look to NVIDIA. NVIDIA loves the highest priced product. That's what it does. And I'm sorry, the workhorse people need reliability. They need it to look the same across their platform. They need a lot of stuff that a new CPU chip isn't necessarily going to be interesting to them. Now, in the world of AI data centers, sure. But in the old-fashioned ones that are going to have to persevere for decades, I don't know that that's really a competitor, NVIDIA.
That's an interesting observation, because the GPUs in the AI context are ARM-based. And so if you're running those GPUs with x86, you're going to have to do some special software work to make them match. Let's put that to one side. It is a massive week in the world of technology from earnings alone. We also have a Fed meeting on Wednesday. Of those names that are reporting this week, what are you most concerned about, and what do we need to be looking for in the earnings context?
Well, how are things looking in the future? I don't really even care about how things looked for last quarter, I have to tell you. I'm looking for the next 6 months. And I think especially on more consumer-leaning things like Apple, that might be, the focal point for all investors, is what new products are driving consumers to the company, and are they meeting demand? That whole thing about how in demand are consumer items. Microsoft has a little special issue. I think there's a lot of concern that AI, maybe Claude, is going to replace a lot of software packages that make businesses run. I don't know how true that is, but I think we're going to get a glimpse into how popular, or whether or not businesses are paying up for enterprise licenses, and that's always a concern.
Kim Forrest, CIO, founder of Boca Capital Partners. Thanks for joining us across the spectrum of earnings and semis today. Coming up, we're going to the world of quantum. IonQ CEO Niccolo de Masi is going to be joining us. How his company has just bought yet another, quite the acquisition spree. We talk about why he wants to get into semiconductors. This is Bloomberg Tech. IonQ, well, it's agreed to buy US-based chip foundry Skywater Technology for around $1.8 billion. Shares on the downside for IonQ now. They have been up earlier. We're seeing Skywater up more than 5.8%. It's a cash and stock deal, and it's the largest in quite the string of recent acquisitions by the quantum computing firm IonQ. Let's talk to its CEO now, Niccolo De Masi. What does having a US-based chip foundry add to the speed of your own technology?
It actually does three exciting things for IonQ. The first is that it accelerates our entire roadmap. So we talked this morning on a public webinar, sort of earnings call style, about the fact that it's going to bring in the cycles of R&D, design, and packaging iteration we do to build our quantum computing chips and hence our full fault-tolerant machines quite considerably. We're moving things in by about a year on our 2 million qubit chip, and we're moving full fault-tolerant chips forward into 2028. Where we'll have them ready for scale-up by the end of the year. What's exciting also is this is a big bet for us on what's called the merchant supplier play in the quantum industry. So IonQ already sells our atomic clocks to a number of quantum computing companies in the US. This is going to expand our ability to supply the quantum industry. Our photonic interconnect quantum networking business is also built to cater for multiple quantum computing paths and modalities. And last but not least, of course, it's a big spread bet on the U.S. semiconductor manufacturing, tailwind that I think is already being experienced for critical industries as we rethink through supply chains, security, and the importance of keeping everything domestic to ensure security.
Well, does that help build and leverage the relationships you already have with the US government, for example? Is that an area that you think is going to drive growth?
Oh, for sure, the U.S. government's a very important partner, and the Department of War, of course, is very important. Skywater obviously does a lot of work, not only for the quantum industry as a whole, where I would argue they are far and away the leading, if not only, quantum foundry. But Skywater also does work more broadly in classified programs, as does IonQ. And so there's plenty of synergies on that vector alone. We look forward to doing more for our nation's government, classified and not. We look forward to doing more for our nation's Fortune 500 companies. And this is a relationship we're really excited about because it increases the velocity and the frequency with which we can spin wafers across all of our product generations, which means the further out we're talking, the more room there is to move things forward. And you're seeing us continue to spend money to move things to the left on our roadmap and win this geopolitical space race of our era.
Niccolo, continuing to spend money. There's a lot of emphasis that this is Skywater with US-only operations. Do you look at Europe and other jurisdictions and give yourself backing to go out and do another deal if you need to have a similar footprint and presence in a different market or geography?
Well, Skywater has a tremendous amount of upside capacity that we can tap into here, not just on the design and engineering side, but on actual manufacturing. So we did this deal because we believe that manufacturability is paramount. Our ambition, as I think you both know, is to be both the NVIDIA and the Cisco, if you will, of the quantum computing and quantum networking and security space. And so our full quantum platform, networking, sensing, security, and computing all has foundry requirements, all has semiconductor manufacturing requirements. What this deal does is it improves certainty, brings forward the roadmap, and of course, make sure that we have industry-leading costs. So I think this is going to be enough capacity for global production. Skywater focuses on high security, classified program work and U.S. government work, and that's usually a standard that's accepted very internationally for the Five Eyes, NATO, and our allies.
Niccolo, in the global quantum race, how do you stack the US as a leader in field against the prospects of Europe and what you see being worked on in Asia?
Well, I fancy IonQ's chances, most and first of all. I think that beyond IonQ, there's a very vibrant ecosystem in the US, and of course there is in Europe. The geopolitical race is, I think, very much between the US and our allies and what's going on in China, to be honest. And this is, of course, of paramount strategic importance not just on the computing side, but also on the quantum security side. These are all solutions that IonQ provides. We're the only quantum platform company in history. And as you both know, we already have a strong foothold in Oxford, England, Geneva, Switzerland, and Seoul, Korea, with our offices that continue to expand to ensure that we're able to not just deliver those solutions, but deliver them in the right global and local way across government and commercial needs in every one of our allies.
Well, that was the other big deal that you did, Oxford Ionics, quantum chip technology that you purchased. And I'm interested in how the relationships, though, going back to Skywater, are going to continue, because they also serve other quantum competitors of yours. Will they continue to do so?
Absolutely. We are steadfastly dedicated to ensure that the quantum industry prevails. We respect everyone's pathways to market. At the same time, as I mentioned a couple minutes ago, IonQ already is a merchant supplier on our own. We supply atomic clocks and photonic interconnects to the industry and networking equipment. And so Skywater will be taking our existing merchant supplying business and accentuating, deepening, and broadening that with, of course, their chips business. So rest assured, we see this very much as a bet on U.S. quantum, our allies' quantum, the quantum industry's supply chain needs, fulfilling those securely and at scale. And at the same time, in a walled-off manner, IonQ's own roadmap, of course, will also be accelerated and its supply chain domestically assured.
Niccolo, very quickly, you said that this brings things forward by a year. There are people that just aren't familiar with quantum computing. How real is this going to be in the real world, and when?
Well, we've been saying since we completed the acquisition of Oxford Ionics that full fault-tolerant gate model quantum computing is going to happen by the end of this administration. This transaction obviously accentuates that, underwrites that, and assures that. And so I think you're going to see, in the next 3 years, everything that we have promised on our roadmap come good, and hopefully then some. The reason why this is so exciting for us is that with Skywater, we can make quantum computing a mass market reality. And we can do that at a price point that's accessible, not just for governments, but also Fortune 500 companies. And that's very much our goal, to build the winning quantum ecosystem across all solutions and product family offerings that IonQ has, security, sensing, networking, and computing.
IonQ CEO Niccolo de Masi, it's great to have you back on the show. Thank you very much. Now, coming up, the EU is now going after Grok's deepfakes. We have more on that next. This is Bloomberg Tech. The pressure's building on Grok, xAI, and Elon Musk's AI chatbot. The European Union says it's probing X over concerns that it didn't prevent its chatbot from generating deepfake images that, quote, may amount to child sexual abuse material. Bloomberg's London-based tech editor, Olivia Solon, joins us. Olivia, what's the need to know here from the EU probe side of this?
Well, it's another day, another investigation into X from the EU. This time, it was about whether or not X did a sufficient risk assessment to prevent harmful outputs from Grok before deploying it across the EU. This is a legal requirement under the Digital Services Act, which is a kind of set of rules around illegal and harmful content. And so, there's quite a long list of investigations of X at the moment within the EU, but this certainly adds to it.
I mean, you mentioned France has also been looking into it, Ofcom in the UK where you sit, India. But Olivia, X's response is they've taken the necessary steps in some way. Of course, it's a unit of xAI. And this again builds tensions between the US and the EU in some government manner.
Right. I mean, this has been a bit of a flashpoint in the sort of debate over free speech and control over big tech between DC and Europe. Clearly, I've been kind of checking to see if there's been a response so far from either Elon Musk or JD Vance or Trump on this particular announcement. So far, I haven't seen anything, but I'm sure it'll be something that will come up in the coming days. The Trump administration has been very critical of this, of the EU in trying to police content on these platforms and sees it as a free speech violation.
We just showed X's statement, but it was a previous statement on how they go about removing illegal content, including child sexual abuse material. Very quick, 15 seconds of it. Does the EU probe have teeth?
It does. I mean, they can fine as much as 6% of global annual revenue if it's found to be in violation of the DSA.
And already, they are on the heels of a separate €120 million EU penalty coming X's way previously. Bloomberg's Olivia Solon breaking all down. We thank you so much. Look, coming up, defence stocks. They're on the higher side. In fact, they soared as governments ramp up spending on heightened geopolitical tensions. More on that next. This is Bloomberg Tech.
Silence isn't empty. It's full of proof. When a silent gesture orchestrates masterpieces, we're not just one step ahead. We're in a league.
Okay, crude oil successfully gives the breakout. ठीक है, ये लेवल का हो गया है ब्रेकआउट. दिस पॉइंट ऑफ इंटरेस्ट नाउ एक्ट लाइक एज अ सपोर्ट. पुल बैक आएगा तो यहाँ से बाय करेंगे. देखते हैं पहले पुल बैक आता है या फिर सीधा ऊपर ही जाता है प्राइस. एनी पुल बैक अराउंड $61 would trigger the buying again.
CEOs at the head of these primes because they weren't delivering. That seems incongruous with the massive run-up in those stocks.
Sure. I mean, the investor confidence right now, and that's very interesting, but the investor confidence right now in momentum is sort of like these companies are growing a little bit faster than what the the sort of like classic thought about or behind these defense stocks usually is or was, because a lot of these companies are moving into the technology play. There's a lot, modern warfare is increasing. There's more reliance on drones, on AI, on advanced sensors, software, missile defense systems. So once all these companies are sort of like tapping into that, investors continue to be a little bit more positive on this side.
And that is exactly why we have you on, because of the tech focus that these businesses are having. We'll watch out for their earnings. Bloomberg's Avilis Bonilla-Ramos, thank you so much for joining us. Meanwhile, let's turn to wintry weather. It is blanketed most of the United States. It's leaving lingering effects too. Power grids, they're expected to endure increased stress from really brutal cold in the wake of the damaging winter storms. Get this, more than 800,000 homes and businesses nationwide are currently without power. And this is concerns already have been growing around the U.S.'s power grid's resilience in the face of rising AI power demands. Bloomberg's power and natural gas reporter, Noreen Malik, has been very busy this weekend reporting all of this out. What's the effect on prices?
Yeah, prices got really high. Yesterday, weekend is usually a lull for prices, and we saw prices around like $1,000. This morning, the Texas grid in like West Texas, where they're usually lower, was like $2,000. Right. And in Dominion in Northern Virginia, where there is that concentration of data centers, we got to like $1,000 as well. Spot prices are a little lower because real-time demand seems to be affected by school closures and businesses, just everyone working from home. But it's going to be an extended cold, and that's what's most concerning right now.
Noreen, out here on the West Coast, we're used to a very similar story, but the opposite, right? In the summertime, extreme heat, the grid being under pressure, and either the utility can or can't cope. What is it like from a technology perspective or just operations perspective that the grid can actually do to manage and cope in scenarios like the extreme cold we've seen and weather on the East Coast?
Yeah, I think what's interesting about the East Coast and even down to Texas is they've also become winter peaking grids, not just summer like California. And so they're basically trying to take out all stops. You've had the Energy Department grant authority to Texas, New England, and PJM, which is the largest grid that stretches from the Mid-Atlantic to the Midwest. They've granted them authority to run power plants basically all out, irrespective of like emissions limits. The DOE also told ERCOT, the Texas grid operator, that they can use backup generators at data centers and factories to supply the grid. And last night, PJM had a call with members to tell them that, hey, we're putting in place measures to also do the same, to use data centers in lieu of blackouts if things got that bad. Right now, they're expecting to have enough power.
And who bears the price? Who bears the cost right now?
Ultimately, the consumers. Everything is passed on to consumers. How quickly will depend on your utility rate, but wholesale prices are often a pass-through cost.
Noreen Malik, Bloomberg, busy weekend for you across what is an astonishing visual story as well. Thank you very much. Now, coming up, Base 10 CEO Tuhin Srivastava and one of its backers, Conviction Saraguar, they join us as the startup more than doubles its valuation. We have the details next. Confirmation of that round. This is Bloomberg Tech. AI inference startup Base 10 Labs has raised $300 million. The funding round lifts Base 10's valuation to $5 billion, more than doubling what it was just 6 months ago. Base 10 CEO Tuhin Srivastava and Conviction founder and partner Saraguar, who participated in that round, join us here in San Francisco. I've been using a number of generative AI tools this morning to try and distill down what it is that Base 10 does. I'm going to read you one, and you can tell me, and I won't say what engine it was. Base 10 provides the software and infrastructure that lets companies run AI models reliably at massive scale only once they're built. It's about being fast, stable, and cost efficient. Is that what you do? Yeah. And why did you need to raise $300 million to do it?
Yeah, well, the way we think about it is that inference is probably the largest market that will ever exist.
Yeah.
I think you see this like amazing set of companies like Cursor or Bridge, Open Evidence, Notion, kind of growing with their inference workloads, and to support the scale of these massive companies, and we're just arming ourselves there. More importantly, the amount of compute that we're going to need to support this is going to be very large. And again, compute is a capital-intensive business, and that's the business we're going after.
Lots of very interesting participants in the round. And Sarah, it's great to have you back on Bloomberg Tech. I was really interested to see conviction in there, right? You know, the size of the round, the valuation's interesting, but you're all about helping founders build up, you know, at conviction. Why did you want to do this?
Well, I'd say this is a very secular bet for us. First, we have invested in every round of Base 10 since inception, right. From my prior firm and then through Conviction. And so I think $5 billion actually is a very small number.
Just say Greylock was your prior firm.
At Greylock,
and
then at Conviction, my current firm. $5 billion is a very small number compared to the opportunity ahead. I genuinely believe that, and so we're looking at the difference when we make that investment. But I think from a broader perspective, NVIDIA and Base 10 and Conviction, we have the same vision for what needs to happen to enable all of these AI native startups. Inference engineering, RL as a service, the optimization of models to make them cheap and efficient to run. These are like the 3 hottest jobs in AI right now. And one thing Base 10 does is take these capabilities and use NVIDIA capacity and make them available to everyone rather than just the labs.
Let's talk, therefore, a little bit, Tuhin, about, you said you're arming yourself for this opportunity in inference. NVIDIA is interested in investing, but how much do you end up using technology, competing against? Where do you see the future of what it is that you're solving for?
Yeah, look, we've been partnered with NVIDIA for almost 5 years now. They're a big part of the future. We work really, really closely with the chips they provide. We don't see them as a competition. Honestly, we think everything's kind of a rising tide, and we want to work with the biggest and best players and customers and suppliers and vendors and technologies, and NVIDIA is a big part of that.
Sarah, to that point, it's interesting the amount of news we've had around NVIDIA today, whether or not it's another, what people call circular financing deal, backing CoreWeave, buying stock, indeed talking about a CPU, and indeed we've seen like Microsoft announcing yet another chip AI version for themselves too. How does this bear out? Does everyone win? Are there going to be select winners?
Well, I think so far it looks like NVIDIA is a pretty strong winner at the chip level. I do think that there are enormous investments in accelerators, particularly at DeepMind, but there are other legitimate efforts as well. And I think it all speaks to the overall demand in this market. The reason people are making these really strong investments in other chips is because they're going to go spend billions and tens of billions and hundreds of billions of dollars, trillions, if you listen to Sam, against this compute over the next decade, right? And so I think the question of winners is the problem today is just meeting the demand. And all of these players are trying to come up with alternatives, less about cost and more about creating more supply.
I enjoyed reading about and learning about Base 10. There's a section on your website where you break down pricing. And I don't know, that might seem really mundane to both of you, but you basically have pay-as-you-go at the low end right through to enterprise-level deals. Explain that kind of strategy. You know, we've discussed with Cursor the idea of per desk versus pay-as-you-go. It's actually a very interesting model.
Well, I think pay-as-you-go pricing is fully aligns ourselves with our customers. So we are only making...
Who are they?
Who are our customers?
Yeah,
so think about the fastest growing AI companies in the world. So anywhere from Abridge, Open Evidence, Cursor, Nosha, Gamma, Clay, all these are companies that you've covered, I'm sure, over the last year. These companies are growing incredibly fast, and they are using a lot of inference. And by aligning ourselves on a pay-as-you-go model, we only make money when they are getting value out of the models that they are training for their customers. And so that's actually a very important part of our business. We think it's a very important part of the ecosystem. And it's all about being a long-term partner to the best companies in the world.
And Sarah, what gives you the confidence that this doesn't get commoditized, or at least how sticky are the customers when it comes to inference?
I think training is a job-by-job sort of buy, right? Inference has the stickiest characteristics of any business I've ever seen, right? And so, without giving specifics, the NDR on Base 10 is through the roof. And we see customers, they come with us, they scale with us. They don't want to take on this enormous engineering burden of, these different specializations I described. Like, Yes. The labs want the kernel engineers too. They're very expensive. Managing across 10 different clouds is very expensive. Owning your own capacity. Ed was just talking with Tuhin about the pay-as-you-go versus the CapEx upfront model. The application winners, they don't want that. They want to go after new business and creating value for users.
There's a lot of energy in your industry still. It's really cool to have you both here in person. Deal flow hasn't slowed down at all. I wondered what the talent story is right now. Sarah was talking about the 3 kind of core roles, hottest jobs. I'm assuming that a chunk of that 300 million reflects the capital intensity of talent right now as well.
Yeah, look, we've been very lucky to be able to attract really great talent up until now. That being said, as Sarah said earlier, like the folks that we are going after are very, very in demand. There is, if you think about inference being this massive market and this big systems engineering and kernel engineering problem that needs to be solved, and probably there's, sub 1,000 people in the world who've solved this at scale. Yes, it is going to be very aggressive, and to win the ultimate prize for us, which is being the inference cloud, the AWS for inference.
That's big target to have.
It's a big target to have, and we need to be able to get that talent.
Sarah, I also know you as kind of Sarah the operator, not necessarily just writing checks. We've been talking about, is circular financing a bad word, for example, with NVIDIA and CoreWeave, but is there an opportunity here for you to look at the rest of your portfolio and your historic investments and say to some of these companies, you guys should work together? What's the reality of that?
Well, I'd say Base 10 does have a lot of customers they've won within the portfolio. And one of the things that we do at small scale that's very related to this NVIDIA move of enabling its ecosystem and its customers is have an incubator.
Right.
Base 10 is a contributor to that. They give credits to startups. They're offering their expertise to these companies. We give people compute up front as well. And it's to reduce the barrier to entry for the next generation of application companies. This program is called Embed. And I think our entire investment is we want to see more of these AI native application companies win, which Base 10 does and NVIDIA does too.
Tuhin Srivastava, Base 10 CEO, Conviction founder, Sarah Guo. It's great to have you both here in San Francisco. Thank you very much. Caro, there are so many more tech headlines out there today.
Boy, are there, and around compute and such. We're talking SoftBank first. It stopped talks to buy data center operator Switch. Now, that's according to sources. The company has been pursuing Switch for months, offering as much as $50 billion, but the deal would have helped build out SoftBank's Stargate AI infrastructure. Discussions continue, though, for a partial investment or a partnership. Plus, Samsung is getting close to securing a certification from NVIDIA for its latest AI memory chip, the HBM4. Sources say the South Korean company has entered the final qualification phase after supplying samples to the US chip maker in September. Samsung is said to be preparing mass production of the HBM4 in February. And shares of USA Rare Earth, they're surging. The company entered a non-binding letter of intent with the United States Commerce Department for $1.6 billion in funding in exchange for 16.1 million shares and warrants. Now, the company also raised $1.5 billion in private investment to accelerate domestic heavy rare earth production. Ed?
Yeah, the clue's in the name there, US Rare Earth Inc., as Matt Miller screamed on television this morning. Now, coming up, is the AI boom all hype, or is it here to stay? Yep, we're asking the question. We take a deep dive as big tech earnings are just around the corner. This is Bloomberg Tech.
From Wall Street to rural America, today's AI is the economy, and markets have priced it like a miracle that can't fail.
Investors are really banking on incredible growth. Microsoft, Meta, Alphabet, they are just committing billions and billions of dollars to capital expenditures.
But in this burgeoning industry, what goes around doesn't necessarily come around.
A precarious investment strategy is emerging.
Multi-billion-dollar circular deals.
Huge sums of money are just being passed between these enormous companies that are pouring hundreds of billions of dollars into the promise of AI.
And the promise is huge.
So this is a structural shift, like electricity or the internet.
But AI, with all its potential, remains largely unproven for profitability.
Probably the biggest question in San Francisco right now is, are we in an AI bubble? And if we are, then, well, how big is this bubble and how bad would it be if and when it does burst?
So, is this the dawn of a new age of AI-powered growth? Or the biggest bubble ever?
You can watch the full episode of that Bloomberg Originals piece on YouTube and Bloomberg.com. We have another alleged example of circular financing just today. NVIDIA investing another additional $2 billion into CoreWeave. NVIDIA CEO Jensen Huang saying that it is ridiculous to call it circular financing because it is just a tiny portion of what CoreWeave's going to have to raise overall, and it's in line with NVIDIA's other investments. Make your own mind up on that. There's also a piece on the Bloomberg about how NVIDIA's rally of late shows that a year ago, DeepSeek fears might be a little unfounded, and that is written by Bloomberg's Carmen Reinecke. Carmen, great piece, as always, data-focused. What do we need to know here? What are you writing about?
Yeah, so I think the thing that's most important or interesting to watch here is how, a year ago, this DeepSeek news came out and NVIDIA sold off. Almost $600 billion in market value was erased in one day, and it looked like maybe the start of or maybe a practice run for the AI bubble popping. But if you look a year on now, a lot of those fears are really unfounded. The stock is up nearly 60% since then. We've seen it just continue to grow revenue. And overall, the AI ecosystem has also continued to develop. A year ago, NVIDIA was still by and far the kingmaker. It was seen as sort of the only show in town when it came to chips. And now we're just seeing so many more businesses sort of step up, come to the plate with their own chips, trying to not be so reliant. And then, we're also seeing, more energy and construction and infrastructure stocks kind of come online. So while there still are concerns about some of the circularity here for sure, and even, the deal with CoreWeave and NVIDIA goes deeper than just the most recent news.
Yeah.
The overall sort of expansion of the AI trade is giving bulls sort of more room to run.
What do we need to see this week, Carmen? For example, Microsoft today unveils that it's got yet its second round of its own AI accelerator, pointed maybe at trying to reduce its dependence on an NVIDIA. But we're also going to see what its capital expenditure looks like, how much it's continuing to invest. That's going to be important for NVIDIA's numbers that don't come until the end of February.
Exactly. Really, the biggest thing I think that investors are watching in these big tech earnings that we're seeing over the next few weeks is that CapEx line item. Are these companies continuing to grow or say that they're going to spend even more? That's really sort of paramount to the rest of the AI trade or how it continues to develop. And then on the flip side, I think investors will also be looking for signs of ROI, right? We want to know that all of this money is going to something that it's going to help the bottom line, that it's helping efficiency and to drive business forward. So really two big things that we're going to be watching.
Bloomberg's Carmen Reinecke. It's great to have you on. It's a great piece that you also are in on Bloomberg Originals. Meanwhile, that does it for this edition of Bloomberg Tech Ed.
Yeah, strong start to the week. Caro has made it through the storm to the studio, and there's a lot more to come. Recap on the podcast. You know where to find it on the Bloomberg platforms, Apple, Spotify, and iHeart Online. Stick with us this week. This is Bloomberg.
Hours. So we're live here, of course, at the Asian Financial Forum. So lots to discuss as far as the outlook for Hong Kong's role and how that evolves in 2026, given all the changes we're seeing across asset preferences and the like. In fact, speaking of that very topic, gold is going to be a very big topic of conversation today. We mentioned topping 5,000 for the very first time. The other big market story was really one that largely was expected. We didn't expect it to come on a weekend. The warnings coming through out of the Prime Minister, and hence why we are seeing the yen continuing to strengthen from about 159. We're sub 154, and the key crosses on your screens. What that's leading to is really this broad move lower in the US dollar against Asian FX, right? Whether that's the ringgit, the Sing dollar, the Korean won, or also the Taiwanese currency coming up on your screens, and fairly steep losses, as you can see, as far as the dollar is concerned. And dollar China fix will be in focus, of course. We're 694 last we checked. Equity markets, stronger yen, weaker Japanese equity market coming up on your screens. The Kospi Index, US futures, and the Asia Pacific benchmark at the very bottom of your screens. It's Fed week. We'll get to that in a moment. The 2s and 10s in Japan and also on treasuries coming up on your screen. Not that we're expecting anything from the Fed this week, but we'll sort of look into the nuance of what to watch out for specifically as far as that's concerned. And yes, by the way, yes, another one that's crept up is the shutdown concerns. Speaking of precious metals, gold, silver, platinum, and palladium. Silver, of course, 5,000 in gold and triple digits. In fact, even more, $106 now on silver. A50 futures coming online. And oil, of course, and separately, because of that extreme cold weather in the U.S. and in Canada, gas futures are punching through the ceiling. So certainly something to watch and just consider as we try and make sense of all these moves very early this Monday.
Yeah, it's interesting, right? When you have the likes of the Federal Reserve Bank of New York and Bank of Japan talking about checking the rate of the exchange rate of the yen, certainly that does send a lot of signals that maybe, possibly, we are seeing some sort of coordinated effort in terms of intervention from the U.S. and Japan, which we haven't seen, right? I mean, we haven't seen
on the U.S. side,
from 2011, right, when there was the Japanese earthquake. So certainly they don't usually do this. I think it's only 3 times since 1996. So the market is certainly listening. You bring it back to kind of what we're seeing here at AFF, because there certainly is a lot of discussions about creating new horizons amid an evolving landscape, right? That's
what does it mean? What does it mean?
I think for Hong Kong, certainly it means, what does it mean for promoting cross-border investment between the mainland and Hong Kong? We certainly have seen that when it comes to the IPO market. This whole theme of going global from mainland companies, as Chris Wei, the Financial Services Treasury Secretary, mentioned, that's still a key theme here today. And of course, can Hong Kong become that gold trading hub as well? Given the time when we're having 5,000 when it comes to bullion.
Yeah,
quite timely.
What are the plans of Hong Kong, right, to just build out the infrastructure needed for it to create that hub? And I think so. Just right next to Yvonne and myself is the main hall, of course, at the AFF, and I believe speaking right now should be Frederick Ma. Then we have John Lee, of course, set to speak, and then Joe Lan out of the PBOC, the deputy governor there. And of course, speaking of Christopher Hui, who we just talked to about 40 minutes back, here's what he had to say specifically on the plans, Hong Kong's plans, as far as this gold hub is concerned. What to watch out for? Have a look.
I think gold right now is really a topic for everyone, globally and regionally. And we are going to sign an agreement with the Shanghai Gold Exchange later on at this forum to highlight the fact that we are cooperating with them to set up a government-owned clearinghouse in Hong Kong for OTC gold contracts.
Yeah, there we go. So 3-year plan to build up that capacity. 50% will be under the airport authority, and of course the other 50% will be, of course, not a lot of details were disclosed where the location of that of the vault is concerned.
But that MOU with the Shanghai Gold Exchange, right, that's going to be signed here at the AFF this week. So something to look out for here on what that clearing mechanism is going to look like as well for the city. So certainly there's a lot that could be happening here in terms of deals this week. And we have a strong lineup of guests here to talk us through some of those key themes. As we mentioned, we're speaking to Morgan Stanley's Asia CEO, Gokul Laroya there. First up here on the China Show, and the head of the World Gold Council as well. We'll also hear from Federated Hermes and Blackstone's APAC head of private wealth. Those conversations at the Times on your screens.
Okay, let's get back to the market action and bring in Mark Cudmore, our MLive executive editor, joining us right now from Singapore to talk us through these big market moves. And Mark, here we are. How close are we to actual intervention? Just help us understand that spectrum of steps.
We obviously don't know exactly when or if we'll even definitely get physical intervention. As you highlighted in the intro, it was slightly unusual how the rate check came on Friday. That is the normal procedure ahead of physical intervention, is that normally the MOF will do a kind of rate check. Normally they might execute via the Bank of Japan, but it's the MOF who make the decision, and they'll kind of go, where do you see dollar yen? And it's a hint they're getting ready to intervene. As you've highlighted, they have gone through the Federal Reserve Board of New York before, depending on the time difference, but that is unusual. It's not the most common way of doing it. I think the last time, as you mentioned, was 2011 post-Fukushima earthquake. But since that's kind of slightly unusual. The more unusual bit was, in fact, that they said explicitly when they did the rate check that they wanted everyone to know about it. So they said, make this public. And normally they do these rate checks because they want people to know about it, but it's normally leaked out. It's kind of, people familiar stories, whereas in this case, it was like, hey, please tell everyone out there. So this was quite unusual, and it's fueling a lot of speculation about what's going on. I need to emphasize that word speculation, because really, we're all in the dark right now, and there are very few extra concrete facts beyond what I've just given there, so we don't really know what the next step is.
Okay, so for dollar yen, do you think we've seen a peak or a high, at least, with or without intervention? That certainly is the case or view from Elias Haddad from Brown Brothers, Harriman. What's your take on where dollar yen goes from here?
Yeah, I think dollar yen goes a chunk lower this week. Hedge fund speculative positioning was short yen until last week. The latest positioning data we get is from last Tuesday. They were net short as of then. Suddenly, there's an attempt to put a floor in place for the yen, or a ceiling for dollar yen, if you want to put it that way, by the officials, and therefore hedge funds are going to want to switch positioning. So I think there's going to be a lot of flow to buy the yen this week, and so therefore I think dollar yen ultimately goes a lot lower. But there's another important component here. I don't even think that the yen will end up being the bigger story here. I think that there's a very strong chance that the big story this week is actually the dollar side. I think the broad dollar weakness can really be expected. We're going to expect FX hedging ratios to increase by from many countries, and there's this quiet quitting of US assets. We've seen US stocks underperform significantly over the past year, and I expect that to pick up pace again. So I think we're going to keep on seeing broad dollar weakness. And already this morning, one of the things that's quite unusual is that, in fact, that while dollar yen's obviously come lower, and that's understandable, we're seeing, for example, European currencies do wonderful against the dollar, most prominently euro dollar, which, there's less of a fundamental argument here why that should suddenly be surging. And that makes the point that there's definitely a broader trend to diversify into dollar. And that's driving a lot of the asset moves we're getting out there, including the crazy moves in precious metals, for example.
Mark, yeah, I was going to ask you, actually, does that even further this precious metal space? But I think we've answered that. What about the equity market overlay there? What does it mean for equities, if at all?
I think it's going to be a tough week for stocks. I think that the extraordinary moves we're seeing in markets, what they do is they raise volatility measures, and that feeds into value at risk measures, which is how most traders' funds operate, is they're only allowed to work within value at risk limits, which is based off implied volatility measures. So there's literally a mechanical system, while as we get more volatility across the board, people have to de-risk slightly. So I think that's one of the dynamics we're getting at the moment. These extraordinary moves in precious metals and now FX are going to raise volatility. We already saw extraordinary moves in rates markets last week. So I think it's going to be negative for stocks. Now, adding into that, the government shutdowns come into focus. We've obviously got the FOMC. We've got suddenly, the US talking about 100% tariffs in Canada. There's no shortage of negative news stories to kind of fuel that narrative. So I think it's going to be a tough week for stocks.
Mark? Thank you. Mark Cutmore there in Singapore, AmLab executive editor. Hopefully he's there to hold our hands throughout this volatile week here as we count down to not just any signs of intervention from Japan, but also that Fed decision. So that really kind of is the key when it comes to the week ahead here today in terms of eco macro stuff. Obviously, we have also the Goldman Sachs macro conference that's happening on Tuesday here in Hong Kong along the lines of AFF there. Also, that Fed decision that happens on Wednesday. We're going to get some inflation numbers out of Australia and Philippines GDP GDP as well. So lots to look ahead to as well. Obviously, we're seeing those opening remarks here at AFF. The chief executive of Hong Kong, John Lee, is making that keynote speech here at the conference here. And really, the pitch continues to be, we're open for business. And, we really want to promote mainland companies heading abroad, going overseas, and going global.
The number of foreign น้ำพึ่งเรือเสือพึ่งป่า That means we have to rely on each other for success. If you could have the ASEAN grid to connect rain power from Vietnam's wind farm, Thailand's solar farm, to geothermal in Indonesia, it will flow surplus renewables from one country to another. If it's good for the planet and good for business, it's worth supporting.
Welcome back. You're watching The China Show. Let's get to one of our top stories today. So China is investigating its top general and Politburo member, Zhang Youxia, for serious disciplinary and legal violations. Let's bring in John Liu, our Greater China executive editor, joining us now to talk us through what we know so far about the story. Yeah, John, what do we know?
Well, we don't know very much, David. What we know is that over the weekend it was announced that the Zhang Youxia has been removed, that he's being investigated for serious breaches of conduct. We've had a commentary in the PLA Daily, which is published by the People's Liberation Army, accusing him of trampling on, among other things, Xi Jinping's ability to govern. So that's raised lots of questions about what is going on in the background. Chinese politics, especially at the senior level, is very, very opaque. And so this has come as a big surprise. No one expected this. And now everyone's trying to figure out why and what does it mean for the future.
And it certainly seems to leave the decision-making body of the PLA a bit more vulnerable now when you have that top general now being investigated. Where does that leave kind of succession plans? I mean, it sounds like, Zhang had a very deep relationship with the president as well.
So this was a man who had a close relationship with Xi Jinping. Their families go back to the revolutionary days. Their fathers fought together. And so they were always seen as being close allies. And so this is another reason why this move is so surprising and so unexpected. The military is run in China by the Central Military Commission. In 2022, after the Party Congress at the end of that year, the latest iteration of that committee was announced with 7 men. Right now, only 2 of those men are still on that committee. Everyone else has been removed and is put under investigation. The only 2 men remaining are one other general and Xi Jinping himself. And so that raises questions about the ability of Xi to govern. Does it show that Xi is finding it hard to find people he can trust? Or does it show that Xi really has an iron grasp over power and he can remove people as he sees fit? And so that's sort of the question that everybody's trying to come to grasp with and trying to figure out which of those 2 it is.
We'll leave it there. John, thank you so much. John Liu, our Greater China executive editor, with what we know and what we understand, perhaps, of the potential broader implications of this. Let's just get to the FX in focus. Certainly, given the news out in the weekend from the Japanese, it's having really just effects across the FX space today. Hence, we're looking at this weaker dollar and hence the very strong fix coming through out of the PBOC on your screens. Market's not reacting, as you can see. This is, though, in context, the strongest fix going back to May of 2023. And of course, late last week is when we breached that 7 handle to the downside on the fix for the very first time since that point in time.
Yeah, because a lot of the discussions here on where things stand when it comes to the currency and trade. And when you see the rift that seems to be widening between the U.S. and Canada, right? We certainly saw some announcements as President Trump threatened 100% tariffs on Canadian goods to the U.S. if Ottawa makes a trade deal with China. For more, let's bring in our chief Malaysia correspondent, Stephen Engel. He joins us, of course, in our studios. And where do we stand now in the whole situation, Steve?
Well, we had a barrage of social media posts from President Trump and others, in Canada have taken a little bit more of a cautious and not necessarily inflammatory response. Maybe they're thinking maybe this is another taco example from Donald Trump and that this is just basically brinksmanship from the White House. But again, it's quite alarming considering how intertwined the two economies, Canada and the United States, are. And they thought they had sort of come to an understanding on that relationship, the trade relationship, as it relates to auto parts, huge auto parts industry in Canada that the U.S. Auto factories rely on. America is the big purchaser of oil, also metals, also fertilizers. So it raises a lot of questions about whether Trump is serious here and whether he would follow through on what he's saying would be 100% tariff on all Canadian goods exported to the United States. Donald Trump, in some of these posts, saying China will eat Canada alive, completely devour, including its destruction of their business, social fabric, and general way of life. He goes on to say, if Mark Carney thinks he's going to make Canada a drop-off port for Chinese goods into the United States, he is sorely mistaken. So again, the Canadians have come out fairly measured response. We had the Minister for Trade responsible for the United States, Dominic LeBlanc, essentially saying they are not pursuing a so-called free trade agreement with China. What Mark Carney about 10 days ago or so in Beijing signed were a few deals to essentially, what he says, alleviate the more pressing tariff issues like the EV tariff, which, of course, China wanted to have repealed. It went from 100% to 6.1% for 49,000 Chinese electric vehicles into Canada. Of course, the Trump administration wants that 100% to remain. So they're in lockstep together, the two main economies in North America. Also, but China reciprocated by removing their 100% tariff on rapeseed or canola, a key crop from Canada to China. So that's what the Canadian position is right now. We'll have to see, though, if the Trump administration ups and persists with their threats of 100% tariffs.
Steve, not that this should come as a surprise, but we did also hear the Treasury Secretary doubling down on that threat. What did Scott Bessent say exactly?
Yeah, well, this is a fairly common pattern, if you will. Donald Trump will make these comments on social media, and then Scott Bessent will make the rounds of Sunday television programs, which he did again. And he essentially is saying, now, if this goes beyond what is already announced between China and Canada, the United States will have the right to essentially add more penalties, not only including tariffs, not only on Canada, but on China as well. Let's listen to Scott Bessent.
We have a highly integrated market with Canada, sometimes in autos, which he dropped the EV tariff, I believe, from 100% to 6%. The goods can cross the border during the manufacturing process 6 times. And we can't let Canada become an opening that the Chinese pour their cheap goods into the U.S.
Now, Bessent also raised the prospect of possibly renegotiating this summer the U.S., Mexico, Canada trade agreement, but he did not elaborate on whether these latest developments would impact that. One would assume it probably would. Meanwhile, Canada is not holding back on making its overtures to other economies. We have the energy minister heading to India soon. We have also Mark Carney expected to make a trip to India at some point, as well as Australia in March.
Steve, thank you. Stephen Engel in our Hong Kong studios for us and the latest on that specific front. Here are some other major stories from around the world we're tracking this hour. Let's get you guys updated on, of course, certainly the events that you probably have seen already in Minnesota. Outrage is growing in the U.S. It's after a Border Patrol agent shot and killed a man believed to be a U.S. citizen in Minneapolis on Saturday, and officials say the victim had no criminal record. Senate Democratic leader Chuck Schumer has vowed to block a massive spending package unless Republicans strip funding for the Department of Homeland Security. Now, the move raises the risk for a partial U.S. government shutdown.
Some congressional Republicans are also showing signs of wavering on Trump's immigration crackdown. Andrew Garbarino, House Homeland Security panel, has requested public testimony from top immigration officials, while others are calling for an investigation into the shooting. And over 60 CEOs of Minnesota-based companies are calling for a de-escalation of tensions. The heads of companies, including Target and General Mills, were among the signatories of a letter shared on Sunday. State and city officials have repeated their calls for federal agents to leave and demanded that Minnesota's authorities take over the investigation into the shooting.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
Right, welcome back. Just under 5 minutes to the opening bell this Monday as we kickstart this fresh trading week, where the big story is really the strength in the Japanese currency leading to strength elsewhere, really a weak dollar, and a really strong bid coming across precious metals. What's new, anyway?
Yeah, continue to see gold around that 5,000 level. Maybe we're heading higher, we'll see. But today, it really is kind of that rush to kind of buy Asia FX, given the dollar moves we've seen, right? Take a look when it comes to stocks to watch here. So we're watching China Tech, Baba, Tencent, Baidu, and JD. Just given some of these risk-on moves we're seeing across equity markets, you are seeing mostly higher, at least for some of these big tech plays here today. JD is up about 1% here. Baidu is heading the opposite direction. Chip stocks as well. We're watching some of these local players, the like. Certainly, there's been a lot of optimism here at AFF about the IPOs and what we've been seeing. We're getting Morgan Stanley's, MS. Well, I should say the Asia CEO joining us there. To tell us more about that. The Open is next. This is Bloomberg.
Good morning, welcome back. You're watching the China Show, counting down to the open of markets this Monday. And as you can see, we are catching a decent bid across these markets. Keep in mind the backdrop specifically in Hong Kong was that wobble in the afternoon session on Friday following the Bloomberg scoop, of course, that China might be looking to tighten some of the scrutiny over these IPOs coming here to the city. And we have really almost the perfect lineup of guests, actually. Let me just unhedge that, coming through here. Out of the AFF and our coverage here to maybe help us understand what really is going on as far as that's concerned. But that seems to be put it on the back burner with the yen being the
yen certainly just kind of catapulted to our top amidst this AFF coverage that we have. We're bringing the China Show, of course, on the ground here at the convention center. But yeah, when you're talking about dollar yen at 154 levels, we haven't seen that for some few weeks now, given what we've been hearing, right? These intervention risks that we're hearing over the weekend as well. You got to wonder what was discussed in Davos between the finance minister of Japan, Katayama, and Scott Bessent. You know, the people are interpreting this as maybe more than just a fluke, right? That maybe we're seeing something more coordinated between U.S. and Japan.
It's something that it's one of those times where you're brushing off that 101 on the steps of yen intervention, and the U.S. will need to be on board of any sort of direct intervention as far as that's concerned. We don't even have to get to that point for markets to listen. Certainly markets are listening at this point in time with, as you can see, from 159, we're sub 155 right now on Jolly. We're also seeing, by the way, quite a sharp dip in the yen against the Chinese currency, against other currencies, which is leading cross-asset as far as this weaker dollar is concerned against the rest of Asian FX. But yes, that is a story in FX markets, and precious metals. Equities, though, are somewhat unscathed with the exception of what's happening in Japan.
Yes, right. That stronger yen is certainly hurting some of the exporters there, and that's why we are seeing Japanese markets in negative territory here this morning. The Hong Kong dashboard's looking like this here today. Certainly we're going to get Morgan Stanley's Asia CEO, Gokul Laroya, there in just a few minutes. Tell us through, they ranked number one in terms of the global league tables for IPOs last year, what he's seeing in terms of course, the pipeline, fees when it comes to, of course, maybe the possible tightening, of course, as Dave mentioned, our scoop on Friday, when it comes to the quality of these deals now. HS Tech is on offer here today, just slightly. It seems like it's being led by the likes of Baidu and Xiaomi here today, but the rest of the big tech plays are still doing okay. MSCI China is up about 1/3%. In terms of individual movers, we're still tracking the likes of PopMart. So that CEO interview on Xinhua on Friday seems to have continue to move markets here, right? So the CEO on Ning saying further growth for Labubu brand.
Oh, no.
So, yes. David's favorite topic. We're up 3.5% for PopMart
Couldn't
here.
sleep last
and
night.
continue to defy, really. People are still trying to kind of short this stock, I think, despite the buybacks that we've seen from this company of late here. So certainly maybe there is a bit of a short squeeze to talk about as well. Gold stocks are certainly still in favor here, just given what we've seen, 5,000 when it comes to bullion that was hit. There's going to be a lot of talk at AFF about the gold trading hub that Hong Kong wants to achieve here and really try to compete with the likes of London, which dominates when it comes to, of course, the trading of bullion. So the infrastructure, the capacity, certainly we did speak with Christopher Hui, Financial Services and Treasury Secretary here about the 2,000 tons capacity they're aiming for the next 3 years or so. But right now we're taking a look at some of these local chip stocks as well. They are falling slightly here this morning, Dave.
Okay, we will take you straight back into the main hall beside where we are set here at the Asian Financial Forum where the PBOC Deputy Governor, Zhou Lan, is speaking. Let's listen in.
Business sectors including equities, bonds, currencies, derivatives, and gold. In terms of capital market, Bond Connect has boosted Hong Kong's influence. Now we have over 800 financial investors investing through Bond Connect. The bond position has increased to over 810 billion RMB, a quarter of the total holding of mainland bonds by international institutions. In 2025, the transaction volume was 9.7 trillion RMB, 60% of the total transaction by international institutions. At the same time, mainland investors invested in different foreign currencies through the Bond Connect. Now they have held over 1.2 trillion RMB. In terms of equity market, the Connect programs have expanded its size. Currently, mainland investors have had a position of over 6 trillion Hong Kong dollars through Stock Connect, and international investors through the market of Hong Kong have held over 2.5 trillion RMB of mainland A-share stocks. In terms of currency market, repo programs have boosted the appeal of Hong Kong's market. In February and October of 2025, PBOC and Hong Kong Monetary Authority have worked together to promote the offshore repo and cross-border repo business using RMB bond. Now we have 34 international institutions involving in the repo program, amounting to 119 billion RMB. 46 international institutions have started their cross-border repo business worth 150 billion RMB. In terms of derivatives market, Hong Kong has been increasingly an important market. 87 international institutional investors have started a currency swap business. The transaction exceeded 9.9 trillion RMB. In terms of gold market, Hong Kong Gold Exchange set up the Hong Kong delivery market and the launching of relevant contracts, giving more options to investors in offshore asset allocation in RMB. With increasing use of RMB in cross-border transactions, RMB as a financing and currency reserve vehicle have seen much more appeal. RMB has been the second largest trade financing currency and the third largest payment currency in the world, and it's ranked the third in a basket of currencies in special drawing rights of the IMF. PBOC is working closely with HKMA in building the mechanisms like international RMB settlement bank and currency swap systems. And we have regularly issued banknotes issued in RMB in Hong Kong. Hong Kong has already been the largest offshore RMB business hub in the world. Now, the PBOC is poised to advance Hong Kong's role in building an offshore RMB market. We will also increase the volume of RMB liquidity, offering more support to the offshore market in Hong Kong. In October 2025, Hong Kong Monetary Authority will upgrade its liquidity tool to a regular arrangement mechanism with a total size of 100 billion RMB. We will expand the support scope of liquidities and facilitate its use. We have received very good feedback from the market. To better support the market need, HKMA will increase the facility to over 200 billion RMB. At the same time, to support Hong Kong's role as an international RMB settlement center, through different ways, we will acquire liquidity in RMB with different durations from the mainland market, so we can increase the liquidity of Hong Kong, Hong Kong's offshore RMB. Secondly, we will continue to expand the connection and collaboration between the two international markets. We will offer more risk mitigation tools, and we will improve on Bond Connect and Swamp Connect, among other mechanisms. We will also explore the launching of RMB Treasury futures in Hong Kong, and we will explore the possibility of using RMB bonds as an eligible liquidity a pledge for offshore market, and we will advance the mutual recognition of infrastructure cross-border. Thirdly, we will offer more offshore RMB treasury products to increase market liquidity. To meet the need of international investors for high-quality RMB assets, PBOC will work with other government institutions in increasing the annual quota for offshore RMB treasury, and we will improve on the market-making system for offshore market so we can offer a better pricing capability by RMB. Fourthly, we will support the development of Hong Kong's gold market, increasing the appeal of Hong Kong's offshore RMB market. We were very pleased to witness the signing of cooperation agreements between Hong Kong's Financial and Treasury Services Bureau and Hong Kong and Shanghai Gold Exchange. We will, through different ways, support Hong Kong in building itself into an international gold exchange center to strengthen its connection with the international gold market. Hong Kong has the backing of the motherland, has connection of the world. It has an important advantage and an important role. PBOC will implement the instructions from the CPC Central Committee and the State Council in deepening the pragmatic cooperation with Hong Kong so we can support Hong Kong in its stable development amid changes. And in this new era with challenges and opportunities, we will win together. I would also like to take this opportunity to thank everyone for your support to China's international financial market. In the end, I wish the forum every success, and I wish Hong Kong better progress in building itself into a better international financial center. Thank you.
Thank you. Thank you very much to Mr. Zhou for speaking to us about the gold collaboration.
Very well, look, you guys.
I would now like to invite Mr. Christopher Quays. Secretary for Financial Services and the Treasury of the Hong Kong Special Administrative Region Government to come to the stage.
All right, you were just listening to the PBOC Deputy Governor Joe Lam. They're speaking at the AFF here in Hong Kong and really kind of talking about what Hong Kong has really carved out for itself, right? A super connector, a way to really kind of promote cross-border investment between the mainland and Hong Kong. And he talked about some ways to do that, right? To boost liquidity for the renminbi market, for example, here in the city. Also, when it comes to the bond market, right? To improve the bond connect and swap connect. So maybe we'll hear some news here this week too as well.
On top of the actual deal that we're expecting to be signed, of course, this week on gold, right? And the cross-border clearing mechanism that will be chaired, I believe, by Christopher Hui, who joined us earlier in the show. So really, in terms of just Hong Kong opening up its further avenues as a hub here, and certainly it's a conversation we'll continue to have here. But yeah, on top of that, obviously we've started the year very hot as far as the IPO market's concerned. You were keeping count. I haven't been able to keep count.
On what? $4 billion already raised this year.
Right? Was it $37 billion, I believe, last year?
Yeah.
Somewhere around
well, made number one, once again, in terms of global IPOs. So certainly Morgan Stanley was the top in terms of really being in the league table. So certainly we have more coming up from the AFF there, where the Asia CEO is going to be joining us to discuss, of course, the pipeline here in the region. That's next. This is Bloomberg.
You're watching The China Show. David and Yvonne just having a few technical difficulties. But in the meantime, Hong Kong is planning to launch a gold futures contract. That's as part of efforts to advance the city's gold hub ambitions. Its Financial Services Secretary, Christopher Hui, spoke to us earlier on Hong Kong's priorities.
We are focusing on 3G, I would say, in the priorities. Number one is growing the competitiveness of our market, including on the capital side and also the asset management side. On the capital market side, we're going to review our listing rules, including the arrangement right now for the listing of weighted voting right companies. And at the same time, we are going to bring the clearing cycle of our stock market from T+2 currency to T+1 and get the market ready for that. And on the asset management side, we are going to enhance our current tax concession for funds and also family offices to include digital asset, private credit, and also carbon credit. So this is something that already we are consulting the market. And another thing that we're working on asset wealth management is on the corporate level in terms of reviewing our current laws applicable to the corporate treasury centers. So all these are grouped under the first G, I would say, growing the competitiveness of our own market. The second G, I would say, is about gold, because I think gold right now is really a topic for everyone, globally and regionally. And we are going to sign an agreement with the Shanghai Gold Exchange later on at this forum to highlight the fact that we are cooperating with them to set up a government-owned clearinghouse in Hong Kong for OTC gold contracts. And the third G that I would like to cover is about helping Chinese companies going global. Because after all, as you can see, the immense competitiveness and also productivity of Chinese companies, in fact, is getting a lot of credibility regionally and globally. And Hong Kong being a professional service center, not just financing, but even legal, accounting, and others, basically is a perfect platform to help these companies going global.
I mean, it's been so strong even just the start of the year, right? 11 IPOs. I think they've raised already $4 billion just the first 3 weeks of this year. You mentioned about finding the right companies to list. Our sources are hearing that from the CSRC and regulators are a bit concerned over the deal quality of some of these mainland companies listing here in Hong Kong. What have you heard so far? Any signs, if any, of tightening?
I think, as you said, we are yet to finish January. We already have 11 listings so far this year. And also we have a very strong pipeline of more than 350 companies awaiting. So if you look at the figures, basically, like the last year compared to the year before last, in terms of the number of new listings, we have almost like 70% increase. But in terms of IPO proceeds, we actually see a almost 2 times increase. So you can see that the companies that are seeking listing in Hong Kong are getting bigger, and also the offerings are also bigger as well. So on that front, we have been seeing a strong pipeline, as I highlighted, and also we have been maintaining constant dialogue with our counterparts in the mainland to make sure that Hong Kong is the right platform to serve both mainland companies as well as global companies to list and also seek financing.
That was Hong Kong Secretary for Financial Services and the Treasury, Christopher Hui, speaking with us earlier. And if you're a subscriber and you want to re-watch that interview, you can, of course, via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages, so do check it out at TV Go. We'll have more ahead. This is The China Show.
You're watching The China Show live at the Asian Financial Forum in Hong Kong. And I think we've been talking about just how optimistic everyone has been here when it comes to the IPO pipeline and the like here. Someone that has really kind of seen it all, the whole wave that we saw last year, was Morgan Stanley. The Asia CEO, of course, Gokul Loria, joins us here exclusively on The China Show. Gokul, it's great to have you back on the program. You set a pretty interesting sort of goal, right? Last year, about 10 billion in revenue within 5 years. You were pretty close to kind of hitting it basically last year, and maybe kind of moving that goal much sooner than expected. In terms of the deal flow in M&A and IPOs, how sustainable do you think it is?
Look, it's been well, first, thank you for having me. Appreciate it. It's been a really robust environment. Capital markets, M&A, the wealth management business, and even geographically. So China's been super strong, Hong Kong, China. Japan's been busy, India's been busy, and then the rest of the region, Taiwan, Korea, just given what's happening in the world with the AI dynamic, these are direct beneficiaries of that underlying thematic, which is a really powerful one. So business has been busy, business has been good. We're not changing any goals, but we're close.
Yeah, you're very close. Yeah, well, I guess to the point you just made there, do you think we're just scratching the surface on this AI fundraising extravaganza? Like, what are you seeing in as far as your clients and how your conversations across the region?
I mean, look, it's a powerful thematic, right? And the infrastructure needed to actually create the platform for full realization. And you know, the perspectives are a little different depending on which part of the world you look at. The investment that's happening in the U.S. far greater than the investment that's happening anywhere else in the world. But if you think about it globally, I think the point you mentioned about scratching the surface is a good one. If you think about it in China too, the thematics that are emerging, you know, AI infrastructure, AI adoption, localization of the semiconductor supply chain, we're just at the very beginning. Industrial automation, robotics, humanoids, etc. We're just at the beginning of this. Okay. So I'm excited about it. Our investors are excited about it. Our bankers are excited about it. So, you know, usually when you get too excited about things, they don't quite work out that way. So is there a risk? Absolutely there's a risk. But to me, that's not different from what we've seen in the past. Whenever you have technologies that revolutionize, you know, at the risk of being a little bit dramatic, that revolutionize the world, you know, there will be some misallocation of capital, there will be overinvestment, but broadly, I think we're onto something over here.
Is that overinvestment? Is that likely going to be in the debt markets? Because we saw a lot of, you know, in the U.S. at least, a lot of issuance and a lot of, you know, financing there when it comes to AI. How are you seeing that play out in Asia in terms of AI financing now?
I mean, the levels of investment, as I mentioned earlier, in this part of the world, meaningfully less than what's happening in the U.S., and I think that's a different approach to what you need to build and how you need to build it and what capacity you need to have. At this point, it's a little unclear as to who's right. We'll figure that out. But so there's, by definition, less of a chance that there's misallocation over here because there hasn't been that much investment. But you know, what excites me about this whole thing is that, you know, we've done some math, and this is obviously theoretical at this point, but if AI plays out the way it's going to play out, just for S&P 500, there's approximately $1 trillion of efficiency, whether that's through enhanced revenues or savings in costs. And then if you capitalize that expansion in margins, the value creation is pretty dramatic. So yes, there's been a lot of chatter about this $3 trillion spend number, but if you capitalize the savings, the returns are well and truly spectacular. Now, I don't think it's going to be linear, and that is going to continue to sort of get better. There'll be ups and downs, but I just think about Morgan Stanley and how we're thinking about it. And when I look back to front, the use cases and the impact these use cases can have on our business, pretty exciting.
I want to ask you too, speaking of deals, you guys topped the league tables last year, I think globally and even the Asia Pacific. So what are you seeing early in 2026 as far as the equity pipeline is concerned?
So in Asia and China and India are the two big markets for the IPO pipeline. Last year, Hong Kong obviously was incredibly exciting, close to $40 billion. We haven't seen that in a while. And if you think about where that came from, it's really these thematics. Biotech, the innovation is actually world-class. Industrial automation, we spoke about AI, the metals and mining space, obviously really, really hot right now. So it's a continuation of that. So there's going to be more of that. There's going to be more in India. And then Japan's getting increasingly busy. So three big economies in the world, and obviously in Asia, all have some exciting stuff going on.
There's been a clear sort of fee compression among investment banks, and you guys have advised on the CATL listing, which was known to have low fees amidst this kind of competition domestically with Chinese brokerages. Do you see this as sort of a new norm in some ways?
I mean, look, the truth is it's been happening for a while, it's a part of our business that we don't like, but it's the reality of life.
Does it start to impact your revenues?
But it's kind of stabilizing. We haven't seen dramatic fee compression over the last couple of years. I mean, it's been happening consistently. I think we're at a point now where we're going to stabilize.
Okay. Do you think we've hit a bottom?
I think so. I mean, I say that and it'll probably go down again, but I think we're close.
Okay. And are you noticing that, just the nuance, are you noticing that, is it across the board or is it down to specific deals? Not we'll get into specific deals, but I wonder if we're making too much of it.
I think it's more systemic, but it's at a level which is still pretty constructive for us. Otherwise, we wouldn't be in the business.
Yeah. Right. Yeah. A good problem to have, I think, if you think about things have come alive in terms of volume, right? And I think we were talking during the break. We had this report on Friday. China is mulling, based on our reporting, tightening some rules over listings here, specifically in Hong Kong. Have you heard anything along those lines? What do you think that's about?
Yeah, I mean, look, you're right about volume. Volume is, and we spoke about it a little bit, volume is quite robust. And the expectation is that continues. And if you think about the number of companies, and certainly sticking to China for a second, the number of companies in China that want to come and list in Hong Kong is at record levels. So what you're referring to is probably in part an issue of capacity. Capacity for everyone, regulators, other intermediaries, and I think it's good discipline to slow things down a little bit just to make sure that quality is not compromised, because Hong Kong in particular very focused on that, and I think both the Chinese regulator and the Hong Kong regulator super focused on that. So I think it's more that than anything else. I don't think there's any change of direction in terms of the best Chinese companies that have global ambition come and list in Hong Kong, and Hong Kong being the financial center for Chinese companies looking to go global. That hasn't changed. Okay. I think the administration just wants good companies to come, and the intermediaries that work with those companies need to sort of check all the boxes.
Just looking broadly here in terms of the trading business, how's that shaping up? I mean, we started 2026 with the Trump administration's second year very different from the first. How are investors positioning around these policies now?
I mean, look, the volume, if you just think about volume as a barometer, it's higher than it's been in a very long time. Think about China for the first couple of weeks of the year. Volume traded in the A-share market has been at record levels. I mean, last week was just incredible volumes. And I think part of what's happening is global, to your point, but part of what's happening in local. So when I say that, in China, there is a move out of bank deposits in the bond market just because the yields are low. Yeah. And dividend yields on the Chinese market is higher than actually either one of the bond yields or the fixed deposit returns. So you're seeing a reallocation of the savings. This happened in India some time ago, and Japan's trying to orchestrate that too with the return of inflation. So when these volumes come into the market, they add up, and it's a pretty good environment. And then on top of that, you've obviously got the geopolitics and the volatility associated with the geopolitics, and that adds to the mix. So it's really a global-local combination.
Yeah. Right. And I mean, you mentioned there are specific Asia stories that are adding simply positive Asia stories, right? Whether that's the Japan side, the India side, which hopefully will come back even further, the China side. And I wonder, from a capacity standpoint, any Bloomberg interview with the bulge bracket won't be complete without me asking you about headcount. So what are your plans around headcount, whether or not you're happy with your capacity?
So two things. Yeah. One, we've got a pretty well sort of built out footprint. Okay. But if this volume trend continues, headcount's going to grow. There's no question. And notwithstanding, technology now allows us to do a lot more with the same number of heads. There's no question. I mean, when I'm trading, if Stock Connect, we were trading $5-10 billion a day. Now we're trading $15-20 billion a day. That does not require me to put
not linear.
more heads. That I just invest in the plant and I invest in technology, and that allows me to scale the business dramatically. But the wealth management business is growing, the IPO business is growing, the M&A business is growing. That requires heads to prosecute. So, to the extent that this trend continues, I think we're going to continue to build the footprint of it.
Okay. In terms of roles, though, what do you think is still what you need in this region here right now?
Look, we love our wealth business in the region. Okay. So if you have any financial advisors that want to come join us, please let me know.
I'll send you the resume.
Yeah, we got the CVs that are thrown our way for whatever reason.
Yeah, we're looking to build that out. Okay. Obviously, capital markets professionals. We're looking to build that out. We're looking to build our commodities business in Asia out. Okay. So there's areas where. For us, markets become interesting if they have scale, and there's a bunch of markets in Asia that have scale, but also as they deregulate and you can do more. So as we can do more, we look to fill those footprint gaps with quality talent.
Yeah. To ask you about Japan, you have a long-standing partner there, of course, in Japan. Are you happy with that footprint? Because that market's really come back, arguably in a bigger way, and a bigger scale than where we are as far as the greater Chinese market is concerned, right?
Well, you've heard Ted speak about it. I mean, our partnership with MUFG is special, and it's something that we seriously value, and we've been partners with them now for almost 2 decades. And with everything that's going on in Japan, both as a return to inflation and nominal GDP growth, but also corporate reform matter, that footprint and that platform, I think, is very differentiated. So it allows us to do more. Yeah. It's complementary in terms of their footprint, our product skills, and the intent is to continue to grow that. And as you know, we're doing more with that. We've brought together our equities practice, we've brought together our FX practice, we're going to get into power trading. Again, as we can do more there, that partnership is very special and unique, actually.
What is your overview of the volatility that we've seen across JGBs and the yen? I mean, there's talk of maybe even possible coordinated intervention from the U.S. and Japan. Is this sort of just, real concerns on fiscal sustainability, you think? Or is it just kind of an economy that's really just reflating and exiting out of decades of stagflation that, investors really have to really contend with now?
Yeah, that's a great question. I think it's the latter. My own view. Look, we're not concerned about fiscal sustainability in Japan. I mean, the deficit is not that big. They've delevered substantially over the last several years. This was much more, who's buying the long end, where Japanese insurers, and by the way, Japanese debt is mostly owned by Japanese domestic institutions, but they buy 10 to 30. They don't buy 40. So there's not a lot of liquidity at that part of the curve, and that caused the move, and obviously that creates nervousness. But I think it was an idiosyncratic event. We may see some volatility associated with this over time, but we're not concerned about Japanese fiscal. As you point out, it's an economy that's reflating. Some of it is political in terms of the deficit expansion, but that's happening in almost every part of the world right now. Yeah.
Coco, thank you for spending some time with us this morning. We'll speak to you again. And we'll send you the CVs if we get. We'll filter some. Let's see. Depending on the quality, say hi to your team for us, of course.
Thank you, guys. Thank you very much.
Gokul Laroya there, of course, Chief Executive Officer for the Asia Pacific at Morgan Stanley.
Yep, our coverage of the Asian Financial Forum continues throughout the morning. Of course, in the next hour, we're discussing investment strategy with Federated Hermes, and later we're going to hear from the CEO of the World Gold Council and Blackstone Private Wealth APAC head, Ed Huang. This is Bloomberg.
Okay, just very quickly, we're looking at just markets, the state of markets right now. And you might have heard us thank, of course, the Morgan Stanley CEO. Of course, being
live TV.
Diplomatic, polite, and being a nice person. It's a good thing we didn't talk about that. I'm kidding. Okay, let's have a look at the Japanese currency. I mean, we ended really the conversation really on the Japanese currency and the strength we are seeing there. in that specific market. I believe we are, if not at session lows, if not very close to it, on the lower end of 154. Asian FX, dollar weakness across the board. The ringgit, the Singapore dollar, you probably saw that headline across your screens earlier on. You have the South Korean currency and also what you have as far as the Taiwan currency is concerned. And the broader read across equity markets is, I think this one is fairly nuanced, where you really are seeing the effects of a stronger yen in the equity market. And as you can see, that really is the standout to the downside, which seems oxymoronic, but that's certainly the state of play. Asia Pacific, they were up 0.4%, up 1% on a benchmark basis. Okay, let's talk about Japan in greater detail. You had the speculation, of course, of whether officials there will intervene to prop up the yen. Leaders from both ruling and opposition parties are set to face off in a debate later today. Now, this really comes ahead of a snap election slated for Feb 8. That's, folks, that's within the next 2-week window. Let's bring in our team here, senior Japan economist Taro Kimura and Tokyo economy and government reporter Erika Yokoyama. Taro, let me start with you. Given the news flow on the weekend, top of mind for you as you walked into the office this morning, what do investors need to understand?
At least investors needs to understand it's really a significant development when it comes to U.S.-Japan lockstep on watching the dollar-yen rates. Of course, you can argue it's not as much as the Plaza Accord back in 1985, but I would say it's a movement that we haven't seen since 1985. You know. It seems to my eyes that they haven't actually intervened, but they did something like a rate checks. There's no confirmation. It's just my view. And
okay guys, ये natural gas में यहाँ पर half profit book कर सकते हैं. Book the half profit in natural gas and trail the remaining quantity. इसका final target नीचे तक का लगा रखा है. That will be a final target. But हो सकता है price यहीं पर sideways ही रह जाए, which is we don't want. थोड़ा इस तरह से गिरे तो better है. नीचे support पे आएगा तो देखेंगे. बाकी CrudeOil में breakout already हो चुका है जैसा मैंने बताया. यहाँ से वापस buying है. Now this point of interest is act like as a support. So this is a buying zone. From here you can buy in crude oil. Natural gas में ट्रेल कर लेना. यहाँ पर टारगेट थोड़ा सा बड़ा है 37 पॉइंट फ्यूचर में, बट एक्सपेक्ट है इसी तरह से मूव किया तो थोड़ा सा साइडवे जा सकता है इस पर्टिकुलर लेवल पे. अब
$100. So all calm on the futures front right here as we continue with the earnings ramp. All calm in the bond market as well. If we look there, yields continue to stay around the 481 on the 30-year yield, 422 on the 10-year yield, just a basis point higher, and 358.32. Sticking to this level, some kind of signal to the Federal Reserve starting its meeting that, all is calm right here. Keep things here for right now. Let's take a look at some of the other volatile assets that were moving yesterday. So we're still below 154 on the yen. Looks like nothing too much has changed there overnight. Gold still at $5,100 an ounce. That ramp continues. And natural gas futures have calmed ever so slightly. That front month contract rolls off tomorrow, Wednesday. So there's a little bit of illiquidity, but also it is just down from the really elevated levels that we had seen above 7. Do expect that might ramp up again, though, because we're seeing another winter storm possibly coming through, at least in the United States. All right, with that volatility to watch for the next hour, let's get to some individual movers now. For that, we go to London and Chloe Melly.
Good morning, Vonnie. Insurers are in the red today as the U.S. proposed roughly flat rates for Medicare insurers next year. And this came as a big disappointment to investors and also as a big surprise, given it was thought that the current administration would be much more favorable for private Medicare plans than the previous ones. And therefore, we're seeing a big downward moves across that sector this morning, and Humana in particular down more than 12%. Moving on to Micron, which is in the green after saying that it will invest $24 billion in Singapore over the next decade, and this is to expand its manufacturing capabilities to ease the memory chip shortage, which of course is in really high demand because of the AI boom. And therefore, we are up more than 4% in pre-market trading for Micron. And finally, Salesforce is also in the green after being awarded a $5.6 billion contract from the U.S. Army. It will provide some of these cloud technologies to the Department of War, and we are seeing the company up about 2% this morning on the back of that contract.
Chloe, thank you so much. That is Chloe Melly there in London. She'll be back later in the hour. And also coming up this hour, we're going to be speaking to Austrian National Bank Governor Martin Kocher. And later this hour, Katrina Dudley of Franklin Templeton joins as stocks look for a second straight day of gains. But first, 2 decades in the making, the European Union and India have reached a trade deal. European Commission President Ursula von der Leyen is calling it, quote, the mother of all deals. She added on a post on X that the two countries have created a free trade zone of 2 billion people, with both sides set to benefit. Joining us now from Brussels is Bloomberg's Oliver Crook. So, Oliver, this trade deal, 2 decades in the making, but it might not even have been necessary if there wasn't a whole trade realignment taking place in the first place. What's in this deal?
Yeah, absolutely, Vonnie. I mean, conspicuously, it also comes a couple of weeks after another trade deal that the EU negotiated with Latin America, which had been in the works for 25 years. So, yeah, it's no sort of accident these things are all happening now, after a year of sort of Trump tariff roller coasters. But the India trade deal, this is something that Ursula von der Leyen and the European Union really want to take a victory lap on, because India is notoriously one of the nations with the highest trade barriers across the world. And what the EU is now saying is that their companies will have preferential access to that market. So I'll give you just the top line of kind of what we can expect here. They say that it will eliminate or reduce tariffs on 96.6% of EU goods that are exported to India. The EU will also eliminate in return or reduce tariffs on 99.5% of goods that go into the EU. Now, we should say that those figures are a little bit misleading, because reducing tariffs from 150% to, say, 75% is not necessarily eliminating them, though it is certainly a sort of large step forward for the European Union. And the European Union say they would like to double their trade, double their exports to India over the next 5 years. And just to give you a flavor of some of the things that are contained here, there's really things for every European country. So, for example, for the Germans, car tariffs will go from 110%. That'll come down to as low as 10%. You get wine, something for France, from 150% down to 75%, eventually down to 20%. Olive oil for Italy down from 45% to 0%. Now, a couple of notes on all of that. This is still a deal that needs to go through the European Council. It still needs to go through European Parliament and some legal opinions. And this is something also that with these tariffs, it's not just going to go into effect on day one. This will be tiered over a number of different years, sometimes 5 years, sometimes 10 years. But the broad strokes here, Vonnie, is that in this sort of global realignment that we've seen from Donald Trump, we're starting to see what the consequence of that is, and that is pushing people together, people that would not necessarily, as you alluded to earlier, necessarily have this trading relationship were it not for Donald Trump.
Speaking of which, the UK Prime Minister Keir Starmer is visiting Beijing this week. What are his intentions?
Yeah, absolutely. And I think this is sort of very, very interesting. It comes in the week of Mark Carney striking that sort of trade deal, not necessarily a free trade agreement with China, which obviously got a lot of scrutiny from the Trump administration, a lot of criticism. You see the UK doing something similar. We spoke to Keir Starmer overnight about kind of what his intentions are there. And he was basically saying that it's a false choice to say that you have to choose between the United States and between the United States and China. But I think as we see with Canada, as we see with the United Kingdom, as we see with the EU, who's choosing to trade with Latin America and India, this is all about sort of diversifying these markets, because at the end of the day, once the United States has sort of proved itself to be unreliable, that's really only something you can do once. And the moment that that begins, all of these countries are going to look to diversify away from the United States. For the Europeans, they're also looking to diversify away from China, and they're going to try to find all of these different markets. For what I think will be very interesting, Vonnie, is that as this sort of continues to go forward, what is the Trump reaction going to be? As if the Trump administration feels that they're losing their sway on on these trading partners because eventually they're diversifying away from the U.S. That could create quite a combustible situation if the American president feels that he's losing control and tries to reassert it as time goes on.
Well, so far it's not stopping President Trump issuing the threats. The latest one on South Korea, another 25% because it hasn't been quick enough to ratify the trade deal and to get moving on investment, right, Ollie?
Yeah, that's right. I mean, so they were going from about 15%, which is the agreement that they've got signed. And he's very upset that basically the parliament has not yet ratified it. So he's now saying, OK, we're going to kick up tariffs to 25%. Now, if you look at the session for the Kospi here, I've got it here in front of me. I mean, that sent shares in Korea down basically 1%. But that session closes up almost 3% on the day. So I think that it's fair to say that for the markets, they're sort of dismissing this threat. We actually crunched the numbers, our trade team over at Bloomberg, and looked at only 27% of all the tariff threats that Trump has began since the beginning of 2024 when he came into office or when he was elected. Only 27% of those threats have actually gone into effect.
Yeah, and yet they don't seem to be losing their potency. Oliver, thank you so much. Chief European Correspondent Oliver Crook. In Minneapolis, U.S. Border Patrol Commander Greg Bovino is set to be leaving the city over the recent killing of 2 U.S. citizens by federal agents. This as President Trump signals a strategy shift in his deportation drive. Joining us now from Washington is Jonathan Tamari of Bloomberg Government. So, you could ask what's prompting this shift, Jonathan. It should be the obvious, but maybe it isn't. Maybe it's sagging poll numbers. Maybe it's just the difficulty in continuing in Minneapolis with, his commanders there perhaps overstepping.
Yeah, I think it's a combination of all these things. I think these 2 shootings that we've seen have driven down what were already bad poll numbers for the president, and immigration has traditionally been one of the strongest points for President Trump for Republicans. It's one of the first things he talked about when he entered politics, and it's been really powering to him. And when you look at the polls now, there's significant disapproval of his handling of immigration, significant disapproval of Immigrations and Customs Enforcement, which is kind of the face of this crackdown, although not the only agency involved. And I think even people in the White House realize that the handling of this second shooting and many of the false statements that were made over the weekend is just disastrous, if not morally, certainly politically. And we're seeing a change in tone, which is a very rare thing for Trump to do.
Obviously, the human element is paramount, but beyond that, there is a government funding bill. I mean, does that take away questions of whether we'll have a partial government shutdown now or not, if indeed, something changes, at least in the tone, if not in the actual execution with ICE?
I think it's still going to be a very big problem. Democrats are really furious about the way this has been handled, and there's a number of Republicans who are also very concerned about the way the investigation is unfolding, and they're calling for a truly independent investigation as opposed to what we've seen so far, where the Department of Homeland Security is essentially investigating itself. So I think Democrats are going to make some demands about conduct of these immigration raids, for the rules of engagement, the rules around how ICE conducts itself. We'll see senators are coming back to town this evening, so that'll be a better indicator. But I think Democrats are going to draw a hard line on this one after what we've seen.
All right, and Border Czar Tom Homan in Minnesota, Homeland Security Secretary Kristi Noem's rival, of course. Jonathan, thank you so much. Jonathan Tamari of Bloomberg Government in Washington. Now to other top stories trending on the terminal this morning. U.S. airlines are still paring back flights as a deep freeze hampers the restart of operations at some major hubs. Delta says services at its hubs in Boston and JFK are affected. American Airlines has axed about 500 mainline and regional services. Airlines bracing for further disruptions as another Arctic blast looms later this week. Goldman Sachs CEO David Solomon says he sees a slower trajectory for talent growth this year, even as he makes an upbeat call on global markets. He spoke with Bloomberg TV's Stephen Engel from the Goldman Sachs Global Macro Conference in Hong Kong.
It's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth, and some of that growth scales with additional headcount. I'd point to our wealth management business, which scales with people all over the world.
And Puma shares are surging after news that China's biggest athletic apparel seller, Anta Sports, plans to buy a 29% stake in the German brand. The €1.5 billion deal will make Anta Sports the largest Puma shareholder. Coming up, an exclusive interview with ECB Governing Council member Martin Kocher. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's get right now to our exclusive interview with ECB Governing Council member Martin Kocher. Here's Bloomberg Daybreak Europe anchor Lizzie Burden. Lizzie.
Bonnie, thank you so much. Well, it's great to speak to the Governor of the Austrian National Bank ahead of the ECB decision next week. Governor, thank you for stopping by in London.
Thanks for having me.
You and your colleagues at the ECB have talked a lot about how you're in a good place, but the geopolitical backdrop doesn't seem to be in a good place anymore. Of course, you had President Trump's tariff threats over Greenland. He walked them back, of course, but has all of that changed your economic outlook?
So we've received our last projection in a large exercise in December, and lots of things happened in terms of trade conflicts, in terms of other geopolitical developments since December. But we knew already in December that the uncertainty levels that we are seeing geoeconomically, geopolitically are high. So it's important to have full optionality. The monetary policy has to be able to react to any kind of risks manifesting themselves quickly and decisively. So it means having this full optionality is an asset, and we agreed that we want to have this full optionality in any direction.
But we were talking about how it feels like a year has happened in a month already. Do you think that household and business confidence can withstand this lingering trade uncertainty? Will it dent confidence at all?
What we've seen in December, and I think it hasn't changed, is that the sentiment indicators within the euro area are slightly biased upwards. We see modest growth projections. We see inflation projections in line with our 2% target. So that means, and that's the reason why it has been called being in a good place, but it means, of course, not that we want to be there for all time. It means conditionally on what we are seeing, conditionally on the risk environment, this is where we want to be. But we want to be able to react quickly to anything that happens.
Well, yeah, the Eurozone economy was pretty resilient in 2025. Do you not perhaps fear that the tariff impact is in the mail? It's coming at some stage in 2026?
You're absolutely right. Some of the experts predicted that there will be strong impacts on the euro economy in 2025 already. You have to take into account that some of the tariff threats have not been implemented. Some of the rules have been relaxed a bit, but uncertainty is still very high, and we've seen that last week with additional tariff threats. So yes, indeed, we have to be careful. There might be some repercussions. There might be effects on the development of the European economy coming from the very unstable international environment, especially with regard to the trade environment. But we have seen today the trade agreement being concluded between India and the European Union. So there's a clear strategy to diversify to make sure to be more resilient as a region.
Does that move the needle for growth for the Eurozone economy?
We'll see what's going to happen. But we are at a projection where we above 1% for the euro economy. It is modest growth, as I said. Hopefully, those risks that we have identified as being tilted towards the upwards, the German stimulus, the savings rate that is very high and that could reduce more quickly than expected, that those chances for economic growth are manifest themselves during the next couple of months, and then we might see even larger growth. But of course, the downside risks that we're discussing all the time, they are quite substantial, and we need a more certain outlook. We need more calm to make sure that the international economic development is better.
Yeah, Governor, when you look at inflation, the December print was actually shy of the ECB's target, and it's predicted to be slow again in the next reading. But then core inflation pretty stubborn. What for you explains that stickiness?
Difficult to say. We're looking at different things and monitoring, especially the wage development that matters a lot. We're monitoring import prices. There's a couple of aspects that influence prices directly or indirectly at the moment. But as long as we are having or seeing modest diversions from the target, I think we are fine. But if there is, in any direction, a clearer movement and we get more and more data in that direction, then it's important to monitor it closely and be able to respond.
Well, yeah, I know you tend towards the hawkish persuasion, but if that undershooting became persistent, at what point would it start worrying you?
So the outlook that we have, there was the large projection exercise in December, is that we are returning to 2% and slightly undershoot this year, next year 1.8, 1.9. So this is really modest. I think what you need is a strong undershooting or overshooting. And a narrative, an explanation why this is the case. At the moment, these are just small diversions from our targets.
How does the dollar weakness and euro strength on the flip side feed into your outlook for inflation?
So the exchange rate, of course, matters. Europe is a quite open continent. That means exchange rates matter, especially when it comes to the trading relationships, but also when it comes, of course, to prices, competitiveness. So all these things matter. It's a bit unclear what it means, but we've seen some appreciation of the euro over the last year. That was actually quite substantial when you compare it over the last year. On the other hand, if you compare it to the span of exchange rates we have experienced since the creation of the euro, then we are very much in the middle. So what we have to monitor now in the next couple of weeks and months is whether this appreciation continues and whether it perhaps even accelerates. But we don't see that at the moment. But of course, events that have been happening over the last couple of days, they contribute to some concern. So clearly a thing to monitor in my view.
But one thing that could change it, will be changing, is who's sitting in the chair at the Fed. Of course, Jerome Powell set to be replaced. If that person is particularly dovish, I wonder where it leaves the ECB, because one of your colleagues at the Bank of England, Megan Green, has been saying that the impact of loosening financial conditions would outweigh the stronger currency impact on imports. So if you do have a dovish Fed, would that accelerate ECB rate hikes?
First of all, I think it's important to talk about central bank independence, and it's clear that it is in the interest of the public to have an independent central bank that is able to respond quickly. And when we talk about the exact policy stance that the central bank has, then of course we're not reacting to the policy stance itself, but of course a completely different policy stance by the Fed might have spillover effects onto the inflation outlook in the euro area. And it's a bit unclear what we could expect if that is the case. There is, of course, first of all, effects on the economic development, but there's also potential effects if the stance is too loose on financial stability, perhaps. So lots of things, but it's a bit early, I think, to judge. We'll see when and who is appointed.
So in the nearer term, markets are still pricing a small risk that the ECB cuts this year, but further out they're looking at a bigger pricing of hikes down the line. Governor, does that tally with your view?
At the moment, we're in a good place. That is exactly what has been surprising to a certain extent, given the uncertain environment, that we have been seeing quite some stable inflation outlooks. That's the main target. But I think the risks that we are seeing in both directions make it unlikely that over a very long time we are able to stay where we are. That means full optionality is important, as I said, but it's difficult to say if it happens that we stay at the current rate and the economic development remains calm and some of the risks reduce. Then I'm happy, but we have to be prepared for any changes.
How much worse would things have to get for you to back another cut?
I mean, if clearly the inflation outlook is going down, so if we are going clearly below 1.8%, which is the current outlook, then we have to discuss a cut. But it's equally likely, I would say, so the risks are more balanced now that we see a development where inflation outlooks are adjusted upwards, and then we have to think of a hike. But at the moment, we are doing fine.
Well, some of your colleagues have gone as far as to discount the idea of a hike this year. Would you go as far as that?
We have agreed on a meeting-by-meeting approach and a data-dependent approach, and it means you have to be open to anything that is necessary at that moment, but being very well prepared. So I would not exclude anything at the moment.
A message I'm sure that President Lagarde will be echoing in Frankfurt next week. Great to have you with us in London. Thank you so much.
Thanks a lot.
Bonnie, that was Martin Kocher, the Governor of the Austrian National Bank and member of the ECB's Governing Council. Thank you.
Fantastic interview, Lizzie. Thank you very much. That's Bloomberg's Lizzie Burden there. Time now for your front page news. First up on the Washington Post, House Democrats set to open an investigation into Homeland Security Secretary Kristi Noem as early as next week, laying the groundwork for a push to impeach her. The Post says Democrats plan to conduct their investigation without Republicans. Now, they do concede they're unlikely to remove Noem in the short term, but believe launching an investigation will signal they are taking deaths in Minnesota seriously. Next up, the Wall Street Journal is reporting tax filing season will produce a cash surge around $100 billion, higher than last year's $329 billion total. And it's engineered to boost Republicans' sagging approval ahead of the midterms. The Journal says the plan has little guarantee of success. Republicans need, for example, the IRS to issue refunds efficiently, and they need to make voters know why they're getting more money. And finally, the Financial Times reporting the administration has indicated to Ukraine that U.S. security guarantees are contingent on Kyiv first agreeing a peace deal. That deal would likely involve ceding the Donbass to Russia. The FT says Ukrainian and European officials describe the U.S. stance as an attempt to strong-arm Kyiv into making painful territorial concessions. All right, let's take a look at these markets because futures are pointed higher, particularly Nasdaq 100 futures after a day of gains yesterday. Now, the Bloomberg Dollar Index is bouncing around its lows. We have Paul Donovan of UBS saying today as trade stagnates and maybe even starts retreating, reserve status for the US dollar actually becomes less important. And we might see international investors flouting out of dollar assets in any kind of dramatic exit. But we might see them less interested in accumulating additional dollar holdings. So that's a little nuance there to the debasement trade. The 10-year yield not really going anywhere, just up a basis point to 4.22. We have silver bouncing around the place. It gave up some of its gains and now it's gaining again. It's very close to its high above 114 an ounce, right now about 112 an ounce, and gold still about $5,100. Coming up, tech leaders will catch up with Katrina Dudley of Franklin Templeton on the AI investment trade. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Trade threats. President Trump vowing a 25% tariff on South Korean goods this time. This as other nations seek trade partnership to diversify away from the United States. Shifting tone, Trump's borders are set to meet with Minneapolis Mayor Jacob Frey under mounting pressure to change course on the immigration crackdown. And earnings ramp up as global stocks march towards fresh records. And to that end, we can see it happening once again today with futures pointed higher and gaining ground now. Look at those Nasdaq 100 futures just rolling away with things. Now, Russell 2000 futures pointing to gains, but that index, while it outperformed the others at the beginning of the year, taking a little bit of a back seat, particularly to international stocks in the last few sessions. Bonds-wise, we're not seeing too much movement. Of course, the big event is the FOMC decision tomorrow. So, of course, bonds will be waiting on anything that comes out of that. Not that we're expecting any kind of a cut or anything like that, but that two-year yield firmly stuck to 358.53. And then in terms of other assets on the move, well, obviously that volatility continues. The yen did top 154 earlier, but it's back below that now, so it's stabilizing to an extent. Gold also stabilizing, albeit